Edition of Forex Focus. I'm joined by my good friend Frank Caberna, which was a surprise. I had the dates mixed up. This is usually a Spy Kids Day, but you stepped in. Our wonderful Bridget Laszlo is off in the UK.
We're gonna do I think Monday, Tuesday, Thursday is Frank, and then Spy Kids cover Wednesday and Friday.
Are you telling me that like I am your father who doesn't remember the days of the week?
Exactly right.
All right.
We've been. I feel like we've been over it. Maybe, I don't know. There's too much. It was easier. There was an easier time, a simpler time actually, I'll say, for Tasty Trade when there was only like 15 people here, and it was like you, me, James, Kai, a couple of them, Reckentine, and then there would be, Katie and Nikki and Mikey.
Hey,
and then,
don't forget that intern that you almost beat up and flew over the desk. What was his name, too? He was on a couple of segments.
Peter. That's why I hate him so much. Yeah,
that was a classic.
That was a rough.
I had to do the grab you from the back.
Yeah, hold me back. There was only like 15, 20 people. And so everybody knew everything. Everybody knew probably too much all the time. And now there's so many people, I don't know who I'd tell what to. But I think I'm going to do, maybe I haven't, or you tell me. You're the one in charge. Monday, Tuesday,
well, that depends
Thursday.
on the day. Okay, you do what works for you. I mean, again, I am very concerned that you have a positive experience out of all this. No, whatever works is fine. I think breaking up that way is great, and it gives you that Wednesday, Friday, go back to the usual in by 11, out by 2 schedule.
Exactly.
So that's very.
I need that.
You do need that. I mean, you've gone through emotionally. It's a lot. The election was emotional. The aftermath, a lot of movement, and we're constantly continuing to expand.
So how do you feel? How are your emotions? The guy that you voted for won. Congrats. and now
Why
you
are you pushing so hard on the who did you vote for thing?
Because it's funny.
Okay.
I don't know. It's really just funny. I don't know. People keep it so private.
Yeah,
it doesn't really
It's
matter
funny
to
because we've got, I mean, if you saw The Office, it's like a huge trading floor. There's 100 people out there. No one really talks their politics, and there's definitely two sides to the coin.
But you can see
once in a while
their book.
Yeah.
In the way that they.
Yeah, a little bit.
Which is, I mean, yeah, which is fine. I mean, the market. The market loves it. Let's just be honest. And we're all of not even 48 hours out.
And
every major index is printing new highs. And I was expecting to wake up today, Pete, and see any kind of two-sided action.
And you know what? You got an hour and a half of it in stocks yesterday, from like when the market reopened at 5 to like 6:30 at night. NASDAQ was 30 lower. Yeah. Russell was 5 handles lower. Now remember, that's 30 lower after a 500-point rally. That's 4 lower after a 130-point rally on Russell. That's not a scalpable. I mean, nobody sells the top. And then in that kind of range, if you're looking for 3 ticks or 3 handles, you're kind of working in a challenge. So long story short, no, the markets closed at their highs. And they're continuing now this morning to grind higher.
Yeah.
We're at highs in NASDAQ. We're at highs in SPOOs. Some of the bonds trade a little bit lower. Mm-hmm. Notes are a little bit lower. Yields continue to kind of tick up a little bit. We were going into a Fed announcement today. Typically a very quiet day in yields, but it's taken for granted that they're going to cut by 25 basis points.
Yeah.
And it will be the rhetoric afterwards.
Yeah.
I don't know, and maybe if we get time, we'll take a look at the Fed Watch tool to see if they've done anything with that DEES cut, because that was priced in with.
They have.
Yeah.
Yeah.
So, but we actually saw the BOE move this morning. Yeah. They cut by 25 basis points, and their statement came out afterwards. Inflation is above target, growth is above target. So the implication was their rate cut path, may be a little bit slower. Or they may be a little bit more down, whatever verbiage they use.
Yeah.
And we saw sterling spike about 40, 45 pips on that announcement, sitting right up there near the highs.
But just really quick before we get into that, I didn't get.
This is such an. Yeah, it's funny, when we both joined, one of the things that drove us nuts was the calendar functionality on the tastylive platform, at that time IG. And we spent a lot of time and effort and finally have some calendar functionality that's really useful. It gives you can query it by country, by major minor event. You can also, and I think what's great is, when a UK rate hike comes up, it's hard. Nobody should be a compendium of where rates are in the UK, Europe, Japan, and stuff like that. But to get a sense of that, great snapshot here.
And by we made a huge effort, we mean neither of us. We just complained. We complained about it for 2 or 3 years, and then our buddy Shivashish and his team in both the UK and India, they knocked this out, and it looks great.
It was, and this was something that they had talked about endlessly. We tried a number of different solutions. Nothing was very good, and these guys finally. We've got a little bit of a new culture in our business, which is great. It's really a delivery-focused culture. That's why you continue to see improvements on the tastylive platform. Where we are, like TradingView and other really exciting stuff that's coming very soon. And the ability to deliver on that quickly and really build out the best UX and customer experience.
It's a great team. We used to just complain, and no one would listen. Now we complain, and they
void. Yes. Well, it's a much better working environment.
Yeah, it's great.
Even our working environment's much better, much more efficient.
What?
People have ours is always this. Yours and mine personally.
How could I get better than perfect? We have a perfect working environment.
The 3 hours a day you're here, it is idyllic. The fringe, as we call it, the gray area, that's an interesting exercise.
So we got the 25 BIP cut. And my question was going to be, I didn't get a chance to look because I was making the coffee. I had to get coffee.
Again, you've got enough fluid there to carry you through several. Are you like phobic around dehydration or something?
Absolutely. I drink. How many of these do you think I drink every single day? This is 32 ounces.
In the 3 hours you're here, there's got to be at least 5 or 6 of those.
I try to put down 4 or 5 of them, which is that's a good amount of water.
Fluid.
Yeah.
Yeah.
The problem is that I'm constantly in the 3 hours that I'm here, I'm spending 2 hours peeing. I can't.
You went right to the too much information page.
Okay,
but that's good. So you've got some caffeine. You're behind me.
But I didn't get a chance to see. Did rates come off at all?
U.S. rates?
Yeah, from yesterday.
Bonds are lower again, so no.
Again?
Yeah.
Jeez.
Bonds are. They staged a very weak rally overnight. Again, we're at 115.5 in ZB, ZN 110. They staged a very weak rally, and this morning they came in and hit them with the statement out of the UK. They hit them again. Yeah. And it's almost like they're looking for any excuse to mark these bonds down lower.
Sure.
So it'll be interesting to see if, I think the thinking is the Fed's going to take the same thing. They're going to cut the perfunctory 25 basis points, but they may take, in their verbiage, take the impression more cuts off the table, we're seeing a real, remember, we lived with 3 years of yield curve inversion where our 2-year yields were actually higher than our 10 or 30-year yields, which is a normal yield curve is
upward
the longer the duration, the more, because you're exposed for a longer period of time to possibly inflation, other than you command a higher yield. We saw just the opposite of that. That's unwinding now, and the 210s is out to levels we haven't seen since it went inverted. So it is continuing to steepen, that long end getting more expensive relative to the short end.
It's steepening.
It's steepening.
More. Okay.
Was that a long-winded?
No. It's a helpful explanation. And 10-year rates now with that information. Yesterday they were teetering around 4.5%, and now I'm imagining that
they're right there. They got down to like 442, 440, and at noon we had a 30-year auction that. This is way too macro. I feel like I'm that didn't go off very well, which meant that it tailed through by 2 basis points, which means they had to. Again, when the government auctions paper, it's not like, hey, everybody buy it at this price. They have to hit, everyone submits a bid, and they have to find bids to fill the order, so to speak. And they had to go down 2 full basis points to find the bids, which means that the demand wasn't great for this auction in this environment.
Higher rates needed, yeah.
Higher rates needed. So that kind of, because we saw bonds kind of stage a rally after the fall, post-election, that kind of took some wind out of it, and it seems like there's more wind to be taken out. I don't know where all this stuff is going.
So I asked that question because today is absolutely putting together a little bit of a puzzle, because you have the BOE rate cut. Okay, 25 basis points. They're still at 5%. And remember, the UK was the closest to the US of the major economies in terms of hiking rates. US got to 5.5%. UK got to, I think, 5.25%. Yeah, I have it right in front of me, 5.25%. Whereas the ECB, the Australian central banks, other major Canadian central banks only got to like the 4 handle, mid 4s. And so UK has been one of the strongest. Let's check out the US here. We have cut from that 5% down to, or 5.5%, sorry, down to 5, and they're looking at another 25 bip cut here. It's pretty much all priced in. We can look at the Fed Watch tool if we want. It's going to show 100%, maybe minus 1 or 2 percentage points rounding error off of the 25 bip cut today, and you can see here in the economic calendar, the forecast is 4.75 versus 5% current. Really interesting. And I asked you about the yield piece because U.S. yields yesterday were ripping, and today they're higher again. But the U.S. dollar, Pete, is starting to give back some ground here. You have to keep all these things in mind that, yes, yesterday the U.S. dollar had a huge, 200 points against the euro, at certain points more than that. I think 100 points against the pound. Huge moves against the yen, especially late in the day. It started to kick the yen's butt. Some huge moves yesterday. Now giving back some ground, and you might say, oh, well, how can U.S. rates be continuing higher and this U.S. dollar now be giving back some ground? Well, keep in mind that global rates are also moving, and even with this cut from the BOE, and you say they come out hawkish, that, we're cutting now, we might not cut so much in the future. I would imagine that UK debt markets are showing higher interest rates.
Absolutely.
Yeah.
And it's a good point. So this is part of the equation that drives FX. You don't have to drill down and be an expert. Again, to trade FX, you don't have to track everybody's rates. Actually, we're going to walk through in the next, I'm going to do a segment with Glenn, and for the next couple of weeks, talking about how do we see that difference in rates. And it's actually through the swap rate.
Yeah.
And it's kind of a unique feature to FX that gives you the insight you want. Which country's interest rates are above the others? It's depending on that interest rate differential. You either pay or get paid to hold that position.
It's kind of like positive and negative theta in a way.
Absolutely. Yeah. That's a great analogy to it. And we're going to walk through it because it's a unique piece of product construction, and it is a part of spot FX that drives a certain group of traders' behavior. And I think yesterday we would call it was a dollar move. Whether it was the euro down 250 at one point or Aussie down 80 at one point or 100.
Well, the pound here going from 130.40 all the way down to, at its lows, 128.40. So a high to low move of 200 points.
Right. A big move in sterling too. All dollar based. What we're seeing today is a little bit of, now it's becoming a little bit more currency specific. Mm-hmm. So euro, yes, off its lows, not by much. Sterling, much more so. Aussie, back to levels we haven't, we're back to.
Yeah, wow. They put it all back in.
All back in.
Wow.
We're now right back to the 200. This is exactly the 200-day moving average, right to where we kind of came off from. And again, I probably mention that too often, but it's an old school FX indicator, 200-day moving averages. I look at it, it's just from my institutional background, it was the guys who taught me and the guys who taught them always looked at that, so it became a self-fulfilling prophecy a little bit.
Cool.
You look at it, you dispense it, and put that into component. But this was one we talked about yesterday a little bit. Why isn't the Aussie down more? You would think if the dollar's so strong and China's going to get impacted with tariffs, China and Aussie having a strong correlation, why didn't they hit the Aussie? You can come up with lots of reasons. Well, is it the gold piece, which also got slammed incredibly hard yesterday? Gold piece coming back a little bit, but we're still $80 off our highs in gold.
Can't be. Yeah.
It's the risk-on piece. So attaching one piece of context, that's what we don't do. You take the tape here, the fact they couldn't beat it up as hard, and we're also at the lower end. 65 cents is cheap Australian dollar. So the fact they couldn't do much more damage to it and get it down below those lows, kind of put the shorts to the challenge a little bit. So we have very different view here in Aussie. We are back from where we were versus going to the euro, where are we back a little bit? Yeah, we're a little bit off the lows, but we're basically back to where they finally started to find a little bit of two-way action. So you look at that cross, and we'll see a pretty dramatic move with that Aussie outperformance. Is that becoming a little bit of a risk-on trade? I don't know, maybe. I'm less inclined to want to attach. Well, the reason why Aussie's doing so much better than euro is this. You kind of trap yourself in a box. You keep those things in the background. But when you look at it as yesterday, and we talked a little bit about this with Glenn, is that the fact they can't get this to trade lower makes me think that maybe a lot of people argue, well, it should catch up. I want to sell Aussie and I want to buy euro because they should be relatively the same.
Everything should be unchanged all the time.
Right. Yeah. Or they should all be relatively down the same. Yeah. But it's not always a dollar play. What that told me was that Aussie actually continues to exhibit a little bit of strength, and we're seeing that play through right now. So trying to play catch up on these divergent moves by buying the weak one and selling the strong one doesn't necessarily always work for you on a post-binary event. Well, so I think you need to be mindful that the temptation here, euro's going to be back to unchanged in the next 2 days. I don't think we play the game that way.
Well, and you and I will look at a lot of like underperformance, outperformance, but usually over like weeks or months,
right,
as kind of like a longer term trade. When you have a big event like an election or like today's FOMC, that we'll look at in just a second, because there's another huge event here this week. You have to default to whatever your day trading or short-term strategy is, and for us, I mean, this is just an example. You do you, but for us, it's usually looking at, okay, what's the normal move? What's the standard deviation on this market? When it gets outside of that, okay, it's maybe interesting.
Right.
That's a big move. If I'm a trend follower, maybe I go with it. Us, for example, tend to be contrarians, and so might go against it. And we talked about it on Tuesday. One of the worst things you can do is just pile into one idea, one market.
Right.
One of the best things that you can do with whatever your strategy is diversify across as many markets as possible and trade small, especially with such a big event. Because, this would have been, and still is, a nearly impossible market to have made money in as a contrarian off of this election, because especially, I can see back to my days at the Board of Trade, Pete, and on a big day like this, now we were trading the Treasury spreads,
right?
But you see this move here, and it gets to, okay, it's outside the one standard deviation. This euro went from 109.20 to 108.40. That's right there at the one standard outside the one standard deviation move. And it's starting to kind of sit there. That's probably where I would have gotten long.
Right.
And then you would have had this move, and then the risk manager would have been tapping me on the shoulder saying, hey, you should have been out 50 pips ago.
Right.
How do I get out of this? But if you were able to say, okay, I've got $100 and I'll put $30 long here, and I'll put $30 long in this sterling market, wherever sterling's back to a scratch if you got long at the same point, and I'll put $30 here in this Aussie market. Now this is a profitable trade.
Right.
You never know what it's going to be.
Right.
And the worst thing you can do is say, oh, no, I know it's going to be this euro that's going to come back. Or same thing with the trend following front. If you just shorted this Aussie because you're saying to yourself, hey, this one hasn't run as much as the euro, this is the one I need to short, you'd be kicking yourself today saying,
absolutely,
how can this US dollar be so strong and I'm short just the one that is not giving it up?
Right. And I think that's a great piece to there's correlations between all these products. You picked out three that actually, well, Euro Sterling has a closer correlation. Euro Aussie doesn't. It's more elastic. There's different drivers. So when you're diversifying, they're all traded against the dollar, but by doing that, you're actually, and this is a great example of why you look at diversifying through a series of pairs. FX in general is a diversification outside your core.
Super different than one of the least correlated to equities one way or the other.
Right. So having that is an important piece. Looking within this of finding opportunity is great. And one of the things I love is that we talked about Euro Aussie. Now, if you wanted to play the catch-up game, which I think we're, again, on events like this, I'm very loathsome to do that. But what this is showing you is that, if you wanted to, you don't have to go buy Euro and sell Aussie. You could trade it as a single entity with SpotFX, which is great. So unlike futures and some other spots, ETFs, it's almost impossible to recreate any of this. Futures is a little bit more challenging. Building something like this out in futures is very tough. So big move in the cross? Absolutely. Interesting spot. And when you look at this and you think about that cross, if you were to look at this, you would say, maybe I'm not going to be buying euros yet with the idea of selling Aussie against.
And like we talked about, your medium to long-term strategy is usually different than your day trading strategy. Again, and whatever yours, again, these are just examples of what Pete and I tend to look at. But yeah, this is becoming interesting. Now we're looking at the Euro-Aussie cross, which isn't necessarily, again, a market that yesterday I would have been like, oh, I'm piling into this for my day trading. But it is getting to a bigger extreme, and it's one that I would maybe attribute more time to and say, okay, well, it's gone from 165 to 162, so a 300 pip move, which is the extreme of the last couple of days here. And if it gets down below 162 or 161, from a contrarian perspective, maybe it's interesting. Right around here, if you're a trend follower, maybe it is interesting for it to go down to the lows. But another interesting piece that I want to hit on really quickly, because we talked about it just a little bit before the event, these crosses were better for back and forth, not Euro Aussie. Again, that's not a cross we tend to look at.
There's not a correlation.
Aussie Canada, Euro Sterling, those are crosses that we tend to look at because the correlation is higher. If I get back to the 15-minute chart here, you can see a bunch of back and forth here the last week, and now obviously Aussie is outperforming Canada and outperforming a lot of currencies as the week develops. But another interesting piece that you didn't have to pile in one way or the other with U.S. dollar alone. If you looked at, we tend to, in big events like this, and you might say, well, Frank and Pete, what markets are you, if you don't look at Euro Aussie, what markets do you look at? The U.S. dollar markets tend to be some of the most liquid and pose some of the best opportunity because of that liquidity, especially around a U.S. election. And in terms of those cross pairs, we tend to look at the ones that are correlated to each other because, again, they tend to have some of the best liquidity and everything else, and that's Aussie Canada and Euro Sterling.
Absolutely. So a great walkthrough, interesting stuff to see unfold. We've got a whole other set of, again, the rate announcement at 1 o'clock today, press conference at 1:30, so we actually get a double dip on binary events, which is great. So the rate release will come with a statement that'll be parsed. We'll see a reaction. Then Jerome Powell will speak. We'll see another reaction. And then tomorrow we've got Canadian unemployment. So this is going to be a chocker-bach week. You like that? Chocker-bach?
I don't know what it means. I've heard someone say it on a movie like Sherlock or something. Yeah.
So it's going to be a good week. So stay tuned. Guys, coming up next, Tom Sosnoff, Tony Batista, and Vanetta Logan. We'll see you back here tomorrow. Have a great day.
It was a beautiful fall weekend in Chicago. Lots of sun, warm temps, and tons of people out in the neighborhood. To try and be more normal, I decided to work from the coffee shop all weekend. Mingle with the common folk for a bit each morning. In fact, I wrote the cherry bomb yesterday while talking markets with complete strangers. What started as a discussion about fried clams in Cape Elizabeth evolved into a heated debate about junk bonds and cashless collars. That was fun. You see, every once in a while, you need to challenge yourself. That's why, for the Bears game, I made Jamaican-inspired oxtails. Who says I'm not a risk taker? But the real reason I'm sharing the story about talking finance with random strangers is because that's what makes Tasty so special. Unfortunately, we live in an incredibly divisive era of interpersonal communication. When talking to people we don't know that well, we can't talk about politics, religion, social issues, education, or even current events. I feel like every topic becomes an instant powder keg. Every topic except for finance. Tasty Nation speaks their own language. They're different. They can articulate certain aspects of investing that always intrigues and engages random strangers. I commonly hear, "How do you know that?" Strategic financial know-how and articulation skills are an amazing bridge between people with very different views and opinions. Let me give you some examples. The next time someone says, "Isn't Trump amazing?" you say, "I just bought a broken wing butterfly in the SPX." Or, "Kamala is just incredible." You say, "I just sold a jade lizard in NVIDIA." On immigration and taxes, you say, "I really love the leverage of span margin." Tasty Live really is making the world a better place.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tom, when you're scooping the offer, what are you doing?
That means when you're scooping the offer, you are buying whatever you can get your hands on at the best available price.
What does it mean when something trades by appointment?
Trading by appointment is when you're in a pit back in the day that had 1 or 2 market makers in it, and if they were having lunch, you had to make an appointment to make a trade with them.
In the pit, if you said, "I'm going to buy your book," what did you mean?
If you're going to buy the book, that means you're going to buy everything that is posted in an electronic book. So every resting order that's posted in the book up until a certain amount.
If you say take a fill, what's happening?
If I'm taking a fill, that means I'm a broker, and if I'm a broker, that means I did something horribly wrong because I'm a market maker.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Hola.
Happy Thursday.
No, you're asking about the lunch place. I think it's the place that we had when we were filming the content for the building a portfolio.
Please, no. Oh, no.
Dear God, no.
I think that's the same place.
The place was gross.
I don't know why you guys are mad at me. I'm just saying I can draw a parallel because I think they have the same name.
The messenger's in place now. So.
Okay, well,
Oh, no.
but that's the same name.
I liked it better when I was in denial.
Oh, no. I liked it better when I was in denial.
Okay, well, okay.
That place was literally
was not edible.
If you guys give me money, I'll go to Smallsville.
It was so bad. It was so
It was.
chewy.
It was.
Really was.
It was gross.
It really was. We got that spicy one. It was so bad.
Yeah. Oh, if that's the same place, it's bad.
Oh.
Knew I recognized the name.
Oh.
Okay, so first you're like, no, Vanetta, you're wrong, and then you're like, oh no, I recognize the name. You're right. Okay.
See how the male mind works?
Yeah, I got nothing. So what are you knuckleheads up to?
I'm not.
Okay, so top notch start. Yeah. Okay.
Now you
Out of the gate.
threw me you threw me backwards.
Again, I'm just the messenger.
I missed breakfast today because I was busy. I was running behind. No.
We're running behind you. Full disclosure, in the old office, I was typically the first one in. You now have been the first one in the new office by far. All the time.
Yeah, but
Stealing my spot.
I was running late this morning. I had so many emails last night. I just
Oh my God, girl, so many emails.
couldn't catch up.
Aw.
So I caught up this morning and then just running late.
So you didn't have time to eat anything. So you're going to be hangry is what you're telling me.
Very.
And I need to enact that protocol.
It'd be nice if you ran to Gotham and got me a bagel.
I'll leave right now. Look, I don't want to be here,
You don't-
and I want bagels.
Right, you
we
don't-
all win. All right.
You don't have to tell her twice.
You don't have to tell me twice.
They don't open till late.
Don't threaten me with a good time.
Go wait. Okay. You can wait in line.
They don't
right?
open till late.
Okay, well, that's fine. Wait,
Get in line. So you're gonna be first.
I don't even know where Gotham Bagels is.
Yeah, there's one down.
Nobody does.
But all I'll tell you is that I cannot believe it's the best bagel I've ever had,
Really?
including New York, including anywhere else. It is the best bagel.
You've been to that pop-up bagels place in New York? That's all the rage? You dip it, you rip it and dip it. That's no? Okay.
Gotham's unbelievable.
That's all, it's all over the TikTok.
I know.
But you ain't getting it, so it doesn't.
I'm getting it.
Okay. All right, well, now I want bagels.
It's unbelievable.
I think we can make it happen.
There's a couple of there's a couple of fancy pop-up bagel places in Chicago too, but Gotham, unbelievable.
Are you excited about going to the UK and like traveling farther afield than you normally travel?
I am so excited. Are you asking me or Tom?
Well, you're not going to the UK.
I know I'm not going.
I'm stuck with you and your son.
The whole week, which is gonna be brilliant. Bat versus bat all week long. You're gonna love it. You know you do. Without Tom here, we can actually get a word in edgewise. Finish your sentence. Everybody gets treated with some respect around here. Yes, 100%. I am so excited for the people to meet you in the UK and in Ireland. I really am. But I am so not looking forward to you the following Monday on the show.
Oh, he's going to be a bear. I mean, it's a tight schedule for you.
Oh, it's a tight schedule. He has not been preparing for the schedule. He has not done any push-ups or sit-ups. I've watched.
Planes, trains, and automobiles.
It really will. It really will be.
You are going to be a bear.
Going to be perfect.
I mean, to prepare for the Eras Tour, Taylor Swift ran on a treadmill for 3.5 hours, singing all of her songs at like full volume.
Every day?
Yeah. What have you done?
It's called preparation. You're used to preparation H. This is
in heels. In heels.
I
You don't even know how to find the train station that you have to get to. I mean, seriously. Does she hold you by the elbow when you walk around? Is that how she does it?
I have been practicing my English breakfast ordering.
Okay.
Yeah, so
well, my question for you, though, is if you were going to get more adventurous, like because you're going to Scotland, are you going to eat haggis?
I'm not. I've never had haggis that I.
You would remember if you'd had it.
We had a viewer or two that would write in and show us pictures of their.
We have a couple people.
Yeah, I want you to drink some iron brew, and I want you to eat some haggis.
Try it. If it was there, you would.
Yeah, I mean, I'll try anything.
Yeah.
I don't know what iron brew is.
You'll find out.
Oh. Mike and Nick told me that there's a couple of local beers that they really liked.
It's not a beer. It's not a beer.
Oh, it's not a beer.
Mm-mm.
Okay.
I don't know that too.
No, you'll
I don't know.
find out.
No, I'm really looking forward to Edinburgh. The only city we have an extra couple of hours in is Edinburgh. So
it's like a weekend going into it.
Because we land Sunday morning, we land Sunday, the show's not till Monday.
Right.
Oh, perfect.
Couple hours.
Enough time for you to shop for my Scottish sweater. I want a sweater.
The rest of your schedule is pretty tight.
Yeah, I have no time the rest of the schedule. But But looking forward to walking around Edinburgh. I heard it's amazing.
Are you going to wear a kilt on stage?
I'm not.
Are you going to wear underwear on stage? I am not. Yeah.
No kilts, no underwear. But I'm ready to go.
Okay.
I think you will be flying on adrenaline. You'll do well. You're going to forget where you are.
Oh, I won't care where I am.
No, I know. You're going to forget where you are. But Monday's show, if you have time, please stay tuned to Monday's show. Not this Monday. Of course, I want you to be there with Nick and myself and Vanetta, of course. But next Monday, you're going to see the best Tom you've ever seen in your entire life for sure.
I'll be fine. Won't even, jet lag doesn't bother me.
Jet lag is a choice.
I know.
Yeah.
Your body's a temple. You're amazing.
Yeah, no, I'll be fine.
Sure.
Okay.
Sure.
Okay.
Yeah.
I get that.
So I'm ready.
Do you have a rain jacket?
No.
It's.
He has a skirt and a jacket. He does not have a rain.
He has a cape and a caftan, but no rain jacket. No, I'm being sincere. Because it can be rainy in the UK in the fall.
I do not have a rain jacket. I've never owned a rain jacket, and I never will.
But you should just go to REI and get what they call just like a technical shell. It folds up real small. Okay. But it's good. It's a good barrier against not only rain but also wind. Okay.
Air.
Hey, my peeps just said, "Do you want toast?" They can get some bad coffee to deliver. If you want. No?
No, thank you.
I'm gonna get you a rain jacket.
I don't want a rain jacket.
Okay.
I will not wear a rain jacket.
All right, you do you.
I'm debating whether or not to bring a jacket. Just like you got, because I know it's gonna be a little colder, but I got some pullovers and stuff.
Okay.
Are you going to? Is this a backpack trip?
Ooh, it's a little more than a backpack.
Okay, good. I'm glad you.
Because I got to take a couple of computers. I got too much stuff.
So did you get? I can't remember. So I'm sorry. You did go to Costco and got a rolling wheel bag, right?
I always had one.
No, you didn't always have one.
I've always had one.
Don't make me have
For the last 10 years,
I don't. No, it's been less than 10 years.
10 years I've had one.
No, you were
No, like since I've worked here, since you have one, but it's not. It's been.
I have one. I bought
It's been like around 10 years.
Yeah, you bought at Costco. I remember.
10 years ago. It still works perfect.
Yeah, I was here, so.
No, it was the trip you went with your wife.
$39.
No, what year did you? It was just a few years ago. You went when your backpack got stolen. That's the trip you first used the rolling wheel.
Yeah, we had rolling.
What year was that?
I don't know.
You're such a freaking liar. You know exactly what.
I've had it for longer than that.
I know what. It's wrong.
I bought one at Costco.
Where's your button?
It should be here. It's not set up here. Where's my button?
Ah.
I think I bought one of those things at Costco for like $39, and it still worked perfect 10 years later. I think she bought one of like fancy Toomey, luggage.
Exactly.
Yeah.
Like
yes.
$700-800.
Yes.
Like
$800.
I don't know how much it is.
Yeah, they're expensive.
It's broke.
It has like a lifetime warranty though.
Broke like 10 times.
Okay, well,
That didn't
it's
break.
a lifetime warranty.
It's worthless.
She goes on a lot of trips. I forgot about.
Worthless.
This one's a travel.
saying.
Rolling Stone.
I have luggage. It's pink and purple if you want to borrow it. It's real easy to spot when it comes down, and it has a cat lady bag tag on it.
I never asked you for anything, Cos. Please, will you take her bag?
I've never checked luggage, so I never will.
Okay, but this one's easy. I'm just saying it's
I don't
easier to
check
spot than just a black bag.
No, but I don't check.
Do you have
sometimes
status?
though-
Do you have status on.
There's no reason to spot anything because I take my own luggage. I don't check anything.
Okay, but your eyesight's not so good. Like on the train, you might mix up your bag. I'm just saying.
Planes, trains, and automobiles.
My
Yeah.
Taiwanese sources already have your itinerary. In the morning, you can see the Edinburgh Castle. It's very condensed, Edinburgh. You can
Edinburgh Castle.
Yep. There's Arthur's Seat, which is great for
that
a
is.
hike or climb. If you'd like to do, get your 30, 45-minute walk very, very easy for you. There's a great museum of Scotland there.
There's a Chihuahua cafe in Edinburgh.
I like to experience like some of the local,
You go to the Chihuahua
I
cafe.
like to experience some of the local foods and stuff.
Food. Yeah, not the people. I thought you were going to say local people. I'm like, you know what? The
No,
food. Yeah, okay,
foods,
sure.
yeah.
I don't want to work too hard when I first get there. I just want to enjoy, sit in a pub, enjoy
I hear you. Yeah.
little local food, whatever. I'm not exactly sure. I haven't really researched Scottish food before, so
Sure. Well, you got a long flight on the way over there, so you could, download some guides,
I
read.
got 2 flights. I got to change planes.
Yeah, okay.
And don't be like a typical American. I like the Scottish salmon, please. Don't be that person. Find something else.
I haven't ordered salmon in my entire life, so don't you worry about that. I will not be ordering salmon.
Mm-hmm.
But yeah,
I like a little haggis for you. Yeah.
Haggis.
Haggis.
Salmon.
What?
Lox salmon.
Breakfast? Yes, that's the only time, but not over
Okay,
there.
never mind that.
Are you going to go on the Guinness tour in Dublin?
I mean, it sounds like fun, but I don't think we have time.
Oh, you got time.
Yeah.
Have you ever had a Guinness?
I have Guinness in my refrigerator at home.
No. That doesn't equate because you have kids and you have other people who come in and out of your house. Have you personally ever had a Guinness?
Sure. And I have.
You've ingested it.
Yes.
You
Okay.
do me one.
I do like a black and white, you know.
Yeah, you do.
Will you order the cockaliki soup?
Kakaliki?
Yes, the cockaliki soup is a delicacy there in Scotland.
I don't know what it is, but
skink.
what?
The Cullen skink is another one.
I don't know what it is, but whatever the local is, I'll order something local.
You're gonna lose weight on this trip, I could see. Huh?
I'm gonna order whatever's local.
Kraken.
The Kraken.
Kraken. I don't know what the Kraken is either, but I'll order that.
Kraken.
All right.
Oh, yeah.
I
All
like
right,
it.
that sounds
Yeah.
good.
Whatever's local. I only order local stuff.
Mm-hmm.
Oh.
What?
Didn't you go out for like Thai food when you were in Arizona?
No, it was soul food in Seattle. No, I'm not joking. That's what it was. It was soul food in Seattle.
Soul food in Seattle.
Food in Seattle is totally fine.
Okay. That's
I mean,
fine.
soul food.
I'm sorry you even mentioned it.
You opened. I was just.
Soul,
I know.
soul food in Seattle is. I have no issue with that.
Sure. Okay.
That's what I think of.
I won't order soul food in Edinburgh, but soul food.
No, of course not.
I'll order your kakaliki soup, whatever it's called, whatever's in it. I don't know.
Okay. This is just taking a turn. Bat, how about you? What was your evening like last night? Did you have hockey practice or?
Ooh, they got in trouble.
Oh no! What happened? These upstanding young men who you're buying $1,800 dinners for.
For his birthday.
Okay. Cool.
Birthday coming in January. I think we're gonna do it in December. It's supposed to be film night, and
so where they watch game film? Okay.
and the projector broke.
Okay.
So he was on a whiteboard with blue dots and red dots. He got 15 kids with a lot of testosterone and hormones raging and stuff like that. I guess they did not keep their composure during the conversation. So the coach got pretty upset, banged his clipboard down, stormed out, and we had to pick them up early.
Oh no, that poor coach, man. Oh, that poor coach.
They pay that coach?
What's that?
They pay those coaches? Really?
Oh yeah, and it's $6,000 a year to just join the hockey. Yeah.
That's bonkers.
Yeah.
I was gonna say, because if somebody does that for free, that's a lot of work.
Oh no, yeah, that's a lot of work. No, the house league is for free, but not the travel.
Yeah.
That's bonkers. Well, maybe tomorrow. Another day, kids.
Maybe tomorrow's right. Maybe tomorrow's right.
Just get it
Team's in a
together.
uproar right now.
Did you watch any sports last night? Any? Well, we can't really watch sports here in Chicago.
Comcast was down in my neighborhood.
Yeah. The Hawks lost and the Bulls lost, so that's all.
Oh, the Bulls played last night?
Yeah.
Who'd they lose to?
I think the Mavs.
Oh, yeah, they played at home. They
Yeah.
at the Mavs, yeah.
Yes.
Yeah, the Hawks were here. Pete was going to the game, and
Because they played the Red Wings.
I know. I kind of didn't realize because I don't even have I don't watch the games now because they're not on TV, but I would have kind of liked to see Tanner play. I don't know if he scored a goal or whatever.
Oh, no, but there was a former Hawks player that now plays for the Red Wings, and he scored a goal. I don't know. His name.
Brinket.
Oh, okay, yeah.
Cat.
Wait, his name is the Cat?
Cat.
Oh, I like cats.
To bring it.
Yeah.
I like cats.
It's good, too.
Oh, I just like cats.
Yeah. Yeah, he's really good. And he was on the Hawks, started his career on the Hawks, and now he's on the Red Wings like Kaner. But it would be fun to watch those guys.
I thought you got hockey tickets.
I got some games, but they're not yet.
I gotcha.
Yeah.
I gotcha. All right. Well, hey, let's keep this going. We got a great show for you today. You guys, we made it to Thursday, and that's saying something. Hey, at the top of the 8 o'clock hour, we are going to do trades from the research team. The world's greatest financial think tank presents their trade ideas to Tom and Bat. It's always interesting after just the monster rally that we had yesterday and a nice up sort of move today. Maybe things will be kind of sideways till the Fed stuff comes out, but the research team is going to have to present the research team's going to have to present some trades, but everything is going crazy and volatility doesn't exist anymore.
Volatility contracting 1595. You are correct.
Yeah. And also at 8:40, we got Victor Jones in the house for Hear Me Out. What are you talking about with Victor today?
I don't know.
Okay.
he wants to talk about that private. Was it? I think it was GEO. He talked about.
No, he does not want to talk.
Yeah, he does. He does. Stock went from 14 to 21.
The private prison corporation.
Right.
Yes. Okay.
No, but I'm not sure. We have a bunch of topics.
Victor is always very good at what he does to rile you up. So it will be fun no matter what the topic is. That's going to be at 8:40. Then 9 o'clock, part of our Zero DTE series. We're going to do a market measures, stop losses for zero DTEs. I thought you guys didn't believe in stop losses.
Mental.
We're mental.
All your stop losses are mental.
A lot of people wrote
So
it.
you got wasted like all your potential?
Yeah.
Okay.
People write in about should we use stop losses on zero DTs? Is it better or worse performance? Blah blah blah. So we broke it down.
Okay. That's going to be at 9 o'clock. And then around 9:30, live from the trade desk, big boy Scott Sheridan, counting down all the top trending tickers over at Tasty Trade. That's nice. Scott's back. And TP, programming note, TP is going to be on the Liz and Jenny show. So.
Ooh, what a treat.
Okay. All right. Just be nice. But that's our run of show for today. Hey, programming note tomorrow is #Fan Friday. If you have a trade idea, we would love to hear from you. Again, market's been kind of crazy, but maybe you're seeing something that you're like, you know what? Tom and Bat need to know about this. Submit your trade idea. You can do it at the top of the page. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Yeah. Hit me with my theme music. Let's go.
Our leading story. Breaking news. Coming across the wire. Our leading story. Top story. Just in.
In today's headlines.
This just in. Breaking news.
All right, everybody. Today is a thrilling Thursday. It's November the 7th. It's part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat. I got all the ones from yesterday, but what's on deck for today?
There are a bunch. I mean, AKAM, Airbnb, DraftKings, Rivian, Lucid, Open, Baxter, but not a lot that will probably be really interested in.
Okay.
There are a plethora of companies with earnings today.
Getting to the first headline of the day, the Fed is expected to cut interest rates again today. Here's everything you need to know. The Fed will likely stick to the business at hand when it wraps up its meeting on Thursday with another 2.25% interest rate cut. But market attention probably turn to what Chair Jerome Powell has to say about the future. What a wild week it's been for bonds, pre-election, post-election. What are you looking at, and what are you hoping happens in that market today?
Well, I'm long bonds and I'm long notes, so I hope notes are kind of stronger today than bonds. Bonds are they're down 2 ticks now. Notes are up 5 ticks.
It's almost a pulse.
That spread has been doing horribly the other way the last couple of days, so I need the notes to rally too. We'll see. I'm long.
Euro caught a little bit of a rally, so the dollar get a little bit softer.
Well, the dollar definitely got softer overnight.
Yep.
Well, speaking of that, let's talk about it. For Europe's market, President-elect Trump's return spells euro pain but bond gains. What are we doing in the Eurosphere?
Not sure what they mean by that, because the euro got killed yesterday, but so did the bonds.
Sure.
So I think they got that headline backwards.
Okay. Take it up with Reuters.
Yeah, I'm just saying. I don't think.
I just want to talk about the euro overall. Don't get too pedantic.
Euro's on its butt, and I think it made a really important low yesterday. So we're a little bit long. We're flat to a little bit long euro. We lost a little yesterday. We made some back today. Should be fine.
Okay. Does the euro also get affected by the Fed stuff today, or
no? That's already built in.
Okay.
The euro is more affected by Trump winning, and that's what it's down almost 2,000 pips yesterday.
Yeah.
But making back about 500 today.
Has your wife
about 15 days of up move in one day and made new lows?
Yeah.
Has your wife already booked her trip to go to Europe?
I don't think she books her trips around the up or down moves in the euro. I'm pretty sure.
I'm just saying.
I'll have to ask her, but I don't think.
I'm just saying it's all upside for her at this point.
I don't think she watches the euro.
I bet she does.
To make a shopping decision.
I bet she does. Hey, in other news, let's talk about China now. We talked about Euro. China is now facing fresh tensions with Trump over trade, tech, and Taiwan. What does the new administration mean for your position in Chinese stocks that have Chinese exposures? What does it mean for tariffs and for consumers and whatever?
Yesterday, Chinese stocks were down a little bit, and today Chinese stocks are up big. Yeah. So these are all clickbait headlines.
Sure. But they can still lead to a larger discussion. I just didn't know if there was some certain opportunity, like if you thought China was oversold still, or if there were still gains that could be
I would argue that it's more oversold than overbought.
Okay.
But between yesterday and today, it's like unchanged.
Okay.
It's so typical for a lot of these.
Yep. That's all I wanted to get into.
In November too, like Baidu and Baba.
Yeah. Right. I was just trying to figure out, would you do something in FXI?
We took our position off the other day, so.
Okay.
FXI, Ivy rank at 36.
That's not bad.
No.
That's not bad. Okay.
These other stocks, Baba and Baidu, are a little more interesting, but we'll see. I might lighten up today a little bit, actually.
Okay. So, see, it's not nothing. Hey, half of Japan's firms are targeting a wage hike of 3% or more for 2025. In an effort to combat stagnant wages, slightly more than half of Japanese firms are looking to raise wages for the next business year. Let's talk about the yen.
On its butt still. Can't get out of its own way. Today...
It is up a little bit today, actually, decent.
Yeah, today it's up. Today it's up about a third of what it lost yesterday.
Okay.
But
the low is 63.5. Let's call it. It's 65 and a third right now. It's nowhere.
It's on its butt. It just came down from 74 to 65, which is a huge.
Really without an uptick.
Without an uptick, it's a huge move.
You want to talk about oil?
Sure.
Oil settled lower as the dollar surges. What are you doing at oil? Brent crude oil future settled down around 61 cents or 0.81% to 74.92 a barrel. I don't know if there was a sell-off earlier in the week or post-election in oil.
Same range. I don't think oil cares that much about. Oil doesn't really move a lot with politics.
Okay.
U.S. politics.
Sure.
It has a much more of a global flavor, but
I would concur.
Yeah.
Oil's
down 20 cents today. It's nothing.
Okay.
Good IB ranking there, which has been rallying. IB rank is 66. The stock, the oil future is 71.44. So you may have done something for Tuesday and Thursday.
Option trades today. Yay. Hey, massive move in the Russell yesterday, just because the new administration looks to be very favorable to the financial sector and banking sector. But JP Morgan CEO Jamie Dimon says he is planning to remain at the bank and he has no plans to join the Trump administration, if that will help you sleep at night. I just want to talk about bank stocks, all shenanigans aside, because of and the Russell. Like, what can we do? What are you seeing?
Yeah. Russell caught a bid yesterday.
Yeah, it did.
We're long Russell.
Okay.
So that was fine. Short S&P is long Russell, but that trade worked out fine. No harm, no foul.
Nice.
Actually, even a bright spot, Saad. No.
I think that on a relative basis, the Russell's still cheap, but or on a relative basis, the S&Ps are still expensive.
Mm-hmm.
So we're not changing our position. I'll leave it there.
You have a magic wand and you can wave it. Who do you want to be Treasury Secretary?
Jamie Dimon.
No, but I'm asking you. Who do you want it to be then?
Oh, I don't know. I've never thought about it.
Who should be Treasury Secretary? Nothing?
I'm sorry.
I don't have any. You're asking. I don't have anybody at the top of my.
The top of your head?
Yeah, top of my head.
All right.
But it would not be Jamie Dimon.
Okay. Well, are you doing anything in JP Morgan?
No.
Okay.
I have a position on JP Morgan. It'd be better to put one on today than when I put it on. So please tread lightly in there.
The only good thing about Jamie Dimon is he's a Chicago boy. So.
Okay.
So it can't be bad for the city, but still.
Nah. Hey, the New York Times reports that crypto-funded political candidates had a swell of victories on Tuesday night. The newspaper cites a pro-crypto site called Stand With Crypto, and they found that 253 pro-crypto candidates had been elected to the House of Representatives, compared with 115 anti-crypto candidates, and in the Senate, 16 pro-crypto candidates and 12 anti-crypto candidates were elected. I just thought that was interesting because I hadn't seen a numerical breakdown. Again, I don't know how they...
Somebody be anti-crypto.
Again, I'm taking it from citing my
just
sources in the website. Again, that's how they're laying it out. But I do want to talk about crypto
What do you
and
have to gain by being anti-crypto?
maybe if it's not your area of expertise.
I understand,
just-
but still, what do
okay.
you have to gain by being anti-crypto? That doesn't make any sense.
Okay.
75,500.
Oh wow.
That one, yes. It actually is off of its highs of around 77,000 and change. Those are numbers I've never spoke to before.
I think that
Their highs.
no question, the big bets on crypto paid off, but why would anybody be anti-crypto?
I mean, again, you keep asking it, but neither nor myself are anti-crypto.
Maybe they,
So
still money laundering. Maybe they don't
I understand it, but you're talking about like for campaigning. Like, what do you have to gain by being anti something that every young person likes?
I tried to give you one or two.
yeah, I know. It's your turn to give you
Don't like
examples,
them.
and
I don't know what else I
you're
can
you
do.
don't you're not going to like anything that we say. So can we just move on? What's Coinbase doing?
A lot of young people are really worried about money laundering, or would they rather own crypto? I mean, it's kind of a ridiculous. Why would you be anti-crypto?
Again, no one in this room is anti-crypto.
I understand.
I cannot stress this
I
enough.
don't understand why any politician would.
Maybe you should write to them. Maybe you should.
Concerns about the volatility, potential illegal use. This is just a quick little.
I understand, but why would any politician put that on their platform? There's nothing to gain.
Coinbase.
Maybe they're just being honest.
Can we talk about Coinbase, please? For the love of God.
Talk about it was up giant. It's like $60. It's down about $6, $7, $9 this morning.
Correct.
Are you okay?
It was down $6 before. Now it's down $9.
That's correct.
Oh, it's down 9?
Yeah, but it got out of control yesterday.
Okay. Do you have a position in there?
Yeah, yesterday it was sucked.
IB rank of 62, pretty good in there too. No
$60 was ridiculous.
Hey, might have done something. Maybe a little Coinbase.
You're right. That's right.
Hey, let's get to the earnings from yesterday. Qualcomm pops on the chipmaker's earnings and revenue beat. The Qualcomm's board approved $50 billion in additional share repurchases, and revenue for Qualcomm came in at $10.24 billion versus $9.90 billion. Shares rose around 10% in extended trading, and they beat expectations for earnings and revenue, and they offered guidance for a strong December quarter. Qualcomm,
they said it popped. They're not lying. It's up about $10 or so to 183. This would be a recent high, and by recent high I mean since the summer.
Tom, what are you doing in Qualcomm?
We did an earnings play, not too crazy. We sold the 145 puts and the 210 calls. I think we're going to be fine.
Also, why does their CEO look like every dude on the dating apps that I have?
He is actually the poster child.
He's like, I just want a girl who doesn't take herself too seriously. Okay. Good.
Yeah, that's trying too hard.
I know. I'm just like, what are you?
That's trying too hard.
Where are you going? Where are you going, homie?
That's trying too hard.
In other earnings news, ARM stock slips despite strong earnings as its outlook disappoints. The chip designer saw revenue grow 5% year over year to $844 million, but they did offer softening guidance, their soft sales forecast is what did them in. Did you trade ARM?
I did not. I looked at it, didn't trade it.
Down around $7, 138 and change at the low end of its most recent range from just about this summer also.
I did trade Lyft.
Okay. Did that come out this morning?
It came out yesterday afternoon.
Oh, okay. I didn't have that. Okay, how are you doing in Lyft?
Lyft up to about $3. $3
Up $3.
Oh, nice. Good job, Lyft. I know you probably didn't trade it, but I just want to talk about it. Zillow had earnings, and Zillow is caught in a housing slowdown, but it still beat estimates. Zillow said it earned $581 million in revenue. That's up 17% from a year prior, but it did report a net loss of $20 million, which was narrower than the $40 million net loss that Wall Street expected as we come in to...
How do you have revenue of $500 million and lose money?
Spending?
I don't...
I question the revenue, is my point. Like, did you pay, if you have revenue of $500 million plus, right?
$581 million.
$581 million. Then did you pay $600 million for your $500 million?
500, yeah, right.
$81 million in revenue? Like, I just don't get that.
But interest rates, which means mortgage rates. Well, mortgage rates are still high. So, but I just didn't know if you ever looked at Zillow or if you thought about it as just a proxy for trading, like the housing sector, or if you thought anything was.
No, we really don't trade Zillow much.
Okay. Keeping it moving and grooving. This is fun because I was like, man, what a blast from the past. Beyond Meat had their earnings, and we never talk about them. But for the first time since 2022, their revenue grew thanks to price hikes. They did see a 7% decrease in the volume of products sold. The stock did slide, but I literally forgot that they existed.
What's it trading for now?
What do you think?
What do you guess?
$5? I don't know.
Yeah, just about $6.09, down about 50 cents this morning.
You want to guess how much revenue they made for the quarter?
I'm going to say $250 million.
What do you say, Matt?
I have no idea.
I don't know. I got to go with the size. He's always good.
Now, Tom's got more in the bank. 81 million.
It does not seem like a lot of revenue.
Yeah, well, they...
I don't even see...
Well, Wall Street was only expecting... Well, you don't look for it.
No, I don't look for it. Is it still...
On the way of other fads, Sosnoff.
I don't know, but I will tell you this. My dad was somewhere, I don't know where, because he texted me. He had an Impossible Burger, because for some reason where he was, they were offering it. He was like, it was really good. He's like, that's a tasty burger. No, Sam Jackson.
I was on an airplane.
Yes.
And I had Impossible meat sauce on pasta because you always order pasta.
Oh yeah, it was maybe for their vegetarian meal. Yeah, or their
no matter what you order pasta.
Yeah. Uh-huh.
So I had the pasta. It had Impossible meat.
And what did you think?
I mean, it would have been gross if it was real meat.
How are the options markets in BYND? Is it tradable or not really?
You know what? When you look at the options, you really have one strike to trade, the at-the-money strike. It's not very interesting. I mean, I get it. It's going to get a good IV rank of 51, lower price stock. If you have a directional bias in it, maybe you could do something, but...
Okay.
Not for me.
Hey, Tom, do you have a Costco position?
Don't.
Well, Costco shoppers stocked up on supplies in September as hurricanes and a port strike hit, and that trend hurt Costco sales for October. The warehouse retailer says that demand was negatively affected by abnormal consumer activity tied to September events. What is Costco doing?
Oof, I don't know. I haven't looked.
Costco trading $8.95 on the bid, which would make it up $5 or $6. That's what it looks like. Earnings are December 12th in Costco. So
I mean, this is my longest stretch of not going to Costco.
Oh, well, yeah, it doesn't make sense because you're leaving. So
I know. It's been a couple of weeks.
And I apologize. It's down $2. I don't know if I said up.
You said up 5.
I apologize. Down $2.
That's okay.
89 is the last. I thought it was $8.89. I'm sorry. $8.99 is the last. $8.95 is the bid. So I apologize.
Yeah, I haven't been in a while. I need to make a Costco run, but I don't really. I'm going away, so I don't know what to do with all the Costco stuff.
Yeah. You know what I saw on TikTok? That I don't know that it's necessarily available every Costco, but it was a pizza waffle. And I was like, ooh, like in the frozen. Yeah. It's like yeah. And I was like,
I don't hate the idea.
I was like, oh, I kind of want that.
Or is it lunch?
I don't know. I just saw it was a quick TikTok, and I was like, oh.
Maybe it's brunch.
I was like, tell me more.
It's a waffle.
Yeah, it could be something.
Plain, or you put syrup on it?
I don't know, Bat. You could do whatever you want.
In my freezer, and I have like 10 or 15 different things from Costco that look good when I walk by. Like, I got like.
Oh, the sample thing?
No, not yet. Well, from the samples, like I'll end up buying some.
Right, because you're hungry when you go in there. You have a sample. That's good. I'll have it.
I'll take those lamb shanks, and there's
lamb shanks. Oh no.
I've never had the sample of lamb shank.
Lamb shanks.
Have you, Vanetta?
No, do you know? Oh,
Those lamb shanks. I got like 3 lamb shanks in there. I didn't realize I have them.
that's a lot of lamb shanks.
Schnitzel. I got all this crazy pork schnitzel, Wiener schnitzel.
Oh, diverse. Wunderbar.
Looks good from the outside. So what the hell? But I never eat it.
Hey, EU regulators are investigating if Visa and MasterCard fees harm retailers.
I don't help them.
Okay, the European Commission, which enforces EU competition rules, sent questionnaires about Visa and MasterCard to retailers and payment service providers in September, giving them until October to respond. Visa and MasterCard, of course, dominate the payment market, but it sometimes comes to the detriment of...
Ridiculous what they charge.
What do they charge back coffee? Do you know?
I don't know exactly.
You don't know.
You don't take cash.
Yes, I know.
So they charge. I don't know. I don't run it.
Right. So I didn't know if it was like 3%. I don't know.
Probably is.
I don't know.
I mean, it's a crazy whatever.
I don't know how the back end of that works.
Whatever it is, it's a crazy number.
Yeah.
But I mean, the nice thing is not having to take cash. You don't have to deal with it.
Sure.
Which is a pain in the butt.
Sure.
For businesses, you mean?
For businesses.
Yes.
Small business.
Right.
No, but I'm a millennial. I don't believe in cash. I don't believe in cash.
Yeah, I know. I don't get it. I really don't get it. There's something so satisfying about going in your pocket and just flipping the.
I know. I like it.
There's something so satisfying about waving your phone in the air
'cause you don't know
and
what
waving
you're
it like
doing,
you
and
just don't
you
care.
Look on your phone, you get your statement. You're like, how did this number get to here? And then
No, it's called
you
girl
go in your
math.
pocket, you got $20.
It's called girl math.
I'd much rather pay cash, but
yeah, there's something.
But then where are you getting cash from?
And then watching the kids struggle to make the change.
I always have cash.
But you have to get cash from
I
somewhere.
always have cash. I never walk around without cash.
Okay. Okay, good. Way to set yourself up as a target. You're like, Tom's like, I always have huge stacks of cash on me at all times.
Cash, but I always
And here's where I will be this afternoon.
I always have cash on me. I never.
I leave here by 5.
Cool. I'm gonna jump you now.
I mean, people people go out, and my kids will go out with like zero.
Yeah.
That's me. I don't have any cash.
I can't leave the house without cash.
I
agree.
I mean, look at me. I don't need cash. Like, what am I paying for? What am I coming up out of my pocket for? What am I coming up out of my pocket for? What am I coming up out of my pocket for? Look at this face, huh? Anyway, you already know.
And
Visa.
Me with an empty coffee.
Visa. Let's talk about Visa. Can you trade Visa?
I can say that I need cash.
Yeah, that put 'em.
We all do.
That put 'em.
307 unchanged, but on its highs yesterday or the day before was 290, 307 on that run up.
Hey, Tom, you're not going to like this, but I'm going to do it anyway. Canada is ordering a shutdown of TikTok's Canadian business, but app access will still be allowed. Canada on Wednesday ordered Chinese-owned TikTok's business in the country to be dissolved, citing national security risks. But they did state that the government was not blocking Canadians' access to the short-form video app I'm just...
Stupid.
Okay.
I mean, sometimes
Blame Canada.
Canada is awesome, but sometimes they do incredibly stupid stuff on the regulatory front. Shutting down TikTok, that's so stupid.
Okay, I'm gonna keep it moving. Because Australia is proposing a ban on social media for children under the age of 16. The Australian Prime Minister, Anthony Albanese, on Thursday said the government would legislate a ban on social media for children under 16. The government says it is a world-leading policy. What is Meta doing?
That is so ridiculous.
You really don't understand how some protections
Why don't they just ban TV too for anybody under 12?
But you don't see that there's a difference between a specifically targeted algorithm that can keep serving you things that could be detrimental and then just the general nature of television? You really don't see a difference?
I think there's lots of things that we have to deal with, either raising kids or having kids or whatever.
I'm sorry, how many kids have you raised? Pretty sure your kids were free range. No, you did not. There was not a lot of.
I'm saying.
Hundreds of thousands. You know how many emails we get and chats?
Yeah.
It's ridiculous.
Meta. We talk about Meta.
573 and change, up around $1.50 or so, maybe even $2. Skosh higher. Ivy rank at 13, no earnings looming. Meta higher.
Are you doing anything in Meta, Tom? Or you got out after earnings?
I'm still out after earnings.
Okay. Hey, UK researchers reveal that our air fryers are spying on us and are sending the information to China. Oh no.
What information they send to China? How long?
I know, they're like, this bitch won't fry a vegetable. And they're like, really? You back?
What information could they possibly send? How long does it take to fry
Yeah, I know, but
chicken wing?
But your smart TV is spying on you. That's 100% sure. I'm just saying the UK-based consumer body, which released a report based on
People have lost their mind.
on its privacy findings across a range of products, including air fryers, smartwatches, smart TVs, and smart speakers. And it's concerning reading if you're worrying about the creeping, nature of tech companies and sort of like your TV, like everything.
I do not worry about my air fryer spying on me.
You don't even have an air fryer.
I know, but if I did, I wouldn't worry about it.
I got one, and I was against them for so long, but my parents got me one, and I love my air fryer. I love that thing.
I don't know what to cook in an air fryer.
Oh, you can cook all sorts of things
I know
in
you
there.
can. I just don't know what to do.
Yeah. All right. Well, you go to Pinterest for that. Hey, this is
So the air fryers have requested permission to record audio for the users through the users' phones
yeah.
through a connected app.
Yes.
That's how the air fryers are doing it. So
I wonder
you have to download.
You have more patience than I do, Bat, to try to explain this to him. I know.
In the last 30 seconds.
I know.
And you get an app. You asked how they can do it, so I'm trying to give you an intelligent answer. So you get an app. Now they have access to all the stuff on your phone because you click yeah on everything. They have all your data and all your information. That's how they're doing it. So I didn't know how they would do it from the very beginning either, sad enough, but a quick little search on the internet,
Boom.
which you created, gave me the answer.
Is my salamander spying on me?
No, because it doesn't have an app to it.
No, but your TV is. Hey, turns out Shohei Ohtani had a labrum tear in his shoulder during the World Series, and he actually just underwent surgery to repair it. The labrum tear happened when he dislocated his shoulder. You do not have a labrum. Did you get it medically diagnosed?
Not yet, but that's what I have.
Okay, so I drove with him to pick up the
I
sample.
can't put my hand out the window to get the...
Yes, now he's telling you the truth. This is how he did it. So we have a car.
I have a tear in my shoulder. I do.
Okay.
You have to.
But I play with pain. I'm not like Otani and he wimps out get an operation.
Girl.
You have to literally take your hand, your arm, and reach it like this so they can read the decoder can.
Yes, at the gate, yes.
And, I mean, a child should be able to do it quite easily. He hurt himself doing it. I pray for him next week. Please pray for him.
But I did. It's been this way for like 2 months, but I have a tear.
Ohtani.
2 months now?
Yeah, it's been 2 months.
Ohtani is expected to be ready for spring training. I'm sorry, you just broke my brain. I just can't with you. Why don't you go to a doctor?
You saw him in the World Series. He basically was doing everything he could to protect that shoulder.
Sure, yeah.
I do the same thing.
Okay, again, you two are not the same. It's fine. I've broken my brain. Hey, for my viral video of the day, it's been so unseasonably warm here still in the fall that, except for a few falling leaves, you could still get out on the links if you wanted to play some golf.
Sure.
Like, the weather's been beautiful. But this dude, absolute menace to society. Watch this on the golf course. So he's taking marshmallows and he's throwing them, and people think that it's their ball.
Oh, that's.
But it's a jet puffed. So
All right, now the kids are going to do this. Thankfully, it's too cold here in Chicago.
I mean, there's no environmental impact. It's just a marshmallow. It's just a prank, but it's kind of. But you think you're right up in the green or on the fairway, and it's a marshmallow.
You know what? In this season right now with all the leaves, it's hard to see your ball.
It is.
And so you throw.
Especially the way that you play.
Oh my God, that's
Because the fairways are clear.
That's so unfair.
It's just funny. It's just a funny video.
Funny, but you gave the kids too many ideas.
Well, it's not.
The club will never be the same.
It's not bad. They're just marshmallows. It doesn't hurt anybody.
No, but you have to go find your ball like Thomas.
I know.
I like a marshmallow, but I don't like the fancy.
When was the last time you had a marshmallow?
Does bad coffee have hot chocolate?
Oh, Mexican hot chocolate.
Do you have marshmallows?
No, we have whipped cream.
Oh, you should get artisanal marshmallows. That's a thing.
Yeah, they're like big and they're actually not as fluffy. They're
but they're.
We should get marshmallows. I will get right on that.
Okay.
My main thing.
Okay.
Does Costco sell marshmallows?
I have no idea.
Anyway, but
And that's shelf stable, by the way, okay? Just so you know, they do go bad.
Marshmallows?
They get hard.
And not throw them in hot chocolate. Lasts forever.
That's true.
But I love marshmallows, but I don't like the artisanal fancy marshmallows, like the flavored ones, like vanilla and coconut.
Ooh, I like that. I love an artisanal
do like
marshmallow.
the Trader Joe's chocolate covered marshmallow.
Okay, duly noted. Can I go home now?
No. We'll be back in 90 seconds with Tasty Live. We got more after this with the confirm and send.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with 2 unique virtual events. 6 must-know skills for active traders and 6 option strategies every trader needs to know. Both feature legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
What happens when 2 titans of trading come together to harness the power of their prowess? Yes, let's watch these 2 dominate this popper shop. Wait a minute, I thought these guys were traders, not contractors. They're putting up a lot of bricks. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Oh yeah. Tasty Nation, good morning.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
If you missed the live show, here's our cherry on top weekly recap.
I made smash burgers, and well, I can tell you what I do. That's a game changer. I took it from TikTok. You freeze a stick of butter, and then you put it through a scraper. One of those things, a grater.
A grater, cheese grater.
Yeah, cheese grater, and then you put a little butter on the mix it in with the when you smash them. It's great.
In with Tony. You mix it in.
This is a second language. I mean, you take you freeze the butter. It's like all that, and you take the thing and you freeze the butter. we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. Before we do, let's take a look at the market. Even the S&Ps at heights they've never been before, sodding off at 59.74, up 15 ticks. That's going to make us at new highs. NASDAQ up 100. Russell down 280, and which was the strongest of the group by a 2-to-1 margin yesterday. Dow up 25. You know what? Almost looks like it's unchanged with the magnitude of the market moves that we've had of late. Volatility trading at $16, actually off its low by a nickel. Small move, down 24 cents. But you can see over the last 5 days, how volatility's just gotten killed. Bonds unchanged as they wait the Fed talk at 1 p.m. Central today, 116.08. Notes are up a tick or two, 07, trading 109.
Notes are strong today, up 7.
Notes are stronger. Yep, agreed. Bitcoin cash 74.7. The future 75.2, showing down 1,600. That was off of its highs that it just made last night. Ethereum really hasn't been the mover on a magnitude of a scale, meaning thousands of dollars. But on a percentage basis, up 4% today, up 113. You can see here over the last 3 days, it too is catching a bid. Oil down 25 cents. Gold, after getting really hit yesterday, catching a little bit of a bid, up $14 today. Sad enough, that's all I really have. Earnings, which I don't think we talked too much about. Qualcomm up around 11-ish. Last time I looked, Moderna was up around 6-ish last time I looked. And Carnival Cruise Line, CCJ, I don't know if it came out yet. It looks exactly unchanged. I don't know if that's all I got.
I think we have a Moderna position on. I actually forgot about that.
mRNA.
mRNA.
Trading 55.40 on the bid. That makes it only up around $3.50, well inside the expected move.
Yeah, we're short the 45 puts and the 60 calls.
You should be brilliant.
Brilliant. Brilliant. All right, let's do it.
Yep.
Looks like fun.
Yep.
Thursday, November 7th. Let the games begin. Kind of feels empty without any election rhetoric and stuff going on. My
back to business.
My TikTok is going to be.
You know what? I'm so freaking.
Oh yeah, I know.
Before
my TikTok is going to be now going
I'm
back.
Tired of getting the solicitation on the phone. I'm tired of everything.
Tired of getting the. I've got at least 700 text messages. Hi, this is Kamala, and can you donate $47?
Yeah.
I think I got 700 of those.
They had me going on both sides, everywhere. It's crazy.
Yeah.
Anyway. Time for confirm and send. Give it to me, Sadnov.
Confirm and send. Always time for confirm and send.
Mm-hmm.
One of our favorite segments on the show. These are emails that came back from viewers all over, and every day we get 4,000 or 5,000 emails, 6,000 emails.
Jamie Dimon was born in New York City. I know.
Was this?
Jamie Dimon born in New York City. So you said it was Hope Chicago was born in New York City.
Yeah, he was born in New York City. Yes, absolutely. But his kids went to school at Latin in Chicago. I don't know if he was divorced and his wife lived here.
Yeah, right. I don't know either. Yeah.
Yeah, but his kids grew up in Chicago and they went to school right in the neighborhood. So maybe he's divorced and his kids grew up here. I don't know.
Yep.
What are the preferable option strategies to use when volatility is low, like today?
Find something with high implied volatility. I mean, because they're out there.
What option strategies do you like when volatility is low? Like they're talking about like yesterday.
Yes, but
and in reality, volatility wasn't really that low. It's just lower than it's been.
That's true. Calendar spread, diagonal spreads, even in iron condor. I would say you can throw in there when.
I mean, I don't think anything was off the table yesterday. To tell you the truth, if you could find high IVR,
yeah, you got it.
You can find high IVR. Nothing was off the table.
That's what I said. Find something with high IVR. I mean,
the VIX is still 16, which is long-term average. It's nothing. That VIX futures and the
long-term average, which is good. It's neither here nor there.
Yeah. So, and the VIX
nothing. It might have implied that it was too low.
No, the VIX itself is wrapped around 16. The futures are wrapped around 16. I don't think that that's too low, and you could do every single strategy is on the table with the VIX at 16. What scares me, in 2016, when Trump won, the market rallied after the victory, But then 2017 was the flattest year volatility-wise. I think, I could be wrong, but I think we went the entire year of 2017 without a 1% move in the S&Ps.
Yeah, or we had one. Yeah, like, I don't remember. Yeah.
Yeah, it was the craziest year because I thought we were going to be volatile, and I thought there'd be a lot of stuff going on, and it was the year was so dead volatility wise. Yeah, I want to say 2017 was like the quietest year we've had vol in a long time, and it wasn't until some parts of 2018 where vol started to pick up again. But 2017, vol just got crushed. It was down under 12. It even traded under 10 once. I mean, there was nothing happening. 2017 was a tough year for volatility, but we're still high right now. So everything's on the table. Let's go next slide. So how do you defend a ratio spread that goes against you? Mr. Batista, how do you defend a ratio spread that goes against you?
You want me to just go that far?
Yeah, how do you defend?
So for me, a ratio spread, let's just use it to the call side. Say you bought one call, sold two that are further out of the money. It has an embedded long call spread and a extra short unit. So the first thing that I normally look to do with no buying power needed would be to sell the opposite side one short put. This would create a strangle and a long call spread in the example that I'm using. I wouldn't use any more buying power. You also could sell that call spread in it and make a strangle out of it. So what I'm trying to do is anything I try to do with defending a ratio spread is really just looking not to use any more buying power.
Yeah, so what I wrote back to this person is, so first of all, if you wanted to defend a ratio spread that's going against you, you could sell out the embedded long spread. I'm assuming the ratio is 1/2, just for argument's sake. Yep. You're long a vertical spread, so you're long the big option, short one of the out of the money options. So that's a long vertical. You can sell out that long vertical. You would actually be making, even though your whole position is losing money, you're taking a little bit of profit on that long vertical. And then on the losing part, the naked remaining option, you're going to sell the opposing option against it. So if you have a call ratio spread, you're going to sell a put against it.
That's what I said.
If you have a put ratio spread, you're going to sell a call against it. And that's how we would defend kind of a classic ratio spread. And then this person writes, as I
would be buying an out of the money wing.
No, I wouldn't buy it out.
Butterfly or something like that. Like that.
No, I would sell out the embedded spread and then spread off the other naked option. As I understand it, you can make money in a couple directions, but I'm not clear on when to get out. Well, when you get out at a ratio spread, you get out when if the market moves the way you want it to move, you can keep your credit. And if you have time on your hands, you can kind of wait it out and hope that the ratio spread expands.
That's correct. It goes inside your tent there, your profit tent.
Yep. Let's go next slide.
That would be your short strikes.
I know you don't like getting to a loser, but say I normally trade 5 lots and I only sold 2 options. Then assume the underlying goes against me. What do you think about selling 3 more options at the same price as my original trade so that I'm in my normal, not same price, but they're talking about the same strike as my original trade. So I'm in my normal tranche size.
I don't hate it. I think it's a harder pull to do in the real world. I probably would go down a strike or 2 and get the same original credit that you had, or maybe the same delta that you had when you originally did it, or maybe even a lower delta. But I have no problem with any of it. Sure. If your assumption hasn't changed, yeah, why not?
Yeah, of course. We have no issue with this at all. I mean, if you had done 5 originally and you wanted to do 5 more, then you'd be a little more cautious. But if you only did 2 to start with, and because for some reason you kind of had a hunch or whatever, and you wanted to do 3 more or 2 more, sure, go ahead. Mm-hmm. We generally don't like to add to losing trades, but in this case, because you did less than your normal tranche size, we'd be fine with it.
Yep, agreed.
Yeah, don't have an issue. Let's go to the next slide. So what types of degrees does Tasty look for when hiring people to work on the trade desk or in research?
Sounds enough. Give it to me.
So, couple things here that are interesting. We get this question all the time because we have so many people that watch Tasty that are in high school, going to college, in college, thinking about, should they change their major or something like that. They like what we do here at Tasty.
Tasty has three different kinds. We basically hire three different types of people. I mean, we have more than that, but there's three essential degrees. On the dev side, on our tech side, obviously we're looking for engineers and that, or technologists. They could be network engineers, they could be coders, but we have a whole technology. 1/3 of our company is technology. And so that's mostly engineers, software engineers, like I said, network engineers, security engineers, but they're engineers. On the trade desk, it's a lot more varied. We look for people that have experience because it's a licensed part of the it's the licensed part of the business, and they might have degrees in a variety of different things, but we look for people that have experience in the financial world and the securities business that have licenses. But they might have degrees in finance, they might have degrees in economics, they might have degrees in political science, they might have degrees in English. It doesn't. We're open on the trade desk. It really depends on trading experience and love of the financial markets, ability to articulate financial markets, how comfortable you are with our software, everything like that. How passionate you are about the industry. What your prior work experience was. So we're open in that on the trade desk with different types of degrees. We're not limited to a BS or a BA or anything like that. It's just we're open. In the research, a little bit different. We're looking for advanced degrees, usually. Most times a minimum of an MBA in finance, but we also have a bunch of PhDs. And so we are looking for really strong.
And the English language is not a priority.
It is for some parts here, but on the research team, we have master's degrees in masters and PhDs in data science and physics, in calculus, in financial engineering. And so that's to work on the research team, it's a combination of lots of different people, like Dr. Data, has his PhD in data science, and Jacob in calculus, and other people, like Julia, masters in physics, and Gad, MBA, and also a master's in engineering. Jamal, engineering. There's just different. Dr. Jim, PhD in finance. There are lots of different people with crazy advanced degrees that,
And there's Bat.
There's Bat. And there's the entire Batista family. We do the best we can with what we've got. Let's go next slide.
Promise my mom you'd save me. I appreciate it.
On Wednesday, the VIX one day closed at 1487, which I believe your research said is pretty good if you want to trade the 0DTs. However, the VIX one day was also down from 30. How do you look at this situation? Would you say the VIX one day is still really high and fine for selling the 0DT options because of the rate and magnitude of the contraction, or would you stay away from the 0DTs? Or would you stay away from 0DTs?
I have not traded enough 0-day options this year with the way that the market has moved. And from the emails that I get, people have had some good success. Of course, you're going to find failures inside there. Yesterday, if you did anything in there, it hurt tremendously. Probably took out weeks of profits in 0 days. But it's been good for people. So for me, higher is better than lower for 0 days, and you had that. So I think you have to play the game. If you play the game, you got to play the game all the time. We did a great one on currencies the other day too, about after the election, how currencies behave, and it was to a T. I got a lot of emails about that yesterday. That research was spot on, and people were able to benefit from that. So listen, you take the research and then you make it your own.
So, this is a pretty good question because, first of all, we don't usually see the VIX one day at 30. That was a pre-election number, which proved to be probably pretty correct with the S&P's up 150 yesterday. Mm-hmm. That said, 15 would have been just fine. Bottom line is 15 would have been just fine. And yesterday, probably the 0 DTs were priced, I'm guessing, pretty good. They didn't move much during the day.
Yeah, yeah. And if you look at the last time volatility I'm talking about VIX one day was in that range or higher, we rallied. It was in August. So I mean, you got to extrapolate out a little bit. I mean,
yeah.
It was there for the taking.
Let's go to the last slide. What's the maximum percentage of your net lick you're willing to trade in any one underlying?
Don't do as I do as I say, 3%.
So, obviously for bigger accounts, it's going to be smaller, and for smaller accounts, it's going to be bigger. But for me, I never try to get over 5%. But again, if you send me an email asking me this question, I would probably say 3 to 7%. It really depends on,
account size. If you're smaller, you're going to be using more than 3.
If you ask me kind of in a, you said off the record, what's the most? I'd probably say 15 to 20%.
Yeah.
Because I can understand that in different situations.
Yeah.
So we'd probably say 15 to 20%. We never let it get anywhere close to that, but over 20%, it's too concentrated.
Sounds enough. John Jay College, where does that fit into the whole
It disqualifies.
Is it grandfathered in?
It disqualifies you.
We're going to take a quick...
Disqualifies you instantly.
Even 2 months only?
Oh, 2 months?
We'll take a quick 90-second break and come back. We got more Tasty Live after this one. Oh, joy! Trades from the research team next. Back in 90 seconds.
Hey, Doc. Your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is going to be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You'd look good in either, you know what would good, like a nice Panama hat in the summer.
A Panama hat and a skirt? Oh my God. You look so sexy. I mean, you look like you just got out of bed, like and you just
Don't say it. No.
Fingers through your hair.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with trades from the research team. Shooting from strength with our first researcher is... Sahil.
Oh, wow. You said my name.
I did. I want to give you the respect that you command. I didn't think you would make it this far on the research team.
Oh, wow.
I was wrong. You were right.
You didn't think you would make it how? What?
Thanks for the confidence.
You're welcome. What are you, about 3 months into it now?
No, in June. What is June to now? That's 6 months, right?
Six months into it.
Plus the internship.
Feels like 6 months underwater.
Plus the internship, too. Okay.
Plus the internship.
Yeah,
I think you were going to make it.
Sahil, I had...
Overachieved. You're amazing. You're an asset to the team. Sahil.
Oh my God, you should just keep your mouth shut. I have full confidence you'll be here till you die. Okay, you'll be here forever.
Okay, thanks. Thanks for the endorsement, Tony.
You're welcome, my friend. What do you got for us?
He hasn't really experienced the Chicago winter yet, but
No, I have not. Wait, people are telling me it's not going to be as bad as I think.
No, this one's going to be worse. Wetter, colder, more snow.
Okay.
Worse than what?
Worse than what we had last year, which we had no snow. I think we had 1 day of snow.
When did it snow on Halloween? There was one in Chicago where.
About 4 years ago.
Okay. But it did not happen this time. So.
No, this one was great.
Can't snow until next week. I don't have any heat yet.
All right.
What can I?
What do you got?
Lulu.
Lulu.
Lemon. Yeah.
You know that Lulu, I told this to Tony the other day, Lulu is the best of the worst, meaning that it is actually up for a stock that for an expensive stock
That's pretty wide as well.
that looks like it has wide markets, you can actually get filled in Lulu.
I fought in Lulu for 3.5 weeks to make a buck. I mean, it was a tough one. I went all the way into 10 days left.
They don't give anything away in there.
No.
See, I was wondering why it's on the list of the stuff that you guys usually trade because,
Because it's-
markets are pretty wide. And
Because it's actually tradable.
Okay.
But I currently have a position on Lulu. I have the 300, 350. 300, 350. What's the stock doing today? It's up.
It's up. It's up $4. Yeah.
I have the 300, 350 December strangle on, of which I wish I was a little wider, but maybe we'll get a little wider this
Yeah.
Well, you got a $20 wide iron condor in here, right, Lulu?
Yeah. So it's 270, 370 short strikes with the $20 wings for $4.98.
What do you say about adding that to your position?
I think I will.
Wow.
Just, I'm going to actually take a look at my Lulu position here right now. Have a little fun with it.
It is pretty, high IVR because the earnings are on, I think, the 5th or something.
You are correct. Lulu, good IV rank is 71 because earnings are December 5th inside the expiration of December with 43 days.
But you're going to manage to afford that, so.
Yeah, what are your short
Put them
strikes?
out to whoever's listening.
What are your short strikes?
270, 370.
Oh, 270, 370.
It's around like the 18 delta. Yeah.
Yep, I got it.
$20 wide after that. That would make it 250.
Got it, sir. Thank you so much.
Cool.
All right, beautiful. Good job out of you. Who's our next researcher? Yeah. My man Gad, what's up, my friend?
I'm good. What's up?
Looking good. Everything well?
Everything good. Everything.
Now I've got a lot of, I don't know how the ZZ Top got into my TikTok feed.
From your air fryer.
From my air fryer. So I've got I can't get I have so much ZZ Top.
I'm not a big ZZ Top fan.
You're not a big ZZ Top fan?
No.
Probably you made a conversation about ZZ Top and then
what?
Probably you made the conversations.
Yeah, you
about
made
ZZ
like a list or something like that on that. Tom doesn't know how to do that.
Yeah, I don't really have.
You had me going for a second. You fooled me. I forgot who I was talking about.
But Billy Gibbons died, so I can't figure out and they're still playing. Like they're coming to it.
Mm-hmm.
Yeah. Like
it's okay.
Yeah.
Well, what do you got for us, Gad?
So today I got Goldman Sachs.
Oof.
Goldman Sachs.
believe it
I
or
do
not.
not have a Goldman Sachs position on.
Was my worst performer yesterday.
Oof.
Still a little.
Hiding you, right?
You're still a little shaken.
Yeah.
I don't have a Goldman Sachs position on, so I'm wide open in here. What do you got? What is strikes?
So strikes 540, 550 for put side and 650, 66.
What's it doing this morning? It's
Down a little bit this morning.
down $6.
Mm-hmm.
So you got 540,
550.
Maybe I'll lower the strikes to 530. And then what's the other one?
650 and 660. 660.
So if we do, it's down $6. So if I do 650,
This would be a lot easier, right, Gad?
530, 650, boom, 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 boom. Got it, Gad.
Beautiful. Good
May
job.
just
out of
adjust the strikes for the down move. But how was trading in there? Did you trade there yesterday?
you. It's good, not great.
Yeah, I have trouble in Goldman Sachs.
It's 3-star liquidity, but if I had a mulligan, I would.
It's not good 3-star liquidity.
Yeah.
I agree.
You got a bad taste.
Yeah.
Thank you, my friend. Appreciate it.
Thank you.
Who's our next researcher? My man Kai. How are you, brother?
I'm doing great. How are you?
Doing good. No complaints.
Can I ask you a question? What were you clicking like after you put in the order? You clicking the price or the?
I was just in a price because the stock's down $5.
Because I heard like a 30 clicks. I thought you increased the number of contracts.
He probably went higher first by mistake, and then but lower first by mistake, and then went higher to get back to where you had to be. You know what it is, right?
All right. So SMCI, extremely high level. What?
Stock hasn't had an uptick. We've been trying to play it a little bit. You just started the other day, though.
We took it off yesterday, actually.
Oh, that's good.
SMCI, we took.
That's from earnings trade, right?
Yeah, we took off the earnings trade.
Yeah, but so right now the implied volatility actually increased from yesterday. I put in an order yesterday. Now it's actually 20 cents better.
Stock's going out of.
Sadnov, breaking news. I can tell you why you're getting his ZZ Top playlist.
Why?
Billy Gibbons died yesterday.
No, Billy Gibbons died a long time ago.
Billy Gibbons didn't die. Never mind. I apologize. Breaking news reversed.
Oh, Billy Gibbons is dead.
Yeah, a long time ago.
He died a couple years ago.
Yeah.
No, that's why I said I don't. Yeah.
Yeah, I don't know why now.
Yeah.
Disregard. Cut that out, Beth.
Thank you for that. Thank you for that. Really, that helpful information. That's spot on. Which strikes you doing? 33
and 16. I think there's a strong skew to the call side.
Of course, there's strong skew because any surprises here, anything that weird comes out, like they actually.
The magnitude of the move can only be $23 lower.
I mean, they're in.
That's true.
Magnitude of the move to the upside, while the old highs were 110.
Yeah, I mean, they're going to come out at some point and try to, salvage the stock. But everybody's been reducing their projections.
Guidance,
their guidance, everything.
Love. Yeah.
So you can collect $3, and your buying power is less than $700. Great potential return on capital potential.
Yep.
And the IV is much higher than yesterday. Last night it was $2.90. Now it's $3.20.
I just entered it, Kai.
Wow, don't sell past the close. Good job out of you, my friend.
My problem is I'm going to be on the road all next week, and that means that Tony has to help me manage some positions.
This is called a hedge. All right, for everybody who doesn't think there's any hedges in trading, you just heard one. So no matter what happens on this position, I'm the cause of it. If it's good, I won't be hearing about it. And if it's bad, I'll hear about it for sure.
Are you done?
I am. Yeah. Tom, not Billy Gibbons, ZZ Top basis. Dusty Hill died in his sleep.
Oh, Dusty Hill. Yeah.
2020.
That's right.
And I'm the guy with all the misinformation. Thank you very much, Sadnov, for all that misinformation you just gave us.
One of those two.
Let me get it right this time. Who's next? I believe it's Dr. Data.
Yeah, Dusty.
Right. All that misinformation that you give us.
Hey, guys.
I would like to buy your tie.
You would.
I would like to wear it.
Sure, it's for sale.
Frame it.
What's that?
Everything's for sale.
No, I would like to wear it one day. I would like to rent it, like rent the runway kind of thing.
Okay.
Rent it.
I'll have to.
Bring a blank check and you can have it.
There you go.
I gave up my white jacket 87. What do you got for us?
Well, to be fair,
yeah.
You didn't think I would last either.
You know what? We were so desperate when we hired you back then. I just needed you to last. So I was hoping you did.
There you go. There you go.
Regardless, I'm glad you stayed around.
Yes.
You made my life better.
Excellent.
Yeah.
Same here.
Yeah.
INTC.
Yes, we have a bunch of positions on in there.
Okay.
Yeah.
Well, it was kicked from the Dow. Bam. It was kicked from the Dow, replaced with
Yeah.
video, of course.
And it's done nothing but rally since then.
I know it has. Yeah, it has. I'm fading that move.
And the market's rallied too, but sure.
Yeah, of course. I'm fading that move. So selling the 25 call, buying the 26 call, doing this basically right at the money, doing a little bit of a credit here for this. It's about a 50-50. You're not fading this?
No.
Okay.
I actually.
That's why I'm doing a very defined risk trade on this, risking $1 to make $1, basically.
I actually think that this stock is it's still cheap relative.
It's still cheap relatively. I mean, like if you look at it over a longer time span, but it also has some problems, some issues.
Okay, I'll accept that.
It's a very small position.
Yeah.
Judges will accept that answer.
The judges will accept that answer. Yes.
Good.
I have a little bit of long delta in there. I'm going to try to cover it on.
Yeah.
I have some short puts. I'm going to try to buy them in this morning.
Yeah.
Missed that yesterday.
All right, you ready?
Ready.
Our next researcher. Bing, bam, boom, bing, boom, ah. I thought we missed somebody. That's right, fan favorite. You thought we were going to leave you on the cold Jajun, but no. How are you, brother?
Hello. How are you?
I have one question to ask you before you say one thing.
I didn't watch the movie. But
you didn't?
But I get the joke. I get the joke.
This is insubordination.
What's the matter?
He was supposed to watch Pulp Fiction. He had a week to do it.
Yes.
I know you're in school.
I was too busy watching.
I know you're out, at the parties and stuff like that. I know.
I was too busy watching the Unspecial.
Yeah, I watched on special.
Yeah. He had Unspecial to do. He's spying for the Chinese on TikTok. He's got a lot of stuff to do, okay?
Jajun was just voted one of the best 100% movies. Like, nobody hates it.
Yeah, I nowadays I wake up 1 o'clock in the morning and just working on my papers and working on the bots and just doing everything I can, to make time.
And he's sharp dressed. And he's got the whole. He's got.
He had to go to the dry cleaners.
Yeah, he's got Brooklyn written all over him.
All right.
Gotcha, Jajun.
All right, I'm gonna give you an extension as a good teacher. I'm gonna give you an extension of a week.
What do you got?
Okay, so today we have Coca-Cola. We do a short put on Coca-Cola. Yeah, the IB rank is 62. We sell the 43-day 62.5 and buy the 60. Do a short put spread.
Ugh.
What do I have in here right now?
What did Jajun get in you here in the past?
They were
Jajun,
great.
my little permabull. I love you, man.
He's a permabull. I'm long the 62, 67.
Directional permabull you. It's okay. I like it.
I'm long the 62, 67 call spread. I don't know how. Small.
Probably from one of these cactus spreads that he got you into.
Stock's on its butt. I'll give you that, Jajun.
Yep.
Stock's on its butt.
Got a good IB rank.
Yep.
Sell the naked puts, Sadnov. Give him a little bit, just a taste.
I am.
Go down to 3% of your portfolio and just give him a little taste,
I'm going
okay?
to give him a little taste of the 62.5 puts.
Good work.
I like that.
Jajun, you're the best, man. Thank you for your time. I appreciate you. You're a good sport.
You too.
I watch
see
the
you.
damn
Thanks,
watch the damn
Jajun.
movie before I give you the back of my hand. All right, who's next?
Thank you.
There we go. Ping, pong, boom, boom, pa. Julia, how are you?
Sound.
Julia, how are you? Man, this is the same response I get from most women. Hi there, sweetheart. How you doing? Can I buy you a drink? Julia, how are you? Yeah.
I'm great.
Oh, there you are. There you are. Usually they don't answer. What's going on, Julia?
I got a couple movies for homework on my list I haven't seen. I still haven't seen Revenge of the Nerds, although I did see Animal House. That was a trip.
Yeah, I don't know if it stands the test of time, but I get it.
I'd argue it probably doesn't. It's not perfect, but what are you going to do?
Right. I get you. You've seen Pulp Fiction, though, right?
Oh, yeah. I grew up on Pulp Fiction.
That's
for sure.
right up your alley. Yeah.
My dad's obsessed with Tarantino.
Yeah. He had a great run there for a while. All right, what do you got for us?
So, wow, man, I felt like I was navigating landmines today in terms of figuring out what to trade. And you know what? Ironically, didn't actually seem like as much of a landmine was actually Boeing. Because with all the crazy news that's been coming out with Boeing over the last couple of weeks, it's actually stayed relatively sideways. You know what? Let's do a small defined risk position. Why not? Because I feel like everything's a bit of a shit show right now. So today I'm looking at an iron condor. I'm looking at the 130, 170 short strikes. IV index in here is pretty good. IV rank in here is very good. It's around 51%. Collects $1 in credit for under $400 in buying power. Signature little baby trade. It's a little bit more skewed to the put side because it is Boeing. But I decided to go neutral here actually because it has actually had some pretty positive moves actually the last couple weeks.
Well, we are long Boeing already. We're short the 145, 160 strangle with some extra puts attached to it. So I have a bunch of long delta, not a bunch. I have long delta in there, and we're playing it to bounce a little bit. Stock's up like $1 today, I think. But it's been a pig.
Long Boeing, that's interesting.
Yeah, I know it's been a pig, but I'm short the strangle. I'm just going to keep my strangle on, but I have the same idea that you have, same strikes.
Nice. Okay. Well, you know what? I'll take it. Let's see.
I think that's a win. I looked at Boeing too, pre-market as you are.
Yeah, I'm short the 145 put, so I'm a little more aggressive.
I wouldn't go as far as to be bullish on Boeing, but we do have the saying over on Bad Trader, which is that it's too Boeing to fail because the most ridiculous news will come out about Boeing and nothing will happen sometimes. But you can't predict the future.
Too Boeing to fail?
It's too Boeing to. It's not too big to fail. It's too Boeing to fail.
I kind of like that. I might change it to too Batista to fail, but
You know what? I'm a good enough sport to let you do that, Sad enough. Yeah. Thank you, Julia. Appreciate it. Thank you for giving Tom the opportunity to make fun of me once again before the opening. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell. Thanks, Julia.
Peace.
Thanks all the researchers.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you have any questions, feel free to toss them in the chat.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with just about a minute before the market opens here, Sadnov. Well, you know what? Since we've been here, we haven't had too much movement in the market. Even the S&P's up 1875. They are on their highs. There you go. They're on their highs right now.
Bonds are a little higher than they were this morning. They were down a half a point. They're up 9 ticks in the notes.
That is correct. They're about 3 ticks off of their highs.
Notes are strong. Russell's a little weaker.
Russell and the Dow have been weaker all
Nasdaq's
morning.
really strong.
The S&Ps and the Nasdaq, yes.
I think you can kind of not sell them yet, but we're getting very close. 6,000. You give one of these back.
Yeah. 59.78. It almost. It was
Two
a
hands.
huge disappointment, Sadnov, if we don't hit 6,000 this week. Huge disappointment to the Bulls. It would be. They would hate this.
The Bulls really know.
They would hate it. It'd be so disappointing. It would almost be like not worth it to even come in. For sure. Well, you got the opening bell here in just a second. Sadnov, what are you thinking? I know it's business. Volatility down 34 cents, trading near its lows.
Oh no!
Oh, way too quickly. Although those are lift puts you're buying back, so that's good.
Lift puts. Oh, at a nickel.
Filled on Coke.
At a nickel.
No, lift puts you got filled at a nickel. Coke you got filled at $2.99.
Okay, that's fine.
Equities. That was from my friend.
That was no. Actually, I was long a call spread in there, so I bought back, sold out the call spread, Coke, and I sold a naked put.
You in Coke, you.
I hope that's what I did.
Yes, you did. Yes, you did. I'm sorry, I didn't.
So I should just be short.
I
should just be short naked puts in there now.
Yes, you are.
Okay.
Good.
Um,
You think Jajun's really waking up at 1 o'clock in the morning to papers and stuff like that?
Jajun?
Yeah. I feel like I should send him something.
My God, of course he's waking up at 1 o'clock in the morning.
I feel like I should send him something.
What do you want to send him?
I don't know, some sort of little care package or something like that. Coffee. Something.
Jajun.
Maybe edibles so he can stay asleep. I don't know, something. Even the S&P's up 21, making new highs. Let's take a look to see who those movers are. Let's go to the Bucker side. If you want to. Coin down $6.80. DJT down $4.60. RC.
You know what's weird about DJT? After Trump won, you thought that stock would be like 75 or 80 based on the expected move. It's lower than it was.
Right.
Which is really weird.
Yeah, you are correct. You are
Looms off the.
Really weird. I mean, the stock has no revenue. I mean, it has earnings November 8th, which is tomorrow. I don't even know if it's before or after the close. I could do a little bit more research on it, find out for you when it really is. RCL down $3 and change. Goldman Sachs down $3. JP Morgan down $3. Costco on the rumor that Sadnov has not been there in a while and won't be there this weekend, down $2.59. Tesla down $2. Some of these stocks that made monumental runs to the upside are taking a very small breather.
Qualcomm
earnings up $7. Make you holla.
Qualcomm up $7, which I think is pretty well inside the expect. Oh, did I just get filled in Qualcomm?
You did.
Okay, Qualcomm. We just
$1.78. It looks like
we just took a profit. Shocking. We don't usually make money in Qualcomm. Let's take a look. So the earnings plays last night worked. Qualcomm, yes. We made.
I sense a pattern, Sosnoff.
We made a little over $1.20 in Qualcomm, and in Lyft.
It's not like you. Yeah, right.
In Lyft, we bought them back at a nickel, so that had to be a good one. The next one remaining is.
Did you sell some calls in Lyft too?
No, I just sold naked puts.
Remember, I didn't look.
And then the last one is Moderna. So we're short the 45 puts and the 60 calls. That has to be good.
Wow, my Taiwanese sources say that you can't believe Jajun on LinkedIn and everything else. He's always posted stuff like he never sleeps. He's about as driven a young man as I've ever come across. So good work for Jajun, man.
Jajun.
Fam, gotta hustle.
So
And not all of us are born with a silver spoon in our mouth. So you gotta hustle.
So anyway, Moderna is a winner too. So Moderna, Qualcomm, and Lyft all work.
mRNA, yes, you got filled at 529, South.
Yeah.
Markets in Moderna are okay, right? I mean,
which one?
Moderna, mRNA. They're okay.
Yeah,
they're not like really disseminated well. There's plenty of volume there, but they get kind of wide.
The markets in there.
Yes.
They're kind of crapola. I'm staying short.
Dow down 83, Russell down 11. Even the S&Ps and Nasdaq both up. Nasdaq up the most. 100%.
Yeah, 140 is a huge move in the Nasdaq.
VIX one day. What do you think it is, Sadnov?
I have no idea.
$12 and change. 12.70. Back to normal, Sadnov. Place your bets. Place your bets.
Yeah, the big movers today are the. Let's do this really fast. Let's get our position a little bit in line here. Biggest losers for us are SPY and Qs, and the biggest winners are everything else.
Beautiful.
Looks like we don't have another problem, children. Oh yeah, MEK. I'm sorry, ES and RTY.
Okay.
The Russell is down and the ES is up, and that spread is not working today.
What's the gas up?
On the positive side, the yen is a lot higher. The euro is a lot higher. I'm actually looking at our euro position.
Mm-hmm.
I think we overdid it yesterday to the
Euro up almost 6, right?
yeah.
Good move in the euro.
Yeah, after yesterday.
Uh-huh.
All right, let's see.
And to supports the research that the team did on the euro, which is really cool.
Yeah, now let's take a look at some working orders here. So one order we have working is in Lulu. I thought we came in long Lulu. Check this for a second. Give me one quick second before we do this.
Take your time.
Lulu. A little bit long. Not much. So in Lulu, we want to roll up our positions a little bit. The other one was Goldman Sachs.
Mm-hmm.
It's down 423.
It is trading 591.75.
Yeah, and they killed premium in there this morning. Murdered it.
Yes, they did.
Yeah, I do not think for trades in the research team we're going to get filled in there. So I'm going to
use help in there.
Yeah, we can still use some help. The next one is SMCI.
Gold catch a little bit up 21. Sorry. Apple catch a little bit of a bit up 3. Apple was an underperformer yesterday.
Apple was an underperformer yesterday. Yeah, that's a pretty good move in Apple.
Yep.
You know what? Apple's kind of been, would you call it a little bit dead here?
Yeah.
I'd say it's dead relative. Yeah, some of the stocks that got, some of the underlyings that got a little bit crushed yesterday came back a little bit today.
Mm-hmm.
Gold, silver, one and two of them, the euro and all that kind of stuff. I think people came a little bit closer to their senses.
Yep. A little bit closer?
Yeah.
A little bit closer.
I think they got crazy yesterday.
Mm.
I think it was a little bit, let me just check silver. Yeah, I think gold and silver came back to their senses. They were down so much yesterday. It was kind of like an ugly move. And
it sure was. Gold up just under 1%, 0.75%, right?
Yep. All right, let's see what else we got here. Yeah, other than NASDAQ is just crazy. That's the big problem child for me today. I don't know about you.
NASDAQ's the leader in the clubhouse. It was not yesterday, right? It's like just kind of like a rotation. We're getting back to it. Well, not getting back to it. The market is more like it had been in months past, where Russell and Dow kind of moving together, and even the S&Ps and the NASDAQ kind of moving together. They're both up right now. Russell and Dow both down right now.
Yeah, Russell's down a little.
Volatility in by 64 cents. Oddenough, giving a little bit. Bull market.
I'm looking at this SMCI.
Not tradable.
It's very fair.
SMCI up 16 cents. Let's look at some of it. Got dollar wide. I mean, it's got dollar wide strikes. That's good. It's got 5-cent wide market. That's not bad.
I'm just telling you my experience here.
147% monthly implied volatility. What is your experience showing you here, son? I mean, it is only a $22 stock. Show me another $22 stock that puts $10 out of the money or trading for 90 cents.
Yeah, I mean, listen, you can.
I mean, the world. I mean, yeah, it's there if you want to place your bets. I mean,
big premium crush today in Coinbase after yesterday. I will throw that out there if you have a Coinbase position.
I'll tell you, crush. It seems like it's everywhere, sound up. But yes, you are right. In coin, a nice little downtick in volatility for sure.
I'm going to widen out some strikes in there. I think that is the prudent thing to do.
Yep.
Let's see, 75. Beautiful. Take a fill, Phil.
Good job, you.
Yeah, the only stock I can't get filled in this morning is the one I told you that I thought was pretty easy to fill, and that was Lulu.
I didn't have quite the fun time that you did.
I can't get filled in there at any price.
Mm-hmm. Chinese stocks catching a bit too. Baidu up 2 and change. Bob up.
Yeah. So, what do you feel about on these Chinese stocks? What's your gut?
I have a position in Baidu. It's come back very nicely. I'm still a small loser in there. I was almost a green scratch the other day. I should have probably have taken it. Maybe more like a red scratch. Maybe I should have taken it. I'm sitting in there. IV rank is still high. I'm giving it a shot.
Okay, I'm going to sit too.
I'm working it, but it's been a worthy adversary.
I'm going to sit too.
I mean, I've been playing it to the upside, and the stock really hasn't gone up. and I didn't catch it when it was, trading 94, like where it is now, 93 and change. I caught it more when it was like 104. So to be down a buck and a half or so on the trade, not so bad.
I think I'm going to take some small profits in K-Web and leave all the other ones on.
Yeah, if you catch the direction right, I think you can take it off. I don't think they're the long-term hold.
Yep. All right, I'm good.
All right, you ready? Well, fan favorite from the research from the unspecial on Tuesday night. Victor Jones is next, and hear me out. Although he did disappoint me, I don't want to air my dirty laundry, Victor. You did disappoint me, so I'm not going to talk about it on the show unless you bring it up. We'll be back in 90 seconds. Let's Tasty Live.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with 2 unique virtual events. 6 must-know skills for active traders and 6 option strategies every trader needs to know. Both feature legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Don't die like squirrel.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
I got my Ted Lasso.
You actually have pants on.
Yeah, of course. I'm in school.
Huh, got it.
You're flexible.
Oh, nice. You are pretty flexible. Let's see, get that leg up again.
Oh yeah, he's really. Right now, my other leg is cramping.
I believe that to be true.
Tomas, we are back, my friend. You know what that means? Enough out of you. My friend Victor Jones, hear me out.
Oh, yeah. Tom, Tony, Tasty Nation, how you doing?
We're doing great, Victor. Nobody I'd rather be in a foxhole than you, my friend.
You too, Tony.
All right,
you
my
too.
brother. I know me. Yeah, I know.
Oh, so many rich undertones there. Thomas, you got a smile ear to ear, my friend.
He's with his friends.
How
Why
are
would he
you?
be smiling?
How art thou?
I'm just
Tom hasn't.
I'm just a happy idiot.
Tom hasn't answered a single text that I've sent him in the last 24 hours, Tony.
I know.
Just so you know.
Do you know what? I saw. Yeah, it's so nice not getting one of your freaking out.
No, it's so nice ignoring him, which is one of the biggest birds you can give somebody entire life. I mean, it is so good.
I ignore him all the time. It drives him crazy.
Oh, it's the worst. It is the worst.
Yeah, you guys.
My wife taught me that trick.
You know what? I like when you guys go back and forth with your text messages all night. Like,
I just like that we know that you haven't left the group, and that's why I keep responding, because I know it drives you nuts.
Nothing bothers me more than a group text. Even with my own family, I'm like,
I know.
Don't.
Even with your own family, we consider ourselves your
Don't
family too.
group text me. Victor does it. Josh does it. You do it. Brittany does it. Everybody does it.
Frankie does it. Beth does it.
Scott
does it.
Group text. I'm like, don't group text me. I don't want text message going off all night long when one person goes back and goes,
Victor, I'm going to ask a question. Right now. I don't want to know the answer to, but I'm going to ask it to Tom anyway. So how come you don't answer my text messages when it's just you and I?
I always answer your text messages.
You didn't answer it last night.
I was asleep.
It depends on the
You
topic.
were asleep.
It depends on the topic.
I mean, what time was it? He doesn't even know. What time was it? He could have been asleep. Let's see. 7:19?
No.
You were up? All right. Thank you. He's just an asshole. Got it. All right.
I was up, but I might have been on the other phone. I don't know.
He might have been on the other phone. What, the bat phone?
I'm very busy.
Very busy.
Yeah, I don't have a lot of, free time, and I'm doing stuff.
Capacity. Anyway.
Yeah.
Victor, how are you, my friend?
Gentlemen,
7:19.
all right.
It's a little before my bedtime.
You know what I was thinking?
You're not going to talk about GEO again, are you?
I'm not. I'm just, I'm leaving that on Twitter. What I'm going to talk about is self-reflection. A little bit of self-reflection after the fact. I don't want to go too deep into the election results specifically. I don't want to talk politics today.
Okay, good.
But what I do want to talk about is one of the biggest winners coming out of election night. And I think it's so wild that you guys just happened to have an election unspecial, and you had two of the CEOs running betting market companies. Because when all is said and done, when the smoke clears, when all the polls are closed, the pundits are done squawking, the opinions have been given and were wrong, largely wrong all over the place. What shined brightest was the wisdom of crowds. And we could talk about the actual polls themselves, or what people, what people actually voted, or we can just talk about Cauchy, Polymarket, predicted, maybe let's put an asterisk by that. But the point is the wisdom of crowds through the prediction markets and how much better they were, how much closer they were throughout the campaign to the reality of the outcome when all was said and done.
Why does that surprise you at all?
It's not that it surprises me, my friend, but we now have sort of this new mechanism. We have this new mechanism. I think, some people maybe had issues with polls. People had issues with media bias. And in many different ways, Cauchy and Polygon specifically, or Polymark, are sort of emerged as this, in a way, unbiased, more truthful mechanism of viewing the world of politics.
All right, well, I'm going to stop you there because you got a good rant going. I'm going to push back on all you guys, because all you guys faded the poly market. There was only one person who didn't fade the poly market, and that was me. And you actually said, I know how Bat's going to go. He's going to play the numbers. He's going to say that, it's...
Well, that's not fair, but go ahead.
It's not fair.
No, what's not fair is that
it's true.
I'm the only efficient.
And you also, all of you were talking about the whale at Poly Markets skewing the markets.
I didn't.
Or maybe you didn't, but the other people
I'm not talking about specifically those markets because I don't like talking about any of those markets. But I think the argument here that you're missing, Victor, and the same thing for Tony, is that we built Tasty from day one.
100%.
We built Tasty on the foundation of efficient market theory. That's all. You're just talking about something that we started this, 14 years ago, before there were any kind of election markets. I mean, one of the reasons that I've been talking to John Phillips for 7 years now, one of the reasons that I've been talking to Shane from Poly Markets and from Tariq is because I have long believed that efficient markets, need to come to everything from sports. We need to put everything on an exchange, from sports gambling to election markets to event-based stuff. I love all this stuff. Some of it I question just some of the authenticity of some of it in different places, some of the sports betting markets, some of the crypto markets, things like that. But the reality is Tasty was built on a foundation of efficient market theory. Is why should I listen to what he thinks, you think, or Joe Blow thinks? That's why we don't have guests about certain things when there's a market out there telling us what the expected move is. There's a market out there telling us what's going on. Why do we need to listen to something else? Like, it doesn't make any sense. It's never made any sense to me.
I don't disagree with you at all. I think when all is said and done, the 2024 election will be the election of the long form podcast, and it will be the election of political betting markets. I think those two things will emerge as likely staples of elections going forward.
No, you want to know something?
They didn't get everything right. I mean, the popular vote was something that they
didn't get everything right. They didn't get the houses right.
Of course, just like an Ivy.
But I don't agree with you, Victor. I don't think that's the takeaway.
Okay.
I don't think that's the takeaway.
Why do you disagree first? Why do you disagree first, and then what's the takeaway?
Okay, I disagree only because I think the takeaway is something very different. I think that, and I'm not saying it to play devil's advocate, I actually think the takeaway from this election cycle is, and I tried to kind of cover this yesterday with Dylan, but the takeaway from this election cycle is that you need to, if you're going to run for office and you're going to resonate with the voters, you need to understand how to articulate your vision and your accomplishments. And that is not something that that incumbents do very well. And that's not something that
this incumbent didn't do well.
No incumbent does well, and in anywhere. And that's also something that was the most obvious takeaway, I think, from this election cycle.
How's that a takeaway? The only job of an elected representative is to be able to articulate a vision. If you think that 2024, we didn't learn that, you think we didn't know that an elected leader should be able to articulate their vision for the future or their record as an incumbent, that is table stakes, my friend. It's not a takeaway.
You would think so, you would think so, but the reality is that CEOs of good CEOs, one of the things that we've learned over the years doing Tasty, one of the things we've learned doing, 2,000, 2,500 bootstrapping episodes and all this stuff that we've done over the years, one of the things that has become really important to us and very apparent is that when people come on here, they're starting a new company and they cannot articulate what their model is, what their vision is, and how they're going to create free cash flow, their business inevitably go out of business within 2 years. And there's nothing left. And we go, what happened to that business? They're like, it's gone. And that's why 80% or 90% of startups fail. The reason that so many politicians fail and the reason that so many incumbents fail and everything else is because that same issue, the inability to articulate your strengths, your prior accomplishments, and what your vision is. And one of the most important takeaways from this election cycle is that the Democrats were not able or capable to articulate their success, period.
I respect you a lot, Tom. I really do. I think that take is so wrong. I think it is, everybody keeps trying to say that where they missed the mark was explaining it to all the dumb people. They just didn't get it. And if you had a different message, if you used a different set of words, then all the dumb people would have gotten it. And here's what they don't understand, my friend, is that the people on the other side of that message are the ones who still do not get it. That it wasn't the articulation, that the people understood the policies. They understood that the realities of their lives. They were able to take an A/B test, and they did not vote for the outcomes that they saw in their lives that they didn't want anymore. And it was not messaging. It was not the inability to articulate. It was people who were able to measure the outcomes in their real life, and they rejected.
You're so far off base. It's not even close.
I know you think that, but
that's not what it is.
I know you'd think that, and that's the problem. And that's the problem here, is that when I turn on television, I see all these people who got it so wrong. When I see all these people, the polls were wrong, the pundits were wrong, the stories were wrong.
Again, by the
stories
way.
They were propaganda. They were so far off of what the working class people in this country thought, believed, and they were so far off of the conversations they were having with their wives or husbands, with their kids, with their uncles, and with their neighbors. They were so far off. And the American people showed up to the polls in 2024. I know I'm not speaking for everybody, but I'm speaking for the outcomes of that election. And they showed you that you're wrong. They showed you that they're not dumb, that you cannot lie to them, that it's not about the stock market, it's about outcomes. It's about their outcomes in their everyday lives. And it was not the message, my friend. It would have helped. A better, more articulate vision would have helped. But I don't think the message was the problem.
In a certain way, we're saying the same thing, but I'm saying it. I'm being more brutal about it. But yes. You're trying to defend a position. You're trying to defend an untruthful position, and I'm trying to explain that it was more of an inability to articulate something that actually happened than it was disenchantment. Mm-hmm. Okay, so I don't believe that.
No, I think
we're never going to agree.
It's the result. I know we won't. And it's because it's the result of a K-shaped economy. It's the result of certain people living a reality of outcomes that doesn't match the reality of outcomes of another group. But that other group has the microphone. That other group has the platform. And that group is reflecting and speaking to the realities of their situation, which is in no way congruent to the other group living the bottom side of that cake.
You're living in a theoretical world that made that whole thing up.
You got Senate, House, and governors all going red. So did that tell you that the media was giving you their narrative and not really what the people were going to say?
No, I understand what you're both saying, but you're creating a story to fit your narrative, to fit the results. That's not what actually happened. No, but anyway, you're never going to convince me.
All right, that's fair.
I've watched way too many bad CEOs. I've watched way too many really bad speakers.
No.
Yeah,
I'm
I've watched
agreeing with you. I'm agreeing that there was bad articulation, but I'm telling you that wasn't the cause. And I think you could have put anybody in there, not run a primary, not run an open convention, not allow the will of the voice of the people to be heard. And I think 10 out of 10 times, you get the slickest talking politician to deliver that same message on the same record, you get the same outcome. And that's the problem, that people think it was the message and they still don't understand. But let me go back to your efficient market
I'm done with this.
theory.
This conversation doesn't even interest me because it's I don't believe it for 1 second. It's all garbage. Go ahead. Keep moving.
He doesn't want you in his foxhole either, but for a different reason.
Yeah, it's just I hate this argument because it's
he was never getting you in the foxhole.
I'm not making friends with this message.
You're trying to defend essentially lying and bullshit and everything else, which just drives me crazy.
No,
I hate that
no.
message.
See, that's the problem.
I just
man.
can't
That's
stand
the
that
binary
discussion.
whataboutism. All right. Let's go
Let's
back
move
to
on.
efficient market theory.
Yeah.
Let's go back to efficient market
Sure.
theory and let's apply it to policy. One of the cool things that RFK had put out, regardless of how you feel about the individual, one of the cool things he put out was something called policies for the people. Have you seen this?
I don't know what you're referring to. What is it?
Okay, so policies for the people. It's basically like JIRA, but for public policy. So basically, if you go to this website, Policies for the People, the people are able to put up basically tickets, like JIRA tickets, what policies they believe are important, and other people get to vote on those policies. So the things that people think are important, they're bubbling up to the top. People can downvote up, vote down. It's like Reddit, but applied to public policy.
Yeah, I know how JIRA works. I've used it many times. I got it.
I know you do. This is my point, that you have managed your companies in a very agile way. And one of the cool things about betting markets was it applied the wisdom of crowds and brought it over to politics. I know we've had it around for a century or something like that, but the point is it proliferated in this election cycle.
Okay.
What I think is cool is we are seeing I'm going to call it innovation within the political realm in an agile manner. So this Policies for the People, to me, is a pretty cool idea. As long as you can get enough liquidity around it, you can see directly the policies and the issues that the people care about. And the people have a voice now to push topics or policies higher up for their elected politicians to actually address. So my point to you is just that the efficient market theory, when applied to betting markets, I think delivered a better outcome. And my question is whether or not efficient market theory, along with agile development technology methodologies, when applied to public policy, could also lead in the long term to better potential outcomes in public policy, because it gives the people and the wisdom of crowds a direct voice to the elected representatives.
Sure. I would have no issue with that at all. I mean, if you're asking me if I would have an issue with a public JIRA policy and using that approach to supplement or complement, some of the decision making or policy making on a governmental level, sure. No, I have no issue with that at all. I like it.
All right. And then the third, go ahead.
No, I'm just saying I would have zero issue with all. I mean, public comments on things are, the regulators do it now. You can comment on any SEC, filing. You can comment. There's comment periods on everything. I don't think they're that effective, but I think they definitely have it already. Sure.
The top four, I'm going to read you really quickly, and then I'm going to give you my third one to get out of here. The first is single issue bills
Please don't
for
leave me alone.
Congress.
Please don't leave me alone.
Single issue bills, what?
A single issue bills for Congress. In other words, we stop voting on omnibus stuff with a bunch of pork in it. We vote on one issue at a time, and we get to see what the elected representatives, what their stance was on these individual issues. The second is term limits for senators and representatives. The third is national voter ID law. And the fourth is ban artificial food dyes, yellow 5, yellow 6, and red 40.
I don't have an issue with any of those. I mean, the only thing that would 1, 2, and 4, I have zero issue with at all. In fact, I would support the single issue ballots, or whatever you wanted to call it, single issue bills.
Single issue bills.
Yeah, no problem at all. The second one was what was the second one again?
Term limits for senators.
Term limits for sure. 100%.
No more career politicians.
Yeah,
basically what
100%. I'm 100% buying term limits for politicians. And number 4, banning certain dye, red dye, yellow dye, green dye. Sure, but get rid of them. So the only one, the third one, which is the voter registration thing, I have no issue with that either. I just wouldn't want to slow down. I think the whole process of the way we vote needs to be
paper ballots.
It needs to be kind of reinvented or reimagined, because I think it can be much more efficient. It's so slow right now, and I think that it's also disruptive. I mean, I know you can vote early, which is a nice thing, and most people did. But if you wait till election day, a lot of times, you're on a multi-hour line, and it's really slow and it's very inefficient and it's kind of a waste of time and you have to work and things like that. So I do think there's problems. I wouldn't want to slow that down. But if you wanted to make voting registration, more ID driven or something like that, sure, I don't care.
Oh, wow. Look at that.
None of those four things.
We're meeting in the middle here, Thomas.
Yeah, I would never. None of those four things bother me at all.
All right, the last little item I'm going to give you. I'm sorry, I'm running over, but
don't worry, I'm reading the chats. They're beautiful.
You've always said something. As an entrepreneur, you got to be willing and able to make deals. Just make the decision, make the deal, learn from it, good, bad, or indifferent. You've got to be willing to make deals. And I wonder if 2024 ends up being the year where we turn the page on super divisive politics and we start making deals with each other, that labor and capital start making deals with each other in the same way that we just saw Boeing and several other, the port strike and negotiation, that the only way that we can find the price of a better future is if we start negotiating with each other, sitting down and not seeing the person across from us as the Republican or the Democrat, but the counterparty to a negotiation. And we start saying, all right, this is what I'm willing to chip in. This is what I'm willing to give. What are you willing to give? And we start working towards making deals with each other, stop seeing each other as enemies and seeing each other as counterparts. I believe now more than ever, we need to start making deals with each other. I'll give that to you as sort of a final thought.
I'm not sure what you're.
And then I'll get out of here.
I'm not sure what you're asking. A person that loves to do deals, if we should get better at doing deals. I mean, I'm not really sure what you're asking.
I'm just saying that it's time for our government to take on Tom Sosnoff's philosophy with regards to getting things done, to finding compromise, negotiation, and getting deals done versus this locked, divisive nature where nothing gets done on behalf of the people. I'm giving you your flowers, man.
The challenge you have is that there's, generally speaking, there is a big difference between deal makers and politicians. Politicians get paid for not making deals. I'm not sure I would blame a Boeing situation on politics or some of the various corporate situations where they can't reach an agreement on politicians. But generally speaking, politicians are not decision makers. Politicians are negotiators, and politicians are pleasers. They are not necessarily deal makers. The risk, the disingenuous part about being a politician is sometimes you don't make deals that you want to support or you believe in because you think that it will hurt your chances for reelection and it won't have the support of your constituency even though you believe it. And that is that is not something that supports quick deal making and decision making. The reason that anything gets done at all in Washington is because you're able to bury yourself, in the midst of 450 votes or 100 votes or whatever it is. And so you're able to kind of get buried in the majority or minority. And so you don't really have to stand out that much. But I agree with you. I mean, of course, term limits would solve a lot of those problems because, maybe if you don't have to worry about reelection,
you're not there just to survive anymore. You're there to express an explicit opinion.
Well, there's lots of ways to make politics better. One is term limits. Second is to create incentives, just like you would in corporate structure, so that politicians can benefit from the level of inflation, from the level of unemployment, from the strength of the economy, so that, if you really want to do it in efficient market theory style, say, listen, if you want to be a politician, fine, but here's your base salary, which is going to be minimal, and then it's enough to cover your expenses living in Washington, and everything on top of that is going to be based on how we do as a country, how the economy does. And so you're going to be focusing on different things. You're going to be fiscally responsible. You are going to make decisions that that are good for everyone, not just good for a single constituent or constituency. So I think there's a lot of things we can do to make politics better. And I also think there's a lot of things that if we did that, it would give you wouldn't be able to have an election like we just had, where somebody could say, hey, the world, our economy is in a horrible place and you're in a horrible place, when the reality is our economy is strong and you're not in a horrible place. You want to see a horrible place? Go here, or look back, 15 years ago here. I'm just saying that if you measure everything, if you essentially quantify everything and you base everybody's pay or salary on that, then yeah, you're going to have a whole different, and you have term limits, you're going to have a whole different group of politicians, and you're going to have a whole new slew of decision makers that all of a sudden show up overnight. Because in order to get paid, they're going to have to make decisions. So you want to do that? I'm all for it.
I did not think that this conversation was going to end with agreeing with you on this take, but I agree with you 100%. The last thing I learned: never fade Tony when it comes to politics. Well done, Tony.
Oh my God.
Never fade him.
Never fade the odds. That's all. You're going to win the majority of the time. We're going to take a quick 90-second break and come back. You know what? I'm going to let you back in my foxhole. We're going to take a quick 90-second break because I want to heal. All right? We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a market measure next.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
If you missed the live show, here's our cherry on top weekly recap.
Beth, I forgot you used to go on the road.
Oh yeah, she was on the road for 2 years.
And then she had the Bellagio written into her contract.
No, but it was. I think Beth, were you at the Flamingo with us?
Never. No, we would just go there for dinner.
Don't worry, Nikki. They put me in the Barclays across the street.
You're a camper. You could rough it.
Yeah, you're a camper.
Right? Yeah,
you're a camper guy.
You're a camper.
Hold on, you're a camper.
Oh my God. Is there anything up? Don't stand up. Is there anything up there?
I have no clothes on underneath my shirt. Tom wants me in the office.
Oh, no.
Oh, no.
Oh.
No,
Can you put that leg up again?
No.
No, do not.
Oh.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this market measure. Even the S&Ps march on. They're up 27, starting off about 3 handles off of their highs.
Surprise you?
Yes and no. I'm more surprised by yesterday's magnitude of the move than I am by today's, 30-handle move. I'm not surprised that the NASDAQ is strong today. It was the weakest of the group yesterday. NASDAQ is now flirting with its highs. I'm torn between this 6,000 number that we need to print for everyone just to get out their 6,000 hats, and we've already done the 21,000 and change for the NASDAQ. I've got my finger on the trigger to sell them. I have not sold them well yet, but I think you can by Monday. I said fade the first move. I got to put my money where my mouth is eventually.
Good move in the notes. Bad move in the Russell's just weak today. Don't like it.
I'm a little pissed. I bought the euro pretty good and I let it out. I should have held on to it a little bit more.
Yeah, I'm not loving this Russell move today. After yesterday, that's for sure. Looking at the rest of the kind of the positions we have on to see if there's any problem children. Individual stocks, not really, but I'm surprised by this Tesla move. I really am. I think at current prices, it's a little bit ahead of itself, don't you think?
Kinda, yeah. I'll give you that.
It's getting to a little bit of a scary level here. I mean, I'm not shorted. I will put that. I will go on record. I am definitely not shorted, but I am getting to the point where I think you got to be kind of close here.
You would think. I think we're on the same page.
Yeah. Looking to see if there's anything else that's just kind of like crazy, and I don't really see it. Yeah. Anyway, maybe I'll adjust some positions later, but right now I'm just kind of waiting. Go through my watch list one more time. I mean,
waiting and watching.
I'm really surprised by the DJT move down to almost $7. It doesn't make any sense to me. That's the one stock I thought would be $55 or $60 right now. I think everybody in that case is the buy the rumor, sell the news thing. And I am surprised by certain stocks like Reddit almost trading 130. Like, what movie are they watching? And Coinbase came all the way back. It was down about $6 or $7.
Reddit's a beast.
Reddit's a beast. Coinbase was.
Well, you know what? It makes sense. I don't know if with the outcome of the election or anything else that regular TV news outlets are getting less popular, and the online news is and these podcasts and other podcasts are catching a bid. So Reddit, I mean, not as surprising.
I get all of that. I'm just saying the stock came out at $28. It's $128.
Yep.
They usually misprice things, but not that much.
Yeah, I get it.
Yeah, that's all. Taking a look around to see if there's anything else that's kind of like crazy. Gold.
JP Morgan down 7. Russell's only down 7. JP Morgan down 7, and Goldman Sachs down almost 4.
think those stocks got a little bit ahead of themselves.
I would say so.
Yeah. I have a JP Morgan position on that. Actually, we got back a lot of what we lost yesterday in there. Not all of it, but a lot. All right. Well, let's move on. It's 9:20 and we have a market measure coming up. We're going to talk a little bit about stop losses and zero DTEs. Liz and Jenny covered something along these lines yesterday, and we're going to go back and kind of review it today. They did it in the SPX pit. So most professional traders, just so you guys understand this, like if you're trading in the S&P pit and you're actually making markets in the 0 days, I can 1000% guarantee that you don't have a stop loss in. 1000%. There is no way to even enter a stop loss order. So the first thing, a little bit of a story about stop losses before we get into telling you what's upcoming. When we first built Thinkorswim years ago, we didn't have stop losses at first. We didn't have charts and we didn't have stop losses. We didn't have charts. We didn't have charts because we didn't know anybody actually used charts. We didn't have stop losses because we didn't know anybody actually used stop losses. And because when you come from the trading pits, there are no charts and there are no stop losses.
Correct.
And
so they need those silly things.
So when we started to build the platform and we launched it, we never had a stop loss on there. So somebody wrote to me right when we first launched, they go, how could you guys launch a platform with no stop losses? Every customer uses stop losses. We're like, really? Never saw a stop loss before. Never saw anybody use one. Now, you have to think about this for a second. If floor traders who are making all the market makers, and making most of the money, never use things, and the retail customers who were never making any money use all these things, which side are you going to lean on? It's like, how necessary is it? So that was kind of like, that's the efficient market part of us thinking out loud. So first thing we said was, well, nobody uses stop losses. You can't make money with stop losses. And they're like, yes, you can. You have to have a stop, all this stuff. So we're like, all right, well, we'll build in stop losses. It's not like it's hard. And stop losses are held on the exchange. So we don't hold them.
Right?
Yeah, we don't hold them on our servers. So nobody can see your stop. Like people used to go, oh, they're hunting for my stop.
But the exchanges, you're not talking about the market makers. You're talking about the entity.
They're held on the servers at the exchange, and they don't get triggered until some event triggers them, some price triggers it. So we don't hold anything here. Like nobody can see anybody's stop orders at any firm. Nothing gets held by a broker or anything like that. It's all on a server somewhere being held electronically. You can't see it or anything like that. But it's just an order type that we just didn't know people actually used. We had seen orders in the pits before that were stop losses, and the customer was always getting killed on. So we're like, well, why would anybody ever use this? So anyway, that's kind of the little backstory. Markets are a little more efficient today, but we'll talk about this more in a couple seconds.
Mm-hmm.
So we have a live event coming up next week, and tomorrow's my last day to promote it because I'll be gone. But we'll be in Edinburgh,
You'll be here tomorrow morning, I believe.
I'll be here all day tomorrow.
Oh, all day. I didn't know if you were going to make the close. I'm so sorry.
No, all day. I don't leave till
Your
Saturday.
last day. You'll have another day to
I know. I don't leave till Saturday night.
Well, you just said your last day. I apologize. I was listening to what you said. Not
Saturday night, I'm going to get.
I was listening to what you said, not what you were thinking.
I'm going to get I'm not going to leave without my free sushi from the lounge.
I understand.
Just kidding. Edinburgh. Next Monday will be in Edinburgh. Next Tuesday in Manchester. Next Wednesday in Birmingham. Thursday in London, and Friday in Dublin. And I cannot wait. And it's going to be a fun little show we're going to be all over the place. Going to be building a very short-term portfolio and getting stuff done in very short order. Only have an hour to make about 50 trades. So we're going to be all over the place.
Beautiful.
So bring your helmet.
It'll be fun.
You're going to have no idea what's going on. You're going to have no way to follow it. And it's going to be
nowhere to run.
And nowhere to run. It's going to be nothing but fun. I promise you. I sure hope I make money so Scott doesn't fire me. An evening of live trading. Each day we start at 6. We open the doors at 5. We start talking at 6. We start trading at 6:30, and we'll go straight to 7:30 or whatever. We won't be able to post our trades unfortunately, we're going to try to stream some of it live, but we can't post them because in the UK, you cannot post trades on our software. It's against, there's a regulatory issue with it. So here you can post the trades and you can display them, but in the US, but you can't do it in the UK. Bummer. There's a couple things you can't do in the UK. That's one of them. Anyway, all right, let's go to the market. Let's go to the market measure. So stop losses for zero DTs. Sponsored by SIBO. So for zero DT options in the right underlyings, they're fast, they're liquid, and they are accessible to retail traders, obviously. The typical Tasty approach calls for high probability trades. That's like a lot of short premium. In an efficient market, the downside is there are occasionally some really bad losers. Today, so far, we've been trading in a pretty narrow range, which is a good thing.
Yeah.
Stop loss management involves closing trades that turn against us. How effective are stop loss orders in controlling downside risk for zero DT positions? And what is the cost of this protection? You want to take a guess here?
I don't even know how to quantify it. Like, are they doing by percentages, money? I don't know.
No, money, not percentages.
I don't know the number. From I don't.
Let's take a look. Do you think stop losses are effective?
I do not think they're effective. I don't use them. If I thought they were effective, I would use them.
Let's go to the next slide.
Now, I have no problem with having a mental stop, or if you want to, like during the day, you have a price that you want to get filled at on a trade that you already have on. I do that all the time.
We're going to look at selling strangles and straddles even. We're going to manage each trade at 25% with a variety of stop loss levels from 50% to 300%. From 50% means if you sell something for $1, you buy it back at $1.50, right? That's where you stop at. You sell something at $1, you buy it back at $4, that's 300%, right? Do you think there's a difference between waiting till it's a higher percentage or doing it fast?
I got to think waiting to a higher percentage has got to help you out. It's just a complete guess.
Huh? Okay.
Would you guess the same way, or would you think it would be different?
I know the answer, so I don't want to say.
Okay.
But to answer your question, I would have guessed the same way.
It's probably wrong, but yeah.
All trades were assumed to exercise at mid-price and subtract $10 to $15 from your daily P&L for more realistic results, because you're going to, there's going to be a little slippage. So let's go to the next slide. A lot of slides here, so we got to go through these. But 15 delta strangles, that's your kind of your widest strangle. And the results here, when you have a very close stop loss, you didn't make any money. Okay, it was your average was negative $10 or negative $16. When you had 150% stop loss, 200 or 300% stop loss, you made a small amount of money. The bottom line here was that when you're trying to collect about 25% of max profit, it's doable. You're probably better off not using a stop loss at all. Okay, for a wide strangle. Let's go to the next slide. So when we go to the 20 delta strangles, the results are exactly the same. You're better off not using a stop loss. Okay, because it didn't really help you. And
those are notes you sold at 110.02.
Yeah. So I did a bunch of notes the other day, and when I say I bought a bunch of notes the other day, and I'm just selling out a little tiny bit of my position. I'm not selling any of my bonds. I'm just selling a few notes. We bought them lower, so that's actually a little bit of a winning trade. Anyway, so if you're doing the 20 delta strangle, same exact thing as the 15 delta strangles, no difference. Let's go to the next slide. When you get up to 25 delta strangles, you collect a little bit more money. The stop loss, it didn't really hurt you. You didn't make a lot of money no matter what by using a stop loss, but it didn't hurt you. All the numbers were profitable. So you could get away with it. And if you go to the next one, John, because you're going to see the percentages are almost the same. As you start selling bigger strangles, like 25, 30 deltas, 40 deltas, and you're going to see straddles, the stop losses all came out as positive numbers. You didn't make as much money as you would have made if you didn't use the stop loss, but they still turned out to be positive numbers. So go to the next slide, John. 40 deltas, I think it is. Oh, no, straddles. And the numbers are all positive. So it was funny because my takeaway from this whole piece with stop losses was that if you wanted to do kind of a riskier trade, the stop losses ensured that over time you made money. But if you didn't use the stop loss at all and you were selling straddles and very high delta strangles, your net average daily P&L was almost double this. So what it did was it cut down your net P&L by about 50%, but it did on the big numbers, on the big delta numbers, it did create a positive P&L. On the low delta numbers, the 10, 15, 20 delta strangles, it was a negative P&L. Let's go to the next slide. So here are the takeaways. Unfortunately, when it came to controlling outlier risk, only very aggressive stop loss orders were successful. Stops of 200 or 300% did little reduction in CVAR compared to management of losers. This also resulted in a lower average daily P&L and lower win rates. That's kind of where I was going to. But if playing close to the money strikes, the exchange of reward for risk may or may not be right for you depending on your investment goals to further out strikes. However, there was distinctly better performance for traders who are willing to let their losers ride. Finally, bear in mind that unlike limit orders in a fast-moving environment, stop loss orders may fill at worse price than their limit orders. That is correct. The bottom line here is if you want to use a stop loss order, you can on bigger deltas. It's just not nearly as good as not using it.
Let's take a quick, there's a lot of knots in that sentence. Let's take a quick 90-second break and come back. We got more Tasty Live after this with your friend and mine, oh joy, Mr. Scott Sheridan from the Scott Sheridan Studios. Next, back in 90 seconds.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Yeah, Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
We're going to play an interactive game, but are you open?
Yeah, sure.
Okay. In order for this game to work properly, you need to go to your front door right now.
Wow. What? Gotta go to your front door.
Oh.
Elijah left you a present. Go ahead.
You really want me to go to my front door?
And while Tom is getting his gift,
So these will be available starting today on a win-only basis, right?
Don't trade hangry. It is strongly recommended that trading hangry may cause the following results: trouble walking, long-winded storytelling, mispronunciation of words, inability to feel empathy, forgetfulness, and trouble uttering words like "thank you" and "you're right."
Oh my God, keep your shirt on.
no, right there, please. It's sweep week.
Like this?
Please.
Oh my God, Tom, take the other. Oh no,
let me
take
see
the other
those
shirt off.
peanut-sized nipples. Oh, please, come, yes. Oh, happy chauffeur, happy chauffeur. Look, he feels like he's part of the club now.
Come on, that's a quality shirt.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this man. That's right. Dee-dee. Your friend of mine, the ever popular, the extremely handsome Mr. Scott Sheridan from Scott Sheridan Studios. I hear your family's watching today, so I added that.
Oof, which ones? The funny thing is when you say whatever, like back to this, and then like the good conversation, the premium content has to come to an end. It's like zip it, like this.
Yeah.
Ixnay on the premium content. A.
He's like my son Vinny at a pool party when Dad came out dancing.
Oh, what, they were dancing or you came out to dance?
I came out dancing.
No, you can't. I've never seen you dance. I'm gonna sell you.
I was bringing drinks and stuff. They're only 14.
I'm gonna sell you. I've never seen you dance. I can't dance.
I can cut a rug. You kidding me?
I cannot dance.
Oh,
Although
sexy time I give you, come on.
I didn't ask you about sexy time.
You know how it goes.
Okay,
I
didn't ask you about sexy time. I asked you about dancing. I cannot dance, but I will let it be known, and Tom's gonna give me a hard time for this. Can't believe I'm gonna say this. I'm in a vulnerable state right now, so I'm gonna say it. Taking tap dancing lessons.
Hold it. What?
I'm taking tap dancing lessons.
What do you mean you're taking?
I haven't started yet, but I'm going to. I gotta find the place to do it.
Are you kidding me?
Are you out of your mind? Why?
Because I think
going through a crisis.
No, I think I've always liked tap dancing. I've never done it. I want to see if I can do it. It's a challenge.
You can't do it.
You don't think? You don't think I can do it?
Sneezed.
Why?
First,
I got good ankle movement.
You can't do it.
I got full range of motion in my ankles.
My wife was a tap dancer.
Was she?
Yeah.
See?
Honest to God.
And my guess she's gonna say, good for you, Scott. And if you want any pointers, I'd be happy to give them to you.
Yeah, she could shuffle on a buffalo like nobody's business. That's a move you'll learn.
Is it?
Yes.
See?
You just started that because it's kind of a fundamental move.
I think the shoes with the test could be a little annoying, like in the house.
Can I just say?
Here it comes. Here, I want to know.
Did you take ballroom dancing? I know you got to pay it forward to the 6th. I get it.
I did.
Can't you?
And I tried ballroom dancing.
Ballroom dancing.
And I failed miserably.
You're doing this by yourself.
Can't you do like a merengue or cha-cha?
No, she's gonna do it with me.
That first.
The two of you are doing tap dancing.
Yeah.
Oh my God! I want to come watch. Please, can I come watch?
How are you going to be the oldest people in there by like 50 years?
I'm not doing it with a group. I'm getting instructor. That's how I roll. Get an instructor.
Private tap dancing. There's people that teach that.
I am totally flabbergasted. I could get like a merengue, a
I have
cha-cha,
it. The tango.
A little salsa.
The tango.
I can get it.
Yeah.
Don't make me come.
I can get you doing that.
Don't make me come to your rehearsal. What do they call that? Not your rehearsal.
Oh yeah.
Oh yeah, you're coming.
Graduation, like his graduation.
Graduation party.
My recital.
Your recital.
Yeah, when I do my recital. Yeah, you're coming.
That's the freaking best thing you've ever said, son, though.
You're
I wanna
coming.
come.
You're coming.
Don't make me come.
I'll do it in
Oh,
here.
my God.
I'll tap in here one time. I'm going to do it.
With your hair, you're going to look like Borat in your tutu thing that you wear.
Hey. Actually, for a Christmas party, which won't be till next March or April, you could be the entertainment.
It could be.
Be awesome.
Oh, I'll.
You have broke my brain today.
I will
Honest
pay.
to God, it takes
I will
a
pay.
lot.
I will pay to have the tap dancing floor put down.
Let me see how far I've progressed. I'm not going to, because I have to say, like, I really wanted to go surf.
How far you progress?
Yeah, because
you're not going to progress anywhere.
Because I'm not going to do it.
You're going to try it, and then you're going to. It's like the instructor's going to say, "Oh my God, you're so talented." And it's like, how long can I keep this grift going?
Okay, so okay, I wanted to learn how to surf.
We have tap dancers out. Who is a tap dancer out
You
here?
want to learn how to surf.
So I did it.
Okay.
Now, have you ever done?
You went on a vacation. You took surfing.
You took a surf lesson.
One day, I took a surfing lesson. I wanted to know if I could.
One day.
Yeah, I got up.
You tried surfing. I don't think you can say that.
I mean, I took a surf lesson.
You learned.
Well, I'm not dropping into a half pipe if that's what you're asking me.
Yeah.
Okay, but I got up and I probably made it 50 feet plus.
Yeah, that's
Now,
wonderful.
the crazy thing is, I'm like, this is amazing. The wave was maybe like this big. Okay.
You didn't learn how to surf.
Well, yeah, I did. Okay, have you ever stood up on a surfboard and gone on a wave?
No, I have not.
Okay, then you can't comment.
But I've gone scuba diving.
Okay,
but I'm not a scuba diver.
Well,
I don't have my license.
Okay, I have my scuba. I have my
comfortable doing my own equipment.
I have
going into the abyss.
I have my scuba diving license, and I will tell you, there's not that much difference other than the safety factor, where you learn like things you should.
I was in a pool in Club Med. Okay.
I did that. That's right.
I was in a pool in Mexico. I got my license.
Yeah. No, they didn't give you a license. They don't give you a license. They give you the training so that you could go down 30 feet.
Yeah.
And they don't care if you die.
30 feet, I thought I was going to be dead.
Right. 33 feet. But yes.
I would have paid to do that too.
Yeah. But I got up. So let's see. All right. You guys are naysayers. Now you've just.
I'm not a naysayer. I think you are quite capable and you're in excellent shape. And I think you will.
Yeah.
If you wanted to do it, you can go and get on a nice pike someday. But going one time.
No, not that. Tap dancing.
Oh, tap dancing?
You're a naysayer at tap dancing.
I'm a little skeptical about the tap dancing. I'm a little. I can see you when I close my eyes. I can see you in Hawaii on a pike. I cannot see you.
The six is pretty excited about it.
I'm sure she is, and so is the instructor. I mean, I gotta imagine that's gonna be fun too. Do you wear the
shoes?
Yeah, I'm sure.
Oh, there's somebody out there that's a tap dancer. Who's a tap dancer on the research team? Somebody was.
Tap dancer?
Well, when they don't get their market measures done on time, they tap dance around like crazy. I mean, there's a lot of tap dancers.
Somebody out there is a tap dancer.
Seriously?
Yeah, I can't remember who it is.
Jules was a tap dancer, wasn't he?
Jules?
I'll sell Jules at being a tap dancer. Okay. All right, I'll report back. I think I'm doing it in Arizona. I'm not going to do it here. So I'll have 4 months. And when I come back, maybe I'll be ready for the party.
I think Julia. Ask Julia. I think Julia was a tap dancer.
I could see that. And you wouldn't make fun of her.
What?
You wouldn't make fun of her.
I wouldn't make fun of her, but she was a tap dancer when she was 6. Okay.
All right, listen. I want to get to it. What difference does it make? I don't ever want to get to the point where I say I'm too old to do that. Although there are a couple of things I'd say I'm a little.
There are a couple of emails here asking if you.
Yeah, take away your man card.
Are you trans?
Am I allowed to say that?
Oh, I don't think with the new president you can say that anymore.
I can say that.
No, I don't think you can.
Yes.
No, you can say you can take it away. I don't
You
think.
can't.
Oh,
But I can.
Got it. Okay. All right. Listen, I want to do it, so go ahead, make fun of me. I don't care.
I'm not making fun of you. I think it's
you
great
are.
that you're doing it.
I think it's impressive. I think it's impressive that you said something, but I've also
not ball dancing. I'm sorry, Freudian slip. Ball dancing is
mound ball dancing, ball, whatever. You're right. Go ahead. Yes.
I mean, I've seen you play golf. I think you should take up tap dancing.
Thank you. See, I knew you had to get a criticism in there somehow. I appreciate that. Thank you. All right.
It'll be better for you.
Okay. I'll report back.
I mean, she would appreciate a little bit of salsa dancing and stuff like that.
I don't have hips.
What?
I don't have hips. Like I can't.
But you got good ankles.
Yeah. Well, I don't know. I haven't done it.
How's your wrist?
Pretty good.
All right, good.
Okay. So I do have really good wrist foosball. Okay. You want to get into that? Okay. So we could talk about that. So I'm assuming in my ankle.
I took dancing lessons on Ravenswood.
Yeah, you took one dancing lesson with your daughter. Okay, 3.
And I was there for the graduation or the recital.
Oh, I didn't get invited to that one.
I did.
No,
well,
I
I'm
did not.
talking about the unveiling. I
Oh,
guess.
we saw that. We saw the actual. We saw the first and only.
There was no graduation. He was a private graduation. You know, like those kids that go to college and they don't do it on time, but they get their graduation with the 4 other kids that didn't do it on time. That was his thing. There's no fanfare. There's no speaker. There's no nothing like that. But I watched you at the unveiling, I guess it would be. And I mean, I don't want to embarrass you, but I think if the instructor was there, they would have been a little disappointed.
Yeah, that's fair.
You overperformed as far as I was concerned, but the teacher would have thought you were disappointed.
So do
Accurate?
Cole and Corinne, are they taking dance lessons?
No, he's not doing a regular wedding. There's no dancing.
There's no dancing, there's no smiling.
There's no laughing, there's nothing.
There's no laughing, there will be no pictures.
What? Oh, because you said it's not right, not traditional.
Yeah, I mean there might be dancing, but it's not like there's
Not like take his mom for
a concert. Yeah. There's no walking down the aisle thing.
no walking down the aisle thing, which is pretty much the foundation of any wedding.
Okay, I'm just telling you.
So they're going to go to the courthouse, get married.
No, they're getting married. They're getting married at the wedding.
Well, you have to
Getting
go,
married
you have to
at
go
the venue.
Yeah, you have to go get. Well, at least in Illinois, you go to see.
You have to have a marriage.
You have to get a marriage certificate.
Yeah, whatever.
I'm sorry. A hippie is just getting married.
So wait a minute. So what does it mean that there's no traditional walk down the aisle, but they're going to get married? They're just going to walk, stamp. There's no music. He's just going to go.
I don't know.
Oh, you do know.
I don't know. He hasn't told anybody yet.
But you know enough to know that he's not walking down the aisle.
There's no aisle. They're just having like a little ceremony and blah blah blah, and then
Little ceremony. You should work for the FBI, the CIA, or the mafia. What
ceremony party. That's it.
I know, he really should.
What?
I've been saying this for years.
But never mind. I'm not going to ask.
I don't know. You're asking me questions like I don't know the answer.
But you know that there's no ceremony.
Yes.
So is a rabbi, a priest, a justice of the peace, is a what?
I don't think it's a rabbi
Goomba?
or a priest.
You want me to come and do it?
I would bet it's probably somebody that got their license.
Oh,
Is it going to be like?
He's a true Sadnov. He's tucking. I get it. He's got it. I got it.
Okay, is it going to be like Cole did cases?
That was awesome. By
It
the way.
was good.
That was awesome.
I think so. I think that's what they're doing, but it's not Case.
Yeah, I figured.
Maybe one of his friends. I'm not sure.
I figured. Is Case even invited?
Are you invited?
That's 50-50.
I haven't got an invitation yet.
Well, it's not 6 weeks out. Did you get a save the date? If you didn't get a save the date, you're not invited.
I did.
No, you're not invited.
I'm full disclosure, and that's for everybody out there in TV land. Don't invite me, please. Okay, I'm happy
what?
with not going to weddings.
Me too.
I'll send a gift.
I'm going to one. Although I am going to one. I'm looking forward to this one. My niece is getting married next weekend.
You know, this weekend, I don't think you even know this. I'm going to my niece's wedding.
Your sister's?
Weekend in
Yours?
Jacksonville.
Really?
In Jacksonville? How are you going to get to Jacksonville? When are you going?
I'm walking. I'm going to fly this time, Tom. I'm going to fly this time.
When are you going?
I'm leaving Friday night after the close here. Of course, I don't miss days here because that's how I fly. You hear that, JJ? Because we're going to talk soon. So that's how I fly. And I come on home Sunday night. I'm only staying for Friday at 11 o'clock at night.
That's really nice.
I know you would appreciate it.
Have you ever been to Jacksonville?
I don't believe so.
Have you ever met the niece?
No.
Where's the wedding?
And I haven't met the family.
Where's the wedding?
Some beach club, Jacksonville Beach Club.
So they're all younger than you, right?
Everybody in the world.
16 months. The mother is 16 months. My sister's.
Yeah, 16 months younger.
12 or 16 months, I forget.
Jacksonville's a huge city. Like it's really from one end to the other.
Big?
2-hour drive.
No, it's not.
Jacksonville?
2-hour drive?
Oh, it's like an hour.
Is it really? It's that big?
Yeah, Jacksonville's big.
From the airport, you're saying?
Not a big city like population-wise. It's kind of small, like 1 million people, but
What's the capital? Tallahassee or Jacksonville?
I think it's about 30 minutes from the airport, I thought.
What's the capital of Florida? Tallahassee?
Capital of Florida. Good question.
Jacksonville? I think it's What is it?
Cape Coral.
Definitely not. I think it's Tallahassee.
Tallahassee. It's
Tallahassee. Yeah. Are Tallahassee and Jacksonville close?
I don't know because I didn't know the capital. You're making me feel really stupid right now, but thank you.
Tallahassee's got to be somewhat close to
When
Jacksonville.
the S&P's up 37, you were almost on the show when we touched 6,000, 59.96.
Next stop 7,000. Next stop 8,000.
No, I think we stop it.
You think we stop?
I think we're stopping.
Okay.
We're almost at 6,000.
I'm going to my niece's wedding. She dragged me.
Have you ever met your niece?
No. I haven't met the family. She said I'm the only one that looks like her, and she would like the support.
That's very nice.
Blonde hair and blue-eyed. So I said, okay, I'll come.
She doesn't really know you then.
She's met me. She's met me a few times, and she knows me, and she loves me, and I love her. It's very, very nice.
Oh my!
How often do you guys talk?
Just about every week.
Do you?
Yeah. She's more my older sister, who I also met really about a time.
Wait, older? You have one older than you?
I got an older brother and an older sister. He passed. He was about 14 years older than me, and my older sister is about 11, 12 years older than me.
They were brother and sister?
They were brother and sister. Same mama.
And your dad?
Oof.
He was a Rolling Stone.
Papa
well, you know why? He looked a lot like me.
Papa was a Rolling Stone.
Yeah, Papa.
Wait a minute, but he wasn't married to the mom.
Married anybody.
Oof.
Only marriage? It's like Sazlov's wedding he's going to do with his son. Hey, yeah, we're married. What do we hate about this stuff? We're married, yeah. Nah, see, that one doesn't hurt because it's a lot older than me. This one, she's only like, I say 16 months because I skew it a little bit. I'm born in July. She's born in July. So it's more like 11 months, 12.
It's more like 12, but go ahead.
Yeah. I mean, Dad was really.
But that's not the same as the older ones.
No, different. All different women.
Does she know the older ones?
No, but I've introduced them. They don't really talk.
Got it. All right. Well, thank you for the therapy session.
Yeah.
And
you're welcome. You're welcome. And there's a younger one.
How old's the younger one?
10 years younger than me.
Where's that one?
Last I heard, Florida somewhere, we had a little falling out. So the boys don't talk, the girls don't talk.
Oh my God.
Me and my sister talk.
Wait.
You think you got any brothers and sisters you don't know about?
No.
You got a fakakta family too. You got a bunch of halvesies.
Yeah, but we're not fakakta.
That's.
Well, we're not fakakta either. We just didn't know each other. Nobody told us. That's not our fault. The child's fault.
He's got a good point. I mean,
I understand it's not the children's. Like, I didn't meet my first cousins until we were in our 50s.
Okay, so you got a fakakta family too. That's not the norm.
Wait a minute. Uncle Marty?
No,
the other one?
Other brother. Yeah. Never met his kids until we were in our 50s.
He's still alive?
No.
You think that's the norm?
Wait, the other ones, where are they? California?
Yeah. Never met any of the kids, though.
Scott, you tap dancing fool. You're the only normal
First
one.
cousins, never met them. We never met each other until we were in our 50s.
That's crazy.
Crazy.
Yeah.
When the parents.
How sad,
Well,
right?
But the parents don't speak, so.
The parents didn't talk.
Did your mom talk to him?
No. It was
Okay, well.
different side of the family.
Yours didn't talk.
I know.
And my father just omitted.
So it's so funny when you meet your first cousins for the first time in your 50s, you're like, our parents are such idiots.
Yeah, of course. Of course.
That's the only first thing you say to break the ice. Listen, our parents are idiots.
Right. Agreed.
Yeah.
Agreed.
It's like,
Gotta tell you, when I came in this morning, not the direction I thought this show was gonna go.
yeah, you thought we were just going to talk about your tap dancing the whole time.
I didn't think I was going to talk about tap dancing. When I woke up this morning, I didn't say to myself, today is the day I'm revealing the tap dancing. I will report back because I know now you're interested.
Oh, I'm interested.
Okay. I'll send you some video. All right. Should we get to some business?
Sure.
All right. Top 15 symbols going through the system, first 40 minutes of the day. No broad-based indices or futures. Tom, for you, number 15, SMCI at a 65. For everybody else, Tesla at a 44, NVIDIA at a 37. Qualcomm at a 45, Meta at an 11. Amazon at a 16, AMD at a 22. Coin at a 47, TLT at a 47, PLTR at an 11. DJT at a 47, ARM at an 18. Microsoft at an 8, Apple at a 19, Intel at a 40, and Tom, for you, number 15, SMC at a 65. Rounding out the next 10, GLD at a 68, MSTR at a 50, APP at a 36, TSM at a 44, Boeing at a 48, AVGO at a 35, and SMH at a 36.
Beautiful, beautiful.
Sell them here?
What's that?
You sell them 6,000?
They just traded 96. They're 95.50 right now. Yeah, this is it. You have to. Yep, I agree. My option.
Here's the good news. The higher they go, at some point.
1702.
What's
shaded?
What's 1702?
5702. You have to. You don't listen to what he's saying. Listen to what he's thinking.
What's 57?
11702.
6702.
No, 11702. Bonds.
Oh, 11702. Like,
there you go.
Seriously, it's like
Time's up.
it's like
26 ticks. That's
it's like talking to my wife. Like
I know we were talking.
I get
about,
that half sentence, and she's like, now at least she's at the point where she'll say, "Sorry, I didn't give you the context," because I usually get the that like 117.
Yeah. Yeah. Well, you're supposed to know there's a trade. That's what it'll tell you.
You're supposed to know.
Even
that.
though we
You
were
don't have to say
talking about,
117. You're supposed to know when I say 02, it's bonds.
Right.
What else would I say 02 on?
But you didn't. You said 1702.
Yes, you said 1702, and I thought you were saying 5702, like you thought.
Talking about 7002. I mean, like, you know.
I was saying 5702, which is your call on where the spoos are going.
Oh, my Taiwanese sources just told me the tap dancer is not Julia. It is Josh.
Josh.
Okay,
Scott, I want to. I'm going straight to hell.
You are going straight to hell, right?
I know this already. Doesn't matter. My time here was spent well. I did all my good things on the planet.
Yes. Yes.
I want to leave you with this. I hope you can see it on your screen. I want you to be this. This is your inspiration. Cue the tape, please. Have a wonderful day and enjoy this. Scott, this is what I want to see you do.
I would love to be able to do that.
Really?
Love
to be able to climb a stair too.
I would love to be able to do that. There's no chance I'm ever going to be that good. Not even remotely close.
Probably some of the best in the world.
I understand, but I'm saying even to like just, I don't even know if
You sound a lot like this guy.
I'd like to be able to move. I don't know. Again, I've never done it, so I'm thinking like 1 foot stable.
Oh, Sadnov, can you go down 2 stairs?
Oh boy. That's confidence. My knee, my groin. Oof.
I couldn't get up like that if there was places.
I could do that.
You could do that? We're going to take a quick 90-second break. Come back. Scott, that's what I expect from you. You're an overachiever. We'll be back in 90 seconds. We got Tasty Live next. More Tasty Live after this with Liz and TP, I believe.
Somebody.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. crypto. We got it. We get it. Join the club, genius.
Hello, everybody, and welcome to the LD and TP show. We've got 2 full days. My name is Liz Deerking. The handsome guy who is on fire today is Mr. Thomas Preston. How are
Hi,
you?
everybody. And Liz, thank you for inviting me today and tomorrow.
We couldn't have you on a better day. And Jenny, I was just talking to Jenny at the airport, and she's like, thank goodness it's TP and not me, because he is our resident bond expert. And we've got a lot of stuff to talk about today, TP.
We do.
But before we get into market news, number one, you look great. I love the flame shirt, and it almost matches your background. It's almost like the flame shirt.
It's Flame Shirt Thursday.
It is.
You're close enough, Liz.
I'm trying. Red Shirt Thursday,
You're
flame
close.
shirt. TP, you are on fire. So that was number one. And then number two, I have to talk about this with someone, and it's got to be you. Were you listening to the show when Scott Sheridan was on just now?
Wait, no, I didn't.
Okay, because I
was doing my hair.
Oh, it looks great. It looks fantastic. I usually don't listen, but because I wasn't talking to Jenny and you were doing your hair, I was listening. Do you know that Scott Sheridan is taking tap dancing lessons?
Tap dancing.
Yes.
Yeah. I've known Scott for a while. Let's just put it that way. And it doesn't surprise me. Scott is a fairly agile. He's really kind of a renaissance-y guy. He does like the sweaty yoga stuff. He does, he's a wine expert. He does a lot of different. So no, it doesn't surprise me. If you said, "Hey, TP, guess what Sheridan's doing now?" I wouldn't have guessed tap dancing.
I was asking because I thought maybe you might be a tap dancer. I feel like you've got some agility in you.
Well, before we got married, my wife and I took ballroom dancing lessons over at the Arthur Murray studio over on, I think it was Illinois
Yes.
Avenue.
Yes.
I don't know if it's still there. Is it still there?
I think it is. Well, there's one I know. I think they might have moved to Michigan Avenue. When you walk down Michigan, it's right on Michigan Avenue now, but like South Michigan.
Yeah. So we took ballroom. It wasn't tap dancing. My mom, 100 years ago, took tap dancing lessons, but everybody in like 1930 took tap dancing.
Okay, I'm so old school. I took tap when I was a kid. My mom put me in tap and baton twirling because she wanted like a kid from the 50s. I could tap and twirl a baton.
You are lethal, Liz. Tap dancing with a baton. Give that woman some room.
You know what's funny, TP? And I'm going to bring it on tomorrow. I recently bought a new baton just because I was like, I couldn't find it.
Yeah. It's a good trading month, and why not?
Yep.
You buy yourself a new baton.
Okay. So TP, we do have a lot to discuss. Number one, let me just get to this because you are our expert. What say you about the market yesterday and today?
I was surprised. I was extremely busy trading yesterday, rolling up my untested sides. So I had a bunch of strangles and iron condors on, and they were blasting through my short call side. I was very surprised. I had sold one single because I don't like that much risk. I had sold a VIX put spread, thinking that there might be some, as we saw in the past couple elections, there might be some question about the outcome and some legal thing. I mean, I don't care either way politically. I just thought there might be some uncertainty in the market. There wasn't. VIX crashed. Market took off. I was very surprised. And look, Liz, if I had expected it, I would have just bought the SPOOs, but I didn't. So
I know.
It's like, all right, day late and $1 short. And the bit, I mean, why did it happen? I mean, the rationale, Bitcoin surged. I made some money in Bitcoin because I'm just long crypto stuff. but apparently, okay, maybe with Trump in office, they won't be regulating crypto as much, and bonds tanked because they're afraid that the deficit's going to run up. I guess, and the market just surged because I don't know, it just and Liz, is this a time just to position yourself just bullish for the next couple of months? I don't know.
So
I was very surprised.
It was interesting. I was listening to Chris Vecchio and Ilya, and they're my resident economics, right? I lean on you for everything trading. They like the macro stuff like that. So, and they both think there's going to be a little bit of follow through. Oh, and Chris Vecchio was saying that November is notoriously the most bullish month. Now, that doesn't have anything to do with the election. The election's every 4 years. They're just saying in general, November is a notoriously bullish month. So they were thinking there could be a little bit of follow through.
Yeah. Yeah, I mean, it's and I'm always, past is not prologue.
No.
And yes, that is statistically true, probably. But there's nothing about necessarily November that would make equities go up as opposed to July or March. You see what I mean? In other words, it's not just that they go up. My question is, and I think you would probably agree because we're option traders, not outright buy stocks, buy few, that sort of thing. I care about how much it might move. Yes. So not that it goes up, but by how much. And is that, is November statistically unusual? Anyway, I'm jabbering on, Liz. You have things to say.
No, I like it. I have 2 full days with you, so I want to get to. I'm going to let everybody know. I want to talk about. We are really going to dive deep into these bonds. So you kind of alluded to this. The bonds went down yesterday, right?
Yeah.
But today, which is usually on a Wednesday, they pushed the FOMC until 1:00 today, which not your time. Are you the same time zone as us?
Yes. Yeah.
Okay.
Central time.
So yeah. So till it's 1:00, I think, is when it's going to be happening. So what is that? The bonds. They said they're going to decrease it by 25 basis points. Have you ever seen this before? Are they not going to? Because it's kind of like it's pricing that it's not going to.
So one of the things that you got to remember, and you know this, and most of our viewers know this too, because what you and Jenny do every single day is really take the kids off the deep end. Okay, you jump in the deep end of the pool with this stuff. So what you've been seeing over the past month or so, look at this giant sell-off in bonds.
Yeah, take a look at this.
That's because
I think they can see. Can everybody see the chart? I think so. Yeah. So everybody's looking at the ZB chart, and so this is a big sell-off. TP. Its high was 127.20, all the way down to 114, 150.
Yes,
it's big.
As a huge percentage change. So what's happened is, wait a second, Liz, I thought they cut interest rates. Yes, they did. And as your listeners know, viewers know, that when you cut interest rates, lower interest rates means higher bond prices. So why was the 30-year dropping? And you see the same thing in the 10-year too. Okay, yes. So if you type in ZN, you'll see the 10s dropping. So what's been happening is the yield curve, not talking about prices, but the actual yields of these things.
Can I go into this with you? So we can put it as a pairs trade. So I can do it as a pairs trade because you can kind of see the yield curve that way, right?
Or you look up like 10Ys /10Y or /30Y. I think those symbols work.
30.
Yeah, so those are the yields. I don't think there are options on these, but they'll show you the yields.
You can't. This isn't that good of a data chart, so that's okay. You can keep.
But that's okay. So what's been happening is the short end, like the 3-month. So let's remember what the Fed actually cuts. The Fed actually cuts the Fed funds rate, the discount rate. So if you're a bank, if you're like Liz Dierking and you're managing $100 billion and you have and you got to get your stuff sorted out overnight because you have to report your holdings to the Federal Reserve and make sure you have enough capital relative to your debts, things like that. Liz may need to go borrow $30 billion overnight. Okay. And the rate at which Liz borrows all that money from the Fed, basically, or from another big bank, is the discount rate. So it's an overnight rate is what they're changing. Tomorrow, right? You're borrowing it for 12 hours.
I did not know that. That's what they're changing is the overnight rate?
Yes.
Okay.
The rate at which, I don't borrow at that rate. You obviously do, Liz, because you're huge. Okay. And that's okay. And I'm not jealous. I admire your success. But the point is, if you're a giant financial institution, you are borrowing money overnight to meet your capital requirements as set by the U.S. Treasury, right? To keep your books in line, right? So that's a short-term. It's a short-term thing, and when the Fed changes the rates, it hits mostly the short-term, the 1-month T-bill, 3-month T-bill, things like that. What we've been seeing is those rates have been coming down. The long rates, the 10s and the 30s, have been going up. So
we were inverted. We were inverted for almost 2 years, meaning from a layman's perspective. The 2-year was higher than the 10-year?
Yeah, I think I didn't check the 2 years, but I know like the 1 year stuff I think is still higher.
Okay.
I haven't looked at that specifically in the past few days, but Liz, we are less inverted. Okay. So I don't know if you can see my hands.
I can. Yes.
I don't know how to do this. So anyway, if you think this arm is the 30 years, so what was happening is the yields were like this. So the short-term yields were higher than the long-term yields. That's why savers, CD buyers were making bank over the past year and a half because they could get a CD for like 6% or whatever it was.
And that's the risk-free rate. That's the risk-free rate, right?
Right. Yes. So what's been happening is it did this, okay? So the short-term rates fell, the long-term rates rose, and because of modified duration, and that's a whole, maybe I'll do that with Jenny on Monday, talk about modified duration.
She'll love it.
And so what happens is, it's kind of like you know what it is, Liz, to put it in our language, it's kind of like the vega of a bond.
Ooh.
Okay, so when implied volatility changes, it hits a longer dated option more than a shorter dated option because the long option, the option with a lot of DTEs has higher vega, right? It's more sensitive to a change in volatility. Well, a longer term bond, like the 30-year bond, if you change interest rates 1%, the 30-year bond is going to move more than the 10-year bond, which is going to move more than the 2-year bond, which is going to move more than the 6-month T-bill. Okay, so that's why even a small change in the ZB or ZN yields has this big sell-off. So that's what's happening in the bond market right now.
So even though they are lowering interest rates and have been, that's what's been causing this sell-off. So today, do you think it's priced in? So technically, and you please correct me if I'm wrong. They were, I think the probabilities were saying that it's going to be a 25% basis cut.
Yes.
Do you think the move in the bonds is already in? Like, do you think this?
Yeah,
do you think this uptick is already what he's doing, or is there going to be any type of surprise?
I don't think there's going to be a surprise. I think. The Fed has been telegraphing this stuff pretty well over the past 6 months, and they're not going to change it because, Trump won the election as opposed to Harris. That's not what the Fed's doing here. They're not going to say, well, maybe we'll skew it one with it. No, they don't think ahead like that. So I don't think there's going to be a surprise.
They tried to remain unpolitical, correct?
They try, and here's my big picture. I don't care who you voted for. It's I think it's better for people like us, Liz. If people ask, so who are, what are you? Well, I'm a trader. Okay.
Yes.
That I feel greater kinship to you and Jenny and all the viewers here than I do with anybody who may or may not share my political, and I don't really have very strong political views. And so it's like I feel greater personal kinship with you. So it's like, yeah, I'm a trader. I don't really think I think about the odds, I think about probabilities, and I think it's interesting the odds of somebody winning, but that's about it. And my point is with the bond market, the excuse, Liz, is that, oh, Trump is going to do a lot of debt financing, is going to borrow a lot of money, it's going to drive bond yields up, 30 years yields up, and drive the prices down. That's what it was. Personally, I think it was maybe a little overdone. Last week, I was trying to sell puts in bonds. I wasn't getting filled. Couldn't get my price. And I was talking to a friend of mine who runs a big bond portfolio for a money management firm. And we've known each other for 35 years. And so we talk bonds and stuff. He's more junk and corporate stuff. But yeah, he just thought it was overdone. I think this sell-off's a little bit overdone too. The question is, Ms. Deerking, actually I should call you the LD because that's really your name.
For our purposes, we are the LD and TP.
The LD. So the LD, what I would look at is how do I compare ZN versus ZB?
So ZN is the notes and ZB is the bonds. So it's interesting, TP, because you're right. Like, so I look at, as a trader, I look at things from a different perspective. I don't know whether they're going to cut or not cut, but we have been trading. We've been using TLT from the long side. I think we started to catch a falling knife here and then was like, oh God, if you liked it here, you'll love it down here, and so on and so forth. But today's the day where hopefully we are going to get some movement. Now, you were in the bond room for how many years?
For like 2 years, 3 years. And it was a long time ago. And so things have changed and the world has changed. But I'm still used to trading in 30 seconds and 64ths. I can still price ratio spreads in 64ths in my head. Right. So it's just it's like tap dancing. It's like once you have that skill sort of burned into my little reptilian brain, it doesn't go away. But one of the things I do look at, LD, is the relative price movements. And I wrote this down so I wouldn't forget. So over the past, on Tuesday, wait a second. Today's Thursday.
Today's Thursday, yes.
All right. Let me just make sure I have my days right so I'm not telling everybody wrong. On Tuesday, right, bonds had a little bit of a rally and then they sold off. Bonds sold off.
That was right here, yeah.
Yeah, bonds sold off, and I'm going to do percents, okay, because it's easier.
Yeah.
Bonds fell about 1.6%. Okay. Notes fell. What's that?
On Tuesday.
On Wednesday, yesterday.
Oh, yeah. Okay. So we're going to yesterday. How much they
yesterday.
Gotcha.
So it was after the after the results came out and they started hitting bonds. Rallied up Bitcoin, rallied the market insanely, and hit bonds. Bonds dropped about 1.6%.
And that's a big move. If you can see that red bar right there, that's a massive move for bonds. That's
for
about
bonds. Yeah. And the old symbol was this, bonds, right? What are bonds doing? And this is the SPOOs were this. The SPOOs, when I was trading, the SPOOs were this because it was simple. Because everybody looked at the SPOOs, right? So the point is bonds, the 30 years moved down 1.6%, but the notes moved down only 0.078. So
that's a red bar.
The bonds moved a little bit more. Now, why do I think, how do I consider that, Liz? You and I have talked about this before. Talked about DV01, right? The dollar value of a 1 basis point move in the bonds. And what that is, you get it off of the Treasury Analytics page, and DV01 for bonds is about $126. And you don't see it on the platform. This is kind of
No,
you know,
I'm just
somebody
trying
gotta
to be
look it up.
real time. When you talk about bonds, I'm switching to the bond chart. When you talk about notes, I switch to the note chart. That's what I'm doing.
So the DV01 for bonds is about 126. The DV01 for notes is about 63, 64, something like that. So I would expect, Liz, bonds to move about 2 times what notes did. Okay.
Now,
That's what I expect with a 1 basis point change. Go ahead.
okay,
You
so
had a
you
question.
expect, I'm just going to reiterate this just because I want to make sure. I'm just going to say it again. So with a 1 basis point change, you expect bonds to move 2 times notes.
Yes.
Okay.
Approximately. Not exactly 2 times, but approximately. Okay. And what they did, let me do this really quickly. This divided by that. And I'm doing these calculations in real time, Ms. Deerking, is equal to this divided by that. So bonds moved about 2.08 times what they did. Now, is that a big deal? No. Okay. In other words, when you and I, it's like 2 versus 2.08, what's the difference? Well, in bonds versus notes, that's a very tightly traded market. Okay. They don't let them get out of line very much. In other words, the 10-year is actually, I think, a more important bond note because it drives the mortgage market.
Right.
10 years is the mortgage yield. But so the bonds actually moved a little bit more than the notes. And looking at the volatilities, which I like to do, the IV of the bonds was about 1.8 times bigger than the notes, which is a little low. Okay, so that was saying bonds would move less. The implied volatilities were saying that bonds wouldn't move as much as DV01 suggested they would. But they actually moved more. So what I'm saying, Liz, long and short of it is, I think bonds have had a much bigger sell-off relative to notes. If I were betting on a bounce, I would bet on the ZBs.
Okay, that's it, TP. I love it. You landed the plane. I wanted to get a trade in there with this, but I wanted to visually show what you were talking about because you were saying that the notes volatility, and I just opened up. This is the only way that I know how to look at it would be in, go to today's or tomorrow's, and the implied
volatility. I look at it.
The implied volatility is over here, and that's the notes, and you can see it's 9.2 for today, but 7 here.
7%. Just use 7%.
And then you can go to ZB, and to your point, it's not exactly double.
No, it's less. So this is how, and we like to toss folks off the deep end of the pool and swim because folks get it, and this is why when you start to think about trading and the world in these terms, suddenly stuff starts to make a little bit more sense, and you have a little bit more rationale about why you make one trade versus another. That's why I'm saying, Liz, if I were betting on a bounce, I'd bet on the ZBs.
That's pretty interesting, and I'm really glad you did that analysis in there for us because you don't, just because you're betting on a bounce, you're not going to go in and do TLT and ZB and ZN because you think the pot odds would favor a bigger bounce or a bigger move based on the volatilities in ZB.
Yeah, and TLT is a blend of the ZBs and the ZNs. It's a mixture, so it's an average. So, and I was getting whacked on I sold a TLT put spread a couple of weeks ago, get whacked on it. I'll tell you, Liz, I will talk all day about my losing trades. Okay, I'm happy to do that because that's what. So, and the reason I do that, Liz, and I think the reason that you and Jenny do it too, that's what trading is. And if you're at home and you have some losing trades, it happens. Okay, I have losing trades. I hope they come back, but I have winning trades too. But if you have some losing trades on, don't fear. You can turn the ship around. Okay?
But everybody should have winners and losers in their portfolio.
Yes.
There is no, I mean, if you had a great day yesterday, I guarantee you were getting hit on something else. There's a give and take for everything.
100%. I had a great day, but I had probably more losing trades than winning trades. Just the winning trades are bigger.
I know. Yeah. That's actually not a bad day then, right? Okay. So let's take a look at this. If we were going to plan on ZB and you think, and this would be your trade for today, do you have a trade in for before the FOMC?
No, but I'll do it with you. I'll look at the 15 days because I want to stick with the DECE.
Okay.
And I would go maybe the 15. I would do a put spread because these are expensive products. So if I just sold the 15 half put, it requires a lot of capital. So what I might do is I might just sell the 15 half puts, buy the 14 half puts, and I would collect 15 64ths. Okay. So my max profit is about 234. And my max loss is 765. So that's about not quite 1/3, but that's a sort of bullish trade I would look at. I would look to sell a put spread in there.
And what's great about this, TP, and I mean, you're very good at this, and you're doing the 64ths in your head, backwards and forwards, blindfolded backwards and forwards. You can do that math. But for those who can't, if you don't know what this is, you can go look right down here. It gives you your max profit, your max loss. And so my, small brain will be like, okay, so if it's $1 wide here, this is almost like it's almost like a $10 wide, right? Because I'm making my max loss, max profit there. So it's and you can tell by what your buying power effect is. I think it's a little bit better there. So it's a $10 wide. You're collecting almost a third, 230 something. But
so you could pull that up to the 1615, and it's easy enough to do in the platform. And there I'm getting closer to 1/3 the width of the strikes.
Okay. And now,
so I'm just going to sell. I'm just going to route the 1516 for. I'm going to try 19 cents at the mid price.
I'll do
just taking a shot.
So I just want to, because you are, like I said, a resident bond expert, you quickly went over this. I just want to be very clear. You would stay in November because it is still associated with the December bonds, correct? I mean, you're going to stay in the November 15-day, November 22s, because it's still associated with this price. If you move out at all, you're jumping up to the next one, which is not that much higher, right? But it's 116.31.
Right. And then you'd be going into March with 50 days or something like that. And that's fine. You can certainly do that. I'd be looking just for really short-term trade in bonds here. And the thing is, the basis between the DEES and the March and the June bonds is all financial. It's all interest rate, versus the theoretical coupons for these things. It's not like soybeans where there's, crops, right? Or even crude oil. And we could talk about crude oil too. Crude oil where there's supplies and things. Today. Crude oil is up a little bit. I think it was down earlier. I'm just sort of bearish. I'm leaning bearish on crude these days. Only because I think
take a look at these moves. I mean, from yesterday too. Now, there was so much stuff going on yesterday. I actually don't think I even looked at oil, but you're looking at big ranges. If you look at that red bar between the high and the low, it was
big.
Yeah, that's a big move, and you can see that right there.
They whacked it intraday. And a lot of it is, maybe in the new administration, maybe there'll be less tension in the Middle East and et cetera, et cetera. But I also think, it's the dollar is stronger. The dollar rallied yesterday. And, it used to be a stronger correlation. It's not anymore. But the relationship between the dollar and crude oil, it's inverted, right? And when the dollar's strong, it pushes crude down. That's kind of the old school way to think about it. And like I said, it's not as strong as it used to be. But that's part of why I'm a little bit bearish on crude oil, just sort of naturally now.
Because the dollar is strengthening. So you think that oil is almost a stronger dollar trade?
Yeah. In other words, yes. So I filled my bonds. Got 19. So take a fill, Liz. Take a fill, Phil. So it's just, and that's, Liz, just like you, it's just a hunch. I don't know.
No,
I don't know which way crude oil is going.
I like the old school correlations, and I like talking about this kind of stuff, thinking that if the dollar is going to rise, it could possibly bring just one reason why it could. There's other factors outside. It's not living in a bubble. But are other commodities like that too? Does a stronger dollar bring down things like wheat and soybeans, or no?
I guess so. Wheat and beans, so ZW and ZS have been pretty flat over the past month or so.
Yes.
It really hasn't moved. Corn's has a little bit of a rally, and I sold some put spreads in corn a week ago. Yeah, I mean, it's small. These are small trades, and then, it's not buying Ferrari money. This is like, paying for lunch money, right?
Well,
but that's okay.
And I like your concept of this because people, if there is going to be a stronger dollar, that's a good way to kind of branch out into non-correlated assets if you wanted to make that play. You know what I'm saying?
Yes.
So I never thought about oil from that perspective. I am, while I'm in here, TP, when we talk about a stronger dollar, a lot of times we look at currencies. Yes. And so the yen took a hit yesterday. It's coming back a little bit. I'm going to close our position just because while we've got profits, we're up 33%. How much is one tick in this? If I go up there,
I forget, and I always use.
It's 1250. It's 1250 because look at this. This is
because it's 125,000 of the currency.
Okay, so we are out of that, which is great.
Filled, nice.
So filled in there, but that's how I usually think of dollar versus another currency. I've never thought about it from an oil perspective, so that's pretty interesting.
So, and it's just a little data point. The other big thing that happened yesterday is the crypto.
Oh yeah. Now,
massive.
Unfortunately, in this account, TP, because it is a show account, we can't put it on. So we had to use proxies, but we can take a look at the markets.
Yeah,
so this had a massive move yesterday. Ethereum, Bitcoin was more than Ethereum.
I think and again, it's just, this is, is this, Liz, buy the rumor, sell the news? That was an old timey saying before I even started trading. Okay. So the idea is that Liz and I hear a rumor that maybe there'll be less regulation of crypto, right? So we start buying crypto because we think we're so smart, and it starts pushing it up. And because everybody looks to see what Liz Deerking is trading and they want to follow along, pushes it up. Then when the news comes out at some point, whenever it does, the new administration actually might consider, just to keep certain people quiet, they will have the SEC looking into the crypto market and see if any risk management needs to be put in place. That's the news. And what's going to happen to crypto is going to start dropping. Okay. So that's buy the rumor, sell the news. That means.
That was a very good example of buy the rumor, sell the news, because we use those terms traders, you need to put a dictionary together of all the trader terms.
So that's what I'm thinking of doing is I want to do a video, and I've got to sort out my video stuff a little bit, but I want to do how to sound like a trader.
Because I said this to my daughter. I was telling Jenny on yesterday's show. I was like, they're goosing him on the close. And she's like, what does that even mean? I mean,
Right. And so there are certain things, we've talked about this before, Liz, there are certain that if you're talking to civilians, if you're talking to people out there, a lot of times they'll just say.
I like to call them the general population.
The general pop is like in prison.
Yes, the general pop.
They don't really know what you're talking, like goosing, what, or, fading or whatever, or tick or whatever.
Yeah.
What are you talking about? But if somebody says, oh yeah, or like personal fast market, that is a dead giveaway. Giveaway, you're talking to a trader.
And it is there are so many terms that are so common that they don't even make Tony Batista blush anymore. Like, I'm selling naked. You know what I mean? You're just like, what? Most people don't.
So and you know what, Liz? It's different than Wall Street terms.
They are.
What you and I are talking about is like Chicago floor trading terms. And there's some carryover. Buy the rumor, sell the news. That's an old stock term. But like, if you think about, let's say, what they talk about when, if you look up Wall Street trading terms, it's completely different. They talk about it's very stupid little things. It's like, it's not serious. So, right? Like losing at the close is serious. Okay.
Losing at the close is serious. Right? So speaking of yesterday, it was a fascinating day because yesterday Jenny and I were in the middle of the SPX pit filming our show, and It was so busy yesterday and so loud and so energetic. It was it totally brought me back to old times TP, because you would see people, a lot of times they're a little bit gun shy to kind of walk behind the camera. For some odd reason, traders don't like to be on camera. I don't know why. They were afraid to like walk behind the camera. They were so busy that they almost like bumped into us a couple times.
They didn't care.
No,
right.
Yeah.
You're in their world, and they have a job to do. And a lot of times, I don't even know if it was were they traders or the clerks reporting the trades.
They were the clerks that were grabbing stuff. Yeah.
And was it the same way when you were there? Is seller? Let me explain something really quickly. It's seller reports, right? That's another term. So I do a trade with Liz. I want to buy the option from her. She wants to sell the option to me. We're both whatever traders, or she's a broker, I'm a market maker, or vice versa. So we both write up tickets. I write up a buy ticket, she writes up a sell ticket. An exchange employee reports the trade, and it goes up on the board. It goes out to the world. And in order not to dupe it, there weren't two trades at that price. So somebody's got to report it. Seller reports. So Liz would tear off her ticket off her sheet, hand it to her clerk, and the clerk would run it over to the quote reporter.
And they'd put it in a belt. They would put it in a belt, and the belt would belt it over to the quote reporter.
We didn't have a belt. But it's, well, you were a little bit more she. You were a little bit more, you had a little bit more high-end material than I did.
We did. I had a belt. I'm not going to lie to you.
Liz, you had electricity, okay? You had electricity when I was, back before I was trading. So the point is that seller reports. So a lot of the activity, when there's more trading activity, there's just a lot of paperwork. There's a lot of tickets that need to be reported. And that's where personal fast market comes in. When there are too many tickets that overwhelm the court reporter, the quote reporter, and he or she can't type them in fast enough, it's a fast market.
It's a fast market.
So
you know what we've been doing in the floor, and it's actually pretty fun. And I didn't expect to go this way with you today, but while we're talking about the floor, because we have an extra day too, I want to show you this. So we've been, since we've been on the floor, I just find it fascinating. I think the market is so efficient with everything. And so we've been looking at the SIBO's most active while we're sitting there, and going through, what was a lot of things that have been trading and a lot of things that have huge volume. And the one thing I was going to say is, these traders, these are big sizes that are going up today. So we'll usually look, you can tell if it's a spread. On 2 days, the week before we were on the SIBO, they did 221 of these VIX put spreads went up. I want to show you because I put it in the picture.
That's awesome.
It was out of control. So Jenny and I will sometimes grab some of that stuff and put it into our account just so we can keep
an eye. Which one did they do?
Just so we can keep an eye on it. I think it was the 14-16, but I want to not lie to you. So I'm going to go like this, VIX. 7 days.
Did.
It was the 15-17. So 221,000 of the 15-17.
That's what I did.
Put spreads. You did? Was it you?
This is what's creepy. This is what's creepy. I did that trade not knowing any of this.
Did you?
It's the hive mind.
It is the hive mind. So I shouldn't say it should have been 221,000. I don't know how many you did. Maybe 10.
I just did one. Size up, Liz. Size them up.
Yeah. And so it's been fascinating looking at these things, and I love seeing what the traders are trading. That's the one thing that I do like about being down there. This is information for everybody, though. It's not, we can look at it when we're not sitting down there.
Now, I think I did that as a cherry bomb last week. Maybe everybody's doing it on the cherry bombs.
What if it was you? What if you caused the 221,000?
I'm losing on that trade. That's a losing trade. I'm down $60 on that trade.
So you sold it.
Yes, they bought it.
We don't know. We don't know what side they did. We have no idea.
There's always two sides.
Yeah, but you don't know which one they're coming in to do. So we put it in, and we wound up buying it and getting out of it because I was like, I'd rather buy it than sell it. I'd rather donate $59 because it was just for learning purposes only. I'd rather donate.
Good for you.
I'd rather donate $59.
You did the opposite. You did the opposite trade from me. So I was, like I said, I was betting on a little bit of election chaos and a little bit of fear, and the S&P's not rallying up as much as they did. I thought the VIX might spike higher. Sure, I'll sell a put spread.
I was on that same opinion as well, because I didn't expect a decision. I expected some turmoil for days. I mean, I think I went on air and said, I don't think we're going to get a decision for a couple weeks. I was shocked that we had the decision yesterday.
I was surprised. And, I don't want to get too caught up in this, Liz, but one of the things I want to point out to poll watch, to voters, everybody focuses on the polls. And I agree, polls are interesting. And what a lot of people don't, unfortunately, Liz, the polls don't all come out with the standard error. And let me do a quick 15-second explanation of what that number means.
Love it.
If you have a standard error for a poll, okay, what does it mean? So let's say you have Trump at 48% plus or minus 3. Okay. So what does that mean? So all that means, it doesn't mean that Trump might get a 51%. No, that's not what it is. If I did that poll tomorrow, 95% of the time, Trump's number is going to be between 45% and 51%. That's all it means. Okay. It doesn't mean that he might have caught up to Harris. It doesn't mean she might have caught up to him. That's not what that's saying. All it's saying is that if I did that poll one more time or 100 more times, 95 of them, his number is going to be between 47% and 45% and 51%. The other point is too, Liz, what drives that standard error number is the sample size. So if you just poll 50 people, it's going to have a really big standard error, as opposed to if you polled 5,000 people.
Okay.
So the smaller the poll, the bigger the standard error. Yes. So if you're looking at this stuff, and a lot of times the newscasters, well, they don't care. They're not statisticians. They don't think
they're given the information. They're just reporting it.
They're given the information. And so the point is, it's very interesting, the numbers in and of themselves, but it's more interesting, I think, when you know that, they're just standard normal variables. And then on any given day, Harris might be a little bit higher, Trump might be a little bit lower, vice versa.
What do you think of the betting markets? Because the betting markets were pretty accurate, more so than the polls.
They flipped it. Excuse me. They flipped last week at some point. They're very illiquid. There's not a lot.
But they were pretty accurate.
They were. Well, I kind of had a suspicion things were leaning towards Trump, but that's just a hunch.
Yeah.
That's just a hunch. It's nothing. It's not my personal opinion. It's just a hunch. And I didn't make any bets because they're hard for Americans to do. So it's I don't even know if we can. I think there are different ways of us betting on election markets, but I just didn't. I think you do it through certain platforms. I did not.
I think you can do it through certain platforms, but I would just see, and it was all over Twitter and it was all over everywhere. So these large bets that were coming in one direction or the other, and it was just I found it fascinating because I do think, and I think it's funny that you said that they're illiquid. I don't know. I didn't place a bet, so I'm not speaking from experience here. But everybody kept saying the betting markets were more accurate than the polls.
Well, I don't think you can short them.
Oh.
I think you can only buy them.
Which leads us back to crypto. Okay, so that's what I was going to ask you here, because you can only buy crypto right now. You can only buy Bitcoin. You can't sell something you don't own. Like you can sell coin and you can sell SPY and you can sell all these things that are up if you wanted to.
Right.
And that makes it a more efficient market. These cryptos, you can sell it if you own it, but you can't sell it short.
Right. You can. That's exactly right. I can close my long crypto, but I can't close it and sell another 1,000 Bitcoin.
You can't make money on shorting it.
Right. Except if you do a proxy, like you were talking about, Coinbase.
Yes.
The biggest, I think Coinbase is the biggest U.S. Crypto exchange. And that's been, I think, pretty strong too. Yeah, that had a massive, massive rally. So one of the things, the tell I would look for here, Liz, is if I were going to bet on coin, I'm going to look at the skew. I'll go out to the DECE options. Let's make the math easy, Liz. Let's say the stock's trading for $255.
This has a massive call skew, doesn't it?
Let's see. It's in between 50 and 60.
Yep.
If I go down 20 points from 250 to 230, I see the ask price is 1270. Just do ask price to ask price, okay? If I go 260 up to 280, it's 1630. Yeah, that's a pretty steep skew.
That's a steep skew. Yeah.
Massive skew. So if I were going to bet long, yeah, it's okay. If you want to agree with that. The problem is it's a $250 stock. It's expensive to trade. So I would look at maybe the 20-30 put spread. Yeah, so if I were bullish, I could buy the 220 put, sell the 230 puts, and get about a third of the width of the strikes.
Yeah,
something like that.
Yeah. So this had a massive vol collapse yesterday. So it was up a ton, but the IB rank yesterday was over 100. I think it was 105 at some point.
That was, well, and understandably.
Yeah.
Right. There was still like, oh my gosh, how high could Bitcoin actually go? Right.
Yeah, right. It was kind of crazy.
But this is the proxy in the same way. So the way to I'm not going to use an analogy because coin is an exchange. Okay. It's where people trade crypto. And so the higher these things go, the more activity there is on Coinbase, therefore coin presumably would rally. So it's a proxy for the crypto market. I trade coin.
Can I ask
it's
you a question?
Reasonably liquid.
You said it was an exchange. Could you compare it to the CME?
Yes. So the CME is a futures exchange, a futures and options exchange.
Yes. Right? Or CBOE too.
The CBOE, right? They have stock options that they trade there, or the NYSE that trades stocks. It's a stock exchange.
TP, I would just like to show you something. The Liz and Jenny show started filming live from the CBOE
Massive
right
rally.
here.
Massive.
I mean,
rally.
I'm not kidding because that is the day we started, and so I was telling Tom that, and he sent it to Fred. He's like, Fred, look at the data.
You and Jenny move the markets.
We did. There's a
little
bit of a pullback here, but we did move the market.
Next time, just give me a little bit of heads up because I have baby needs a new pair of shoes. Okay.
Okay, I digress. You can go back in.
No,
here.
but that's what it is. So crypto. So there's all sorts of. So an exchange is really a regulatory and legal entity. Okay, that's all it really is. Because we've built exchanges before.
Yes, we have.
It's a legal and regulatory entity, right? Whether it has a physical space like the CBOE or the CME, or completely cyber like Coinbase, doesn't really matter. It doesn't change that legal or regulatory entity part. So if you want to go through the steps and get the capital to back your exchange, you can create a crypto exchange. And it's mostly a technology thing at this point.
Yeah.
Right. It really is just routing those, matching up the buys and the sells in, split second and getting prices out there and fills. And the security is a huge issue with crypto. Okay. Making sure that one of our kids doesn't hack into the exchange, right, or to the wallets. That's a huge issue with these places. But yeah, it's an exchange, just like the CME or the CBOE, except it's a different asset class.
Okay, only opinions. And obviously, nothing we do is a trading recommendation. Nothing we say or do here is a trading recommendation. But opinion time, TP. So Coinbase, we know, is a proxy, and we do actually use that. I'm actually probably going to sell this put spread to be long coin in here as well, because we can't trade the cryptos. Where do you think the cryptos are going? Are you bullish cryptos, or did you get out of some of your positions when it had its massive rally?
I'm long-term bullish cryptos. I'm long-term bullish crypto because I think that particular asset class, there's a lot, and here I put on my tinfoil hat, or actually, because I'm kind of huge myself, Liz, I've moved beyond tinfoil to the colander, to the strainer. Okay, so I don't need to use the cheap tinfoil. I can actually use a strainer, and I put it on. And there's a lot going on with the different currencies and economies and stuff like that. I think globally there'll be money moving into cryptos for a variety of reasons. And I just think, like you said, you can't short it. I think the bias is upwards for these cryptos.
And it gets some momentum.
But not a recommendation. I could be completely wrong.
No,
and you want to see how wrong I am? I'll show you all my losing trades. Okay. But seriously, that's traders don't really think like that. Liz, you could look at the exact same stuff I do and come up with a bearish trade.
For sure. I think all traders have opinions. Here's my question though, TP. Why is Bitcoin? Because we use crypto, we're saying crypto and we're putting it into a basket. Crypto, you have Bitcoin here, you have Ethereum, and there's a lot of other cryptos. And you'll notice Bitcoin seems to be running away and Ethereum isn't.
So Bitcoin is the spoos of the crypto market.
So do you think Ethereum is the Russell?
Yes. It's a small cap. It's a small cap. Yeah, it's so like for better or worse, like if you're just starting, like you're talking to the general pop, right? The general population. If you start trading, well, I'm going to buy, what are you going to trade? The S&Ps? Yeah, everybody kind of knows the S&Ps, right? So if you're talking about buying cryptocurrencies, everybody knows Bitcoin. And that's kind of, so I don't know, I'm going to open up a little wallet, Bitcoin wallet. And I think I want to give this a try, and I'll put $100 on a crypto. I'll buy crypto. I'll buy Bitcoin, excuse me. I think that's a lot of what is driving this.
So it's interesting too. It's up so high right now, but my son is turning 17 in November. I'm sorry, turning 18 in November. He's 17 now, and he's getting a Tasty account. And so he's been trying to talk to me about what we're going to put into it. And I was like, well, we're going to put a little bit of crypto in there. And he's like, and his response, and I love that he said this, is it's up so high already. It's going to be hard for a new person to like press the button on a crypto that's up so high. I was like, all right, now you're thinking like a trader. I like it.
Yeah, well, it's just like my girls have been doing a little bit of this over the past couple of years, and it's so, Liz, I think we could talk about this maybe tomorrow a little bit more, because there's still some trading things to talk about.
Oh God, yeah.
But how do we talk differently to our kids than our parents talk to us about jobs and careers and stuff? And I'll just put that out there, but from my perspective, it is completely different the way.
100% TP.
Okay.
It's night and day. It's night and day. And let's put a pin in that, because I think that's actually a good discussion for tomorrow, because I would like your help and advice on what to tell him with stuff too. But I have to do this real quick, TP, because we do have some trading things, a couple cleanup things. I am going to manage the account. I'm going to close a couple things, especially ahead of the FOMC meeting. Everything will be pushed out. I might do a couple things here with TP just to manage. But I think in this market, we're trying to take profits, protect our winnings that we have, and do things like that. So I might be taking a little bit less than 50% on some things. But today we've got Bob on Fire comes in every day with the earnings. And so I just wanted to get to that, because we do have a couple positions in the earnings. DraftKings, I think we have. And now we don't. Square, we don't. TD Ameritrade, Affirm, Pinterest, Airbnb. Those all have earnings today. TP, do you trade earnings?
I don't as much anymore. For me, and if I'm doing them defined risk and small. They're not my bread and butter money makers. I've had too many outlier losing trades on earnings, so that, if you want to do something to talk about, Liz, let's do an earnings trade.
Yeah.
But I don't seek them out necessarily.
So I just wanted to make sure we were addressing this position, because we do have a DraftKings position and they have earnings. So a lot of times Jenny and I will put on positions that will be directional if we're going into earnings, but we're never neutral, because I think it's like running on sand. You can get there with the vol collapse, but it's just harder. So
it's harder.
Yeah, it really is. So this DraftKings position, I'm actually going to go to the table page. So we have, and I'm okay leaving this. I just wanted to address it to see if there's anything we needed to adjust. We are short the 37 put in December, which means we've rolled it out. It's a
So
directional.
they didn't do a 1 day.
We've had this on for a long time, is my guess.
Maybe I'll sell this 37 put with 1 day just to see how it goes.
I got to tell you, if we didn't have a position on, I would be in the 1 day, and I would probably be selling. I would start with maybe the 36, but the 37's $1. That's not bad.
Yeah. And you know what? I'm going to split the difference and do 36 half, and I'm going to do 93 cents. And what I like about this is the theta is insane on this thing.
Take a look.
Not real, but yeah, it has a decent risk reward ratio to me. 90. Oops, let's kick it up to 90.
This is one
Let's
of
do
the
97. I'm going to route it at 97. Press the button. Fire away. Fill. Take a
this is
fill
one of the
TP at
stocks.
97.
Good job, TP. Good job on
Yeah,
your
of
fill.
course I hit a bid. The bid is 90s. Yeah, good job. I did. Yeah, TP he can hit bids all day long. He's amazing.
Oh, TV, you're funny. But this is one of the stocks that my son JD has an interest in. He's like, oh, let's look at some gaming stocks. I said, okay. Okay. So now going back, I just want to make sure we didn't have anything else. I don't think we have any other positions in those. And then Jeff comes in. He sold, I think he followed us in the, he sold it right before the demo on ZB. He feels better now. That's good. So he also sold the 15, 13 and a half, which was pretty close to what we did. Okay.
And those put spreads, these futures are big, expensive products. Okay. And they're doing defined risk trades. So one of the questions is, TP, do you take all of your trades in the morning? I have the short 17 longs. Would you close it or hold it? So I do trades all day, Alan, but the point is with the VIX put spread, I would hold on to it. Excuse me. Simply because I think, I have so much pointed north. If we do have a little bit of a sell-off, that could certainly pop back. What I'd also look, and Alan, I know you already know how to do this, but for folks who might be new, let's take a look at where the NOV future is trading at. The NOV
so I
VIX is trading at 1570. So I'm about $1.30 in the money with that. It's not the cash VIX, it's the VIX future. And if I just
I'm gonna go VX, right? Because we're in no.
Yeah, do VX. Yeah. It's trading about 1565, 1570.
Yeah.
So it's already in the money. So I'm going to hang on to it for now with 12 days and see, because, Alan, if anything spooks the market in the next week, like this FOMC meeting or whatever, right? If anything spooks, the front month VIX goes up first and fastest. Okay?
Yes,
so what you'll see is the cash VIX, the VIX that is you see at 1522 right now, that is going to spike higher. It's going to go up the fastest and the most. The next thing is going to be those NOV VIX futures. Okay, they will go up, not quite as fast as the VIX does, but they'll go up. And then the Ds will go up a little bit less. So it's like that yield curve. It's the VIX curve. In a panic, the cash goes up first and fastest. That's why you never want to be short the front month VIX.
Oh God, no, never. That's why we don't do calendars in the VIX. You guys learned that the hard way. I think.
Yeah. It's unless you have, and it's unless you've got something else going on with the VIX, right?
Correct.
It's either, I already have a big pile of VIX options or something like that. But aside from that, just as an outright trade, okay, do not short the front month VIX.
Yes,
okay?
no, I agree. And we're going to say that again. We never short the front month VIX. But that is great. I do agree with you. You have to hold on to those almost till the bitter end, because it is going to be the very near term that does the popping. TP, I just want to make sure that we got to all the tweets today, because I think you and I, this is like the fastest hour of the day done and dusted.
It's you and I always have. So Frank, Keenan, what do TP and Liz think of BNB and D finance? So what's BNB?
I don't know. I know Victor was talking about this with Tom today, what DeFi is. I think it's
decentralized finance. DeFi is decentralized finance. And Victor's also he's a lot younger than I am.
He's a lot younger than me too.
They're kids, and so they have a very different, like Ryan Grace, who runs our crypto stuff at Tasty. Young guy, he's on top of all this stuff. So like he and Victor. So I believe that decentralized finance is a real live thing, and you're going to see that long term is a big deal. In other words, you're not going to borrow money. You're not going to go finance your enterprise going to a bank. You're going to go through like crowdsourcing and things like that. That is an elementary way to think about it, but that's decentralized finance. Liz, so what it is when you talk to, like how do Liz and I finance an entrepreneur? Well, we put our money at a bank and the bank lends the money. What DeFi is
putting a box
Liz
around the
and
SPX and taking it. Is that DeFi?
Yeah, is they come directly to us. So it's decentralized. And we secure it with Bitcoin, what's the God? I can't remember. Is the wallet stuff?
Cryptos?
No, not crypto. It's a thing that anyway. The kids know this stuff, and it's on the tip of my tongue. I should know this. It's how Bitcoin works. It's the God, this is what happens when I get old. Anyway,
you're okay. You're okay because we've got a whole night to think about this.
It's it relies on the security. So the point is, that's what DeFi is. I think it's a big deal. I'm all for DeFi, decentralized financing.
All right, you heard it here first, ladies and gentlemen. Well, TP, you get to take a quick 23-hour break. Because you're going to be back here, same bat time, same bat channel.
It is a pressure cooker with you, LD. The TP and the LD. By the way, what do you think? Just kicking it out there. To play along, everybody knows PB&J, peanut butter and jelly. So when I do a show with Jenny, what do you think about TP&J?
Ooh, I like it.
TP&J.
TP&J on Monday.
I should run it by Jenny first.
No, never run it by Jenny.
You're best friends with Jenny. You've known her for a million years, and so I'm just kicking it out to you because you know Jenny better than anybody.
Never run it by. Just go for it. That's the easiest thing. All right, TP, you have a wonderful afternoon. Hey, good luck with the FOMC meeting. I can't wait to see what this afternoon brings.
Fingers crossed. Liz, I will see you tomorrow.
We'll see you tomorrow. Thank you, TP. Everybody remember to trade small, trade often. I will push everything out immediately following. Bye, everybody.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is David Tease. I got my man, Mikey Butler, and of course, Kaden Gergel in the house with me today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show, whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddies, Mike and Katie. How are you, Katie?
I'm a little sad.
Why?
Because this past weekend was our last little, gallivant of the year together.
Yes.
So I'm in mourning.
I was talking to Glenn. I was like, we missed you in Dallas. He's like, how was it? I was like, it was really great. And I feel there's just something.
He would have enjoyed the rodeo.
Yeah. That was the topic. I was like, there's just something really powerful about being able to say, this isn't my first rodeo, and actually have it be a true statement.
Yeah.
Because I feel like a lot of people use that statement, but they've never actually been to a rodeo in Fort Worth in the stockyards.
Yeah.
Now we can say that we have.
Yeah, and had chicken fried steak fingers.
Yeah.
With
that was
dippable gravy.
Yeah.
Incredible stuff.
I think
that was a total fat kid move on my part, but I was like,
and the
one
side
in
of
Rome.
fries too. You had the side of fries with like an extra like Chipotle aioli or something.
I forgot that.
Yeah.
7,000 calories in a basket.
Yeah. You had the chicken fried steak fingers, and then I doubled down. I had the chicken fried steak.
Yeah.
Like 2 hours later.
Yeah,
So
and then
it's just-
a bowl of like Texas chili.
Yeah. It was glorious.
Yeah, there was a lot of meat going on in Dallas.
Meat sweats,
that's for sure.
no doubt. Yeah.
But yeah, I'm good. Otherwise, it was really fun. We're rolling out 1 or 2 more digital events, and then we also have 1 more road show in Phoenix. So tastylive.com/events if you guys want to sign up for all of that good stuff. But
16th is when our
Building
content comes out.
Lovely.
So go get it.
And even if you didn't register, or attend in person, that is available to all. It will be a digital collectible. You can see exactly how we kind of talk about our mindset and what we're thinking about as we build a complex portfolio. And speaking of portfolios, I have a little shameless plug.
Ooh.
Fresh off the presses, me and Mr. Ryan Grace are going to be doing a very, very short Where Do I Start crypto series.
Wow.
So I am student yet again.
Wow.
Yes.
I love it.
So
when is that starting?
That is starting next week.
Okay.
Either Monday or Wednesday. We're just trying to check a couple boxes. It's going to be very casual. So it'll still be kind of housed in the Tasty Crypto archives and things of that nature. But yeah, I'm going to spend a couple of weeks getting him to convince me to start to incorporate crypto a little more into the portfolio and speculation versus investing and
I love it.
What to consider and coins and how eventually we'll be able to more participate with derivatives and things of that nature. So it'll be a fun little mini series for those of you that are maybe in similar boots because of Dallas as we are, where you've got a couple years of trading under your belt and you're looking to continue diversifying.
I love it.
Lovely.
I'll be watching.
Thank you.
It'll be a good one.
Yeah, we would love that. So it'll just be during the regular Tasty Crypto show hours and either starting Monday or Wednesday of next week.
Be good.
Yeah.
Sweet.
Happy football. Just football.
Yes, just football in general.
What's the picks? What are we
What's the
thinking?
game tonight? I haven't even looked.
Cincinnati versus Baltimore.
Oh, yeah, it's a good game.
Barn burner.
It's a good game.
The pick is Andre Yoshivas over 50 yards. I looked at it today, and the markets are not where they should be. Oh. He's on the field just as much as Jamar Chase. The
T's out.
He's out. He's doubtful, but he's going to be out.
Yeah.
The Ravens give up a
Gesicki.
ton of Gesicki. But listen to this: Gesicki's yards for 50 plus was minus 200.
Really?
Yoshivas 50 plus is plus 300.
I like.
So you just hammer that all day because he's on the field the whole game.
Overs.
He can catch one pass and he hits it. So.
And that secondary is banged up. So
Exactly.
Could be good.
So, and
Are you enjoying this?
slated to
Is
lose.
this what you've come
Well, it's just
for?
funny because you guys are going to be doing that, and I'm going to be literally taking a Lady Gaga themed workout class at the same time.
That's amazing.
So I'm just like,
wow.
The disparity in our after school activities tonight couldn't be farther away from
Amazing.
one another.
Wow.
Yeah. Well, I have bowling tonight too. First
Oh,
week.
man.
Yeah. I get back.
Whoa, that's really fun.
Nikki Tuna.
Look at that.
We're back, baby.
Yeah.
We're back.
Are you dripping? You got the shirt? You got the ball all
I do.
polished?
My shirt, I think I need to wash it because it's been sitting in my bag the whole time. So
Oh,
it's
yeah.
God,
disgusting.
no.
Yeah.
It smells like a high school locker.
Yes.
I guarantee it.
Yes, it does.
Yeah.
Yes. So
That's rough.
Well, I wish you, may you bowl many strikes.
There you go.
thank you.
I don't know, like
Thank
phrasing
you.
for
Made the
bowling.
pins fall.
Nick, you have to
Yes.
remember, allow yourself to be great.
You got
And
it.
every time he texts me, he's like mid-round. He's like, I'm on a heater right now. I just got 3 strikes in a row. I'm just like, allow yourself
He's
to be
just
great.
chugging like a high life.
Yeah.
So many
That's
high
it.
lives.
Allow yourself to be great.
I live
You are-
the high life.
You are your own glass ceiling, for lack of a better word. So just open that
Austin
thing
third.
up and just get that 300.
Yeah. What's the complimentary food? Is it the hot dog? Is it a slice? Is it, you know?
There's no food there, but the tamale guy comes around, and I dabble in those every once in a while.
Okay.
He's everywhere.
Yeah, he's everywhere. So
Yeah.
he comes there.
Nice. Okay. I figured, like bowling alley food is very classic, like, crappy nachos.
Pizza, chicken
pizza,
fingers.
yeah. Yeah, that type.
No food there, though. It's old school.
The tamale guy made like 100 G's during COVID.
Oh, yeah.
From a GoFundMe.
Right. Yeah.
There's
Yeah,
a
I
lot.
remember that. We live in crazy times. Well, either way, I hope everybody has a fun Thursday. Speaking of,
I was going to say, speaking of glass ceilings, we have a ceiling at 6,000 on the E-minis. I want to be the first one to call it.
Okay.
I'm hoping we get it. How are we going to get it? 2 points away. They got as high as 59.9925.
Yep.
So we're right there.
It's going to blast. It's going to be a 2:30 p.m. absolute rocket
Well,
shot.
you got J-Pow today, so you got to be careful. Who knows? He could rug pull that.
He's going to go on the mic and say, everything moon, and then just drop it.
Yes. Yes. He's trying to save his job. E-minis right now, basically at the highs of the day. NASDAQ up 280. Got the Dow up 30 and the Russell up 2. So really it's just the NASDAQ and the E-minis leading the way here. Oil catching a little bit of a bid. /CL 7224 up 55 cents. You got volatility futures basically at zero. Oh, are we going to get it?
Nope.
Volatility futures 1565. I don't know if I've seen a vol crush quite like this. 5 full points, almost 25% in the span of like 4 trading sessions. Bonds up 21 ticks. You got gold up $28, silver up 51 cents. Bitcoin was down about 2K at one point. It is now basically unchanged on the futures. Spot up 1,200. It's a buy everything. Everything is being bought. The dip has been a button.
I pulled up the old 401k today. I literally thought, I was like, should I move this out of the
Biggest
growth?
scam.
Yeah, I was like, should I move this out of the S&P and move it into an interest rate? And I was like, nah, let's just let this thing run. Because now the cap's off. Like,
You never take it out. You never.
especially into a market like this where
Yeah.
literally nothing goes down. Even if it goes down, it's a day.
You can't play that thing. But those
speaking of
things
going
are a
down-
scam. 401ks, scam.
I know.
I don't think they're scams.
They're scams.
They're not scams.
Why do we gotta? Why can't I just have it go into a normal IRA and I can buy SPY and not pay 1%? 25 basis points. That's
case,
a scam.
yeah.
That is a scam. They just skim off the top.
Yeah.
They get my direct deposit. They skim off the top. And you think that's like, oh, it's no big deal.
Oh.
He's just going off on his
You
little
think it's no
tangent.
big deal, but you compound that over the next 40 years of my life.
Yeah.
Yeah.
That is true. If it's like 1% compounded, it's like
Yeah,
4%.
or even 1/4%, a tenth of a percent. Doesn't matter. It's a lot. And they don't do anything. They just buy SPY. I could buy SPY with my finger right now.
Speaking of going down,
Nikki Batista 2028.
Fight for the people. Power to the people. We the people.
you would actually
We the chat.
I think you would be a good politician.
I think I would too.
But I
Pretty
think his
modern
like past would
I
prevent
know. I
him
was
from
gonna
getting
say
very
I know
far.
too much about you.
Yeah, you know, the old college photos would come up and all that kind of stuff. So
Yeah.
Speaking of going down, the probability of a 25 basis point cut is 99.1%. That's for today. And the December meeting. Another 25
We were almost
basis
there.
point.
I know. Sorry.
Another 25 basis point cut is 66% probability. So
The employer match is the only reason to do the 401k. I see people.
yeah, the employer match offsets
That's the only
your
reason.
fees. Yeah. Yes.
Other than that, scam.
But you can also contribute up to what, 23 grand these days.
Yeah.
If you're making some bank and you're really maxing it out, you reduce your taxable income. You're putting in an index. You let that thing moon straight to Mars. I guess Elon's taking us to Mars now.
Yes.
But yeah. Anyways.
Scrambled brains.
Our brains are scrambled because I literally was like, oh, we were just surging to all-time highs. Maybe I'll move this to an interest rate, be safe. And I was like, no.
Yeah, you're silly.
Let's
You
let it go.
don't be a silly goose.
Silly goose.
But yeah, 25 basis point cut on the table for today. Another 25 basis point cut on the table for December. And then January, we are, there's a 50% chance that we stay at 425, 450. So.
Yeah. CME Fed Watch tool.
That's
for
the
those of
landscape.
you asking where he is getting that info. Okay, so with that in mind, and obviously you guys have been on the show together for a couple days now post-election, but I mean, obviously I think a lot of people kind of had the same mindset of, you know, cleaning stuff up. So I pulled off that silver zebra for, you know, a small winner after it had been a nothing burger for quite a while. Covered that coin position that I followed one of you into.
Gave
Thank
you
you
that.
for that one.
That was a nice little Tendy Town
Yeah,
trade.
little Tendy Town. But other than that, like I've been relatively light. I still have on the Baba call diagonal.
Oh yeah, that one is coming back
It's
a little
coming
bit
back.
today. Getting a little bit of a relief rally here.
And the dollar is weakening a little bit today, so you'll see that the
Mhm.
major currencies are actually taking a little bit of a breather after getting pummeled the other day. So
Yeah.
I am kind of back in the game with respect to my micro Canada and micro euro.
Just today that happened.
Yes.
I would like to announce that Under Armour is up 28% today.
And you're gonna get rid of one of your bags?
No. I'm holding on to this one. I've had 100 shares of stock since 2022, February of 2022. I sold a put at 19.
How do you look at this chart and tell me how you hold this?
Because now they're finally out of the woodshed. They're
Oh my
out of
God.
the
Oh my
woods.
God.
So it's gonna keep going, I think. But either way, I sold a 19 put for $1.82 back in 2022, and obviously my break even's at like 16 change.
Yeah.
Into this rally, still no premium to sell against it. And you know me, I'm stubborn in this case.
Yeah,
I say it every time in our little.
It's awful. It's awful.
In our live shows, that's the one thing I always say is that I'm definitely stubborn. How do you offset stubbornness in the markets? Trade size. So 100 shares, it goes to 0, whatever. It could also go to 20, and I get all my money back.
Another bigger move, but obviously a cheaper stock as well. My lifeblood, Warner Brothers Discovery. They had earnings today. They were up as high as like, I think 15, 16%.
Nice.
They're up 11% right now, but
You love to see it.
a little rally there as well.
Even these things can rally.
Everything.
Look at that.
Everything.
Yep.
Glorious. Well, it is Thursday. We got 3 trade ideas for you. If you want to join us on the YouTube channel, we are streaming live there. Just pop over to Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. But yeah, let's get through these trade ideas, and we'll get some trade questions after that. I really tried hard to find a stock to trade, but everything is just going straight to the moon, and I'm not getting bearish at this point in time. So I went to a little thing called copper.
Copper. Oh, we were talking about this on our Westwater Wednesday.
We were. And
Copper
and it
Butler.
got
yesterday we had Westwater Wednesday. Thomas laid out his short copper idea. He showed us some charts. He showed us the short interest, and that's really what we love to see.
But the takeaway was that usually there's like a little bit of a bounce,
Correct.
like in the next couple days. It's like,
yes.
What were we looking at? Like 4%
It was at
down?
over 4% to the downside.
Yeah.
The next day is usually a rebound to the upside, but 7 days after the initial 4% sell-off is lower than where it was. So I said, I'm going to wait for a bounce. If we get a bounce, I'm going to hammer a short, and that's exactly what I've done. Sticking to my word here. Thanks to Thomas.
What's a micro
Shout out
MHG?
Thomas. I saw some eggs in the fridge. Are those from Thomas?
Yes.
I would imagine.
But I think he gave them to someone because I heard him say, put your name on this because people will take these.
Yeah.
Which is true.
Yes.
The office culture of taking stuff that's not yours is actually insane to me.
Oh yeah.
Like
I sit next to some really heavy culprits that I will not name them on the show.
Wow.
But you will be shocked at who it is.
Wow.
You'll be shocked.
Interesting.
I one time brought in like 5 chicken breasts just to have for lunch throughout the whole week. And this one I will name drop. Todd threw them away that day.
Wow.
He goes, they looked old and gross. I was like, wow, so you threw away like $30 worth of chicken and you insulted my cooking. Like, nice.
Okay,
Real double whammy.
That's a problem. The eggs have been known to be like Thomas brings them in because he can't possibly eat that many eggs and like grab some. There's been multiple times, but throwing out somebody else's food.
I know.
I have to speak with.
Yeah. All right. Sorry for interrupting you. Okay, so you're kind of doing the classic, like a little over 1/3 the width here, but with a little bit of extra days in there as well.
Yeah, so I'm going to the December contract, the HGH5, which is trading for around 446, and I'm going and selling the 4.5 short call and the 4.55 call and buying. So I'm creating a spread here, 55% pop, just getting close to the spot price, and just looking for a reversal from here. Collected $475 for this. Max loss is $775. I'm looking for like I'm looking for a short-term reversal. If I can get $100 or more out of this, I'll just close it.
Sure. I joined you.
I did an MHG contract, which when they first came out, which I think was like middle of this year, May, April or May. I traded it like the first or second day it was active. We were talking about how it was available, blah, blah, blah. I think it ripped my face off for like $400 or $500 that day.
I think I remember this.
Or maybe the next day. And it's a big contract. I think it's $5 per penny tick.
I think so.
I think that's what it is.
Double check the specs.
So it's a big contract. Like today is a $750 move is what I'm estimating.
Yeah.
So this one could be. I'm hoping that it's not.
Well,
painful.
we're all in it now, so.
Yeah. That's usually not a good sign.
I know, it's the triumvirate of doom. But we'll see.
We'll see. We have a reversal of fortune coming our way. You can feel it.
Nice. Okay,
Beautiful.
cool. So we're all in copper. Shout
Lovely.
out Thomas to that.
Very nice. For me, I too. Oh, I'm sorry. I didn't finish my slide there. I too was having a tough time finding a stock that I wanted to put on a position. You've had volatility just getting smashed. I've closed out of some of my long delta into this move. I'm just kind of sitting on hands a little bit. So I was looking for something that had high implied volatility that was relatively cheapy shot. Square has earnings after the close today, along with DraftKings and maybe two other more well-known stocks. But anyway, Square and DraftKings, I have the
Airbnb.
Airbnb is in there, yes. Somebody brought that to our attention yesterday. But anyway, I have the DraftKings 40 straddle. Square, I'm playing a little short-term crab trade. And unfortunately, it's a little bit of an increase, or it's a little bit higher margin requirement on this. So I'm buying the 80 call. Sorry for my typo there. I'm buying the 80 call in December. I'm selling 2 of the 85s in the November 8th weekly expiration for about $1. And I had to define the risk just to use less capital. So I bought the 95 call. I did the whole package at a $2.31 debit. So a small debit. You do use another $500 in buying power because you could move that to the 90 strike call and just do have it equal with. This one I just bought a tail option just to cap the amount of buying power I used overnight. So you do have a little bit of extra risk to the upside. But I'd love to get $50 to $100 out of this. 200 would be like a mega home run. If you pin 85, that's probably what you're looking at. So just a small little trade here in something that's kind of been range bound into earnings.
Cool.
Yeah.
I get your logic.
I haven't played Square or I haven't traded Square in a while too. So nice to get it back on the radar.
Yeah. $77.
Did PayPal announce already?
I think they already have. They usually have it somewhat early in the cycle.
Yeah, it looks like maybe October 29th. Looks like there was a big old volume spike
Yeah.
on that day and a little bit of a drop.
October 29th. Yeah, they had a little droppy drop. But but this trade is neutral, so you just need an inside move.
Yeah, inside / up would be the perfect scenario.
Lovely.
All right. Dope. Well, I am doing things that are probably surprising to nobody, but I am looking at crude. Did not have anything on in there for a little bit. My natural gas position, I just still needed to rebound, but wanted to still get a little bit more exposure to energy. So this iron condor kind of encapsulates the range of where it's been for this year, like 65, maybe I think I've done like 64 something, high of like 81 and change or so. But I'm just kind of doing that classic 1/3 the width iron condor in the December expiration. So I've got the 65, 63.5 put spread, the 80, 81.5 call spread, picked up, I think I got filled like right at 490, so one tick lower than kind of what is on here. But, we also are lower than 45 days to expiration, which is kind of like the general wheelhouse of where those guidelines kind of come from. The span margin, of course, a little bit cheaper than your max loss right now, just due to the way that it's calculated and all the different scenarios that they use, which gives you a slightly better return on capital. It can become that full $1,000 in spread width in terms of buying power requirement, but that's, as time goes on, as you get tested, as you go in the money, things of that nature, I would be happy to squeeze out $175, $200.
Glorious.
Great minds think alike, because this morning I put on basically the same position. I have the same call spread as you. And then I went with the 64, 62.5. We were a little bit lower this morning.
Yeah, we were.
So.
Yeah. And I frankly, I'm a little bit more bullish in here. And frankly,
Okay.
this morning we were actually trading.
It was like down like 50
Yeah.
cents or something.
Yeah, I got filled at 70, 80. So we're a buck higher than where we were this morning. So I just wanted to give myself a teensy bit of long delta, if you could even call it that.
I like it.
I'm up about $20 on the trade.
Ace.
Yep. So that's a couple of 2-tree trades.
Indeed. Glorious. Well, if you want to join us on the YouTube channel, pop in your trade ideas there. We can kick it off with Sergio. Question about mechanics. Yesterday we put on an AMD short strangle, the 130-160 in December. Delta is now near minus 19. Would you roll the put side at this point to reduce the delta?
What was your trade price? Just
I
curiosity.
did this at 512. That's marked at 545. So you're out about 30 cents on a $3 or $4 move. Still out of the money. It's not one that I would do anything with. It's pretty, it's natural to get a little bit of short delta into an up move, so I'm okay with it currently. Vol has come in pretty significantly along with the rest of the market. So just a hold for me at this point. If we get up to 160, then I'll start to think about it, or maybe 155, 157, something like that, where you're leaning, 10 or 20 deltas isn't really where I look to manage. It's more like 30 to 40, 50-ish.
Yeah. You don't want to micromanage your position.
Yes.
If you're rolling based on micro moves in the day, you're going to end up with a straddle, and you're going to have a lower credit than if you just started with a straddle. Yeah. And really also consider that your short option position in isolation, you can only make so much on the short option. If there's still value there, you're giving yourself a wider profit range than if you move it. So there's still $1.50 there. It's down 65 cents today. If you get another move like this, then that puts you in the boat of being closer to 155, 160. That $1.50 goes under $1. Now there's less hedgeability in that option. That's when we look to move it. Right now, you still have plenty of value there, and you still have over 10 points of movement before you're tested.
43 days to go till expiration. Lots of time, lots of value.
Yeah.
So no, hanging in there.
Question about pattern day trading, our favorite topic. If I open
This is another Nikki Batista platform.
Yeah.
To get
Well,
on.
there's some movement happening.
I know, yeah.
Which is good.
There's some knights in shining armor that are battling.
Have been battling
that are
for
battling the powers
years
that
and
be.
years and years.
Mm-hmm.
Yeah, it is one of the stupidest things ever.
Yeah.
I think is probably the easiest way to explain it.
Yeah. If I open two different strike contracts and close them both in one transaction on the same day, does that count as 1 or 2 day trades?
2.
Yeah.
So it goes to each transaction, which makes this even more stupid. There's just the way around it is to have more than 25 grand.
Yep.
That's the only way around it. There's no
or box off your positions if you're doing spreads.
Yeah.
But even then it's
it's just a tough thing to do. But yes, based on transaction. So if you sell one put and then you sell another put, it doesn't matter what the strike is, whether it's the same strike or a different strike, and then you close those 2 puts in any fashion, that would be 2 day trades.
Yeah.
Are we going to get it? 6,000? Got it. 6,000. We got it. E-minis. Woo!
What's
You
the
need like
thing
a cowbell or something.
What's the celebration thing where you put your fingers up and it does the...
That's from my Mac, which I haven't changed my settings on. So we got it. 6,000. We are saved.
You have like a serious conversation and then balloons go in the background behind you.
I want the soundboard. Wrong.
We need one like that's like. Well, what's the other one that he has? I don't know. He has a new toy over there.
Oh, geez. That's like the old days of Tasty.
Yeah.
Like the 2011, 2012.
Get tasted.
Yeah, the Get Tasted days, literally.
Yeah,
we used to have just
fun.
little, who was it? Alex and Sid would just like push their little random buttons.
So good.
Yeah. So bad.
Unreal.
I remember there one being like, so meaty. Which is like, ugh.
Yeah. That was, we've
come a long way.
We've come a long way.
Come a long, long way.
Come a long, long way.
Yes.
Some things remain the same, but some things are very different.
Mm-hmm.
Travel and airlines have been strong, so what about an Expedia earnings trade for today?
Expedia.com.
EXPE.
$14 expected move, $170 stock. Pretty strong expected move relative to the stock price. Only a $16 expected move in December, so this screams.
I thought this was
diagonal
like
spread.
a buyout rumor stock at one point,
Was
wasn't
it?
it? Or like a take under, take private.
I don't remember.
Take somewhere.
Yeah, I thought that was part of something.
Yeah, I mean, looking back in February, was that just a regular earnings trade where they went from 165 to 130, but
I don't know.
125? Not sure.
All right, what are they thinking?
Bullish.
Long?
I mean, there's so much premium in the weekly. It's kind of alarming.
Mm-hmm.
Like even a calendar spread, you're collecting 75% of the value of the option in the long option with the sale of a short in the weekly. Like a 175 calendar is really cheap, but I would rather still do a diagonal spread here. put up a little more capital and get much more profit potential if you're right to the upside. 175, 185 for $5.
I was going to do a crab trade.
Yeah, let me see.
180, 190, 200.
Yeah, which one are you doing?
Buying the 180 in December, selling 2 of the 190s in the weekly, and then buying the 200. And you can even I don't know, doesn't 200 strike has a crappy bid-ask spread.
So last earnings report, they were expected to report a $3 earnings per share. Tomorrow or today, it's expected to be $6 earnings per share. So double the earnings per share.
And what does that mean to you?
I think that's why there's so much volatility around this move. Because they could easily miss. They could miss by 50%.
But it's still double what they did last time.
No, it would be on par with what they did last time.
Well, no, you said it was 3.
It was 3. They reported 350, and now it's 6.
Yeah, but if they report 550, that's $2 per share more than last time.
Right, but it would be an underperformance. So there's a lot of uncertainty of what would happen, but given the report, I think is what I'm trying to say.
Yeah.
Either way, if they beat a double of the expected earnings per share, I think the market sees that favorably.
338.
But what do I
I'm
know?
in.
You're in?
I'm in.
For the crab, 185, 175?
I did the 180 in December, sold 2 of the 190s in the weekly, bought 1 of the 200s. Okay. So it's 10 by 10.
I'm going to do
338.
The 175, 185 diagonal for 577.
Okay.
Instantly filled.
75.
Don't like that.
Scary.
Yeah, 175, 185.
Take a look at this.
Oh, no, we're all going to be in it.
I have not pushed the button yet, so.
Just deter you, I'm joking.
Mr. Pillows, what would Nick's policies be like
Oh gosh.
for retirement matching, I guess is what you.
Oh, the matching is the good point, the good part. But I
You
don't
want full control. You want full control over the matched number.
Yeah, you should be able to control it.
So you're basically saying instead of putting it into a 401k, have it go into an IRA that you can control.
Yeah, matched into an IRA. And then you could do whatever you want with it. Why do I got to be in these silly funds through Vanguard? They have nothing spicy. I want to put some in Bitcoin. I want to put some in this or that. And then on top of all that, I have to pay them for the honor of giving me 5 things to invest in.
Yeah.
And an online portal with a little chart.
Changes all the time, and you're like, okay,
Yeah.
which of these passwords have I already used and need to reset because they reset every 120 days? And I feel you. What else?
It's silly. I mean, it's a lot.
I know.
That's it.
That's
my
your
policy.
That's your only policy.
Yeah. Or at least if it's going to be through a provider, you should have a way to self-direct that.
What about
investment.
a 4-day work week, but we still get a 5-day trading week?
I mean, 4-day work week.
Well, the trading week's about to be
half the office has 3-day work weeks. Okay.
Okay,
we
Sosna.
got it. We got it. All right.
If you had a November covered call that's now in the money and willing to let it go, what new trade would you do to capture future upside? Probably defined risk, like a diagonal spread. If you have a covered call with undefined risk to the downside to 0, not undefined, but defined to 0, you can still take that trade, take a portion of the profits on that trade, and do a diagonal spread or a vertical spread. Something that's defined risk, where you're still participating to the upside, but the risk is much smaller.
Mm-hmm. It was just a
hypothetical.
Okay.
I think Tom might have top ticked it. It got as high as 6,001.
Don't give him that credit. I will take credit.
He sold it at 6,000.
He said
he was working orders.
He had offers in at 6,001.
And that's literally the top tick.
He's gonna be a happy camper if he top
He's gonna talk about his 3 ticks that he got.
Yeah.
Hey, Bat, did you get my 3 ticks? Yeah. You post that one. But I was the first to call 6,000 hat.
You get the honor.
Don't let Tom take that from me.
Am I going to roll my SPX 580 short call for tomorrow? I am no longer doing that.
SPX or SXP?
XSP. So I had a double calendar at the 580 strike. That was where my long call was. So
It's over. The trade's over.
Yeah.
That just goes to show the
close
strength of this market. Yeah. But yeah, I mean, really, I ultimately have the short calls on, or I have the short calls there. This trade is basically done.
Well, your long is expiring tomorrow.
Yeah.
So I would close it today because your risk tomorrow is a lot more than what you started with. Because
if I get rid of the short calls, yes.
Well, the short call expires, it cash settles today. So you have risk into tomorrow. Like if you're now $17 in the money on the.
Actually, yeah. I'm sorry. I'm going to roll this to tomorrow. Just to keep it on. Because like if we get an 80-point sell-off tomorrow, or even today, if J-Pow says something today and we get a sell-off, I can get back $60, $70. Like the trade is trading for $90. It's worth $90 right now of extrinsic value. So
you got to do something to not have it be naked long the call tomorrow.
Correct.
Because then you have
Then you have directional risk.
If the market goes down 20 points, you lose $200 that you didn't start with in the trade.
Yeah. So yes, I'm forced to roll to tomorrow. And then the trade will be done. Because I have the long options for Monday and there's nothing to sell into that.
Yeah.
So yeah, just a right idea, face ripper rally, wrong result.
Yeah, you didn't see the 200-point rally coming?
I kind of did. I just didn't think it was gonna happen immediately.
Things move quick now.
Yeah. So yeah, the 580. I'm just gonna roll these right now to the 580.
There you go.
For some shekels. Let's see what I can actually get.
Well, while you're doing that, Alan is looking at a calendar in AFRM, the 60 call in the 1 day, and the 60 call in the November 15th expiration for 45 cents. What does this one do again? Affirm?
They're the
buy now, pay never.
Yeah.
Oh.
The buy now, pay never model.
Mm-hmm. It's a cheapy shot.
Yeah.
I think it's something that you can make like 30 or 40 cents on. I would probably say it would be like a home run unless
like exactly what you're paying for it.
Yeah. Yes. Yeah. So I don't hate it, but it goes if the stock goes down after earnings, it's zero. So it's a binary like 40-cent shot. I guess if you get a 58 handle and you hold it into next week, you have a cheap lottery ticket. But yeah, it's a small shot.
Yeah. Do we have any earnings plays for NU?
NU
coming up on 11/11. It's actually 11/13 from what I'm seeing.
Yeah.
But yeah, it's a $15 stock, dollar expected move. I don't really trade these all too much. There's not much to do in here.
Yeah.
Unless you're just like getting
straddling
delta.
it, or like flying it off. If you think of a non-movement.
Yeah. It's tough. It's just really small. There's not a lot of premium here.
Yeah.
But
if you're like bullish or something, you could do like a zebra.
Yeah. That's like really all I would consider. Zebra and like the 8-day cycle or something like that. Something really cheap.
$68 billion company. Never heard of it.
Me neither. It's a shell.
It's a shell.
Maybe.
No, I'm just kidding. Let's see. Got a
I think it's in banking.
Brazil-based holding company which engages in the provision of digital banking services.
Shell company.
How is a 17-21 1/2 call ratio synthetically the same as a 26 short call?
From my trade yesterday from Mara?
Maybe.
So I was talking about the risk is synthetically the same as the 26 or 27 short call because that's where your risk exists. So I had the 15 put, which I legged out of yesterday into the face ripper we saw yesterday, and then I bought the risk in today on the call.
Broken wing butterfly?
Well, I had a call ratio.
Oh, okay.
So I just bought the 25 here for $1. So I turned it into, I took like 20 cents. I took 17 cents is my net credit. And then I have this $4 wide.
Yeah, free butterfly.
Butterfly. So when we had the trade like this, and we had it on for just around $2 was our original credit. What I meant was that your risk on this, so you have $4 of value here, which means your risk to the upside doesn't start until 25, and that's why I bought that call today. But plus the $2 in credit that you got from the whole position puts you at a break even at like 27. So it's synthetically the risk, where your risk is the same as the 26 strike call.
Right.
27 strike call. I don't know which one I said, but either or. Really, it's right around there. And you can see it in the risk profile, even if we pull it up now at what it's trading for currently, which is cheaper than my. So you can see where your risk is. Your risk starts right at 26. That was what I was trying to portray, was that the risk of this position is the same as if you had the 26 strike call.
Right. Right, you are.
If I want to get 100 deltas on a futures product, is the Zebra the most efficient way of doing it? And is there anything else to consider when using a futures contract?
So
Or just buy the outright.
Yeah, I mean, like, so you can get 100 deltas with a Zebra in futures options, yes. But like, take crude oil, for example, okay? The major contract right now, if you buy it in a margin account at Tasty, is $17,000 in buying power. Now, to get 100 deltas in the Zebra, I just set one up. I already deleted it. But like, to get close to 100 deltas, like with a Zebra, that was actually $23,000 in buying power. So oftentimes you kind of need to look at the buying power requirement, to your point, and see, is it actually efficient to do that?
Yeah.
And like, I think I've done them, if memory serves, but it's not always going to be the most capital efficient way to get that same static exposure. And frankly, because you're using the options, the delta's dynamic.
Yeah.
So.
Yeah, if you're looking for a short time frame, then yeah, you can put up a couple $1,000s to get a static delta in the direction you're moving, but you have a limited time, et cetera, et cetera. I might just do a micro.
Yeah.
Because then
ladder
another thing,
into some micros.
Yeah, another thing with a shorter term Zebra is like, if you don't pay attention to it and one option expires in the money or whatever, now you're gonna have the contract itself, and that's going to multiply your risk in a huge way. So you have to just be careful of that.
6,000 again.
6,000 again. Woo. Question on rolls. Better to roll short positions when IVR is high or low? Is the answer different between puts and calls? I mean, it's better to roll in a high IV environment because you're able to pick up more credit if you're short premium.
Correct.
So ideally, like, and you'll see us do that, right? Like, where implied volatility expands a little bit. Maybe we need a little more time in the trade. Like, maybe we're up small, but we want a little more time in the trade to be right. Roll it out, roll farther away, still reduce cost basis.
Higher volatility just means you get paid more to sell premium, to take risk. Across the board. Doesn't matter if you're selling calls, selling puts, strangles, iron condors, whatever. A higher vol means you get paid more to take that same position. That's the simplest way to think about volatility.
Yeah. And I mean, as far as like rolling closer to where the underlying is trading versus not, like that's a you thing.
That was Tom's fill. That was his 61.
6,001
bids.
We're well above it now. Look at that.
Oh.
But yeah, if you're looking for the highest credit roll, it's always going to be when your strike price is near the stock price.
Yep.
Or the spot price.
Exactly what I was going to say.
Yeah. 6,001, 50. Now, where do you think we end today? 60-20 or 60-30?
59-50.
Ooh. I'm going to go 59-83.
All right.
There's a 24-point expected move in the E-minis through the end of the day, and that includes JPOW, which is kind of weird, kind of wild. 24 points is like nothing.
I think you get the little profit taking on JPOW and end of the week. I mean, you had a nice little rally, maybe a tiny little micro. You won't even notice it on the chart kind of dip.
Yeah, 59.83. You heard it here first.
59.83.
Yeah.
Okay. 20
Are we
points
using
lower.
3 o'clock as the close or 4 o'clock when the futures close?
Ooh, good question. You take your pick.
Let's go 3 o'clock.
3 o'clock. Okay.
Dave wants us to do there's a lot of people chiming in about the 401ks. You can move it to a self-service 401k. No,
After
while
you
you're still
leave.
working.
Yeah, I don't think you can.
I don't know.
Not if you're.
You could ask. You could always ask HR
can't.
and see what you can do.
You're stuck. You have no option.
Have you ever asked HR? Answer is no. Guarantee it. Could we see about
Nick
doing...
and HR are like oil and water, okay?
Well, I actually have some goodwill. I have some goodwill with the HR.
Okay, nice.
Yeah.
Can we see about doing a 6,000 iron fly?
Ooh, okay.
4 days.
4 days. You think this market is staying? We're going to be at 6,100 in 4 days.
That's the energy I like.
Right?
there.
I mean, 6,000. The next one's 61. The next one's 62. Up only 4 days. Okay.
Taking the elevator up, not even the escalator.
It's been an elevator. 200 points in 2 days. I think we're at a little much short term, but what do I know?
Me too. A little frothy.
A little frothy.
So, I think it's an SPX 6,000, which I kind of like a little better. A little upside drift 4 day 6,000.
Okay.
$50 risk. 59.50, 60.50.
59.50? You're gonna buy it in the money?
Yeah, I think that's what they're looking at. An iron fly, 50 points wide. 950. Oh no, this is wrong. 950 credit. He's looking at E-minis. So a 4 day 6,000 pin. 59.50. 60.50. Right? I don't know. If you can give us more info, that'd be great. And SPX. So 50 points wide.
SPX isn't at 6,000.
Correct. So it would be an in the money iron fly.
Just a butterfly. Yeah. Go for it. Up only.
No, I'm not waiting on Powell. I already rolled the short options. I rolled pre-Powell. I got 26-cent credit, which I'm actually very surprised about. Rolling the 580s. But either way, you just need to have the shorts on to keep your risk, the debit paid. If the shorts go away and you just have in-the-money long options, now you have 2 XSP options that will move with the market. So I already rolled for 26-cent credit. I'm just looking for a sell-off towards 580, and that will increase the overall extrinsic value of the position, and maybe I get out for a lesser loss.
All right. Got time for one more because your girl has to unfortunately join 2 hours worth of calls right after this.
Oh, that sounds fun.
I need to, eat for like 5 seconds before we really get into that.
I was a little.
You guys know what I'm like when I'm angry.
The moon balls.
No good?
Oh, here we go. What did you get?
Got the Korean fried chicken.
The karagi?
I got the barbecue chicken. I think that's going to be good. I think that's going to be the good one.
It's just like, yeah.
Okay.
What do you think of a double calendar in Expedia? Could work. The premium's certainly there. If you're looking at like going to the expected move, like the 160, 185, and then buying the same options in December, you're definitely getting the premium to do that. if you want to take that shot. You just can't have an inside move. If you have an inside move, that's going to be really bad. You need to move towards the strikes for that trade. That's it.
Cool.
That's that on that.
Happy 6,000.
Yeah,
Happy 6,000.
Feels great. It's just sitting there at 6,000.
It'll pin there for the next
4 days,
2 hours. So no, J-Pow is an hour and a half,
Yeah,
right?
it's coming
1:30.
on. 1 or 1:30?
1.
I think it's 1. I'll double check.
Or like he speaks at, I think it's, I don't know.
1:30 is his press conference, but the 1 o'clock is the decision.
Announcement. Yeah.
There we go.
Yeah. Oh, I saw some tasty ads up on there. Shout out. All right. Well, that wraps up this edition of Options Trading Concepts Live. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie. Mike is at Trader Mikey B. Nick at Trader Nicky Bat. Like we said, tastylive.com/events. We've got 2 digital collectibles that you can sign up for and keep forever about building a complex portfolio. And I forget the topic of the other one. You can tune in next week as I learn how to navigate the crypto world with Ryan on Monday and Wednesday. But in the meantime, in between time, good luck, good trading, go football. Peace.
Go Yoshi.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Life goes by fast, really fast. One day we're 25 and living large, and the next day we're 65 and hopefully still living large. It's the 40 years in between that are mostly a blur. When asked what they would do differently, most people confidently say, nothing. I have no regrets. As much as I want to believe them, I know better. I believe there's one common regret virtually everyone chooses not to remember. It's the taboo topic of not taking as much risk as possible every chance you get. Remember, the genesis behind Tasty Live was to encourage risk-taking. What were we thinking? Imagine the risk of building a business designed to encourage people to take risks. One of the things I've learned about taking risk, it's not personal. You can't let your ego dictate your decision-making. Unless, of course, you're the richest person in the world, then it's a death trade. Another thing about taking risks is that it's never obvious. There are no easy decisions. Risk-taking should be fun, engaging, and challenging. But if it ever seems apparent, success will not be easy. The great thing about the world of finance is that success does not require genius. In my opinion, the model for success, without a lot of complex math, is relatively straightforward. It's risk times longevity. Between academia and financial media, we have overly complicated embracing the paradox of risk. It's finally time to simplify the model behind success to risk-taking times duration. This definition should give everyone hope and a reason to hang in there.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with 2 unique virtual events. 6 must-know skills for active traders and 6 option strategies every trader needs to know. Both feature legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, Go to tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns, and in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
We are back. It is Thursday, November 7th, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, happy Fed Day.
Happy Fed Day, my friend. We get to sort of usher the whole thing in. It's going to be fun.
It is going to be fun. It's a Thursday where stocks are still going up a little bit here ahead of this Fed meeting. It's a continuation, by and large, of what we saw yesterday. Guys, we can turn right to the charts and get into this because we have a Fed meeting coming up at the top of the hour here. It feels like a week where we've largely forgotten about the Fed. There's been a lot going on in the news. Of course, the elections 2 days ago and the market reaction since then has largely been in focus. But it's a Federal Reserve that's meeting on a day when we're seeing inflation start to come back. Jamal, this is a great chart put together by the Daily Shot. Highly recommend following them in their newsletter if you don't. It looks at the 2-year inflation swap forward as measured by the market and the rate of change that we've seen here. The market, with yesterday's move, priced in the largest increase in expected inflation that we had seen Going back to the summer of 22, that's when we were looking at inflation readings that were near 9% year over year. The market is telling us and offering us a very clear signal that as a result of this election, we are looking at structurally higher inflation moving forward. It's one of the reasons why I'm not really bothered by this dip in gold and silver prices. There's probably more asset inflation coming down the pipeline. But Jamal, when we think about the Fed meeting today, policymakers are going to be looking at charts like this and seeing that the inflation expectations as measured by the market are bumping up into perhaps the highest range we've seen over the past year and a half. While today's rate cut is largely priced in, market giving you a 98.9% chance according to SOFR or the Fed funds futures, what happens here henceforth, I think, is in question. If we could just go back to the September policy meeting, Jamal, I think people would forget that most policymakers there were only on the fence about doing 2 more rate cuts for 2024. A large chunk, basically half, were okay with only doing 1 more 25 basis point rate cut. So today's Fed meeting, we shouldn't necessarily be surprised if the Fed is less committed to future rate cuts after November 7th, after today.
Yeah, you would think so. You know, this has been an interesting discussion, honestly, this idea of inflation. I know I've heard a lot about, first of all, of the election. Everybody's trying to figure out what's next, what industry to go to, what's the next asset, what to trade in the wake of the election. And I think you just got to let price action determine that, like we always say. Same thing with this. I don't really, you know, the chart doesn't lie. Obviously, this is clearly something of a 2-year forward, looking at potentially where inflation could be. But I don't necessarily understand or see how we're going to go back to inflationary times, quite honestly, unless there's just something I just don't fully anticipate yet. But that being the case, you know, the Fed's expected to drop rates. We're going to see how much more they're going to drop rates. We're going to see if that's going to be a volatile thing overall, the interaction between the Fed and the president's office. And I understand, like, that's not supposed to be a thing, but we all know what it was like if you paid attention 4 years ago. So we'll see how this ends up affecting markets. In the meantime, we've seen what's going on with bonds. We've seen how they've reacted over in the previous couple of days, and they seem to be staging a turnaround today. And I expect more of that, honestly. I expect a really good trading environment, to be honest with you, when it comes to stuff like this. It'll give you the opportunity to get in and out at the end of the day. That's what we want.
You know, in terms of the relationship between President Trump and Jerome Powell, actually, Trump was out today suggesting that, he said plainly, he will allow Powell to finish his term. That doesn't mean he's not going to get reappointed or that he's going to do anything else, but Powell's term ends in May 2026. And so just up front, a little bit of that clarity here that the Fed is going to have steady leadership transitioning through administrations. It makes sense. It's also worth reminding people, Trump did appoint Powell. Right. This is Trump's guy. Powell was appointed in February 2018 as Fed chair then. Biden extended the term, and now we see that Trump is saying that he could at least finish it. So what Powell does today, probably not informed necessarily up front by where we are with Trump. But given the scope and scale of how the markets reacted to the election results, it's obviously not in the economic data yet, but given how the markets reacted here, one has to wonder, okay, inflation expectations have skyrocketed. We already saw bond markets pricing in higher yields after the Fed cut 50. Is this the last excuse they need now in order to say that they need to back off, that they can go at a slower pace, that they don't need to commit to 25 basis points at each meeting? I don't think that's we have to entertain that possibility here moving forward.
But do you think that we're going to be printing money again? I mean, do you think, like, what is it, do you think, that's going to cause inflation to rise in this manner, I wonder? I mean, that's the thing I've been trying to figure out. And again, there's plenty of possibilities where we get to that. But it's just really interesting to see this possibility of inflation rising within the next couple of years, given the environment that we just came out of.
It's the tariffs. Right? It's the tariffs. Just having worked out the math on this, if you do a 20% flat tariff on everything, coupled with a 60% tariff on China, it's going to cost the average American about $4,000.
That makes sense.
Highly inflationary.
For more goods, yeah.
Right? Like, this is one of my little, like, pet peeves here. Yes, tariffs can be used as a negotiating tool, but the actual math, assuming all else is held equal, means that consumers are going to pay higher prices up front unless the businesses absorb the cost, because businesses that are importing the goods are the ones that foot the bill. And that bill, that money goes into the government's pocket. Foreign companies don't pay that. I don't know why this is up for debate. But right. We see here that if you're looking at the tariffs, which can largely be done by executive fiat, if those are pushed through, the middle fifth, if we were to break out Americans by income levels and, bottom 20%, the next 20 to 40, 40 to 60, 60 to 80, and 80 to 100, that middle 40 to 60 bracket of income is going to pay about $1,530 more as a result of these tariffs. The bottom 20% of income earners will pay about $790 more, and then the top 10%, as the top 20% would roughly see a $12,000 tax cut. So broadly speaking, if you're looking at the tariff plans right now, the cost is going to be borne by lower and middle class income earners, and that means higher goods, and that means more inflation. So a double rise in inflation, we had all these charts going around, will inflation be like the 1970s again? I personally don't think so. But if you sprinkle in a 10 to 20% tariff across the board, the odds of inflation coming back are going to be higher. Now, when do those tariffs come into play, Jamal? Is it day one? Is it 3 months in? Maybe it doesn't happen at all. It's just this sort of Damocles hanging over trade negotiations for other countries. But if you're a market participant, you have to price in a higher probability of more structural inflation moving forward, just given what we've heard on the campaign trail.
Yeah, that's the thing. I mean, I know about the potential and the chances of it happening, but the fact remains there's so many different things that have to happen to get those ducks in a row before we really ultimately get there. And I think that's the one thing, like people will eventually try to trade now for potential inflation that comes 2 years down the line, right? And that's a hard thing to do.
It's very difficult because in the meantime, markets are beginning to price in perhaps a pretty rosy outlook here into the end of the year. That's an S&P 500, Jamal. That's up by 0.64% today. It's at 59.96 and a quarter right now. Tagged a high of 6,002. So hopefully you had your 6K ES hat ready to go. This is a beautiful market, perhaps the best market we've seen, the best market that people have ever seen, they're saying, in part because we're seeing not only new all-time highs, but an absolute crush in volatility here. Jamal, given my tone, I guess you can figure which side of the trade that I'm on and still holding on to. Long stocks either way, and this is the drum that I've been beating. It doesn't matter who's president from the market's view. If you have a government that's spending a ton of money, which under Trump or Harris, we'd still be spending like a drunk sailor, the Fed is still going to be cutting rates a little bit, and the economy is still growing at the top line level. Stocks like that mix. And now that the election's out of the way, the volatility is gone. Seasonally, the end of the year tends to be good. So why push the chips in on any other side still?
I agree with you, man. And as you know, I've been long MES, MNQ. I'm long Dow as well, MYM, and I've been short the ETF calls against them. Now, the short ETF calls are biting me a little bit, but that's fine. They're out in December. We'll obviously ball is in those. Now it's just a matter of their kind of almost in the money short call spreads. But the trade overall has worked for me, honestly, and I've used it to lean on everything else that I've wanted to do, which I'll get into when we get to those other trades. But yeah, I was kind of with you. And you could see the markets doing it. Now, did I want to buy any more as markets were starting to ramp up that night? Not really. I wasn't interested in doing that. I really didn't feel like I could do that. I kind of had to sit on what I had. And again, it's worked out. But, God, this has been a real strong market. It'll be interesting to see what happens today as the Fed meeting comes. If we get a turnaround or if we get a leap higher, this is going to be really fascinating, I think.
If bond yields are a problem for the market, for stocks, it would stand to reason that the worst thing that the Fed could do today is not acknowledge that the bond market is telling them they don't need to cut as much as they have been, or that they intend on doing what they've signaled. The best thing for the stock market today may be a hawkish Fed, because if the Fed says, you know what, we hear you loud and clear, we're going to slow down the pace, the economy is not teetering the way that we were worried it would in the short term. We're going to cut today. If the economy stays as strong as it is, we may not cut in December. Bonds are done falling because then the bond market doesn't need to send the signal to the Fed that they need to push further, right? That the main rate isn't going to fall as much as they feared, and thus inflation is probably not going to come back to the degree that they were worried about. So a hawkish Fed today on the margin is probably best for bonds, best for stocks, lest the bond market have to tell the Fed, you guys just don't get it yet. We're going to have to push rates even higher from here for you to get the message. And that means we're going to need to mark down all asset prices because of the yield outlook in the short term. It's not that different than what we saw basically in April this year, right? The geopolitics of it all definitely had an influence. But throughout April, you have a market that's pricing in the possibility of the Fed needing to hike by the end of the year, and equity prices get smacked along for that ride. So this being a place where maybe if the Fed doesn't acknowledge reality, you see a setback. The July high, the all-time high here in NQ, Z4, 21,237 and 3/4. We almost got there today, not quite just yet, but that would be a place where if there's some resistance found technically, we then have an area where we can buy back to the breakout level of the October 30th high at 20,078.5. You look to that as support, you reload, and then we're looking at the market that could extend to, again, fresh highs here, which is why I'm staying long. I'm not doing it in Z4. I'm doing it in H5. I'm still playing the long 22, short 22.5 call spread. Obviously, the past 2 days have been nice, but there's no reason to change the plan right now because there's plenty of time left and the market is unfolding post-election as envisioned.
We did touch a new high today in NQ, this contract, didn't we? 21,199 I'm seeing.
In NQH5. In NQH5, we hit a new all-time high.
Oh, okay.
And in the continuous contract, we have hit new all-time highs already for the record here.
Yeah. I mean, I guess that answers the question. We were asking ourselves for the longest, right? Did we need those NASDAQ and tech stocks to hit new highs for us to really motor higher? You know, the funny thing about it is that's not the stuff that really pushed us higher, right? We saw what banks were doing in a massive way, and a little bit of pullback here today in banks. But I think that was the thing that caused markets to explode higher when you saw banks, when you saw healthcare really moving in a very meaningful way, is the thing that ultimately we didn't know we needed, that really ended up pushing the market higher. But as far as NASDAQ goes, you know, as much as we moved higher, it was definitely a different type of move than what we're used to seeing with NASDAQ. I know we got the big bar here and all of that, but you could argue that a lot of those names didn't really, you know, a lot of the big names that we're used to seeing fly didn't really fly in the way that we're normally used to seeing them. Although that being said, they're making up a little bit for it today. When you look at Meta, you look at Netflix, you look at, you know, the NVIDIAs and the Amazons of the world. Yeah, Amazon. Amazon was definitely a one that really took off. And and you know, I'm not gonna go there, but Amazon, it was definitely a name that flew higher, and I think helped push the NASDAQ. Look, there's really not much to say about these charts, man. They look technically sound, they look technically beautiful. The only thing that could wreck it is, I guess, maybe something today or just some end of the week profit taking on Friday, honestly. But even then, I think end of the week profit taking would be a welcome sign, and if that happens, you're definitely going to see markets push higher.
So difficult for me to be bearish looking at these charts, Jamal. It's so bearish. Volatility has been absolutely crushed. Stocks are moving up. Technical momentum has been reaffirmed.
Moving up
no
on
patting
volume
ourselves
too,
in the back here.
Right?
Yeah, moving up on volume, right?
Last
Like people
couple
are
of
coming
days.
back into the market now. We saw this in the surveys. The surveys were out in August and September. What are you doing with your money right now? Why are you deploying it or not deploying it? And the two things that came up in every single survey among small business owners, among larger corporations, among fund managers, okay, people who just play with money, it was, we want to see if the Fed's cutting rates and we want to see the election come to pass. Everyone who's handling money in the economy for capital expenditures or to making, or CTAs, they wanted to see what happened. The Fed is lowering rates. We now have the election uncertainty resolved. It's not an election where it's going to be contested. We heard that from nominee Harris yesterday. We heard that from President Biden today. Okay, there's going to be a peaceful, smooth transition of power. It's not one of these results like in 2016 where the guy's the president because of the electoral, but most of the country's against him because he lost the popular. No, this is a red wave. The volatility goes down. The uncertainty is clear. You may not like the outcome, but the uncertainty is now removed. We know what path we're going down, and stocks tend to like that. So NVIDIA, new all-time high today. Meta, it looks like a bull flag on an individual basis. The Mag 7 names look absolutely fantastic here across the board. And I remind everyone it was the Mag 7 names that led the way during the Trump era. Information technology services were the best performing sector in the market. 2017, among 2017 to 2020, 3 of those 4 years, Jamal. So the big get bigger in this kind of market. If you are long tech, you're probably going to like it. right now. The NASDAQ is doing well here. The S&P doing well, trailing a little bit, but overall, strong technicals. I see no reason to change course whatsoever in the ESH5 contract now. This is still 54 days to expiration. Okay. Long 6,000, short 6,200. That was purchased after the last Fed meeting. The only adjustment to this trade may be just to continue to roll out the strikes, because I don't want this position to go max profit, and I prefer to hold on to these long out of the money call spreads with them sitting at like a 25 to 30% probability of profit. And when they move into that 70 to 80% range, most of the juice has been squeezed from the trade. So it's worth repositioning with more time so that you can continue to enjoy the trend.
Yeah, in my case, I have a different conundrum, and it's a good one. I mean, honestly, I'm not bothered by it, but again, I'm sitting on gains from these micro futures, and creeping up. Every day we creep up higher is a little bit more losses in the ETFs, but it doesn't supplant what I have in the future. So now it's just a matter of when do I basically, the best thing about it is it's 43 days this December. And so it's more about the ebb and flow of the market. How are things going to go there, right? I would expect some ebb and flow. I don't think we're going to go up straight 10 days from here, but who knows? But I would expect some ebb and flow here. And that being the case, again, that's the best part about doing spreads, is that I'm not, my losses are going to be capped if we could continue to go higher, and I'll continue to make on the micros. So it's an interesting conundrum to have. And really, I'm just able to, I'm afforded the ability to kind of just sit and watch and determine when I want to make a move.
Jamal, I have my bird watching book here. I actually got to put something in it today. You mentioned that you're trading the micro Dow futures.
Yeah.
That is the first time I've ever seen someone in the wild trading micro Dow futures. So thank you for that. Yeah. I've never traded this myself. I have so many issues with how the Dow's constructed, just as like from a portfolio management type of perspective. It's such a ridiculous index. But you know what? People pay attention to it. There is the whole thing of Dow theory, right? What are the Dow transports doing? You can pull this up on other platforms. I would say look up DJT as it used to be on TradingView, but that actually doesn't work anymore. So let me pull up the Dow transports.
Well, it's funny when you look at like your line you have here is basically about where I got long. I got long at 42, 292, but somewhere around there. It was that dip right here that we had over the last couple of days. And my thought process was, look, I kind of want to put on the similar trade that I had on with SPY and Q, and thinking that we were going to rally. I mean, to your point, I think we're in the same camp. Stocks are going to rally no matter who was in office. And that's exactly what happened. And so that's how I got into the trade, really. I mean, normally I only trade Dow futures when I just want to buy more S&P and NASDAQ, and I don't think I should buy more, and the markets are all down, then I look at Dow.
So it is, by the way, if you're on TradingView, you have to do DJ:DJT now to get the Dow transports ticker. Otherwise, it automatically reverts to the Trump. The ticker for Dow transports on TradingView is DJT, but because of the single stock, that supplanted it as when you automatically type in on your platform, even on TradingView, or Tasty Trade, you're gonna see it pulls up the Trump stock. So DJ:DJT is what you want to look at for the ticker for Dow transports. And when you look at that, okay, so now we have that all squared away.
As we mentioned it, just quick aside, I know it's a future show, but are you surprised at the price action in DJT? Or you figure it's more of a sell the news situation?
I actually haven't looked at it. Probably sell the news.
I just pulled it up just now myself.
I mean, maybe he's going to divest from things. I would imagine that Musk has something to do with this, right? Like, is Trump going to declare that Truth Social is going to be his exclusive medium of communication? That is possible. He can do that, and that would obviously help the stock a lot if he wanted to, get favors. If foreign governments could buy DJT stock to pump it up.
Yeah, we've never seen anything like this.
I know it's a real unique situation. Like, does it violate the emoluments clause? But in any event, I think the other stocks that are in like the Trump orbit matter more, like the Geos of the world, right? The private prison was a big boomer yesterday.
Yeah.
Rather show than tell. Geo is one of the stocks in the Trump basket that I have. That was like Rumble, DJT, Apogee, iBit for Bitcoin, of course.
CXW is another one, right? I think, right?
CVX for Chevron.
Well, CXW is another prison one, right? I believe. I remember these names. I remember these names from some years ago, actually. I'm pretty sure this is another
Core Civic. So DJT itself seems more idiosyncratic to a company that they just announced their results this week. They had like $1 million of revenue total for the quarter. They're not really making a lot of money. If it didn't have the aura of the guy who's going to be the next president attached to it, it would be a penny stock, right? Like, it's not really, the fundamentals there are completely unmoored from anything that substantiates a multi-billion-dollar valuation. But you could see that the rest of the Trump stocks are doing fine. So I don't read anything into DJT. It's one of the reasons why I look at the market going up today, broadly speaking, and say this is still the MAGA trade writ large playing out as it did in 2016. Point though, Dow theory. Why are we going to DJT ticker? Dow theory. Technicians will look to the ratio of the Dow Jones Transportations average and measure it against the Dow Jones itself. So when DJT is outpacing the Dow Jones, it's typically an interpretation that the broader economy is growing. For the better part of the last year, Dow transports have been underperforming the Dow Jones basket itself. That's up until a few weeks ago. In early October, the Dow transports to broader Dow ratio was 0.37. After the election, or prior to the election, it was 0.39. After the election, it jumps up to 0.40. Small incremental changes, but noteworthy changes. That's a 2.07% increase this week. If Dow transports are leading the broader Dow, getting back to the theory here, good economy, good for the stock market. Those are things that you want to see. So I look for signal amongst the noise that is a poorly constructed index, and I'm certainly not trading it myself. So kudos to you for doing it, because yesterday was awesome, and I'm sure you felt pretty good being long those Dow futures.
Yeah, it didn't hurt at all.
Right. Didn't hurt. Okay, so I think that's really it for stocks. We haven't touched on the Russell here. The Russell, to me, is an absolute buy in the dip.
Yeah, man.
Type of market right now. I don't know what else to say. It's great.
Yeah, I kind of felt bad about this because, I mean, I've been saying for the last several weeks about this Russell, right? Like, it's one of the more dependable trades in the market. And, I'm sure you could put together like a whole bunch of clips of me saying that shit.
Me too.
It's rough. Look, I mean, this is a huge move. I didn't see this one on the bingo card. Although at the same time, I shouldn't be surprised, right? Like, we know that well, I will say this. The big surprise is not only that, I guess, the way that this exploded, but the fact that bonds were getting rocked too. I mean, that just seemed a little bit weird. I think everybody's been talking about that. And of course, we'll get to bonds in a little bit. But look, small caps are the ones that have the chance to benefit from any potential changes in the economy. And they acted resoundingly. They really moved strongly. So this has definitely been one. That said, I actually got short some of this as of right now. And again, it's against a lot of longs that I have, trust me, that I'm long equities. So I figure if there was anyone to possibly get short, it's this for the time being. At 2,400 actually was the number. 2,400 is where I got short.
So you're basically right there right now.
Right here, yeah.
I mean, if we do have a pullback, looking into the late July high around 2,350 seems like a sensible spot. And we're beginning to see that 1 week moving average creep up into that area. The longer term Russell charts still look incredibly bullish. We just broke out yesterday in what may be a measured move that spans roughly 300 points from a breakout point that starts right around 2,300. So opportunities to add and accumulate if long delta, that could be a combination of short put spreads as the market pulls back in, or on these pullbacks, use the low volatility to buy out of the money call spreads to get a little bit more convexity. This is a market right now that, from a technical perspective, you have to treat it as bullish only. If you're going to be directional, bullish only right now. The Russell looks good. The sector rotation looks really good. Ignoring the performance by KRE today because it's down by about 2.2%. It's clearly having a great week. I really like paying attention to the sector rotation argument because I think that informs you a lot about where people are anticipating the economy to go. If I'm buying a consumer cyclical, it's because I think that consumers are going to be pretty healthy moving forward. If I buy consumer cyclicals more than I buy consumer staples, it's because I think people have more disposable income to spend. So when I think about consumer cyclicals like PEZ, it's a very lightly traded ETF, but I use it as a tracker. It hit an all-time high today. We can go to XLY, which is constructed a little bit differently. It has a lot of Tesla in it, but this is now moving up to very aggressive levels thanks to Tesla's move. And you can go into the bigger banks. When the banks are moving up, when consumer discretionary is moving up, when industrials are performing the way that they are, these are all the signs of early to mid-cycle bull market. Early innings still. I'm going to stay long, Jamal. We can get off this.
I mean, correct me if I'm wrong. I think XLU was the only one of these that was really down over the last couple of days, honestly. To the point of the fact that, you know, if inflation is going to stay in our system and there's going to be higher interest rates, again, utilities don't typically do well in higher interest rate environments because they're often doing a lot of different projects that cost a lot of money and they're borrowing a lot of money for debt. So that's the story there. If this is going to be the case, we'll see. But yeah, as far as sector ETFs, just about all of them have really flown over the last couple of days. Now, 2-3 days of trading doesn't necessarily make 6 months of trading, right? Like we have no idea what things are going to be like in the next 6 months. And that's when you talk about elections, the bigger thing everybody always talks about, especially when you're changing parties, is sector rotation. We're going to see a lot of sector rotation over the next couple of weeks, especially into the end of the year. If there's one thing that I felt like is consistent in the last several elections, it's that, especially since we flip-flopped a couple of times here. So I think you're going to see some sector rotation here. I think you're going to see a lot of people potentially try to put on a lot of the same trades they may have had, 8 years ago when Trump came into office.
Yes.
I don't necessarily know if all of them are going to work, to be honest with you. I think that's why I've been sort of trying to be patient and not necessarily jumping on this playbook of trades that you expect to play out. I think you got to proceed with a little bit with caution to see how things are going to play out because we're not in the same environment as we were 8 years ago. It's very different. So I think you got to wait it out a little bit and watch what's moving and keep an eye on what's happening here.
Bonds are taking a bit of a breather today after their precipitous decline the past few sessions. Obviously, I think the view, Jamal, that we've articulated here over the past several months, especially since the end of June, is that Trump victory would be perceived as bad for the bond market because of the tariff and inflation implications. So yesterday, we maybe washed through that. October was a month where Trump's odds were rising through the betting markets, and the polls weren't structured in a way that would lead you to believe that Harris had a significant advantage to win. We've mentioned that when you have a 2.5% lead nationally in the polls, that's the threshold for Democrats to basically clear the population advantage that California brings. And that's where when you have a 2.5% lead as a Democrat nationally, you have a chance to win the Electoral College. So when in the polls, Harris was only leading by 1.1 to 1.5 points, and you see the bonds melting down and the poly markets odds going up, you think to yourself, the market's getting positioned for a Trump win. Yesterday may have been like the buy the rumor, sell the news. You talk about that in the DJT stock yesterday and today, given the price action. We know what Trump brings to the table. He's also a real estate guy. He tends to like lower rates. It's very difficult to see him using his position as Fed whisperer, if you will, if he wants the White House to have a greater say in Fed policy. Can't really see him saying raise rates. So directionally, I think I'm biased towards Trump being a lower rates person. And we heard him talk about this throughout his first term. Powell's got to cut. Powell's got to cut. Powell's got to cut. The Fed today, the path is priced. The market says the cut cycle ends in June 2025 right now. The Fed telling us that we already know that. The market's been there. So what can the Fed do today to keep pushing us down? We've had some really stellar auctions the past 2 weeks. The higher EV on any trades right now, if you're going to be directional, is probably to the upside. And I know I've been saying that for the past 2 months. But right now, the higher EV is on the upside in bonds.
Yeah, I don't necessarily. I don't see at all him saying something to the effect of keeping rates high or even raising rates. I totally agree with you in the sense that he is. If there's anything, look, I'm the least political person in the entire office. I know nothing about it for the most part, on purpose. And what I do know is that, like you said, historically,
smarter than the rest of us.
History says he's a real estate guy, and real estate guys, of course, want lower interest rates, or at least interest rates at a level where people are participating a whole lot more. So whatever low means, right? I mean, low is relative, but that being the case, look, if there's anything that I did that I don't necessarily know if I should have been doing, but I was very active on the night of elections, probably around around between 9 and 10 Central Time, so 10 and 11 your time, Eastern. Very active in bonds. I had positions to clean up. For the longest, I had the December long call spread, right? And I was short a little bit of upside in the November expiration, closed out the November, closed out the December, went out to January and got long and obviously adjusted strikes. I am now long in ZN, the 108, 113 call spread. And in ZB, I am long the, and I did the same thing in ZB, right? Like busted out my long position in December, covered my short upside position in November, and now I'm just long call spread in January, and I'm long the 114, 120. And so I was active really that night. I just was like, man, I again, like you, I've been long this for a while, but I'm like, look, if it's gonna go, it's got to bounce at some point. This was the biggest fear that I had, was that they would drop on election night. Honestly, that was the biggest fear. But knowing that that would possibly be an opportunity, whether it was between election night and tomorrow and the next day, that would create an opportunity to potentially, move my position further out to Jan and still be long. And so that's what I'm doing. I'm leaning long for a while. I mean, this large drop, if there's anything that we've seen in markets, is that large drops are eventually, eventually, it may take some time. You have to, you're being long the position. It sucks. Look, it sucks, but you have to give yourself some duration on this if you still want to be long bonds.
This is a very poorly constructed trend line here, Jamal. But seeing the moment that the bond market started to break down on October 4th, we can benchmark that as when we kind of exited our sideways shuffle and started the trend decisively lower. We see that big candle here, 8 a.m. on October 4th. That's when volatility breaks out of its sideways shuffle and begins to rocket higher for the rest of October. So let's treat this as our recent downtrend in bonds. It's been really stable. There's been a few overshoots. We may want to re-anchor this. But either way, that's what you're contending with if you aren't going to be operating on the long side here. We've already started to churn through former support, right? We started to poke our head back above levels right around 110 here in ZN that were keeping the market propped up for at least a few days before breaking down on election night. So now that we've turned back through 110, I would say if we can get back through where we were prior to Trump being elected, high of 110 and 21 and a half ticks here in ZN, you have a discernible bottom to work with. We're not going to pick it yet. We've learned our lesson here, Jamal. We saw back in the middle of October when we had that brief one-day close back above the 5 EMA, the 1 week. Yeah. That was not the signal. We got that close almost this week. It wasn't there Monday. It didn't happen yesterday. We may do it today. So let's break this downtrend first. Let's get a little bit more meat on the bone. There's certainly a lot to like. And you know what? It's a recession hedge. If we go into recession, bonds are going to be the best performing asset class alongside what we're going to talk about next, gold. So long stocks, long bonds, a 60-40 portfolio. Actually, I think they are not correlated right now. And it's a good way to bring a diversified exposure. That's, plain and simple. It's not a momentum trade. Looking to call bottoms is not a momentum trade, but this is an overshoot.
Yeah, I'm confident it's not a momentum trade, and honestly, I feel like it fits nicely well into the book right now, along with a bunch of other things like right now, long equities. I do, maybe we get lucky in the sense that we do get returned to the 60-40 trade where these kind of ebb and flow off of each other, right? People take money out of bonds as safe havens and often put them into stocks because they figure stocks are going to go higher. I think that's a lot of what we saw the other night, but I don't think it stays that way. I think at some point or another, people jump into bonds.
Let's talk about something that we actually like trading these days, gold and silver. That's been fun. It will be more fun. It's up 1.1% today here, at least gold. Silver's up by 1.8%. Are we out of the woods just yet? Jamal, I had a plan here. I wanted to get more gold if we hit that 200% extension down near 2645 or so, and we never quite got there. So I have missed this bounce in terms of adding to what I already have on the table. A little peeved about that, but everyone's peeved about not being on the side of the market when it goes that way. I'm not chasing here yet, though. The uptrend from the August, September, October swing lows is still broken, and we are looking at the 5 EMA crossing below the 21 today potentially. This is a lot of damage, technically speaking. If we can reassert ourselves back through 27.25, I'd feel more comfortable that the uptrend is in place. Longer term, I'm still looking for more gains, which is why I'm still holding on to the long gold call spread. But this is a moment of patience here. If you are looking at this with fresh eyes today, it's a really difficult case to say this is the moment you want to get bulled up. Because quite frankly, the risk to reward is that this is a counter trend bounce in the short term. And the more prudent thing maybe to do to size up a short opportunity to look for a little bit more weakness. So I see no reason to change my position here. I don't see a reason to get more long. If I'm going to scalp it, I'd probably scalp it on the short side. Other than that, I'd like to see a little bit more definitive development here on this chart.
On my charts, as I said, I often look at SMA. I saw it dance on the SMA just yesterday, which is around 2682, and then I saw it dip a little bit below that today and bounce off of it. And so as a result, I feel pretty good about staying in this trade too. I will say I was a little nervous yesterday when I was like, wow, they really don't love gold. And I just, I was like, man, this is really a really rough trade as of right now. They really don't seem to like it. Are people just exiting just to get out of the door? But again, I wasn't necessarily looking to change. Matter of fact, I was looking was it the opportunity for me to roll further out? And I still want to roll further out to January. It's another one I want to give some more duration because, again, I got a pretty far upside trade. I got the 2,900 3K on, right? We've made money in gold throughout the year. Now I'm looking to see how much further upside is this really going to bounce using a lot of those proceeds. How much further upside does gold have? And so that's been my trade. And so I definitely want to give myself some duration. And I'm trying to decide whether I want to roll now, today, or when do I want to do it? But I mean, probably really soon. Because again, knowing, the good thing about it is I don't have to worry, again, being long upside, I don't have to worry about upside vol coming in unless we do have big down days. And obviously it's not even so much about vol, but more about price. So moral of the story, I do want to roll this out to Jan and give myself some more time, and I'm just trying to determine when to do it.
You mentioned the 50. I re-anchored that EMA down to the 50 here. I prefer using EMAs to SMAs. I think what happens more recently matters more than what happened days, weeks ago. And quite frankly, we downgrade older price action in terms of importance in our head, right? Like what happened yesterday matters more than what happened a week ago. So I use the 50 EMA here. That's exactly where we bounced yesterday and today. Very clean. Astute observation, sir. The question is, does the U.S. election change the predominant driving factors of what's been going on in the metals market? And the answer is absolutely not. Do you think that Xi Jinping called up Pan Gongsheng, the PBOC governor, and said, listen, Donald Trump won. You got to stop buying gold?
No, but I would love it if they did.
Really? Do you really think that happened?
Just like kind of funny. I could see them having, the discussion about it. That seems like a skit, honestly, is what it sounds like.
Yeah, it would be, right? So I don't think that changes here. And we just saw those inflation swap forwards at the start of the show, right? If you think that you're heading into an area where fiat currencies could be eroded because of inflation pressures, I'm not a big believer in those arguments. But if you are, right, you see inflation expectations moving up in the market, do you think that's a bad thing or good thing for gold? There's a real shot that real yields erode here, and lower real yields are something that gold and silver historically like. So gold up, I'm going to stick through it. I have my exposure out in the GC G5 contract right now, Jamal. When we tagged $2,800 an ounce back at the end of October, I was in the GCZ4. So I decided to just use that as the opportunity to roll out, right? I was at 20-something days to expiration, buy more time, okay with a little bit of a pullback as long as we have enough duration. We got it. We're back to the 50. The market is still going to be moving up. I have no problem riding out some vol here in the short term in gold. In silver, my goodness, Jamal, can we talk about how when you're an idiot, sometimes things work out? And also when you stick to your plan, things can work out. The silver condors that we had put on back in October when we got back to the midpoint of the range were just, I was self-flagellation. I was basically here whipping myself every single day because immediately after putting those on, we got a breakout. But got to stick to your game plan. Yesterday was roll day. And so despite being underwater for a very long time, able to unload the position, basically not just at even, but actually at a profit, I decided not to go back into it. Right. And ultimately, that's where this is landing. Where does the silver exposure go now in the follow account? Does it go back into the iron condor? Does it go into longs? I think it still has to be on the long side here. But the evolution of volatility is what scares me about thinking that this is the time to push the chips back in fully with long deltas only. The hallmark of silver's rise in recent months has been during periods of expanding prices, you get expanding volatility. During periods when prices are pulling back, it's usually marked by a pullback in volatility. So this pullback in price has absolutely been marked by the pullback in volatility as well. It's very typical. So if volatility is going to continue to contract in the short term, it's probably going to be an albatross around silver's neck, like it's going to be an albatross around gold's neck. I want to get more long exposure, just not yet. I'd like to see it dip below 31 first.
Yeah, I can't remember if I told you, but, I finally got into silver. I think I might have mentioned it, but if not, now you know. I'm into January SLV calls. Yeah, just straight up calls. That's right. That's how we roll with gold and silver, baby, being their momentum plays. And so that's how you play them. And again, I feel like SLV is fairly cheap. I think about it from the standpoint of how much premium I'm extending here, right? And I know this is very antsy, tasty, right? But you just got to look at it from the standpoint of how much premium I have. And in my case, I am I got about $600 worth of premium in January. I mean, I don't feel like that's an exorbitant amount. I think that's really nice with regard to, especially when I think about the potential multiples that we could see in silver continuing to make its move higher. So that's the play I got on.
I mentioned Pangong Zheng before, because the PBOC likewise announced that in order to help promote a sustained economic recovery, the PBOC would be lending its support with whatever it can do on the monetary policy side. The liquidity spigots are open. They're here. The fact that the PBOC waited until after the U.S. election tells you everything you need to know about what they expect to happen. They fully anticipate another trade war. They're announcing the support now because they cannot let the trade war come back and kick an economy that's already in the dirt, that's experienced several quarters in a row, I think 5 consecutive quarters now of deflation. This is part of this asset reinflation story here in the U.S. What other economy is growing the way the U.S. economy is growing right now? Find me it. The U.S. economy is about 11% bigger than it was in the quarter prior to before COVID. Every other major Western economy and democracy in the world is only about 3 to 4% bigger. The U.S. is blowing everyone else away. And I know I say this pithily, but it's a remark I've made for as long as I've been a full-time employee of Tasty. Where are you going to put your capital? Are you going to put it into deindustrializing Germany? Are you going to put it into Brexit UK? Do you trust the French? No, you're going to put it in America. No, you're going to put it in America. So you're going, you think about what's going on here. The Chinese authorities are flooding the market with liquidity in an economy that already proved to us that they think these supply side efforts are not enough. The money leaks out of these economies that are easing, that have no real growth prospects, and it gets sucked up by the U.S. And sucking up all the world's liquidity means the dollar also can get stronger with a higher U.S. equity market. We're drinking the world's milkshake, as Brett Johnson likes to say, San Diego Capital. And that's a good reminder. Old video, Victor Jones and I interviewed him 2 years ago to talk about the dollar milkshake U.S. asset appreciation theory. It seems to be playing out right now. So go review that. It's on the Tasty Live channel, I believe, still in the archives on YouTube. But copper, we talk about being better lucky than good. I was able to close out a position today that was at 18 days to expiration, Jamal.
Nice.
Oh, gosh. You know why this was great? Because I should have closed it out 2 days ago when we were at 20 days to expiration, right? Tasty methodology, 45 in, 21 out. We bounced back above my lower strike at 4.35. And then yesterday, gosh, danger, Will Robinson. I got very fortunate here. I should have stuck to the Tasty methodology. It would have been a winner. It was a winner, right, on the prior trade. But because I didn't stick to that plan, I risked having a loser here. Today was fortunate. This should not have been a winner because I mishandled it. I got a second shot at it. I got out. I'm out for right now in copper.
As you're saying this, kudos to our partner here, CME. I mean, to be able to trade stuff overnight, like I said, I did a lot of trading overnight. Yeah. A lot of things were being able to trade, whether it was futures or the futures options, which was really nice, by the way. But I was wondering if you still had a position on here because, this was another one of the metals that really got rocked and having a strong bounce back today. Again, with more measures potentially coming from China, you would expect a little bit of bullishness in here. So look forward to that soon, maybe.
This is a really interesting place that we did get the bounce to. Talk about, policymakers. Do they follow the charts? I think so. Uptrend from the August, September lows. We got a pull back into it basically yesterday. We announced the measures of support here today. The market bounces. This has been a lot of chop the last few weeks, but I think that we have a nice little opportunity perhaps to think about this being the swing. And now we're getting ready for another long delta play here. FXI, the Chinese equities, just as a corollary here. Yesterday, Trump in. They're down by about 2%. Today, we get more easing to counteract that. We're up 5%. And now we're breaking the sideways range of the past few weeks. You see an Australian dollar today that's up by 1.29%. That's wild for currency markets. There's a big China trade back because the liquidity is here again. So the U.S. economy is growing. China's stimulating the market. Metals are looking pretty good here all of a sudden.
Basically almost back-to-back 5% moves, actually. And it's funny, I just looked at the options. The Nov 25th expiration is basically about a 5% move. So who knows if that's what we're going to be seeing in here in copper over the next couple of trading sessions.
It should be fascinating. Energy, though, for all of the action. Wow. Whoa. Hold on a second here. I don't know if people just caught that because the title of this is Energy Slumps.
Yeah.
You can ask the producers. They're pinging me like 2 minutes before the show starts. Chris, where are your slides? And I'm saying I'm watching the ticks to make sure that the information is on the slides is as close to what we're going to be talking about on the show. But that was almost an hour ago. Energy is
you're lucky, okay? I am not even doing slides there on engineering the trade because it's going to be in the middle of the Fed meeting. I'm like, well, I just thought about it. I was like, I'm not going to do any slides today. Why am I going to do that? Things are going to move around so much.
Yeah, I've done that before where it was when we were doing something in the middle of a Fed meeting and it was like stocks go up, down, bonds go up, down. And I just left those as the title cards because, what's the point?
I'm not even going to do it to myself today. I'm not going to do it.
Since I last checked in, oil is up about 80 cents. So that changes the calculus here in terms of the discussion. Does it change what we're thinking about moving forward? Jamal, I got to say, the vol has not come off and stayed down after that Israel-Iran retaliation that we saw at the end of October. We're beginning to turn through that $72 zone, which support in June, support in August, and then clearly a zone of chop here in recent months. This could be the swing back to the upside. Regrettably, I don't have anything on. When we had the pullbacks after the geopolitical depletion, I was sitting here waiting to sell some put spreads again, thinking that you'd have a bigger pullback in prices because, hey, where were we prior to the Iranian attack on October 1st? We were trading below 66 and positioning with thin out. And just like in September with a thin position market, we'd be able to lay something else on. I've just missed it. It didn't get to the level I wanted. And so I regrettably don't have anything. I don't want to chase either. So let's think about what we can do to prepare for a not chase here. I just haven't had a good read on oil. I'm not going to trade something if I don't feel like I have an edge. We are right at the 50% mark of our 6-month trading range. So in terms of finding an actionable entry point right now, I'm going to chew on this for a little bit more because I want to look through all the inventory data. I haven't had a chance to review it. I've got to call up my quant, Westwater, and see what he has to say about this. But this is as good of an entry point for an iron condor in crude oil as we have seen at really any point over the past 6 months. Because if you put a condor on in crude in June at around 72.5, or in August at 72.5, or heck, in October at 72.5, you've been looking at a market that's just been cooperating. And I would remind everyone, the research shows if you're betting on crude oil prices at any point in time, less than 12 months moving forward, the best predictor for where prices will be within any 12 months from now, 1 month from now, 6 months from now, 7.5 months from now, is the current spot price. So high volatility, a 62.6 IVR sitting in the middle of the 6-month trading range, that is what the playbook calls for. It says directionally neutral, sell the vol here and now.
Yeah, I'm trying to think. I'm trying to look my activity here. The last time we talked, since the last time we talked, I bought crude on 10/28 at around 67.35, and I closed it out on Thursday after actually during the day. So I guess we did talk about it. I closed it out prior to the show at 69.46. So it was about a $2 gain on it. Nice little gain. Obviously, you came into the week and you saw crude rising higher prior to the sell-off that we saw yesterday. But, I mean, it's moved around quite a bit. Again, anytime crude's below 70 and change, I get interested. And I got a little bit interested yesterday, but I just felt like there were so many, which is crazy to say because I really think there's a great opportunity in crude right now. But I feel like there were so many other different things yesterday to trade that I ended up not trading it. And sure enough, it's just about almost $3 off the low of yesterday. So anybody who ended up trading it directionally there is nice. But to your point, the Iron Condor is fascinating right about now because it's 62 IVR. You can go to those areas that we've talked about. Hell, you can go even further inside on the upside. Before we used to sell, I think, around the 80 strike. Now you can probably go to 78, right? Yes. Somewhere around there if you want to. So this is looking good once again.
Yeah, just sizing up this possibility here. If we wanted to go out to the CLF5 contract, F for January here, we are thinking about a range that effectively finds highs near 81 and lows near 63.75 over the past, really the past 52 weeks. We're talking about a 52-week trading range, which again, if you go back to this point last November, Jamal, where were we? What day is today? The 7th? November 8th last year, we closed at 71.88 here in the CLF5 contract. So if you did a year-long Iron Condor, right, you're pretty good right now. This market, like oil is typically very stable. This is one of the more miraculous things. Oil prices haven't moved. I'm paying less per gallon of gas today at the same gas station I would go to when I was a teenager because I live in the same town I grew up in. I'm paying less today than I did when I was 18. Gas prices have been remarkably stable for my entire adult life, which they're too high, but they've been very, very stable here in the past year also underscores that they've not gone anywhere whatsoever. So again, thinking about those confines in the CLF5, 80.82 as the call spread, 62.64, that yields a 60% probability of profit, risking a little bit under 3 to make 1. Taking into account what my partner in crime said here, if we were to think about pulling this in, right, going a little bit closer towards current price on the call spread side, you're going to get a lower probability of profit, but then you start to go into a 2-to-1 risk to reward ratio. So shifting that from the 80.82 down to 78.80, you're effectively saying we're going to respect the swing highs that we had around peak fears of Israel-Iran in the short term. That's the bet then you're making. It does give you a better, more juice to squeeze. It's a slightly less appealing probability, but you're getting compensated for it. There are different ways to skin this cat is the point, but directionally neutral on oil has been working for the better part of the last year. And when there are bouts of geopolitical event risk, you just got to fade it.
You do, because it really hasn't amounted to a whole lot of anything. But yeah, you can put this on in a multitude of different ways as Iron Condor.
And you know what? Let's do it. Let's put it on. Sometimes you got to race. Let's do it. Dollar reversal.
But I got a gang. I mean, I got a gang of stuff on, a lot I put on in the last couple of days. It's a great trading environment, man.
Yeah. Speaking of a great trading environment, the FX stuff has worked out pretty nicely for me today here, in part because yesterday was an abject disaster. But so rebounding with trading some of these shortest term stuff right now, like, one day to expiration out here on the FX things.
I got on like 7 times the amount of positions you got.
I'm a Jesse Livermore guy.
That's
I like
good.
to like. Okay,
that's good. That's the way to be.
I'm gonna put this on, and then you know what? I think I'm gonna go. I right now, Jamal, like, I'm working through the Ascent of Money here. Right, this is a long book. This is 400 pages. I want to put on my positions. I want to get back to learning about the history of financial markets, right? Like 45 in, 21 days out. I don't need to think between those 2 weeks.
I'm kind of like Tom in this way, in that I put on a bunch of positions, and that allows me to sort of stay abreast of the market without having to read as much stuff as you do. In a way, like for real, it does. I used to read a ton. I feel like I'm like, I feel like this is real genius, and I'm like Val Kilmer's character. I'm like, I used to be like you. I used to do the same. I used to read a ton. I don't read as much as I used to, not nearly as much stuff.
Again, you're probably smarter than me.
No,
you know?
no.
I'm like Charlie Day and It's Always Sunny, you know, like looking for Pepe Sylvia. And you're like, well, my positions are up, so I guess the market's up. I don't need to do any more research. and you're probably a happier person than I am. The euro here off the lows, swing lows that we have for the year of 2024. We bounced from there yesterday, today. We obviously have a Fed meeting coming up.
Yeah.
The Aussie, the China sensitive thing. Again, stick to plans, stick within your time frames. Overshooting the Tasty methodology, I got greedy is what I'm trying to get at here. Okay. Were it not for today's price action, the call spread that was sitting at 1 day to expiration, the iron condor that was sitting at 1 day to expiration would have been nearly sitting close to max loss yesterday. I am exiting everything today in tranches that effectively break even. Okay. If I did this at 21 days to expiration, like we say we should do, you and I both deviate from the plan now and again, this would have been taken off weeks ago as a winner, but I didn't follow the plan. So I had to deal with the whole, okay, I'm riding out a loser, I'm holding on to her too long, let's see if we can get back to break even. Uncomfortable. That said, though, hey, this is our 52-week midpoint of the range. So if we're looking at a 28.9 IVR, do we say this is worth the squeeze right now? Unlike crude, the answer is no. I'm not getting back into it. There's no reason to be playing in a pool with a 28.9 IVR right now. Not when we have a Fed meeting coming up in 1 minute's time. Jamal, we're going to stick around just for a brief second here before we go to a commercial break to hand off the mic to Dr. Jim Schultz.
I like it.
What's next on the calendar for tomorrow? Not much. Canadian jobs report in the morning. So if you're trading 6C, keep an eye on it. There is a Fed speaker in the afternoon. End of the show, some education. You know the types of margin. Initial, maintenance. You put the initial in to get on the trade. The maintenance is what's required to hold the trade. And if you don't hold it, then you get margin called. Good movie. Don't get margin called. I will make that joke every single time we go over this slide, no matter what, Jamal. Head over to tastylive.com, top banner, learn beginner futures, or click the link here at the bottom of the slide to find it directly. We do have the results of the Fed meeting coming out in any second right now. Seconds time right now. It should be a 25 basis point rate cut. The market was pricing in a 100% chance of such a move here. We'll keep an eye on ES real quick as we rate for that. The results are now coming out because it is exactly 2 o'clock on the dot.
Yep.
And what do we know? What do we know? Where are my Fed decision? It is a 25 basis point rate cut as expected, down to 4.75%. We will have the policy statement out. Be sure to follow me and Jamal on Twitter for more information. Of course, Dr. Jim is going to be here. He's going to cover it all up next here on Tasty Live with From Theory to Practice. See you soon, folks.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
people are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow, Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the program. We have an odd Fed Thursday today. It's happening right now. I see the markets are moving, so we're going to pop right in and not even mess with any of this funny business. If you're watching over on the TC Live Network, I would bounce over to YouTube. You can join the conversation. You can join the discussion in real time, and we can do all this together, man. Let's do it. What's going on in the market? Let's pop in. Man, let me know. What was the number? I don't even know what it was because I was getting ready to come in live with you all. But we see, not much of a reaction to whatever the number was. I see E-mini S&P still up 33. You've got the risk-free instrument, also known as the NASDAQ futures, now up 280. You've got the boomers down 16, and you've got the Russell 2000 futures down 10. There wasn't much of a movement on the actual 2 p.m. Print. It seemed like they were a little bit late, which is unusual. But hey, man, we're all dragging after that Tuesday night, late night that we all certainly experienced. But let me know, what was the number? Oh, Tasty Live. Look at Tasty Live coming up clutch. Man, that could be James. Man, that could be Matt. That could be Ryan. That could be Laura. Man, that could be John. That could be John McGloin in the chat. Man, I appreciate you guys. 25 bips. So that was the chalk, right? I mean, that was the favorite. Like, that was going to be essentially, the it is written. And there you go. So 25 bips, not much of a move. So now, of course, I mean, guys, listen, man, listen. You think that we're out of the woods now? Like, you think that just because we got another 25 bips to the downside and money's getting cheaper and the cost of capital is decreasing, like, you think this thing is over? Man, this thing has barely even started. Because in about, 24 minutes, you've got Jerome Powell is going to take he's going to take the podium. And it all comes down to, what color is his tie? Frankie Walsh is still in the house. Wow, that's amazing. My man's working overtime today, and so I appreciate you, Frankie, so much. I didn't know you were part of the afternoon crowd. I thought you were kind of just a morning guy, but, man, I appreciate you very much. What color is Powell's tie going to be, right? Is it going to be – he never makes it easy. He never goes green or red, obviously. But if he goes purple, right, if there's a purple tie, we know that means buy. Right, this is basic. Like, they teach you this in like a principles of finance course, at university, your junior year, your first finance course. You get in there, you learn about fundamental analysis, you learn about discounted cash flows, and then you learn about Jerome Powell's tie color choice. This is basic stuff. So if he walks out with a purple tie, it's time to buy. Right. So let me know in the chat, because again, I don't have it. I'm not going to be able to watch it. You guys have to let me know, because that's going to start in 24 minutes. We have to go through our positions here on the show and obviously, pay attention to what's happening in the market. Still not really doing very much. Wow, I'm surprised there's not much of a reaction. I guess everybody's waiting to see what color the tie is. Like, obviously, they know how to do this. It's almost like they've done this before. And so, crazy stuff, though, man. Crazy stuff. I can't believe it. We made it through the most important election in American history. The most important election in American history. Here's the best part. We're all winners today. Every single one of us is a winner today, because it's very simple, right? If your person won, then you celebrate. If your person didn't win, then you get to say it's all rigged. So we're all winners. Everybody walks away with the consolation prize. And that's how we do things in America in 2024. So anyway, let's go ahead and let's go through the positions that we have on. And obviously, we'll keep an eye on the markets. And then I'm going to get to y'all, man. I'm going to get to you all here in the YouTube chat. I appreciate you guys. You guys are my absolute favorite. We're going to do it, man. We're going to see all-time highs. You're going to see ES 6,000 for the first time ever. I don't think it got to 6,000 earlier, but I have a feeling we're going to see it in the next little bit. You're going to get to see, NASDAQ all-time highs. I think it's still 30 or 40 handles, 30 or 40 points off of all-time highs. You got the boomers, 44,000. I know we're not allowed to call it boomers, but I mean, it still feels so right. I know that now that you've got NVIDIA in there, you really can't call it boomers, but it feels too right. I just can't get away from it. And old habits die hard. And if you've seen this show before, you know that old habits for me die very, very hard from the standpoint that they don't die at all. And so if you look at the indexes, let's take a look at this. ES, I don't think, did it get to 6,000 today? I don't think it did. Oh, it did. Wow, 6,002. Man, so the algorithm took it up there for all my ICT fans out there. The algorithm took it up there, ran all the stops, and then that's going to be it. Like, it's over. Like, boom, we're headed right back lower to, I don't know, 5,800, 5,600, maybe a little 4,950, just to scare the children a little bit. But, yeah, ES got to 6,000 just earlier today. That's going to be an all-time high, of course. And then you've got the NASDAQ. I don't think that, let's see, the high, yeah. So the high back in July was 21,237. It doesn't feel right to me. I feel like that's a roll number, but I guess that's what it was. I guess once you kind of account for, the rolls and such, because I felt like it was below 21,000. And like today, and this is a product of the roll in the contracts and, adjusting the different prices and, making for a continuous stream from start to finish, which makes sense. You kind of have to do that. But I feel like, the NASDAQ didn't really earn 21,000. Like, speaking of, participation trophies and consolation prizes, I don't really feel like the NASDAQ earned 21,000, but it certainly did today and the last couple of days. And so, oh, by the way, I was dead wrong on election night. If you remember, if you saw the show on Tuesday, I said, man, I don't know who's going to win tonight, but I feel very, very confident that, that there's going to be a lot of back and forth. There's going to be a lot of whippy action, and there's going to be opportunities to scalp, to do whatever. Man, there were no opportunities. I mean, if you were bullish, it was amazing. If you were bearish, you got steamrolled. There was no off-ramps if you were short at all. None. Not a single one. And so it was a really, really crazy night, in my opinion, coming off of, what we saw in 2020, where there was a lot more back and forth. And there was a lot more opportunity on both sides of the market. But anyway, you've got the NASDAQ. Yeah, we're about 30 points away from all-time highs. So, and then you've got the boomers, man. Look at these boomers, man. They won't stop. They will not stop. They just keep going. They just keep doing it. Like, here's your all-time highs. Boomers up 1,500 points, right, on the election night and then into the following day. And then today you've got just this tiny little candle. It's not really doing too much, but the high was 44,000. So now you're going to be able to tell your children, your grandchildren, your grandchildren's children where you were when the E-mid S&Ps were 6,000, when the NASDAQ was 21,200, and when the Dow Jones Industrial Index average was 44,000. You can say, I was watching from theory to practice, and we all got to enjoy the moment together. And then, of course, the Russell 2000 at 2,400, that's going to be an all-time high as well. It looks like it got up to about 24.25 or so, 24.24. Maybe make it just a bit more feng shui. But all right, there's your overall market commentary. That's not going to help you too much. But, man, we've got to get through. Are we going to get through all these positions? There's no way, man. I see you guys in the house. I see John Williams in the house. I see Peters in the house. I see you, Ron IW in the house. I appreciate you guys. Howie Egg, Rob Banks, Anka's in the house. RC's in the house, man. Look at you guys. I see Dave S. kicking us off here. And so I'm going to get to as many of you guys as I can, but we have a lot to do, obviously, because, we were off yesterday with today's assignment. We had the show on Tuesday, but a lot's happened. A lot's changed since Tuesday, obviously, in terms of the election results and now FOMC, you got your 25 bips. And so the question, I guess, now that if I had to guess, if you could allow me to pontificate for, I'll have you out the door no more than 17 minutes. And by no more, I mean no less than 17 minutes. I think the reason for the muted action thus far, I don't think it's going to stay this way. I don't know where it's going to go, higher, lower, whatever, but I think it is going to pick up here in the next, 20 minutes or 30 minutes, because I think the 25 bips, again, if you went back to like Fed funds futures, if you even went to, for my poly market bros and bro sets out there that, like to watch those markets, the betting markets where you can bet on crazy things, you can probably bet on Powell's tie color. Somebody check, please, on Polymarket right now. Can you bet on Powell's tie color? I'm going to say there's a good chance you can, right? And I think, if I'm not mistaken, like the purple is that's in the roster. I think blue is oftentimes in the roster. I don't think I've ever seen black's going to be in the roster. I don't think I've ever seen him with red, and I don't think I've ever seen him with green. And so, again, he's going to make us work for it. He's not going to make it so obvious as to what his own personal reaction function to the markets is going to be, since he essentially determines what it's going to be. But let me know if you can bet on Powell's tie color. I'm very, very curious if you can. But I think that everybody, the 25 bips was a given. The 25 bips was preordained. I think everybody's curious, what kind of tone is he going to have? Especially given the new president-elect and President Trump coming back, and it's like, what's Powell's future going to be, which I just caught like 30 minutes ago. Powell's coming back. So Trump was, I thought, pretty clear that he's like, I'm getting rid of Powell. I don't like Powell. I don't like whatever. I'm going to get rid of him and get my guy or my gal in there. But now he's like, Powell's coming back. So it's like, man, this is kind of weird. It's kind of hard to figure out what's actually going to happen. But I think people are waiting for, is he hawkish or dovish? That's what people want to know. People want to know in the prepared statement and then also the Q&A, hawkish tone or dovish tone. Because again, bonds, look at our TLT position. Look at this thing, man. This thing is just, it's cruising up 80 cents. Look at this thing. And we were worried about this trade. Why? TLT up 80 cents, guys. Yeah, sure, it's down like $9.50 since we put it on, but up 80 cents today. Look at bonds, man. Look at bonds, just doing it, doing a little bit of work. So you've got bonds here. Ever since the 50 bips bazooka cut back in, I guess that would be September. It's basically the top, right? So Powell painted the top of the bond market with his 50 bips cut, which is so interesting because, when you hear lower interest rates and you hear, Fed funds cuts, you think higher bond prices. You think lower interest rates, higher bond prices. That's your inverse relationship. That is essentially the, central underpinning of every mathematical equation that exists in the fixed income world. Well, as we've learned on this very show, when you go from theory to practice, things don't exactly work the way they're supposed to work in academia and ivory tower, some textbook somewhere, what have you. And so it basically just fell right out of bed. And so this, of course, is lifting interest rates. This, of course, is lifting interest rates that there's a lot of things in our economy that are tied to, long-term, bond interest rates, whether it be a 10-year, 20-year, 30-year, whatever. And so because those rates are lifting based on market action, it's like, man, if Powell was trying to, kind of be dovish and Powell was, trying to, keep a lid on inflation and maybe slow down some growth or whatever, then he's going to have a difficult time, or spur on some growth or maybe slow down some growth. I'm actually not sure. But given the fact that the bond market has kind of spoken for him, I think everybody's waiting to see what is his response going to be. What do his words, sound like? What kind of pauses, what kind of nonverbals can we pick up on? And that's what I need you guys for, because I'm with you all here on the stream and I won't be able to watch it live. And so, all right, so let's go ahead and let's do at least a few positions. Man, are we going to get through? We got like 10 positions on. There's no way we're going to get through all these guys. I want to start with, I normally go top down. I'll try to do like half. Let's try to do like half, and then I want to get to y'all and y'all's questions here in just a couple of minutes. But I want to do, so first and foremost, let's take a look at our Celsius position. By the way, if you check the tapes, I was correct. I was 100% correct. You wouldn't know it by looking at the price action today, but Celsius got hammered on, Wednesday morning. Celsius got crushed yesterday. It was down like, I don't know, like 10% or 8% or something. And so, we should have taken the trade off yesterday, of course, but I like to wait for the show if I possibly can. And so CE, because I don't know what's going to happen, it could get better for us. And, there's no telling that it's going to reverse. But if you look at Celsius, you can see, right here, boom, look at that gap down. There you go. There's your earnings call, right? So on November 5th, it closes at 31.73. On November 6th, which would be yesterday, it opens at 29.80 and it actually hit a low of 27.78. And our short strike on our butterfly, I believe, is like 27. So we probably gave up a couple of dollars, maybe $1.50 in profits by not closing the trade yesterday. But again, it's like, it could have worked even better. And I really, really, really try to do all of my trading on the show. And, my goal on this show is to provide you guys with, a unique experience in the markets that maybe you can't find anywhere else, where, almost all of my trades are live on the show. Almost everything that I do, entries for sure, all live on the show. The exits from time to time, when something like that happens, then I will from time to time close it out early because it makes sense. But I missed it yesterday on Celsius, and we're gonna have to take it off today for a scratch. I don't really want to hold this any longer, just because it's like you got the move. I don't see anything huge happening tomorrow. Now that may all change, of course, with Powell, in the next 15 minutes. But I'm gonna go ahead and just take this off for a scratch. We didn't get anything on the Celsius play, one way or another. And so let's close out of Celsius. But hopefully, if you guys tailed that trade, you were able to close out yesterday for a nice little profit. So for my official records, of course, that will be a W in the record books. So let's go ahead and let's see, Celsius, $1.43 credit. Really? No, there's no way that's right. Hold on. It's like 90 cents, right? Yeah, the mark is 97 cents. That's what I see right here. You guys see the same thing? 97 cents, 96 cents. But now I go in here. Let's see here. Hold on a second. Let's try to close this. Maybe. Oh, oh, wow. Look at this. Interesting. So the positions tab here is, okay, now it's, these mark prices are not interesting. Very, very interesting. So these mark prices might not be telling the truth. Man, these mark prices got a little politician in them, because I'm looking at this Celsius price of 30.20 and I'm looking at my strike of 31. I thought Celsius was at like 31 something, but it's not. It's at 30.20. So we're actually in the money on that long strike. So we've got to completely ignore and bypass the political messaging that is in these mark prices. And we need to go ahead and just go to the actual closing price, which looks like it's about $1. Look at $1.50. Wow. So I don't even need to kind of, rig up the votes, if you will, for my mental records on classifying this as a W, because it is a W. We're going to go ahead and get about a 50 to 60% or 50 to 60% winner on the trade. And man, that's a good start to the day. Yeah, one or more contracts have no bid prices. That's fine. I got no problem with that. We may have to give up a few shekels to get filled. I mean, it's Celsius too, so sometimes you just got to do that. But wow, we're gonna have to go down to $1.30. Man, they just took like our whole profit. No takers at $1.30. Wow, they're gonna run us around here. Look at this. $1.18. Man, what's going on with Celsius? I don't know. Maybe this isn't a profit. Hold on a second. Let's see it. Yeah, this is nuts. They're gonna run us all around the board. It's kind of like playing chess for all my chess fans out there. If you've recently seen the show, I just learned how to play chess a couple weeks ago. I'm not very good. I'm actually awful. But one thing I've learned that's kind of fun is, so like when you get way down in the game, like, let's say you hang your queen or you hang a rook or something, and you're like way down. It's like, all right, like I'm not skilled enough. I'm not skilled enough to win when it's even. I'm absolutely not going to win when I'm way behind, right? But here's what's really fun, and it's actually I've been able to kind of muster up a couple of stalemates by doing this, which is kind of fun. I just start running my king all over the board because nobody expects it. Like, nobody expects it. It's kind of like, if Powell cut like 50 bips today, nobody would expect the market to tank. Like that type of thing, right? Man, you start running your king all around the board, it's super fun. Because the king is actually like super powerful. Like, you don't think he is because you're always trying to guard him and protect him or whatever. Man, you just start like chasing down rooks and chasing down bishops and chasing down whoever with your king, and you can start cleaning up all kinds of material on the chessboard. It's super fun. And so right now I kind of feel like we're having to run our king around the board because this credit is it's escaping us. But man, let's see. Maybe we're not going to get a win. I'm determined to close this trade though. I don't know what to believe anymore. Wow, I can't even get $1.07. Yeah, I don't know. Maybe this maybe that 30 print on yeah, this is weird. I don't know. Let's see. Are we going to get out for a scratch? Wow, we got filled for $1.01. Look at that. So we made like 3 cents on the Celsius trade. So I don't know what was going on there with the mark price and whatever, but anyway, Celsius overdone with. All right, there you go. Let's go in. Wow, we're halfway through the show already. That's unbelievable. All right, so I'll talk about MES, MNQ, AMD. Look at AMD, by the way, real quick. Man, look at this. Look at this. We sat tight. We did nothing, right? We were made fun of. We were laughed at. Like, we were jeered, but we did nothing. We followed the plan. We did nothing. The plan that we make up, as each day goes by. And we are now up a couple dollars on the trade. That's a nice little trade that we're looking at right now. I'm not going to take it off yet because we're not at 50%. And, you got to be a little careful. It's a slippery slope. Your 50%ers become 45%ers, become 43%ers. Next thing you know, everything's an 11%er. You're like, why am I not making any money? Right. And so, if you, again, if you take it off early and that's part of your protocol, then do it. Then 100% do it. That's not what I typically do, though. I typically target 50%. And now that AMD is nicely centered between my two strikes, I'm not going to take it off early now. There's no reason to. So we'll come back tomorrow next week, and we'll probably have to deal with, a call being tested. And so but we'll go ahead and deal with that at that time. But AMD, I don't want to do that. Let's talk about our other earnings trade. This one didn't work as well. We've got Qualcomm at 172. And so, yeah, this thing just took off from earnings. If I go to the chart of Qualcomm, you can see, oh, wow, it was actually I was like, it wasn't in the 180s. Wow, this was way, way, way worse than it is today. So there's your earnings gap right there, right? Qualcomm came out and said, hey, we're still here. We're slanging the same, junk we've been slanging for the last, 45 years or whatever. And it was in the 180s at one point, I think, right? Yeah, I mean, the high of today was 182. And so it sold off hard in these last couple of seconds. And so let me see if I go into the NASDAQ. Yeah, okay, let's go back to Qualcomm. And so, yeah, Qualcomm's down big. That's great for our crab trade because it has salvaged this 160 put just a little bit. Like, at 180, we're not getting away with a 337 mark price on the 160 put. That's part of this crab trade. That's part of this crab package. And so, what are we going to do? Well, it doesn't really make any sense. Let me delete that really quick. Let's grab a different color just to mix it up a little bit. You can see the 136 put and the 148 put. This is essentially where all of our risk is. All of our risk is concentrated in the two shorts at 148. There's no reason to keep these on. Like, there's just nothing there. There's no juice left in the shorts. I could keep the 136 put on, I guess, hoping for Armageddon, which again, it's coming in 4.5 minutes when Powell takes the podium there. But let's close these guys down and then let's figure out what to do with our long put. I have an idea, right? I have a thought, and then we'll throw it out there and we'll see what you guys think. And by see what you guys think, I mean, you will have no say in the matter. You will just have to see what I do. And then I can blame you guys if it doesn't work. So let's go ahead and let's highlight both of those. Let's close out of – this is a little ratio spread that we'll be closing. 2-cent debit, that's fine. See if we can get out. I know there's no bid prices, but I really just kind of want to clean it up. And let's try 4 cents. All right, filled at 4 cents. All right, perfect. So we now have on just a long put, right? I'm kind of getting the hang of things, unlike my chess game. But I'm getting the hang of things when it comes to these crab strategies where it's like, okay, the market moves against you. It seems like a pretty standard play is, you take off the long option, you take off the short options. They've essentially served their purpose. There's just no reason to keep those guys on any longer. And so now the question becomes, well, what are you going to do with the long put? And the way I see it right now, and again, I'm open to suggestions. I'm open to revising all this as we move forward and I learn more and, we gain some more experience. And you guys help me out with different things I'm not seeing right now on the board. And so it seems like, number one, you leave the long put and just run long naked premium, which is not usually something we do often, but from time to time you can do it. I mean, I'm doing it with the TLT trade and it's not working, mind you, but we're doing it at least. You could do that, of course. Number two, you could create a diagonal spread, which is what we did with Google, right? That's actually happening, right here. You can see it's probably time to take that guy off. But just from a time standpoint, I'm just going to leave it. I'm going to leave it right now and not do anything because I do want to get to y'all's questions and I want to know what color Powell's tie is. And I also want to know if on Polymarket you can wager on that. That would be very interesting to me. But anyway, you can go nothing, leave the long option on. I think that's an okay move at times. Number two, you go diagonal spread. I think that's maybe a better move than just leaving the long put on. But it depends on how far the move was. Like if the move went really, really far, then it makes more sense to maybe just leave the long put because there's no premium in the shorts that you would sell against the long. So there's no reason to cap your upside on that long put. That makes sense. But there's a third option, I think, at least. You could also create a calendar spread. So rather than trying to, like with Qualcomm, right, you've got the stock at 172, and I was really thinking about this more with Qualcomm at 180 something, but now at 172, I'm like, all right, that's pretty interesting. Let's do the calendar spread anyway because we'll get a decent price on kind of, overlapping these strikes at the 160 strike. We're going to have a long put and a short put at 160. When you create a diagonal, you're sort of backing into a calendar spread there too because you have the time differential between the front month and the back month, which is essentially that's the essence of the crab. I mean, it's the first letter in the name. Like C stands for calendarized. And so it's like, all right, you already have this calendarized component. Let's maintain that. But here, instead of, kind of weaving in this width between the long option, the long 160 put like Qualcomm, and then, weaving in like selling a 150 put or a 155 put like we would with a diagonal, let's just stack the strikes on top of each other so that we really won't be as directional. I mean, we still need Qualcomm down around the strikes, but there won't be any, additional benefit to be gained if Qualcomm keeps going lower. But in exchange for that, we're going to be able to collect more extrinsic value to work our basis down even lower. And I was thinking about this primarily because, the Qualcomm trade, It was a little bit bigger than some of our other trades. It's still, $6 debit on entry. It's still only 2% of the account. So definitely within the position sizing parameters. Most defined risk, I'm typically between 1% to 2%. I think most traders should probably be between 1% and 3%. The exceptions to that rule would be if you're on the lower end of the capital spectrum. So let's say, 10 or 12,000 or less, then you may find that you have to, expand the size of your defined risk strategies. So now they're up to maybe 4% or 5% or 6%. If you have a lot of capital, like multiple six figures getting into seven figures, now there's no reason for you to even be at 1% really. You can probably be at 0.5% or 1/4%. So, but it depends. If you're kind of in the middle, like the rest of us peasants and plebes, then 1% to 3% seems like a pretty good marker. So we're at about 2% on Qualcomm, but still that's on the upper end for me, generally speaking. So I was thinking, man, let's go into the trade page. Let's go ahead and pick up, let's try to get about half the duration between where we are now and the long option. So the long option, and that was a super clunky way to say that, but it felt right in the moment. We're at 43 days on the long option. So I'm going to choose this November 29th weekly cycle. Hopefully there's decent liquidity in Qualcomm, but we'll have to wait and see if that is the case. And so let's see. Let's go ahead and if I go in here and I open up November 29th, if I sell, so I've got the 160 put, right? So if I go with a calendar spread here, this is what I'm selling. I'm selling this 160 put. I'm going to get $1.60 for it. That's not insignificant, guys. I mean, that's something. Like that's 100% something. So if I sell that 160 strike, I get $1.60. You can see for yourself, if I try to create a calendar spread at the 150 or 155, the premium drops off significantly. So I think let's sell the 160 strike. And then I'm going to pop into the chat because it's almost 2:30, like almost on the nose. And I want to know the second he walks out, I want to know what color his tie is. I need you guys in the chat. Like I'm at the bottom of the chat right now. I'll go back up to the top in a second, but I'm at the bottom of the chat and I want to know. Brian Watson says, you could say Powell's job is more secure than Dr. Jim's. That's 100% true, especially given the fact that he's going to make it into this new administration. Like that's amazing. And so let's go. Let's sell this 160 real quick. And then I want to see the market reaction, if there is a market reaction, to Powell's tie. All right, 165. There we go. We're 15 seconds away from Powell's tie, from the walkout. I need the walkout, guys. Somebody tell me in the chat what color his tie is. We're like 7 seconds away. And you've got market reaction. EMI S&P still up 35. NASDAQ up 300. Boomers down 20. Russell down 9. And then boom, here you go. Powell's tie. What color is it? If Powell's tie, if it's a purple tie, we know that means buy. Where are you guys at in the chat? There's 500 of you watching the show. What color is my man's tie? I know he's not late. He's extremely prompt, and he's extremely punctual. So what color was his tie? Oh, somebody else said purple earlier. Did he already come out? No, he came out at 2:30. He always comes out at 2:30. It was already purple? There's no way. Let me get confirmation that he was indeed wearing a purple tie. And then I want to get to y'all's questions. Matt, see you guys in the house. So Finn West in the house. Sunflowers in the house. Purple. It is purple. All right, man. Where's my personal account? Hold on. I got a whole bunch of crap to buy. Hold on a second. No, I'll do that later. It'll be fine. There'll be plenty of purple. Look at you guys. Look at you guys, man. I can't believe it. We know what that means. You really think the EMI S&Ps are staying under 6,000? No chance. No chance. We're 60 minimum by the end of the day. Minimum. And by that, we're probably going to go down and asymptotically approach 5,700 on our way there. But, I appreciate you guys. Look at you guys. Man, we know what the purple tie means. It's never meant anything other than buy. And so there you go. Perfect. And so, all right, let's go into, I appreciate you guys. You guys were Johnny on the spot. I knew I could count on you guys. That's some good stuff. And so, all right, let's go back to the very top. Because you guys expect that. You guys expect me to go top down. I don't want to start doing things differently. I don't want to start saying, hey, I'm going to get rid of Powell, then I'm keeping Powell. I don't want to do that. It's important to me that you guys can trust me and you can trust the way that I do things. And if I'm going to change things, I'm going to telegraph that for – look at the market. Look at the market. Catch it a bit. Look at this. Guys, this is simple stuff, man. Forget about pops. Forget about IVRs. Who gives a rip about an IVR? Look at this. EMI S&P is now up 40. NASDAQ up 305. Right, you got the Russell turning green. Guys, this is it. This is all the market was waiting. Dovish, hawkish, who cares? Doesn't matter. Doesn't matter. Purple tie, you get ready to buy. It's very simple. This is it. 100%. All right, so where are you guys at? RC, Dr. Jim, please describe the shelter you created to prepare for the outcome of this FOMC. I'm in it, actually. Actually broadcast from the shelter. There's lots of lead in here. You know, there's lots of things that are quite toxic. I think a good amount of mold from from Milton. And so I'm actually in it. And so I'm ready to go. Like, I'm set. I got my hot dogs, I got my batteries, got my water, obviously. And boom, we're ready to go. And RC goes on to say, in case there was an apocalyptic explosion of some kind. Yes. Well, I mean, the apocalyptic explosion is going to be to the upside because of the purple tie. Like, again, it's apocalyptic, but that doesn't necessarily mean it's apocalyptic to the downside. Because, yes, this thing is getting ready to rip. Even S&P's up 40. Look at this. It's going right back to 6,000 right now. It's going to happen. I mean, we're seconds away. Seconds away. Look at that. Hold on. I want to look at this. You guys see that circle right there? Boom, there it is. I'll give it 10 seconds. It's not going to take more than 10 seconds. Look at this. You see these two numbers? Look at this. You see this number right here? Look at that. 6,000. Look at that. Look at that. Guys, this is simple. I don't know. What more can I do for you? What more can I do for you? I'm cutting through all the riffraff. I'm giving you what you need. You don't need discounted cash flow. You don't need pops. You don't need IVRs. You don't expect them. No. You need to trade every 5 weeks when Powell walks out with a purple tie. That's it. And you buy. You buy low, you buy high, you buy everywhere. That's all you do, right? If he comes out with something else, and you take the 5 week off, right? You're done that FOMC. You can't trade that day, right? And so, but again, this is in his roster, man. You're going to get it. What are there, 10 meetings a year? You're getting it 6 times. You're getting it 6 times for sure. And so, boom, this is it, man. I don't know what more I can do. You got, boomers are green now. Man, look at this. Anyway, I'll try to think something up, but I wouldn't expect much more from me because I've given you all that can be given. So Mikos, Dr. Jim, thank goodness you're here, man. I appreciate the fact that you're here. This was the most important FOMC of my lifetime, and we're living it right now. I still can't believe this is real life. And now I don't know what to do with myself now that it's over. It's not quite over yet because now it's hawkish and dovish, right? Again, we know that doesn't matter. We know that, the market direction, the reaction function, it has indeed been set. And nothing could possibly dislodge it from its current course given the purple tie. However, let's just listen. We're already here. 87% of success is just showing up. The other 13% is staying till the end. We're already here. Let's just stay till the end. Let's just go ahead and let's see what he has to say. And we'll listen for some hawkishness and some dovishness. Maybe he'll have something to say about President-elect Trump, given the fact that I guess he's coming back, which might be a surprise to even him. And so there you go. RC says we're about to take off. You were 100% correct. Nicely done, my friend. Howie Egg says stock market at all-time highs. And they are cutting rates to push more money into stocks. This is crazy. I agree, man. I agree. I mean, all kidding aside, I don't think the inflation fight is over yet. I really don't. I think the bond market is maybe communicating that, in terms of lifting that long end. I don't think the inflation fight is over. I know that that Powell and the Board of Governors have kind of started, running some victory laps on that inflation fight, but I don't know that it's over yet. I'm not convinced that it's done. And so if it does peak back up, if it does kind of rear its ugly head, that's going to be interesting. I can't imagine that's going to be a smooth ride. I imagine there's going to be some bumps along the way if that were to happen. But yes, it is crazy that, we are in a cutting cycle at all-time highs. I'd be very curious to see when the last time that has happened was. I don't know that it's ever happened before. Maybe it has. I'm not. I know Chris Vecchio and Ilya and those guys are much better at kind of the macro calendar, not only now but in the past. I can't and Chris has kind of an encyclopedic ability to recall certain things. I didn't even know what to begin with, and so I certainly can't recall it because it was never even there. But in terms of, I'm not sure that we've ever cut at all-time highs like this. Maybe we have. Maybe the tech bubble. Maybe at the tech bubble that happened, where Greenspan came out with a surprise 50 bips cut, similar to Powell actually, and that ended pretty well. I think 02, 03, those were some great years in the market, and so there you go. Peter says, John Williams says, what about a black tie? There you go, for formal occasions, I'm sure, like a Grateful Dead concert, for example, for Powell. Peter says it's not his tie color, it's whether or not his shoes are tied. Jim, you might be right, but that's a little bit more advanced. Us simpletons, we try to keep it very simple. We just need to go, what's the color of the tie? Purple, I buy. It's it. Done. Don't need to worry about anything else. a dollar cost average on the way down, a dollar cost average on the way up. I just keep averaging it. I just keep getting my money to work for me. Because it's basically a slam dunk. Let's see, Rob Banks in the house. I see Ron IW says, question, could you tell us what your P&L 6 monthly performance or something that can show us the system works over time? It's a great question. I mean, I can show you, I'll tell you guys where I'm at right now. I mean, you can see on the year, we're down on the year. So I'm down on the year when you've got one of the strongest markets of all time. So, is that an indication that it works? Is that an indication that it doesn't work? I mean, that's for you to decide. You can certainly say that it doesn't work. But again, and I've said this many, many times on the show, and, you may like this, you may not like this. I had to make some concessions. As I set up the show and as I decided how I wanted to do things, I had to make some decisions. And one of those decisions was I wanted this show to be primarily instructional, and I wanted to give you guys a unique experience where, I'm only trading on the show. So by doing that, I'm not adjusting at the optimal times like you guys have the opportunity to do. To do that, I'm not trading like market opens and things and like numbers at 8:30 when there could be lots of opportunity, because I want you guys to see me do all the things that we talk about. I mean, I know like when I'm accessing content and I'm learning on YouTube or whatever, I really, really, really appreciate somebody that doesn't skip over steps, that doesn't leave a bunch of blanks to be filled in later that never get filled in. Like, I really, really appreciate that as a learner myself. And I understand that there have to be some concessions made in every subject area. But I'm like, hey, as I'm learning and kind of getting off the ground, that's what I appreciate. That's what I value. So I'm trying to give you all the same experience. One of the concessions is I would not use this as, an indicator of, whether it works or it doesn't work. I think, the research is going to show you, is going to give you a nice foundation for, is there potential? Is there potential here? And then from there, you've got to take it and make it your own. Like, you've got to take it and blaze your own trail. I mean, I would say, even as an academic researcher, I know that research is always, like research. Tasty, I was in academia, right? So I had to do it. And so I learned kind of how it's done. And this is academic research. This is not like, this is research that literally nobody cares about, that no one's ever going to read. Not like a market measures or an options jive, which is like there's thousands. There's tens of thousands of people that are, they want to know what the actual data is. The thing that I did learn, though, and it gives me a new lens to look at all research through. Research is never, and this includes the Tasty research, it's never going to give you the perfect answer. And I don't care what Tom says. It's not. There are no optimal solutions. There are no optimal solutions. And whoever said that Powell's job was more secure than mine, that certainly is the case right after I just said that. There are no optimal solutions because it's all gimmies and gotchas. It's all gimmies and gotchas. It's all account size. It's risk tolerance. It's, it's skill level. It's experience. There's so many factors. Research is like a blunt instrument that's going to get you going in the right direction. Like with what we're doing, selling premium, doing it with high volatility, staying small, allowing some of the statistical parameters to work for you, law of large numbers, central limit theorem, et cetera, et cetera, et cetera. All those things are going to get you going in the right direction, but can you make it profitable for you over time? Like, can you make it your own, something that's consistently worthwhile for you quarter after quarter, year after year? That requires a scalpel. That requires more fine tuning. That, to be frank with you all, to be Frankie Walsh with you all, like some people are going to have it and some people aren't. And that's just the reality of it. And so that could be encouraging to you. It could be discouraging to you. But I hope it gives you a little something. Market's selling off though. Hopefully that helps there, Ron. But look at this. Russell just dropped like 4 points. I mean, we thought it wasn't going to crash, but I don't know, man. Look at that. We're 59.93. Man, I don't know, man. That could be the end, but we'll have to wait and see. All right, so let's go. Man, I've done like 2 questions. It's unbelievable. JS2 Stat says 6,002. Yes, that was the high on the ES. Howie Egg says 1240. I don't know what that was for. Rob Banks is back. Good day, Dr. J. When selling verticals, would you rather widen the strikes or open several positions? Oh, that's a good question. I usually get a version of this question that's not exactly like the way that you put it. I usually get, do you widen the strikes or do you add contracts? Your question is significantly different, even if it only appears to be subtly different. And here's why, and here's what I mean by that. The choice between widening the strikes and adding contracts, always widen the strikes. like widening the strike's going to be the move. Like widening the strike's going to be better. You got better probability. It just gives you more ways to make money, and it's going to be a more strategic move. But in terms of widening strikes or adding other positions, that's not a slam dunk to me, because by adding other positions, like let's say, for example, you're bullish and you want to add in some other positions to your portfolio to strategically diversify, whether it be in other assets, whether it be to get some bearishness in the portfolio, whatever. That could be a better move than widening the strikes and taking on more risk per trade, because it will give you more ways to make money. It will indeed give you more ways to, to be profitable with what it is that you're trying to accomplish. So that's how I would look at that situation. And I don't think there's a slam dunk. I think both are important, and I think both can work. When it comes to widening versus adding contracts, I would always widen. But when it comes to widening versus other verticals, it kind of depends on the overall risk of the portfolio and kind of how many different things you have working. Like, for example, just to go, this is such a good question. One additional point. If you only have like one or two positions on in your portfolio because of just the way it is, or you're just starting out or whatever, rather than widen, I would always add other positions rather than widen, because you kind of want to have directional exposure in as many different directions as you can, right? You kind of want to have a little something that'll help you if this market goes up. You kind of want to have a little something that will help you if this market goes down, right? And so that way you kind of have, you're able to manage more winners and then give the losers duration, and then use all the adjustment management protocols that we talk about. Man, I got to run. This is crazy. Anka, I see you. Anka says, is the profit target the same for a debit spread as it is for a credit spread, 50%, or is it lower because time is down in your favor? It's a great question, and it's usually the same. And the reason why we can get away with keeping it the same is because most of our verticals are at the money, and so you don't really have too much negative theta for an at the money long vertical, and so you can kind of just allow time to just do what it's going to do. Now, if it moves against you, then time could start working against you. But it's the same thing with a short vertical. If it goes in the money, your theta flips to negative, and then time all of a sudden is working against you. So hopefully that helps. I got to run though, guys. This is nuts. All right, if I didn't get to you today, please come back tomorrow. I see Easily, Jackie W, Crusader Trader in the house, Justin's in the house, Bill Buchanan's in the house. I see Alkios is in the house, man. David Galmore's in the house. Look at you guys. I just appreciate you guys so much. If I didn't get to you, please come back tomorrow. Drop it in early as you see. Oh, market's rallying again. That's it, man. That is it. As you see, I go through the comments sequentially. So drop it in early and I'll probably be able to get to it. But I appreciate you guys. I appreciate you guys so much. If I can ever help you, please shoot me an email. I'm just jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You couldn't get a date.
You get a car. You get a car. You get a Scott Sheridan. You get a Scott Sheridan.
I want the car.
That's right.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven. What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
What's going on, everybody? I tell you what, Powell is talking right now, so I figured we might as well just hang out while he's talking and do our own thing here. Welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade, and I am your host, Jamal Chandler. We got more than enough things to talk about here today, and as a matter of fact, we're going to get right into it. Currently, Powell is speaking. I typically, on a day like this, will sort of look at my Twitter, actually, is what I look at more than anything. I've often said that Twitter is probably my biggest idea generation tool, based on sentiment a lot of times, and maybe it's certain names that I'm not necessarily paying attention to every now and again. So I'm currently looking at TweetDeck, which is something that I use pretty regularly, and looking at the sentiment as Powell is discussing, and then I'm also looking at my platform to see how things are going. You guys' job is to alert me when markets either really fall hard or move up really big, one of the two. As we can see, he started talking at about 1:30 Central Time, 2:30 Eastern, and we've seen markets move around a good bit here, maybe a little bit to the downside. Just like we often see on these type of days, we usually see some volume movement either in one direction or the other, or sometimes it doesn't all happen until the end. We'll see. Obviously, look, I haven't talked to you guys in a couple of days here, and so massive moves as I'm starting to prepare. A Thursday for me is usually pretty busy because I come on and talk with Chris Vecchio on Futures Power Hour. Then I come on here in Engineering the Trade and hang out with you guys. And then I basically spend a lot of the day getting ready for Friday morning when I talk to Tom and Tony on This Week in Stock. So you talk about a full gambit of about a 36-hour period, if not a little bit less, a little bit more. But these last several days have been really crazy and interesting because we're starting to see some of the sector rotation you expect to see after an election. And a lot of what we saw so far was a lot of consumer staples. Actually, a lot of different industries doing well, whether it's consumer staples. It took tech a day, but finally tech started to follow through today. You also saw banks, which was really, really big to the upside the other day. They're having to pull back today, and it's interesting to see how they're going to play out. But I thought it would be an interesting exercise to not only pay attention to the markets as they're moving around here during the conference, and there was a big tick there to the upside here. Powell says he doesn't rule out or in a cut in December and is trying hard to offer any forward guidance on whether officials see rates heading in 2025. That's something that clearly the market just moved on. Are we going to have more rate cuts, right? We're touching highs here. We just touched highs a little bit ago. We jumped up almost near highs. We're not at all-time highs. I think 6,005 was the high of the day. So we're not quite exactly at highs. But let's go through the last couple of days a little bit about some of my trading so I can give you an idea. I think I was pretty vocal about the fact that I didn't really want to use a whole lot of capital coming into this event. And make no mistake, obviously the election was an event. Did I see the markets moving higher like we did? No. I was prepared for anything, whether we moved higher big, whether we moved to the downside big. I wanted capital on the sidelines to be able to allocate in case some moves were kind of crazy. And coming like that Monday night, the last couple of things I did was this was one of them. Obviously, this is why I do brackets on a lot of these calendar spreads when it comes to SPX. $10 wide only. Cost me $600 and change. I think I was able to get this for a $3 and change credit. I got to tell you, it's crazy. Half the time when you do these SPX iron condors, we always talk about 1/3 the width of the strikes, right? So $3, right? If you get more than $3, it's not going to work. I feel. I don't know. Maybe it's just me. Maybe I'm crazy. But I feel that it doesn't work. I'm sorry. I'm going to look at Twitter every now and again just to see what's affecting markets and what's moving here. Powell, even with today's cut, policy is still restrictive. Ooh, so they feel policy is still restrictive here. This is the first, guys. We get a chance. I'm normally not with you guys on a Fed day, so it's fun to kind of be here with you on a Fed day and be here while Powell is laying out some stuff here. $10 wide on this SPX Iron Condor. I did it on this day, actually, thinking this would be the day that would be the big movement, because for the past several weeks, what we saw was there was higher volatility expected on November 7th than there was on November 5th. Well, who knew? Clearly somebody else did. That's why I only did $10. I lost $600. Trust me, I'm fine, given some of the way some of the things have shaken out. But that kind of set the tone early on that obviously market was going to be up big. I also did some for Friday. We'll see how this plays out. I did 2 butterflies. I did one with 5,700 strike in mind, obviously downside. And I did this on Tuesday, I think, during the day. And then I also did to the upside, the 5,900. You know, theoretically, this could still be in play, right? We have no idea how markets are going to react after the Fed meeting is done. And potentially tomorrow, you know, I could anticipate a end of the week somewhat sell-off, but nowhere near to the effect of the rise that we've had so far. But I still believe in this one. This is, again, you got to have some downside stuff in your portfolio when you have as much upside stuff as I do. The other thing I did, so election night is when things got really crazy because, again, I've been long bonds for a while. That's been one of my core positions. I've actually been long. I was long in here in this, let's see. I was long in this December 27 expiration. And I was long, let's see which ones I had. I closed them out the other night. I was long the 10, 110, 114. So I was basically long right around at the money. And if you know, again, I know this was a very different type of trade. It's not a very tasty type of trade. I shouldn't say that. It was not a tasty type of trade because the IVR was fairly high, right? But when we do long call spreads, we do like to straddle the current price, right? So if it's 110, we usually like to straddle the current price to the effect of something like this, right? Where you get like a 60% pop or 50% pop. What I just had on more recently was this, as bonds were tanking, right? And so very much lower pop here, right? And mind you, I was also short upside. I was short, I think, like the 113, 115 upside, just because it was just a way to sort of offset risk. And, you know, bonds had just been tanking here. Out of all of that, I closed that night when we saw bonds doing all of this, big move to the downside. Well, yeah, I mean, I kind of doubled down, right? Like, this is not a penny stock. This is bonds. This is one of the largest, most liquid instruments in the world. And I do feel that we're in a rate cutting cycle. And I feel like at some point or another, bonds should bounce. I also feel that if bonds are going to be, if the Russell 2000 stocks are going to be going up damn near 6%, bonds should be going up too, right? Something's weird there. And so I just decided to move my bet further out. Duration is what gives you the best that gives you the best opportunity when you're looking for a position like this. So I went further out. And then I got long the 108, 113. So straddling that 110 area, which is essentially where we are. And I got long the 108, 113. So I put in an even bigger type of swing on in here. Same thing in ZB, right? Same thing in ZB. And I just feel like this is one of the better trades on the board. That's why I have it in both instruments. Some would argue like that's a little bit too much concentration. But again, I'm fine doing it, especially since I'm long equities here. So I got long the 114, 120. I closed out my long in December, and I also had a short in November 22nd expiration. So hopefully all of that makes sense. So then, let's see. What are we doing, guys? Is market's kind of holding in there based on what Powell is saying. Nothing crazy so far, it would seem. So then I also decided to get back into the dollar trade. I had been out of the dollar trade for a while. You know, if for those who are longtime listeners of the show, when the dollar was somewhere in this range down here, I just thought it was too low and ended up getting long the dollar as it into the sell-off. Froze some. I didn't sell the top, of course. None of us ever really do. I think I sold I had a long. I'm sorry. The dollar was at lows. I'm sorry. So let's go here and look at the dollar. The dollar was at some serious lows for a while there. I think it was in this range. And so I decided to get long some dollar if that was August. And it's weird the way you got to do it because you can't. I don't like trading UUP. I would rather be able to trade DXY. Obviously, DXY is not tradable. So as a result, I decided to get long, and it was in this range in August. I decided to get long a put spread in 6E here in the euro, because obviously those trade opposite. And then I got out somewhere around here, I think. I actually decided to get short the dollar. Well, that didn't work because then the dollar really started rising and I was short. I was long euro into this big fall here as the dollar was beginning to rise. However, election night, I just thought, okay, this is a little bit overdone. And I know there's a lot of discussion about the protectionist idea. That's what's going to come up with the election, post-election, and what President Trump is going to do with, and et cetera, and the dollar's going to rise once again. Maybe that's the case. But I'm a contrarian, and I'd like to take contrarian bets when it seems appropriate. And just a big, huge move like this, it felt like it was decently appropriate. So I ended up selling a put spread because vol was fairly high. It's kind of an in-the-money put spread, so I don't necessarily know how much I'm selling vol here, to be honest with you. This is not necessarily, anybody could say this. This is not necessarily selling vol per se. I mean, it's in the money at this point, right? Like, it'd be selling vol if I'm doing this. I'm selling skew then, right? Here, I'm basically, this is the same risk profile. And this is where you need to know synthetics. This is basically the same risk profile, right? If I do this, if I'm long this put spread, long this call spread or short this put spread, same risk profile. I just decided to sell the put spread instead. And that's my way of essentially getting short the dollar as we've seen this huge rise here, because we saw what happened on election night and even a little bit after. I mean, huge move, right? It closed that day, but the next day, huge move to the upside. That's essentially going up against 4-month highs. So I just figured it was a good time to try and fade. Hopefully it goes my way. We'll see. These are, again, a lot of the different bets that I've made more recently. I have my gold position. I got to tell you, I was a little bit nervous about the way things were shaking out with gold because, well, gold's been so strong more recently. And, there's just too many narratives that even follow suit. I'll be honest with you. What I want to do is just pay attention to price action. That's exactly what we talk about at Tasty a whole lot. That's what really helps. I can't follow a lot of these narratives. I tell you, I just, inflation's coming back in the system, but then the Fed's cutting rates to avoid inflation. Come on, give me a break, dude. I just don't have time for it. So I was worried about gold. I was wondering if I needed to lose the position because, again, just to show you my position. Oh, we're at all-time highs, guys. We're at all-time highs. Your job was to remind me. Where are you at? You didn't say anything. I thought you guys were going to tell me here. My gold position is in December. And if you remember throughout the year, I've had a couple of different gold positions. Call spreads have been, well, I did try shorting gold earlier in the year. I tried shorting gold, I don't even remember. It might have been in April some, I'm sure. I might have tried it in March. I might have tried it in April, and eventually I decided to stop trying. And I had no position on for a while there. I might have done some short put spreads. I'm not really sure if I remember. But then, if you remember, I had a fateful discussion. Well, I shouldn't say faithful. It was full of fate discussion with Chris Vecchio one day. We were talking on Futures Power Hour, and I decided to get long gold. And this wasn't my original position. I was long in a couple of weeks back. Two separate times I got long. What was this? Paul said he would not leave if Trump asked him. He said no. What? Battles. We love to hear it. I eventually, I was long gold put call spreads a couple of different times. I remember vol stays bid to the upside as long as gold is continuing to go up. And that's exactly what I'm preying on in that situation. So I've been long gold for the most part since, in and out at times. I was out until last week, and I got back in. And I got long the 2,900, 3,000. That's right. Fairly upside call spread here in the event that we get a new move in gold to the upside. Now, if you've been paying attention to gold over the last several months, you'll see some dips, right? And maybe those dips may be sustained, but a lot of times eventually it breaks out to a new level. Now, from April to, I guess, March, it did kind of seesaw a bit. But once it started to go, it really started to go. And so you'd see a pullback maybe to a 1-week moving average and then higher. Pullback to 1-week moving average and then higher. And that's what we've seen largely since August. and that's what I'm sort of preying on now. Now it would be, I would say, like, I was a little nervous about the yesterday's pullback, but again, it dropped right to the 50-day SMA, simple moving average, and then bounced. And then again this morning we saw another test and then bounce. And so I'm continuing to stay long gold until something changes with the trend. I do like to look at it from a weekly standpoint, how it's doing, because that has saved me before. A lot of times you'll see gold up for maybe 2 to 3 weeks or a little bit more. This is one of the longest here in April, when it went up about 6 weeks in a row. Looks like, well, 5 weeks in a row. And then there's a 2-week pullback, 2 to 3 week pullback, and then higher. 3-week pullback here, and then a little bit higher pullback, then a little higher. And so that is something to pay attention to, I think. The last time I got out was somewhere in this range, right? And so, again, this was a small kind of doji here that pretend maybe possible little lower prices, which we saw this week. I'm fine staying in. As a matter of fact, I'd like to go further out in expiration, I should say. I'd like to go to this expiration. I'm gonna have to pay for it. I looked at it earlier. If I wanted to roll this position to the 29,300 here, that one's worth 1,200. And I'd have to, let's see, sell this to buy this. I gotta pay $400 right now. I don't know if I want to pay $400, but I am gonna roll this out. I'll figure out the right time to do it, but I do want to do that. But again, long call spreads is the way that I'm going right now. Thankfully, gold is back up again today. Silver, same deal, actually. SLV. The way I wanted to play it is the easiest way I could do it is through SLV. And so I'm long calls in SLV. And I know you think like, oh my God, that's outrageous. But, I think about it from the standpoint of premium. I mean, this is about $645 worth of premium that I'm paying for January. I'm willing to deal with that for the event that silver moves higher. Now, it's been 3 weeks down, so silver could be due here. I mean, we haven't seen too many 3 weeks down without eventually a bounce back, right? So I'm thinking silver could be due next week, but we'll see what kind of narratives eventually come out and change it. I don't trade off of the narratives. I'm aware of them at times. I'm not trading off of the narrative. I'm just curious as to what's going to wreck my silver trade, I guess, if you will. You know what I mean? So let's see what else I got. I got so many different things. For those who followed me or follow the follow trader, I thought this move was crazy yesterday. I didn't think it was not warranted. I just thought it was incredible. We saw the big banks move, but a lot of the banks are moving on the fact that they expect some, deregulation here and there and making business matters easier for them. And so I decided that I wanted to get long a put spread here, and I did. I'm long one still. The 600 set 575. I had a couple of cracks at it because again, this swing was moving real time, and I was long initially, maybe the 590, 570, but I got kind of cleaned out on that one. I paid like $900 for it, ended up closing it for like maybe $100 loss and rolled to this 600, 575. If I can get 50% gain on that, I'll take it. I got 50% gain on the JP Morgan put spread that I had on earlier. I had, thanks. Adam's telling me a little bump for ZB and GC. That's what we like to hear, baby, especially given the positions we got. I had what did I have? Well, initially I had one position, but eventually I parlayed it into the 250, 220 put spread. Just closed that a little while ago for 50% gain. That's a nice gainer there. We'll take it. I had the 250, 225 put spread. Yep, I closed this for, is this what I had? I actually closed it for, what did I close it for, 1280? Yeah, I closed it for 1280. Damn it, I could have waited a little longer. But you don't want to get greedy. 50% gain is a 50% gain. Adam says a little bump for ZB and ZN. What did Powell say? Anything crazy? Well, ZB is a little moving up to the upside. We like it. Gold also moving to the upside. We like that as well. Let's see. So now I'm still long bonds. I'm still long gold. I am short the dollar here. I still have on An MNQ contract, as you could, well, I'll show you here, /MNQ. I've been long that since 2018. And I have Qs, short call spreads. So I'm short call spreads in December. Yeah, these are fairly in the money at this point, with Qs doing what they're doing. Of course they are. Short the 500, 510, and short the 505, 515. And yeah, believe it or not, overall on the whole complex, long the MNQ and short these call spreads, I'm still making money, which is nice. What am I going to do with this? For now, nothing. Honestly, I'm just going to hold it because if we do have a pullback in the market, maybe, I got about 40-something days here. Will I eventually roll this? I'll probably eventually roll this if nothing happens. That's my point. I'm staying long MNQ, I guess, until this whole thing changes, and I'll eventually either roll this position to January, and we'll keep it going. Eventually, maybe markets pull back. If not, I don't anticipate. The other thing, I'm either going to roll this to January and allow the MNQ to continue to keep going, or I'll just close the whole position altogether, right? Like that's the ultimate win overall. There's also a possibility I get assigned on this. I think that's a ways off, but I guess at 21 days I'll roll this, or it could keep going, right? Like if this thing keeps going over the next couple of weeks, well, next thing you know, I have a situation that is, let's just say this 450 strike. It's fairly in the money, but I don't think even then, the only thing that changes it is if there's I can't remember if there's a dividend in QQQ. That would cause this thing to, dividend history in QQQ. There is a QQQ. There's an annual dividend. Ex-dividend was 923. The next dividend, I think, would be somewhere late December. Honestly, I would be out of it before we get another chance at a dividend. I think it's quarterly dividends. So it would be late December as the next dividend. So we'll be out of it before that even happens. But that's another thing that I'm keeping an eye on. And I got long MNQ, short these two call spreads, right? Same deal in SPY. I'm long MES, short some call spreads. So I got the same situation there. And then I'm long the Dow, which was a little bit down earlier today. Looks like it turned to the upside. Short call spreads here. So I got the same position on in a lot of the different equities. And then I did sell some M2Ks. I told you guys I got a lot of position on. I sold M2Ks for just a little bit of a hedge because I got a lot of long deltas here, I feel. So I just sold this as a little bit of hedge. It's one of the ones that have outperformed quite a bit. I sold at 2,400. I needed some short delta somewhere. I will see how it plays out. Another thing, Amazon. This is one of the reasons why I do like doing some of the calendar call spreads, and I held this for a specific reason. Amazon, I'll just back up. I had a calendar call spread in here. I was long the 4 of these 200s, and I was short 200 in the previous expiration. So coming into on Tuesday, was it Tuesday? Wednesday, excuse me. I rolled out of this and rolled it to the upside to this expiration. Amazon took off, obviously, the last couple of days. Excuse me. Last 2 days. And sorry, not weekly. Let's go back to the daily here. And big move in Amazon here. And so I was able to ride these calls, and then I eventually sold 2 of the 200 strike, right? So I was able to sell 2 and have it such that no matter what happens in Amazon, I was going to make money, right? And then eventually, again, as the move went higher and higher, today I sold another 2. Now I'm short that call spread, but I eventually have, like, my position is closed. It's flattened out, right? There's nothing that's going to happen in there. Like, I have no position. So, I mean, I have a position, but nothing happens. If it goes higher, I can't lose any more money. If it goes lower, sure, I make money, but I don't anticipate it going that much lower. It is what it is. So if it did drop to 195 by, the next week, I think I have this on for another week, I believe. I have this on for another week. If it drops below 200, that's awesome. But I don't anticipate it. And again, I can just leave the position on it and I don't have to worry about it at all. TJY is asking about Expedia. has earnings tonight. There's a bunch of different names that have earnings tonight. As a matter of fact, you get me to some of the things that I've been paying attention to. I don't have an Expedia position. I don't really. I don't know what I think about this, or I would play it. I mean, this is one of those that I would do a calendar. You definitely look at a double calendar in here. The question is, what direction do you go? I've largely gone to the upside in my calendars, right? What do we got here? About $16 expected move. What I often do is I look at the expected move, and then I look at the next big strike above it. So 16 gets you to, right, to 88. You know, I'd be looking at the 95, because you never know where it's going to hit. 95, or 90 in this case. That's 50 cents. I like that. I'll try that. 50 cents. See if I can get some of those off. You can do the 90s. And then you can also do the 95s, right? Because you just never know. Sometimes these things overshoot. Like I did Reddit, and Reddit really overshot what I expected. The problem with this thing is it's a little wide, so it's hard to get in and out of these. There's no world in which the 90 call spread should be the same as the 95. So I'm going to back off of that. It should not be the same. I don't know why that makes sense. These two, that tells you it's a little bit illiquid. The fact that the 90 calendar spread is the same as the 95. 95 should be much cheaper, and you should be aware of that, right? These are things you should be aware about options. You should know that 95 is much cheaper. I will tell you before we go, I did earnings. Where's my thing here? I did, you probably saw this on the Follow Trader page, but I did some Affirm. I feel like this is one name that could potentially, have a big jump higher. So I did the 60, the 65, and the 70 calendar spreads. I also did some, what else did I do? Oh, Upstart is another one. Again, we'll see how it plays out. I did some calendar spreads in there. I did the 65 and the 70. And then I did, definitely a DTT, don't tell Tom trade. I did some Pinterest calls. That's right. Some Pinterest calls, outright calls. This is sort of like ordering off the surprise or unknown menu at In-N-Out Burger. Nobody knows about this trade, right? So these are potential trades that, if we get a squeeze, cool. I'm using a small finite amount of premium, anywhere from $200 to $400. And, that's how I like to play earnings. Folks, we're closing out the show here at all-time highs. Market continues to go higher. We'll see what the rest of the week holds. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. I'll see you.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Hello, everybody. Well, we're done with the big events of the week. Got the election out of the way, got the results out of the way. We just got Powell out of the way. And I usually don't offer compliments to Powell, but I raised my chai to him because he was lobbed a bunch of political questions, and he handled them with grace and deftness. Because people were asking basically the same question in all kinds of different ways. Like, well, what if the president-elect tries, if he says that he wants you to resign, will you? It's no. You know, and do you think he can legally fire you? No. So I think it's refreshing to see a person in that position answer questions directly with no prevarication, no genuflection, just like no. You know, that's it. So that's pretty cool. In any case, I, as usual, have a lot of charts for you. We've got another record high on our hands, ES record high, NQ record high, all across the board. And I think silver is finally ready to roll. So let's jump in and check out the charts. We begin with the spider. As I said, record high. This gap didn't mean a thing. And we're just zipping higher day after day. The seasonality's with it. The political environment's with it. And the Fed, as expected, sliced rates another 25 basis points. So that's just cruising higher, almost a full percentage point. IWM is up a little bit, nothing like yesterday's explosive move, as you can see here. It's just kind of hanging out at record high territory. And, you know, it would be this marks the former lifetime high. Let's make this a little more useful and drag him down to that price gap, because I think that's more germane now. So that's where the small caps are. Over in Techland, NQ is up 1.68% right now, in sharp contrast to say the small caps, which are up 0.07%. So it's a day for tech stocks. Amazon, for example, record high, up another 1.5% plus. And you can see this reflected in the cubes, which are percentage-wise up even more. In this instance, we've completed this right triangle, and we've basically, the week so far has been, you know, Monday, just kind of wait for the election. Tuesday, a rise in anticipation of the election. Wednesday, explosive move higher from the results, and just padding those gains today. So just higher and higher and higher. Within that, SMH, the semiconductor sector, is getting close to its price gap, which is an important barrier. I think 270.54 is the price level of that gap. Could well get there. NVIDIA is definitely doing a lot of heavy lifting. As I said yesterday, basically it's all clear at this point. You know, lifetime highs tend to beget new lifetime highs. This basing pattern here, which took a good 4 months, is complete, and there's plenty of potential upside to this. And this is, I believe, still the most valuable company on the planet now, probably pushing $4 trillion before long. Hard to believe. Over in France, and I know probably zero of you actually trade this. Maybe some of you do, or are at least interested in European markets, but definitely the odd man out, because it's still hammering out what looks to be a very substantial topping pattern, like so. This entire set right here, going all the way back a full year. So for what it's worth, France looking very, very, as I say, vulnerable. We didn't look at Mexico yesterday, although I probably should have, because it's obviously a country whose stock market is very impacted by the political scene here. Very interesting instance. Let's go to a candlestick for this one. So it opened yesterday after the results much, much lower. Makes sense. Tariff talk, sort of a belligerent disposition, but it rallied all day long. So it opened weak and closed strong, bullish engulfing pattern, and is adding to that today. Now, on the whole, you know, it's in its own private bear market for some time now. I mean, this peaked way back in April. It's gone from around 70 to around 50. That's pretty bad. But it is interesting to see how it shook off those scares for the short term yesterday and has been rallying. My persistent favorite, EWZ, a little bit green now, but still kind of like France. In fact, the pattern's very similar too. Every decent chance of a completion of this pattern. That's EWZ. Now, in the wake of all this political news, it's still really interesting to check out what sectors are doing particularly well or particularly badly. And I say particularly badly. Anything doing badly is worth noting, because there's so little that's been weak. Let's catch up on a couple of odds and ends. Another good day for Tesla and the whole Eloniverse. Tesla is up around 300 now, which was my own target for the lift we had. But I'm going to show you something longer term in a second. But we're up about 3.75% on that. This is the first time since, I think, September 2022. Where was that? Yeah, that's right. That the price has reached this level. It got very close to it here. Got very, very close back in July of last year. We're a few pennies higher than that now. So on the one hand, we're very stretched right now. We are at this Fibonacci right here. And so it may sell off to some degree short term. Longer term, I really want to draw your attention to this green tint that I've laid out. Inverted head and shoulders. And it just makes a certain amount of sense to me that this could have a very good 2025. If this pattern holds, the measured move on this would be $460, which would be a lifetime high. And the lifetime high on this is still way back in November of 2021. So that would be quite an achievement. So it could well happen. If the stock market in general continues to be strong, this will probably be a leader. And keep in mind, Tesla's been kind of out, in the cold for the past 3 years relative to things like Amazon. And so, because, so many stocks have lifetime highs over and over and over again, Tesla's lifetime high, again, we're still down about 30% from that lifetime high, 25 to 30%. That's substantial. So 460, heard it here first. That has the potential, a classic measured move off that inverted head and shoulders pattern. I'll pat myself in the back here, DJT falling hard, because it's not, DJT ain't Tesla, okay? Clearly, there would be a belief that, boy, is that going to do great, with a new political landscape. But you got to recognize that the business has at least something to do with it. And this is a meme stock. And the amazing thing is it's lost half its value, over half, from just 30 hours ago or something. So when the results were coming clear late Tuesday, early Wednesday, during that overnight trading, the stock got to almost 60. It was around 57, I think. And now it's at 28. So yeah, half. Pretty amazing stuff. And on huge volume too. This used to just amble along 2 million shares a day, 3 million shares a day. Recently, hundreds of millions. When I started trading, that was the volume of the entire stock market. Shows how old I am. So it's been just nutty. So back on the 29th, it got up to 54.68. And as I said, just about 30 hours ago or so, it got up to almost 60 in overnight trading. So interesting stuff. I have a friend who has a lot of puts in this, so he's probably breathing a sigh of relief. Another sector which has done exceptionally well in the wake of the election, and this is going to sound grim, but facts is facts, private prisons. So the private prison sector is you can see the politics in here. The current administration, when that came into office, we fell. So that was around here. So it fell, but weirdly, it kind of made a series of higher highs and higher lows since then. So it's not like Biden comes in and just private prisons go straight down. They went down for a few months, but they have been strengthening. They got rocket boosters put on them after Trump was elected. So this is Geo Group. Huge gain yesterday, huge gain today. Today alone, another 12.67%. That's Geo. And then Core Civic, CXW, exact same thing. Biden comes in, falls for a while, strengthens during Biden's administration to some degree, but the blast off was yesterday, even more so today, 26% today. I guess everybody kind of woke up to what happened yesterday and wanted to jump on board. So private prisons, growth industry, I guess. So yeah. In contrast to this, over the long haul, the whole new Green Deal thing, solar, other alternate energy, well, you can see the trend quite clearly there. There are some cool bullish setups of lesser known, younger stocks that I like. DocuSign, this is still looking good. We've talked about this before. This is up again, 2.5% today, DOCU. Excelsius, I think you pronounce it like that. Pretty cool. Coming off that green tint, that semicircle there, it's looking sharp. This is better known, Gilead Sciences, Gild, G-I-L-D, lifetime high. You and I talked about this a couple of weeks ago, and I made mention back then that it's a very big pattern. It's like 9 years wide. So I sort of made the excuse that it'll be kind of slow and lumbering. It'll take time, but long term looks really good. But it's doing well. Look at this. Today alone, 6%. I don't remember exactly when we talked about it. It was probably about a week ago or so. So that's looking sharp. And personally, this is a real favorite. I really like Up FinTech Holding Tiger, T-I-G-R. It's got all the classic bullish markings. Nice big base, well-formed, huge increase in volume, a burst higher, a retracement, a successful test of support, and then a resumption of that strength. So I like to look at that one as well. Cliff, which was short, that I've been very interested in, zipped higher yesterday, but mercifully it's easing back again. It had a big move yesterday, but it's I was going to say reversed. It hasn't reversed the move, but it's at least almost back to where we opened yesterday. So that's coming off of that. This is again an analog, this as compared to this, with the presumed movement back toward that trend line. So that's Cleveland Cliff CLF. Again, that's probably a beneficiary of forthcoming tariffs. Don't have much time left. Let's just talk about silver for a sec. My persistent favorite. Good day with silver. We are up almost 3%. It's undone most of yesterday's wipeout, and the pattern is a beauty. When I first spoke about this back on October 16, I was hoping we'd get a better price ultimately, because it went way up here and it seemed a little rich. It eased back to a more appealing price, and we could see that reflected too in gold, for example. Gold peaked right here on the 30th, came down hard, especially yesterday, but we are recovering on this. You can also see this reflected in the miners. Look at this, almost a perfect gap fill yesterday. Yesterday's low, almost precisely at that gap. And specifically on the silver front, the two big ETFs here are PSLV, which is up 2.7%, and SLV, which is the big one. And this one, nice series of higher highs, higher lows, a good strong retracement here. Ultimately, obviously, what we want to see is a piercing of that blue level, and target way up there. How are we doing on time here? Just moments to go. I'll just close with bonds because it's a very bond relevant day. Bonds yesterday, our old trendline friend come to the rescue again. I spoke of this trendline here being support. Look at that. There was the low of the day right to the penny, recovered, and there's a day of big lift. I don't think it'll last that long. Probably get somewhere around about here before we resume that weakness again. So, all right. Well, that is it for me. We will close out this crazy week tomorrow, and we could all use some rest after a week like this. So thanks for coming by. I'll see you Friday.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. I got the bag. Yeah. White guy.
get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with 2 unique virtual events.
6 must-know skills for active traders and 6 option strategies every trader needs to know.
Both feature legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Want to know what you're getting into before you dive in? When you trade options at tastytrade, you see your probability of profit and loss right where you need it. tastytrade. Make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas. Usually I say at this point, Tomas, we are back, my friend. But I want to ask you a question before I ask you.
Sure.
Where were you when the E-mini S&Ps traded 6,000? I know exactly where you were, Sadnov. You were in a meeting trading E-mini S&Ps 6,007, got up to 6,013 as foretold. NASDAQ.
First of all, you didn't as foretold anything, okay? So calm down, Sparky.
I'm sorry. As Chris Vecchio foretold, 6,008 right now. NASDAQ up 337. Russell down $6.
To be fair, Vecchio was the only one here that did make a call.
Early. He was probably one of the earliest ones.
Yeah, we were at 57, 5,800.
We laughed at him, said, "You child."
He's such a putz. I mean,
Are you allowed to say putz? Like you're allowed to say putz.
Why couldn't you say putz?
What's it mean again? Refresh my memory. I know it's a Yiddish word for something. What's it mean again? Like, my memory is not what it used to be.
Like a little putsy, you're a little putsy.
Yeah, I'm sure. A very tiny little putsy.
That's right.
Got it. Dow up 56. Volatility down by 64 cents. Volatility hasn't moved all day long. So look at these last 5 days from 21 to 15 and a half. I'll just round down without an uptick, keeping the bull legs underneath it. Bonds. Look at this, Sadnov. Almost a 2-point range, up 31 ticks, trading 1707. And I know you sold some in the teens.
I sold some at 1714, just a few.
That's the teens.
I have a lot more to do.
They cut by 0.25%. Nothing really happened in the market, one way or the other. Maybe we call it a slight bid. If you want to say that, I guess we could, right?
Yeah,
you scalped E-mini S&Ps. I think you bought the bottom of that move. You sold it at 01, bought him back at 96. Nobody can make 5 handles like you, my man. Nobody.
Yeah, that was one of my best trades of the day. I wanted to sell
You
them.
moved 18 gazillion points and you made 5 handles.
I wanted to sell them at not even cover, but I should have sold them at 10.
Well, your cover was better than your sale, just to put it in perspective.
I know.
The thing you didn't want to do.
I know.
I got this. I didn't.
You've seen this movie before?
I did not get short today, by the way. I want to get short.
As foretold.
I wanted to get short today. I did not get short today.
Bitcoin is back 77,190 off. That'll be a new closing record if we can get up there.
The weird thing was coin was up about $4 today, and it ended up
it's up 4 cents right now. It didn't end anything because we still got about 25 minutes to the day.
Pretty much a little bit of a non-event in Coinbase itself.
Yeah, Coinbase traded down to 242, up to 259. It's sitting at 254.
Yeah, I'm just going through stocks to see what they're.
Tesla volatility. If you have a position in there, Tesla volatility got annihilated.
Let's take a look. Tesla volatility. Where's Tesla on here? Yes.
$9, $298 and change.
Yeah, we made money in Tesla today, and not having a great position. Do you really want to get short Tesla here? I do.
I have a little bit of short delta in Tesla already. It's actually up money today from yesterday's close.
I'm getting short Tesla right now. It's time.
Oh, it's about time, Sadnov. Welcome to the party, my friend.
37 IV rank. What would you sell in Tesla?
I mean, I think it's a classic 30 delta, 20 delta put. 30 delta.
30. You think it's a? I think it's a
little bit skewed, like the 335, 265. I have the 325, 270.
I think it's selling the. I think it's selling call spreads in there.
Okie dokie. One direction. I get it.
Yep. So let's see. I'm going to sell some of the 325.
325, 335.
325, 335.
You are correct. And Sadnov, how many deltas do you think that has? That's
tell you.
5 deltas. I was getting you around 9 or 10 deltas. So we're in the same ballpark. You only have risk to one side.
I sold it at 251. I'm working it at 252.
Good luck.
I got a couple tranches off.
Can I ask you, what do you think of Meta?
Meta, I have no position.
Up $20. Ivy ranks only 8. It's low. I did a diagonal spread in there.
I take it back. I had a position on, and I must have covered it this morning because I have no position on now because the Ivy rank was under 10.
Yeah, I know. I put a diagonal spread on because the Ivy rank is.
I like a put diagonal spread in there. Which one did you do?
Oh, you ain't gonna do the one I do. I take too much risk for you, Sadnov. You're a little bit. You're not that. You're a little risk adverse, is what we like to call you.
What did you do?
I bought the Jan. I did this on my podcast, Sadnov. You can do a lot better than I did. I bought the Jan 585 put.
Jan 585 put.
Jan 585 put with 71 days. Sadnov, let me give you a little lesson here.
Okay.
Implied volatility is under 31. Let's just call it 31 in Jan. It's 31 in December. Earnings are in January. December, 43 days. A lot of time to be right. I went a little wide here, Sadnov. Here's where I'm going to lose you. I sold the 570.
Okay, why would I do that?
Exactly my point. Exactly my point. I knew I would lose you. Takes way too much risk for you.
You should sell the 590.
No, I can't do what I'm now calling an inverted Sissy Mary diagonal. Okay? I cannot. It's a new time, Sadnov. It's a new generation. We're putting it out on the table from now on, okay? We're not tucking and hiding it, okay? We're not doing any more of those fakakta. I'm going to make 40 cents. I'm making dollars, okay? I'm envisioning me being my son, okay? I'm going to be strong with my conviction.
That's really interesting. I'm going to
lose $4 on this like a true trader.
I'm going to do the 25. I'm going to sell the 525.
Oh my God. Oh, yeah. You did what'd you do here? You sold a call spread in Tesla.
Yeah, Tesla sold a call spread.
Sold at 52. Good job out of you. Way to wait them out. Got those 2 cents.
Way to wait them out.
Good job out of you.
Okay, I got an interesting trade here.
In Meta?
Yeah, and I got a partial fill, shockingly.
And don't you love your partial fill? Oh my God, you're doing a four-legged. you really.
I'm doing a four-legged put diagonal.
You're buying the January 520 put.
Yes.
You're buying the 585 put. And in December, you're selling the 525. This has kissed my sister all over it. Selling the 525 put.
I almost got filled on the whole thing. I got
580 put. So you got a $5 spread in there. You didn't mean? Did you? You didn't? You meant to do?
No, I did exactly how I wanted to do it.
You meant to do?
I did a long $5 put diagonal, and I did another $5 put diagonal.
Calendar.
Diagonal.
Oh, diagonal 2025.
Right, which is actually short, and so
it can actually go nowhere on a nice move.
So if I land in between, kill him.
Oh, Fat City.
That's right. I got it.
You're unbelievable. Unbelievable.
Like,
Sadnov, that spread has about 7.5 deltas, and the probability of making 50 cents is about 20%.
I'm offering some bonds and some notes.
I sure hope you're right, Sadnov, because if we get to 580, I'm making bank, especially if we do it tomorrow.
I'm offering some bonds and some notes. We made back about half of what we lost yesterday, which is not bad.
Mm-hmm.
I mean, all things considered, because, I'm still short.
I can't believe I told you about getting short Meta. Now it's going to be up another $20. This is unbelievable. I don't
believe I shorted Tesla here.
I do this to myself for 40 years. I come up with great ideas. I share with him. He's like the kibosh. I'll get out. He'll stay in. He'll make 92 cents, and I'll be working for him for the next 25 years. Unbelievable. Woe is me, Sadnov. Woe is me.
I'm laying out some call spreads in Tesla, just so you know. I got filled at 251.
It has been noted and in the record.
So, all right.
What else? A little housekeeping?
Yeah, sure.
What do we do every Friday?
Oh my God. Hang on. This is crazy. What
do we do every Friday?
Really need those bonds to be up 110. I needed them to be up 2 points today.
I know you do.
Got closer though, because remember we were buying them all the way down to 15 yesterday.
Yeah.
They're 17.05.
Yesterday low 15.10. Today's low.
So what did the Fed actually do today? I wasn't even watching.
0.25%. I said that.
0.25%.
The first thing I said to you.
Okay.
That they lowered by 0.25%. Nothing really happened.
We said it all along.
Maybe we caught a little bit of a bid, but not really.
They're up about 10 points higher.
Yeah.
We said they're gonna lower it by a quarter point.
You did. I was actually wanting them to surprise and say they didn't do anything. See what
I didn't think there was a chance in hell.
I know that. You made that very clear, and you were right, my friend.
Didn't think there was a chance in hell.
Don't make us any money. You're always right on.
Oh my God.
What do we do every Friday, Sosnoff?
We cry, we drink, we bury somebody. I don't know. I don't know. What do we do every Friday?
Come on, Sosnoff. You know it. Fast Market. Put it up there. That's right. tastylive.com/Fast Market. Submit your trade to Fast Market. I love the music that plays on that. I love it. Fast Market.
How you going home tonight?
Crowd loves Fast Market.
They do.
Yes, they do. Yes, they do. Yes.
Is it time?
Is it time?
Is it time?
Michael Buffer now?
Moderna. Wasn't it up $6 this morning or up $5 this morning? It's down $1.50.
MRN.
Lyft hasn't moved all day. They had earnings yesterday. It's up $3.50. And
right, Moderna trade up to $56, almost 57, 56 a change.
Yeah, the other one was Qualcomm.
Well, you can't keep a good Moderna up.
Can't. Qualcomm up $12 overnight, up up 33.
You seen Qualcomm?
Up 33 cents today.
That's
one of those
one
rare.
Of the Qualcomm traded up to.
Yeah.
And I trade that today. That's what I should have faded. Good.
Time to get short S&Ps. What do you think? You got the 6,000 out of the way. You got the election out of the way. You got basically, we're done.
Monday. I told you Monday. I'm sticking with Monday.
I don't like Monday. I'm going to be on the road. It makes me.
It's what makes it perfect. It's Monday, Sadnov. It's Monday. You just got to wait till Monday.
I don't do a good job at live trading shows when I'm getting when I'm thinking
when the market's imploding or making giant moves one way or the other.
when I think I'm missing
Because
something.
you can't concentrate on what you're doing, and I get it. It's very hard.
When I think I'm missing something.
Yes.
It's
You have FOMO.
It's incredibly painful.
I understand.
I
really do.
I don't think you do.
I feel for you. Monday is the debacle.
All right, let's see what else we got here. I can't believe how strong the NASDAQ.
By debacle, I probably mean the SPUs are down 30.
So, all right. So now you've had your little Trump bump, right?
Can we at least be honest and say this is more than just a little bump? We won't even name it. I mean, we're at all-time highs. We're over 6,000.
In 2 days.
Started the week at 5,700.
In 2 days, we're up 200 S&P points.
That's a lot.
It's actually a little bit more than 200. A little more.
57 to 6,000, but whatever.
Yeah, but in 2 days, the last 2 days, yesterday and today.
5750, let's just call it. Well, if you're going 2 days.
Last 2 days, we're up 200 points.
Yeah.
We're up 150 yesterday, we're up 50 today.
Yeah.
200 points. Yeah. 200 points divided by 6,000, 3.5% on the nose. In 2 days. Kind of a lot.
On top of.
On top of. It's kind of a lot.
Kind of a lot.
I kind of think, all right, do I get in trouble tonight or do I wait till tomorrow?
You wait till tomorrow because you'll be annoyed over the weekend and you'll get your benefit on Monday.
Do I get in trouble tonight or do I wait till tomorrow? That is the big question.
Wait till tomorrow. You know what you could do now? You could sell some call spreads in SPY. And then you could sell them higher tomorrow.
Do I do it tonight or do I wait till tomorrow?
Just said you could sell some call spreads in SPY. You'll feel it.
For trade?
Yes.
Which one do you sell? I got a lot of short.
The Ivy rank is not going to be high. It's only 14.
I know.
It's a pure directional
play for 1 day. Maybe the opening.
1 day?
In 1 day opening, maybe?
Like Nova 8 you're talking about?
SPY. Tease. Sell Tease. Keep the dream alive.
You said 1 day. I don't know what, when you have options on every day and you say 1 day, I'm thinking 1 day. I think that's too close for you. A guy like you, where would you go? You would probably go 0510 because it's easy numbers for you to figure out.
10-15, you're pretty close.
You did the 10-15?
10-15. I need one more tick.
5% pop. I get it.
I need one more tick.
Okay.
10-15, 150. Yeah, I just missed it. I think my order was too big. It scared him.
Oh, yeah, that's what it was. That's what it was for sure.
I think my order was too big.
Sure. That's what she said.
Put an extra 0 in front.
Yep.
Oh, that she never said. That, I think my order was too big.
All right. Would you like to just let me tell you, Airbnb?
Do I have an Airbnb position on? I don't think so.
Should be easy for you to see.
A, B, and B. No, I do not.
Do you want to know that it has earnings?
What's the price of Airbnb?
Airbnb. I didn't think you were going to go there.
I usually don't.
$147 and change, up $6, $7. Ivy rank of 58.
How much volume?
7 million shares.
What else has earnings?
You've got ANET, MNST, Pins, Toast, Affirm, and AKAM. Akamai.
God, what's the best play of all those?
Probably none.
What?
Probably none.
What's the best play of all those?
Would you like to see where they've been and where they're going? Airbnb up $7. You want to see the rest of them?
Why would Airbnb be up $7 on a day going into their earnings? Unless those little grifters.
Probably leaked them. Gonna be great.
Unless those
Who's going to Airbnbs? They're so expensive anyway.
No. I mean, who's going? Why is the stock up $7 on the day of earnings?
Doesn't make sense.
Doesn't make sense at all. Why do I feel like this is, you got to sell puts in there just for earnings?
Are you trying to reverse Jones yourself here or something?
Yeah, exactly.
A guy like you sells the 125 puts, $15 expected move in Dees. That's almost far enough away that they can't see you.
125 puts. You got to sell them.
I knew it.
It's the only thing you can do. It's got to be. All right. That's it. 85 cents.
You sold the Nove ones.
Yeah.
Nice.
Oh my God, I sold the wrong one. I want to sell 0 day.
Nice.
Oh no.
No, Nove 125 puts. Oh, nice.
I sold the wrong ones.
You know what? Just leave it. That's it. Don't compound an error. We always tell people, don't compound an error with another error.
No, I am, because I did the wrong one. So I wanted to do the 0 day. Stop that. All expiration. Yeah, 1 day. How did I mess that up? What the hell? All right, I'm going to adjust it.
All right, you adjust it.
I got a lot of orders working here. Got to make some. Oh, they just sold off the S&Ps.
Up 41 on the E-mini S&Ps. You are correct.
Yeah, they were just up.
Ooh, Meta, you could have made some money. Stock's only up $19. You'd be up 30 cents right now if you did my trade.
Bummer. Thought I had this. Okay. Airbnb sucks, by the way. You can't trade anything in there.
All right, you good for this?
Yeah, I'm good.
All right, beautiful.
All right, so I can't believe they just sold this thing off.
15 handles, let's just call it.
Yeah, about 10 handles.
You know what?
10 handles.
I can't stand you sometimes. By the end of the day, I'm so done with you.
10 handles, but I didn't get filled.
Uh-huh.
And by the way, Airbnb, you can't fill anything in here.
Airbnb.
Yeah,
I don't know.
Can't fear anything.
According to my liquidity, you should be able to get filled.
Canceled all my bond orders, canceled all my note orders, and
God, you stink.
The S&P that I wanted to just sell it at 153.
At 153, your S&P.
Yeah, it's 144 right now. They took a dime out of it. That was my whole trade.
Oh, your spread.
Yeah, quick, bada bing, bada boom. Make a lot of money right in front of you while you were watching. But
could have been all of you one more time. That's correct.
Could have been somebody, Tom.
Mm-hmm.
Cancel that order. So we're all canceled. All right, what else you got? Airbnb, crappy. What else?
I gave them to you. Must I give them to you one more time? I can do that for you.
Actually, I don't care.
Pins?
You know
FRM.
No, forget. So they couldn't keep this thing over 6,000. Got to what was the high? 6,010?
13.
6,013.
I mean, I wouldn't say them selling off by 10 handles, as you said. I said 15. I was closer, but whatever. They couldn't hold them. I mean, let's get a weekend in between not holding them.
Let's see what happens. I'm selling them.
All right.
Selling tonight or tomorrow. I'm going to get
Show me some more trades that you might make in the future.
It's
Let me talk to some
6,000. It's time.
Let me talk to some other people here, some articulate, intelligent people. Ilya, Chris, and my man Dylan. How are you, gentlemen? We're doing well. How are you doing?
Very well.
Hello, boys.
Dylan, how are you?
I got the election.
Say it one more time.
I have a new perspective on the presidential election.
Okay, let me hear.
Boys versus girls.
Yeah, kind of played out.
Yeah, kind of played out.
Usually you're a lot stronger than this, Dylan. I'm a little bit surprised at you. But you know what? I thought since I was the only one that got it right that night that you might say something kind to me, but you haven't as of yet.
Christmas is coming, Mr. Batista, and I thought that considering the remarkable
We don't need any
nature of
Christmas with these kids. I don't want to take care of Christmas. That's my best Melania.
That
Sorry.
might be more appropriate.
That's your
at
best
my
Melania.
next
That's my
visit
best
to the
Melania.
Vatican.
Oh, God.
Sorry.
My next visit to the Vatican, I thought I might acquire something unique and special for my Italian friend who got it right. It's interesting that Vecchio backed down his polling emergency.
Yep.
Yeah.
Yeah.
Oh, you're still here?
Hey, Dylan, speaking of getting it right, we haven't finished our contest yet for the night. We had people,
Had to pick the winner and the electoral
had to
vote.
pick the winner of the election
Both right.
and the exact number of electoral votes. And we don't have the final number yet, but based on where it looks like it's going to be, how many Tasty Traders do you think just from the one poll we did the other night. Can't tell you how many people entered or anything like that, but how many people do you think it looks like have the exact right number?
So you're saying how many chose Trump and 312?
Yes.
As an absolute number, not knowing just how many human beings said Trump 312.
Say it's 1,000 people. Who cares?
Oh, few thousand people, right?
So I've only been to a few Tasty Trade events. I've been in Texas. I've been, I think, in Washington D.C., New York, London, and I've received a wide variety of emails because this is an organization that encourages viewer email. I've noticed, if only by virtue of the fact that I receive unsolicited.
Oh my God! Give us your goddamn number.
Oh my God! Are you
Yeah, what the hell?
You're doing my thing. That's my spit.
I'm going to say 100.
No,
my
that's too
point
many.
is, I believe the Tasty traders are prolific and insightful, and I believe this is a genius, a community of geniuses, and I believe there's 100 people that said Trump 312.
Too much.
Too much, but it's actually around 25 people. Looks like had the exact number.
Mm-hmm. Which I thought was
a big number. It's a real number.
Yeah.
But my point is, I bet you it's a lot. Forget the 100.
Yeah.
My point is, it's shocking. These people shock me every time I interact with them. Not that I underestimate them, but I believe that it is an oddly.
What's going to shock us is at the end of the year, if the S&Ps are over 6,000 and we have our annual contest where somebody has to guess the end of the year price, and if anybody has, I mean, usually somebody comes within like 1 point, but the chances of us closing over 6,000 at the end of last year for this year would have been, I don't know, like 0.5%, 0.25%.
Mm-hmm.
So the delta was less than 1.
And you could end up, but you've met you go to every event, Tom. So I mean, for the 5 that I've been to, you've been to 500. You know these maniacs. They watch you every day. These people are in the business of trying to learn how to calculate outcomes. It's madness.
Yes,
Trump
well, they're
baby.
They're among the world's smartest people. I mean, most of them couldn't get home without a map, but they're among the world's smartest people.
You know what? I need a map these days. I'm not lying. I used to know the streets like the back of my hand. I don't anymore.
I saw you yesterday trying to get out of the parking lot. It's only one way. And you were like, which way do I go?
I noticed I got down there a lot faster than you did, and you were supposedly right behind me.
Hey, I was on an airplane once, and I was sitting next to this guy, and he's an analyst for some big bank. He was looking at all these stock charts. He was doing all this stuff. I go, what do you do? He's like, I'm an analyst, and
I'm an analyst.
And he got up and he goes, which way is the bathroom? And I'm thinking, you're going to tell people what way a stock's going to go, and you're asking me what way the bathroom is on an airplane? You only got 2 choices, dude. It's either up there or back there. Okay, take your choice.
Probably both.
Probably both. But don't ask somebody which way is the bathroom.
Compliments to the Tasty Trade the analysis is remarkable. I'm telling you, I'll tell you stories another day. But anyway, you guys hear the stories. You meet these people. They tell you all kinds of things. They figured this out. They figured that out. They're figuring things out. That's all they do is figure things out.
All right, Vecchio, more room to go to the upside or not?
Vecchio, please, before you answer that,
ES 7,000, Tom.
Before you answer that, I want to congratulate you on your 6,000 call.
You said S&P's 10,000 now, right?
12,000? What's another 15,000 between friends? What about 20K? I mean, look, the market.
I got to talk to somebody that is sane. Ilya, are we at least can we sell them here for a trade? I think you can.
I think you definitely can't buy them for a trade going into a Friday after that kind of a rip with no real reason for things not to see a little bit of a cooling off into the weekend. I don't really think about it in 24-hour terms, but if I was going to fade him for like a 24-hour thing, which is not the way I trade and not what I do, this is the place that I would do it. But I'm going to wait for a more substantive signal. I think NASDAQ looks like the most attractive thing if you're going to short anything because it's at the July high. It's finally back to those highs that all the other indexes have already crossed. So if you're going to get a reaction somewhere, that seems like the most obvious spot.
So I don't know if I told you Monday. Just pay attention to me, will you please?
Tony, your son brought up a really good stat today. Jerome Powell was wearing a purple tie. This year, the market is...
That he was.
30 days high, 30 days later, every time Jerome Powell has worn a purple tie at a Fed meeting. So
Now you tell me. You're screwed, Sosnoff.
Hey, you got to check the chat. Nick was out there today, full force. He said, purple tie, time to buy. That was all I needed to know.
Purple tie, time to buy. We're going to take a quick 90-second break. On that note, and come back. We got more Tasty Live after this with these guys.
That's the new Tasty. That's the new global slogan at the IG group.
Why not?
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
S&P 6K, take out your hats, folks. It's Thursday, November 7th, 2024. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan to finish up this half an hour because it's Thursday. We do the abridged version of Overtime on Thursdays to make room for the prediction trade, where we will be doing a post-election recap show, and we'll talk about our friend Jeff's very successful night trading in those prediction markets. But before we get there, of course, we need to talk to you about what happened here in these markets. Join us on tastylive.com. Tell us what you're trading in the YouTube chat. Tell us if you think this rally is going to keep going. We can go to the charts right away, guys. S&P 500 up at 6,003.75, another 0.76% on the board for the good guys. The Federal Reserve meets today. They cut rates, and Powell tells us maybe we should think about when the cut cycle ends. Quite frankly, that may be good news for the bond market because bonds are up after that. Why? It means the Fed isn't driving drunk at the wheel. They see what the bond market's been saying since the September meeting. The Fed isn't going to over loosen. Everything is okay. So you have a NASDAQ up by 1.6%, a Russell that takes a small step back, changing leadership positions with tech, down by 0.28%, bonds up across the curve, gold, silver are higher, Chinese stimulus overnight from the PBOC sends copper rocketing, the Australian dollar rocketing, the dollar's down everywhere. It's kind of just a big risk-on sort of session, Ilya. The NASDAQ here now sitting up at that hallowed July high, not quite through there on a closing basis, but we did test it and punch through it, if ever so briefly, today.
Yeah, it's an interesting sort of day here. I don't know if I would attribute very much to the PBOC's actions. The real question in China at this point is the National People's Congress, where we're looking for a substantive fiscal announcement. But the story, nevertheless, is relatively risk on pretty much across the board. It's an interesting thing because the sort of makings of these moves is a departure from what we saw yesterday everywhere but for stocks. The dollar was up a lot yesterday. It's retraced about 50% of it here against the major counterparts on average. The situation in bond yields, similar. And the bonds themselves, obviously, massive rise in yields yesterday, today, backing up a little bit. So we're looking at a situation here, I think, that looks corrective after what was a massive post-election readjustment everywhere, really, but what's going on in stocks where we've gone from strength to strength.
Strength to strength. Dylan, we are done with the election. Volatility is coming down across the curve. It does not look like it's going to be contested by any stretch of the imagination. It looks like a red wave, even if we're still counting votes in California, which will take some time. Nevertheless, the market is positioned right now for, I guess, back to what we were doing, right? I mean, we're worried about AI. We're thinking about the GLP-1 drugs. We're thinking about an economy that has a 4.1% unemployment rate at the macro level. Again, I know individually on the micro level, we talk about grocery prices and it sucks for people. All of us buy food, we understand. But macro level stuff that financial markets pay attention to, it's still good. So, Dylan, why should we interpret the price action in the NASDAQ today as anything other than the unclenching of what has been several months of consolidation fear leading into the election?
No, I mean, I think I don't think you should. I think that not only is the Trump victory seen as incredibly favorable to financial markets, but a resounding victory for either candidate, which is not what we had in 2016. We basically haven't had a president-elect or a presidential victory that is so clarifying since Obama won in 2008. And regardless of whether it is any individual's preferred outcome, including my own, it's incredibly valuable to have clarity. And it's even more valuable if it's clarity in favor of lower taxes, lower regulation, and the knee jerk, and that it basically, until Trump in some lunatic fashion F's it up through some bizarre action of which he's more capable than anybody who's ever been in charge of America. But until he does that, it's the best thing that happened to the stock market since 2008 in terms of clarity and conviction. Everybody focuses on policy. I think that the clarity is more valuable than the policy. It's unambiguous where the leadership is. It's unambiguous where the policy parameters are. And in this particular instance, the leadership and the policies are super favorable in the short term anyway for financial markets. And to try to dispute that, either in rhetorically, let alone financially, is preposterous. I mean, obviously, going to Tom's point earlier, the temptation to entertain some sort of short-term trading pullback has logic, and it's obviously there's going to be some moment in the days or weeks ahead where there'll be some reversal for whatever reason. But at the moment, you're either long and happy, which most of us are, even if maybe I'm not long stocks in my trading account, but I'm long stocks in my investment accounts, so I'm not complaining. I'm not. I certainly have no reason to be short. I would say the more courageous position, which I lack the courage to take, but it may well be the right one, will be actually to originate long positions now, because we may look at this 2 months from now and be like, oh, you should have bought that response, that signal the 2 days after the election was foreshadowing the best year-end rally in history, which that's not an unreasonable outcome for the next 60 days.
I actually completely agree with that assessment completely. I am long stocks in the way that Dylan describes, in investment accounts that I'm not tactically trading in and out of on a 45-day type of cycle.
Sure.
And I think the case to continue doing that is remarkably compelling, especially if we continue to see the kind of disparity in growth outcomes. The U.S. economy is booming. Everywhere else is in deep trouble. And to the conversation that Chris and I had offline before the show, I think we agree that means more capital is coming here because the returns are going to be here. And if we're going to have a more protectionist, more isolationist policy going forward, as looks likely, we are then going to see the disparity persist, and before it ultimately blows back on the U.S. will be quite some time. So it's the kind of thing that very much favors the dollar, very much favors U.S. equities as a broader and U.S.-based assets in general as kind of a broader theme, probably for the forecastable future.
Mm-hmm.
But as a trading sort of tactical next several weeks kind of thing, what gives me pause is really where the NASDAQ is and where it is relative to what the news isn't going to be over the next 24 hours, because there's not much there. And that takes us right into the weekend. We've had a massive run. We're directly at resistance. The NASDAQ was the leader in this rally the entire way forward until July. So, and obviously, I think with the Fed policy announcement, we've had something of a reset on everything that's happened in the Fed narrative since July. So it's a very auspicious place to be. So now I think we get into a space where if Monday might be the time to buy in, you could have an opportunity to buy in perhaps at better levels then than you can now.
It might be a short-term pullback area. Similar to, I guess, the trade mechanics here of working through repositioning is a worthwhile discussion quickly before we talk about the sector balance. Similar to what was done in gold a few weeks ago at the end of October, where once, even if you have enough time on your side still, if you bump into your long strike, it's worth rolling out to buy yourself some more time. And so if the last several days I was playing, it's at 20,000 and I think the stock market's going to go up after the election. So I'm buying, I'm structuring a long delta trade such that I need it to go back to the July high within the next, say, 30 to 45 day window. We just got there in 3 trading sessions. Okay. So if I'm, say, at 25 or 30 days to expiration right now, and we're sitting at the point where my long strike is, and I think this market's still going up, what should I do? This is actually a really good place to roll out. Give yourself some duration so that if there is a short-term pullback, you're not stuck in a position that's moved against you and all of a sudden you kind of lose the confidence to keep it going because this was a bigger winner. Now it's a loser. Technically speaking, we see that 1 week moving average is beginning to pull up through that October 30th high. And if we do have any sort of pullback here in the stock market, as long as 20,750 or so holds an NQ, then you're probably still on strong footing. And likewise for ESZ4, at least still a tradable contract. If we hold above that mid to late October high, 59.27 and a quarter, it's a mechanical type of marker right now. But the reason why I'm so confident technically is if this is the inverse head and shoulders pattern that I think it is, the fact that we have the neckline resistance, support, and then we swing through, the initial measured move is, roughly speaking, 200 points of what we just saw in this multi-week consolidation. So 200 points on top of 59.30 gets you to 61.30 as your immediate term target here in the S&P 500. And then the longer term inverse head and shoulders pattern that we've been trading up, and that's why we're in the ESH5 contract, that calls for 6,300. So the only thing that I might be doing here in stocks, I don't like to rock the boat if there's no reason to rock the boat. I'm very much a person who likes to, like today, I had my positions on, they're all working. So I spent a good day of time reading The Ascent of Money so that we'd have some content to talk about, right? Because we're now out of election season and we need new things. So let's talk about financial history a little bit and some of the topics here. I'm trying to.
Oh, my favorite.
Do I make adjustments now? Because I'm long the 6,000 here on the follow page. There's 54 days to expiration. I'm short the 6,200. So this is clearly working. There's clearly a lot of time left here. I don't think in this case I would, because there's 54 days left. But if today was 21 days to expiration, or tomorrow was 21 days to expiration, or you know what, if even next week, next Friday was 21 days to expiration, I would absolutely be using today to roll the position out and recenter my strikes. Well, not recenter, push out my strikes further, such that I can get back to the position squared for like a 25 to 30% probability of profit. Why? Because given the scope and scale, if people were trading on the long side with me in the middle of September for this particular position, you're now at a point where you can structure the trade so that if the next leg in this breakout momentum chain that turns against you, the loser will be about half the size or less than the previous winner. So when you're trading up in these momentum breakout markets, when you start to get to your long out of the money strike, it's worth then rolling out in time. And it's worth giving yourself a position such that your loser won't subsume the previous winner. And even if that's the last trade that worked out, you know what? You may have only been 50-50 right, wrong, but you still walk away profitable net between the two. I'm not there because I have 54 days. But if I was closer to expiry, I would absolutely be using the day where we breach the strikes to get myself more time in the event that there is a little bit of a short-term pullback here. Why might there not be a pullback? Because the sector rotation kind of speaks for itself right now. There's a lot of capital flowing into consumer cyclicals, which we've previously pointed out is a sign of leadership and strength in the market. You're seeing it in industrials and XLI. Take a small step back today, but we did hit a new all-time closing high yesterday as well. You can go over to the banks, which, again, a little bit of softness coming in today, but yesterday we push up to a new all-time high in XLF. So banks are up net this week. We have industrials up net this week. We have consumer cyclicals up. And that PEZ removes the outsized weighting of Tesla, which if you want to look at XLY, which has a large Tesla component, this too is surging. It's these asset allocation decisions that show you where people expect the economy to be going over the next 6 to 12 months. If I'm buying XLY or PEZ today, it's because I think that there will be economic activity to generate the corporate earnings to substantiate the valuations and the earning expectations that are attached to these stock prices right now. And these are the type of sectors that outperform when? In the early to middle stages of a bull market. I can't look at the factor performance here and think that we are anywhere close to anything other than a short-term top. It is fundamentally a very strong market, regardless of who's president. It's still a 4.1% unemployment rate. It's still a 2.5% inflation rate or so. It's still an economy that's growing around 2.5 to 3% in real terms. The semis, though, today, guys, to get off my soapbox here, they are among the leadership groups. SMH up 2.44%. NVIDIA here, closing at its highs. After hours, it is moving higher. It is at a new all-time high. Dylan, this should be the story. This is the super glide. We're fine. Everything's fine. So if everything's fine, what are we really worried about? What are the risks abroad that we're not considering right now that dumb bulls like me who are dancing on bears' graves today, what am I blind to at these levels?
There's only really two things. One would just be valuation, inflated, euphoric valuations, too high of a price of money today for the discounted value of money tomorrow. That's your number one risk. And your number two risk is unwelcome data regarding either inflation or weaker labor markets, which, by the way, you have weaker labor market data, which was generally ignored the Friday before the election. All the numbers were revised lower, et cetera, et cetera. And so a weakening labor market is something that exists right now. And so a weakening labor market is a cousin of inflation, one way or the other. At least it's it's the rock in the hard place around which the central banks get trapped, is labor and inflation data. And so that's your one risk is the matrix of labor and inflation data. And the other risk is you're paying too much for, as any trader or acquirer of assets, even long-term, any person who does such things, order entry, the price of order entry is effectively the destiny of the trade. If you pay too much to get in, even if you are right, it still may not be something that is profitable. And if you pay too little for a lousy asset, that lousy asset, as a result of time and positive drift, may turn out okay. My favorite Sumner Redstone quote from decades ago at this point, but Sumner was in his heyday one of the great sort of extrovert CEO deal makers on Wall Street in decades past, as you reference Wall Street history. But he was always famous for saying the deal from hell became the hell of a deal. And the way the deal from hell becomes a hell of a deal is on the cost of acquisition. And right now, acquiring stocks, certainly Nvidia or whatever, it's a function of valuation. The super glide is real. It is happening. Even the biggest skeptics among us do not dispute that. The only dispute is the present value of the future cash flows of the superglide, which is unknowable and easily miscalculated. And that's where your risk lies. But I would say the one you're not looking at would be a weak labor market. The sleeper here is that the lousy November jobs number, the lower revision of the October jobs number, the lower revision of the September jobs number leads to a lousy December jobs number and a lousy January jobs number. And now you got a new president coming in and it's a different situation. Obviously, the odds of that are relatively low. I mean, I think that the base case is this market goes crazy right through the inauguration, but for some pullbacks. But to answer your question, it's the labor market and valuation are the two risks that you personally sit upon right now as a lunatic poll emergency responder / bull market, caballero, a cowboy of the bull.
All right, it's time to come clean about this. I was actually selling my kidneys so I could buy more 0DTES
don't lie about it. Don't lie about it.
I could show you the scar if you want to see.
You were in the Toyota, flashing the lights,
running Toyota,
running red lights.
You know what really bothers me about our
to
tariffs?
Get back to the polls in time for the emergency before God knows what happens. And then look, you blew it anyway. She lost.
How is Toyota? Like, what do you think they feel when they look around the world and like, oh yeah, there was another terrorist attack, and they show like the B-roll news footage, and it's like some guys driving around in like Toyota pickup trucks?
Pride. It's AKs and Toyota pickups all the time.
Pride.
We're not allowed to import those kind of pickup trucks into this country though, which is a real bummer because, they seem to be pretty durable and they last a long time.
I've generally, through as much of my life as I've had the privilege of the opportunity, had a 2-car garage, and one of those cars is always a Toyota 4Runner because that
my first car.
If a terrorist is going to, it is the most reliable car on earth is the Toyota. If you don't have a Toyota, God knows what'll happen.
My first car was a 99 4Runner, and I got it up to 180,000 miles before the before one of the gaskets popped and filled the car
I can
with
see
smoke.
you in. I had a '96 4Runner for 20 years until 2006. Ran it to $250,000. That's my best car I've ever had. Anyway, I can picture you in a 4Runner on election night just 2 days ago, flashing your headlights.
Okay, so we only have 3 minutes here.
Blasting through the intersections of Bedford, New York.
Intersections. We don't have stop signs out here. It's all dirt roads. Dirt roads to where? For XRT, it might be a road to 90. Guys, XRT is not one of those ETFs that's skewed by large holdings. XLY, its two biggest components are Amazon and Tesla. XRT is retail. And the studies show, as we've discussed in the past, if you're bearish on the economy, XRT is probably the best place to look because during previous economic pullbacks, XRT has produced the biggest losses. It was the biggest loser throughout the recession, for example, among the sector ETFs here that we like to track as it pertains to consumers. So when I look at XRT and it's sitting at the top of a multi-month range that has been just chopping, and I look to see the distribution of holdings, and its top holding is Carvana at 1.63%. The second biggest is Bath and Body Works at 1.56%, and then Warby Parker, GameStop, Victoria's Secret, Boot Barn, Sprouts Farmers. This is the kind of crap that people buy with disposable income. If it's breaking out here, and we have an economy that we know, because we look at the macro data, is pretty strong at the macro level, this is a measured move that calls for this collection of assets to move up to 90. So tomorrow,
this is a pocket of the market that I'm actually very interested in being long, because we have seen the highest split in spending on services relative to goods in 20 years. 20 years.
With Trump's going to get worse.
And it might get worse.
We're not going to buy stuff from abroad.
We've seen goods underperform significantly. So I'm watching what happens at the top of this range very closely because on one hand, it's tempting to say that there's a reversion to the mean that's called for here where we do more spending on goods relative to services. But if massive tariffs are coming, that's not what's in the cards.
Dylan, there might be a madman trade in here. 43 days doesn't seem like enough time, but if we were to go all the way out to, say, 71, I would really like to do 134, but that's not. We could buy, maybe these prices aren't correct after hours, but we can buy the $85 call in a measured target in XRT that goes up to 90. That is trading at a very robust $1.50 right now. So if you're willing to risk $150 for a potential $10, or you're willing to risk $1.50 for a potential $10 move in XRT, if you believe in the economy, if you think people are still spending money, if you're like me who thinks that the tariffs are coming, they're going to be terrible, but it's going to mean money circulates internally as opposed to going abroad. So services and little knickknacks, makeup, jewelry, stuff for your car, this, that, if it's produced here at home, that is going to see an increase moving forward. XRT is the place to look for that. Guys, we are done here for this Thursday. We're out of time and overtime on a day when the S&P and the NASDAQ close up at all-time highs. We should have that soundboard for the round of applause, but we don't, so a little round of a golf clap. We'll be back next Monday, as we are every Monday through Thursday here for overtime right after last call, 4 p.m. Eastern, 3 Central. Of course, today is abridged because we are going to the prediction trade after this. We have to talk the election.
There it is. There.
We have to talk the election results, so make sure that you stick around. But for my friend and colleague, Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. See you soon on the other side of this break. And make sure you stick around for Macro Money at the top of the hour.
See you there, folks.
The unexpected upside of trading is losing. I know that sounds a bit perverse, but in a world where winning is everything, we have generations growing up now where winning has been dangerously commoditized. A culture where everybody wins is extremely vulnerable because it is not scalable or sustainable. Wealth creation and financial independence is not something we take lightly at Tasty. It's our lifeblood. Still, like most everyone, we don't handle losing very well. We know firsthand how difficult trading and investing can be. That's why success is so special, especially in finance. Achieving success, however, is never simple or a direct journey to the top. Failure and constant tests of resilience litter the trail along the way. Longevity is the ultimate measuring stick of one's achievements, and without failures to build upon, it's impossible to learn. As an active trader, most of us have some losing trades every day. However, those losing trades are the foundation for everything good that happens next. The sad part is, very few people outside of the world of trading truly understand the value of losing. We have been so conditioned to win at all costs that many people fail to recognize one of the most misunderstood reasons for success.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Got the need for speed? No problem. On tastytrade, adjusting your option positions is a right click away. Rolling just got quicker. tastytrade, make your move.
This is the Prediction Trade. I'm your host, Chris Vecchio, joined by my co-host, Jeff Joseph. We're here on November 7th, 2024, 2 days after the presidential election. And Jeff, it's time to settle some bets. How are we doing today?
We did good. I think you and I both did pretty well, right? I've been hearing, following you on your other shows, and I know you've had a couple of good days of trading, so congratulations.
Thank you. Good days of trading, good days of, not so many good days of sleep. I basically stayed awake the entire night trading the presidential election night. My wife was very concerned about my well-being yesterday because I was in one of my ranting around the houses, drinking 10 cups of coffee. But I got my full 8 hours last night. I've had a chance to settle down. And it looks like that this was an election that, by and large, vindicated prediction markets.
Prediction markets are clearly among the big winners. There's no question about that. In fact, we just within the last couple hours, we got the latest Luckbox letter. It's a weekly digital magazine that we send out, and we cover prediction markets in every issue. And of course, that's free at getluckbox.com. You can sign up to receive it every Thursday in your inbox. And we were a little late today. We were waiting to see if the Fed did anything dramatic. We didn't expect that they would, but as soon as quarter basis point came out, we dropped the letter, and we included some of the winners and losers that are pretty apparent. And among them was clearly call sheet, and prediction markets. We focus on call sheet because it's the only market in the U.S. that you can trade. Poly market, though, has really obviously had some extraordinary days. I reached out to the CEO who you had on the election night special, Tarek Mansour, call sheet co-founder and CEO. I reached out to him today just to check in how things went and what trading volume looked like, and he shared that information, and we shared that in the letter, and that's something we can talk about today as well.
Sure. I mean, let's talk about the winners here, though. There were a few people that were winners as far as we're concerned that were involved in not just the prediction market, but we have to give a special round of applause to, I suppose, our guest, Robert Cahaly, who accurately predicted that Trump was going to win the swing states here. The one swing state that he didn't pull was Nevada, of course.
That's right.
But that didn't really matter. Trump's well past that, even if those votes are still being counted. The losers, of course, we seem to think our traditional media are the pollsters here. I can't think of someone who may be having a worse few days than Ann Seltzer, whose poll over the weekend really shook up the race. I mean, we talked about that on Tuesday, how we were watching to see if that had carried any weight through the northern tier of states, and it ultimately did not. So, Jeff, I mean, let's talk macro here for a second.
The Seltzer's Iowa poll, I think, baffles everybody because when it was first printed, it looked like an outlier, but obviously, the media jumped onto it because it was a great sign for the Harris campaign, and but it appeared to be an outlier right at the outset, and it just baffles me. I'm looking forward to hearing the backstory as to how that poll came to be, why that was dropped, and I think there's a real lesson for pollsters. But overall, right, we have to look at how, and Nate Silver spoke to this many times, that there appeared to be herding going on, that pollsters were reluctant to show any outliers, except for Ann Seltzer. So maybe all the other pollsters had the right instinct. Stick with the crowd. Don't be an outlier. At least you don't have egg on your face. But they ended up with egg on their face. You're right. Other than Atlas Intel and Trafalgar, most of the polling groups were nowhere close to the result of the election.
They were not close. Yeah. Now, there was one kind of poll that really caught my attention as it pertained to betting markets, because it goes to the discussion of the whale that was in the market we talked about a few weeks ago. You know what? Before we get there, let's just put a pin in this conversation so we can wrap up this discussion about the betting markets on election night.
Sure.
Jeff, in this edition of Luckbox Magazine, you mentioned that Tariq Mansour, he was on with us for the election unspecial. Him and Tom had a great conversation. I would encourage everyone to go check out that archive on tastylive.com, or more importantly, come to our YouTube page and check it out. Here, he gave us some really good data, interesting data to talk about what happened. Walk us through it.
Yeah. It was a quick conversation I had with him, and it was really, look, it was clear there was an influx, and I wasn't sure that they were going to share our numbers because firms are typically proprietary about that kind of information. But he did say that he had 58,000 traders alone that came on November 5th in one day. There were 138,000 plus active traders on election night. And remember, this is a platform that essentially would have 5,000, 3,000 active traders, a month previously at best. And more than 900 million. He also mentioned that there was 350 million in open interest. I don't think I published that, but that the platform hosted 614 different markets. My real question to him was, he had a great night. And by the way, they did have a great night. Operationally, they avoided the pitfalls that Predictit had gone through on prior election nights in general elections and in midterms. They never froze. Orders, there was no latency on the ordering process. Everything functioned very, very well. So hat tip to their tech team on that. But the real question then is, all right, so you've got a lot of money sitting over Kalshi now. And there's obviously, there were winners and there were losers. But there's a lot of cash sitting there earning 4% interest, which they recently launched. What's next? What comes ahead? And he gave an indication of what to look for in that conversation today. He said, look for markets on cabinet appointments. They're launching them shortly. I expect we'll see those within a week's time at the latest. Who will be appointed to Treasury Secretary, Health Human Services, to the UN as ambassador, et cetera, going down the list of cabinet appointments. So that's one of the things he said to look for. They've been doing Federal Reserve interest rate markets for some time and climate markets as well. But I think with Trump and the decisions he's likely to make in the coming weeks, there's still going to be a lot of activity on the Kalshi marketplace and a lot of markets. Not to mention there's some open markets right now that haven't been resolved. A moment ago, I was just looking closely at the house market, which is of course unresolved. That's the biggest game in town right now. The GOP is closing in on the 218 seats that are required to win the House. At last count right now, there are 213. So I was, that's a high probability bet. I think it's 94 cents. Where is it? Yep, 94 cents right now over on Kalshi. not a lot of return left there, but it's extremely high probability that that trend is working in their direction. One of the more interesting markets on call sheet right now is the margin of victory market. This is the one I'm going to dig into a little bit deeper after we get off the air today, and likely do something there. The margin of victory in the House, meaning by seats, will it be, you can see the tranches if you open that up. That's a popular vote margin of victory. But how many seats are they going to win by? Right now, it's equally divided between, I think it's 1 to 5, and the other one is 6 to 10, or 1 to 4 and 5 to 10, with about a 50% odds on both of those outcomes. Oh, in fact, it just turned within the last half hour before I looked at it. So the trend looks to be in favor of the 6 to 10 market. That's pretty interesting. Have to dig on a little bit deeper on that, but that's going to be a fast trending market. And as soon as another seat drops, or another couple seats drop, I think that market will start trending. And that was basically how I ended up with a very successful night on election night. I must have placed 100 plus trades, had a well over 90% winning rate. The only thing I think I lost on was, that I recall, was I thought Harris was going to win the popular vote and Trump would win the Electoral College. Didn't turn out that way at all. But there was a moment, and you and I talked about this offline, and I'd like to share it. There was this moment in a viral clip that's going around that many, many people have seen, where Jake Tapper was speaking to the guy working the board. I forget who it is, the white-haired guy.
John King, yeah.
John King on CNN. And he asked the question, well, show me the counties where Harris is outperforming. And the outperforming is Joe Biden in 2020. And he revealed the map. Not a single county. And you could hear Tapper say, nothing, not a single county. That was early in the evening when that came out. And at that point, it was so clear. I had done what we talked about by looking at the swing counties of Boone and Clark in Kentucky and swing counties in Indiana. And they did show early indication. The best early indication of the night came from Georgia with the voter analysis that was done on Fox, their exit polling analysis. It clearly pointed to a trend that was going to be unstoppable across the country. And the simple pattern at that point, once John King did that reveal of no counties where there was Biden outperformance, was to buy any market where Trump was still at 70 or 80 cents, that still had some upside, and trying to get out at 95 to 97 cents, so you had your cash on the side. Turned out to be a good strategy, and I know many people had a very good evening.
One of the things that's really fascinating about how this is all shaken out is quite frankly what happens next. We already talked about the structure of the betting markets and new trades that are coming on here. But in hindsight, it seems like there were some pretty obvious signs that were missed, that this election was going to turn out the way that it was going to turn out. One of the more interesting pieces of data that I've come across today is the fact that for the first time since World War II, every incumbent party in Western democracies did not win re-election. It's the first time that has happened since we had the American-led world order, Pax Americana, since 1945. Now, why is that the case? There's a great chart. There's a great chart out there that's been circulated by T.S. Lombard's chief macro strategist, Daria Parkins, and economists and everyone saying, well, inflation's under control. It's about 2.5% now. That's what economists and financial markets care about. Voters are still thinking about the 20 or 30% surge in grocery prices from 2022. And so political powers or political parties that were in power in 2022, they were all swept out in the Western world this year. The U.S. elections are the last round of those elections that we're watching. No incumbents won. And that was a really significant structural disadvantage that Kamala Harris faced. It's one of the reasons why Joe Biden dropped out. But Jeff, this is now a new world. You have a Republican trifecta moving forward. I think that's also one of my misses here this cycle. When we looked at the polling, we saw a close race. It still looked like it could be a split Congress. Republican trifecta was up there as a possibility if Trump won for the down ballot pull forward, and it ultimately came through. So some signs that we could have seen on the wall, looking at the macro picture, absolutely were missed. But nevertheless, it was a good night.
Yeah,
it was pretty clear, like you said.
And that's a great point.
There were
And by the way,
turning
the
points.
process you just articulated is outlined in the book Super Forecasters, which is an extraordinary book that any prediction market bettor should certainly read. And it's called doing a postmortem, on what did I miss? What should I have seen? I'll talk about what I missed was, or what I relied a little bit too heavily on to get the popular vote wrong, was the polling. I'm a fan of Nate Silver. I appreciate his work. I think Nate Silver ended up doing a pretty good job by saying, that this was going to be a very close election and there was no clear indicator. But the most compelling data, and we spoke about it on this show, what tilted me towards a Trump outcome and a GOP outcome, and it's not political ideology for what it's worth. And I've been asked many times since I've been doing this show, et cetera. And I don't mind saying, I live in Illinois. I've lived in Illinois for the last 30 years. I have voted third party in Illinois since 1996, an indication of how old I am and also where I sit politically. This election cycle, I didn't find any major candidate that was worthy of my vote. No disrespect, but that was my conclusion. Plus, I'm in a state where my vote doesn't matter, along with 42 other state residents or residents of 42 other states. So I've always thought it's my obligation to make a political point by saying the candidates, the two parties are serving up just aren't worthy of my vote. So I've been protest voting in the state of Illinois, knowing that my vote would never make a difference voting in the two major candidates. I've been doing that for a long, long time. So I don't approach prediction markets with a political ideology, and I think that helps a lot because it makes it easier just to focus on the data. And the data that got me off on the right track was the registration shift data. We talked about it. I pulled some of it up to have it again in front of me. In the state of Pennsylvania, which we knew was going to be a key state, in 2020, Democrats, registered Democratic voters outranked registered Republican voters by 800,000. That number was cut to 300,000 going into election eve. 500,000 voter shift in the state of Pennsylvania. If that wasn't a harbinger, I don't know what would be. You could point to the same thing. Georgia, Michigan, and Wisconsin voters don't register by party. So we didn't have the benefit of that data in those swing states. But in all the others, in North Carolina, in Arizona, and even Nevada, there was a distinct and material shift in voter registration. And it's become a trend. It's been a quiet trend. You don't hear a lot about it, but more people over the last 4-year cycle have registered as Republicans than Democrats, and the ranks of registered Democrats have fallen. And that's clearly had an impact. And then, of course, there were some demographic shifts that have been noted in exit polling among predominantly males, Hispanic and Black males, and the under 30 vote is what really surprised me. I would not have called that would have been a shift in Trump's direction, but it indeed was on a net basis over the last 4 years. But the key metric that I think influenced most of my prediction market wagers were the voter registration shifts that we saw in the states that were printing that data.
You mentioned that there were some significant shifts here. That people have seen the New York Times map that shows the voter swing. But in terms of demographic shifts, every single demographic effectively went more towards Trump this cycle, except for 65 plus and white college women. If it was white non-college men, white non-college women, white, male, 45 to 64, white college men, female, white college, 18 to 29, Hispanic, Asian, or Black. Republican margin increased across the board. Almost every single state, the Republican margin was bigger, except for Washington and Utah. In terms of the shift among the votes, in 2020, Trump wins voters that make more than $100,000, 54 to 52. In 2024, Harris wins those voters 54 to 45.
I didn't see that. Can you repeat that one more time?
In 2020, Trump wins voters making more than $100,000 by a margin of 54 to 48. In 2024, Harris wins voters over $100,000 of income, 54 to 45.
So you really see this major shift of the Democratic Party becoming more elite and less the party of the working class. That clearly, in fact, I heard Victor and Tom having a similar discussion. It was a spirited conversation that a lot of kudos to Victor. I think he called some of that right in terms of how he is analyzing the election. But well,
the bottom is even more profound, Jeff. 2020, Biden wins voters making less than $50,000 a year, 55 to 45. Trump wins them 49 to 48 this year. So that is a big, big, big shift. In terms of how it moves other political markets moving forward, right? I think reflexively, if you are probably left-leaning or you're a liberal, you're in a dark place the last 2 days. Just like Republicans were probably in a dark place after 2020, or they were in a dark place after 2008, right? Anytime the other party runs the board and gets a trifecta, you're feeling pretty down. For the people that are betting out there right now and thinking that this is some permanent shift and every single thing coming up is going to be GOP moving forward, I'd remind everyone that in 2017, the country's mood started to shift back to the left. Just like after 2020, the country's mood shifted to the right.
That's what the midterms are for. That's right.
You're a little bit older than I am, so you probably have a more salient memory of this than I do. But in 2004, after George W. Bush won the trifecta, won the popular vote, also wins the Electoral College, if someone told you that a junior senator from Illinois with the last name Hussein or middle name Hussein was going to be president of the United States in 4 years' time, you would have said, what are you talking about? So America ebbs and flows in each direction. I wouldn't bet anything on House control after like the 2026 midterms. If that market popped up here today, there's nothing that tells me that we would have any indication that the results today would make me confident placing a bet with that kind of duration tomorrow. But there are more betting markets that are going to be popping up as it pertains to the Trump, we could say the inauguration, as it were. Will Elon Musk have a place in the cabinet? Will Steve Mnuchin be back as Treasury Secretary? Will RFK run HHS moving forward? We don't see those up here yet. So hopefully next week on the prediction trade, we'll be able to talk about those because Tariq Mansour told you they're getting them ready. They're going to be up on Kalshi sometime soon.
I will mention, if you're looking for something, like I said, you've got some cash. And of course, the real game is in the markets, particularly the options markets that we talk about all day long on Tasty Live. But if you've got some money sitting over at Kalshi, you're looking for something to have fun with, there's the Grammys coming up. We have a columnist called the Rock Hound who's been doing rock and roll music reviews for the last 5 years. Her name is Kendall. And Kendall has always done Grammy predictions, and there's now forecasting markets on call sheet for who the nominees will be. So in the newsletter that we just shared, and it's on the luckboxmagazine.com site, who will be the Grammy nominees, she outlined what her best bets are. And as a result of that, I have some money on Sabrina Carpenter right now, and I couldn't even name one of her. Well, no, I can name her song because I bet it's called Please, Please, Please by Sabrina Carpenter. But I've taken some of Kendall's bets, the Rock Hound, because she's pretty good at forecasting the music industry. So there are some fun things to do on Kalshi in the interim.
There will definitely be some fun things to do on Kalshi in the interim. Personally, I was looking at the Fed decision today as a really fascinating market that's popped up here as well.
Will December market's up already. What do you think?
And you know what? Will the Fed cut by 25 basis points? I would say that this answer is probably a no today. I would say that after the Fed meeting today, we could probably pencil that in as a no with a higher expected value.
I agree completely. Yep.
And you have a 25% probability on the board there, risking 25 cents to make a buck, with the Fed telling us that they probably want to wind down the path of their rate cuts, or at least think about what slowing down looks like. Listen, this is not politics per se, but if we want to talk about the summary of economic projections, about half the Fed said they only wanted one more rate cut in 2024 after they cut by 50 basis points in September. So we've already had one cut. We had that today. Moving forward, the unemployment rate's still 4.1%. Stock markets are at all-time highs. Unless you get a string of bad labor market data between now and then, there is enough of a reason to think that maybe the Fed doesn't need a cut in December and can just wait a meeting or so to do its next one. And that's the market I'm watching the most right now.
And I agree. And don't ignore the soundbite from today too, is that we're not done battling inflation yet. So I think you can't ignore that. You can't ignore that, and I think that looks like a really compelling play on call sheet right now.
Now, given the Fed press conference today, I don't know if it's a market is up just yet, but I imagine it's going to be a point of interest. I would keep my ear to the ground for a market as to whether or not Trump will replace Jerome Powell as Fed chair before the end of his term. A lot of people on Trump's transition team want him gone. Trump has apparently said he'll let him stick around until May 2026. Powell today said if Trump tries to remove him, he's not leaving. So that sets up a very interesting dynamic between the head of the Fed and the president, and we may very well see a betting market pop up that speaks to whether or not Trump gets rid of Powell before May 26.
There is a Powell market up right now.
There's a Powell market
there is
now?
A Powell market on call sheet.
These guys are too good, Jeff. They already have it listed.
They've got the game going.
Oh, my gosh. I checked it earlier before we got on the show, and I didn't see it up yet. These guys are too good.
No, I'd seen it earlier this morning, too. But so, one of the other things, there it is, right there.
There it is.
Powell out his chair before 2026.
And those odds dropped from about 45% to 19% now over the past few days. So the press conference is moving some of these things. It's a very lightly traded market right now.
Mm-hmm.
There's obviously not a ton of volume in here, 14,000 of trading volume. But you know what? There are other opportunities. I think that's going to be the point. And that's the evolution of the prediction trade moving forward here, Jeff. We're out of politics season, and you've done this for a number of years. So I guess we could spend the rest of the time here. Why don't you tell the audience, what can they expect from us in the prediction trade? What will we be discussing moving forward now that the election's over?
Well, over the last 4 years of the prediction trade, between political seasons, like midterms and general elections, we brought on horse race handicapping experts for the Kentucky Derby and the Belmont Stakes. We brought on one of the most successful cricket and snooker bettors in the world who was on with us. We have brought on tennis pros talking about the U.S. Open. We had baseball experts and handicappers going into the World Series, going over gimmick bets. And we'll do more of the same. Our old motto was if you can bet on it, you can bet we're going to talk about it on the prediction trade. But I think the political markets are going to keep us busy going forward. There are popularity markets that used to be very robust on Predicted. The old timers on Predicted, remember the markets that were the wildest markets were the approval markets and the tweet markets. So the approval markets were what the approval rating would be as of a certain date. They did those every week. On Real Clear Politics, using the average, were 538 approval markets, presidential approval markets. So I expect to see those returning and being more robust after a period of time. Remember, suddenly now there's a couple 100,000 people that have money on the call sheet platform, and got hooked already on the idea of betting on the outcomes of economic and political events. So you could expect that there's going to be more of that. But the tweet markets were extraordinary. I don't expect to see them. And remember, it was based on when Trump was tweeting all the time using his presidential account. And it was actually a count of how many tweets he would do on a weekly basis in tranches. Would it be 50 to 75? Would it be 75 to 80? And those markets were wild because sometimes he would tweet 12 times a day, the tweet storms of the past at midnight till 2 a.m. It was actually kind of a fun, kind of reckless environment. But I don't think we'll see the return of tweet markets, but we will see more markets associated with Trump moves and initiatives. You'll see something about tariffs, I'm certain. You'll see more about EV sales and EV mandates, perhaps. You'll see things about budget cutting and the budget. And you'll probably see some things about not about military conflicts, because call sheet will always avoid that. They won't do anything with respect to a death count. They didn't do it in COVID. They're not going to do that and go near that. But there will be things about NATO engagement, military engagement. That's all likely to come in the near future. We'll be talking about them on the prediction trade.
Well, speaking of our listeners here on the prediction trade, let me give you some insight into how folks like you are doing here in the betting world. There's not many companies that produce results as it pertains to betting and predictions, but one of those companies is DraftKings. And DraftKings cut its full year guidance because of customer-friendly sport outcomes. Their customer base is just too smart. They're doing a good job making money. They're placing the right bets, which is why we end every single episode of the Prediction Trade with the following moniker. Right, Jeff? We say, thank you for tuning in. Remember to wager responsibly. Believe in your math, master your trades, and join us next time on the Prediction Trade because our audience is smart, they're sharp, and they're here to win. And we're going to see everyone again next week. Jeff, it's been a pleasure to do this election season with you, my friend. We have much more to come here on the Prediction Trade in the months ahead. Thank you so much for joining us in this 2024 election season.
Nice seeing you, Chris. We'll see you next week.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20, because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock, Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
Whatever.
This is English. You should watch him read.
From the smart mouths at tastylive.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
We have another up day in stocks, even as the dollar and bonds take a breath to think about things in the wake of the huge reaction that we got in the financial markets following the result of the U.S. presidential election. And arguably, because that result came quickly and was not drawn out, we have missed a bit of something, though. We're not alone. It seems like the market was so focused on what was going to happen in that election that they weren't really paying attention to economic data coming out of China that might be signaling something of a sea change in the works. That's what we're going to focus on here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. We're going to break down what you might have missed about economic developments in the world's second largest economy over the past couple of days, how that might impact things going forward, and in fact, how it is already impacting them, but also the trading opportunity that might be taking shape as these headlines come across the wires and the markets respond to them. So let's first take a look at what we've seen here overnight. This is ASHR. It's an ETF that's tracking China's benchmark CSI 300 index. It is essentially China's version of the S&P 500. This is going to track the biggest listings both on the exchange in Shenzhen and in Shanghai. And you can see here a potent rise in those markets over the past day, which is an interesting thing to consider because, of course, the expectation might be that the exact opposite should be going on. We've just had Donald Trump win a resounding victory in the U.S. presidential election. Both candidates were China hawks, as it were. Both of them favored a more assertive stance, certainly not a loosening one. And the resounding victory for Mr. Trump seems to suggest that voters very clearly wanted the more muscular, the more assertive, the more combative version of the China hawk stance of the two candidates. So it seems a bit strange, perhaps at face value, that you have this very strong rise in Chinese stocks, even as the candidate that's going to take up residence in the White House next year promises more of a trade war footing, promises more tariffs, and promises to single out China for higher tariffs than elsewhere. Nevertheless, the ASHR here surging as the underlying index posts a rise of 3%. That's the biggest increase it has seen in essentially 2 weeks' time, 3 weeks' time. October 18th was the last time anything comparable occurred. So we're looking here at significant optimism, confirmed as well in copper, a sort of famously sensitive commodity to China's business cycle. China, of course, the world's largest buyer of copper. And so if there were, in fact, some sort of a positive development for China's business cycle, then perhaps you would expect both stocks and copper to move. But because Chinese stocks can often be inspired by decree from Beijing, that you see confirmation of their move in what is a broadly traded, liquid, open on the markets commodity, that gives credence that the move isn't just a flash in the pan or an official's dictum, but rather something that reflects genuine market optimism about what's going on. So why is it that we have this kind of a thing? And the answer seems very clearly economic green shoots. This is the import-export data that came out of China this week. And what we see here is very clearly a strong pickup in exports. You see that right here. Imports, of course, continue to be anemic, so domestic demand not exactly sending the best of signals, but also not really deviating from the range where it has sat for the past several months. And really the range that's been carved out here since the beginning of the year, we're just about within that coil. But exports here clearly booming. As a matter of fact, we saw a rise of over 12% in exports here. That amounted to the biggest year-on-year increase since July of 2022. So needless to say, a very strong sort of picture here for Chinese exports that speaks to exactly the kind of demand that the beleaguered economy might hope to see were it to begin to recover from its long malaise after it lifted zero COVID restrictions belatedly and really has struggled to find its footing ever since. Just a mere day earlier, we got a slight hint at essentially the same story from the Caixin and S&P Global Purchasing Manager Index data. Now, there's an interesting thing in China where you get, much like the US, the domestically formed version of this data, and then the S&P Global version. S&P Global tends to be the main provider of PMI data for most economies, but some of them do their own or have a rival set. In the U.S., we have the S&P Global numbers as well as those from the Institute of Supply Management. In China, we have official numbers from the China Federation for Logistics and Purchasing, CFLP, and then we have these numbers, which are from S&P Global, the main international provider, in conjunction with Caixin, which is a media company. And what we see here is a very interesting pickup in both manufacturing and services. Now, manufacturing still basically at standstill. The way these numbers work is they have a center axis at 50, where that's neutral. That's neither growth nor expansion, or growth nor contraction, rather, of economic activity in the relevant sector, services or manufacturing. And what you see here is that manufacturing then is hugging that 50 line. So having decelerated here from about May, it is essentially holding a little bit above, a little bit below 50, depending on where you look in recent months, and is essentially hovering at no movement, at standstill. Services, on the other hand, post a very strong rise here. And what this boils down to as a composite number is the strongest pace of economic activity growth in China in 4 months. Now, where we find a bit of confirmation for the export side of the story here, or at least the driving emphasis on that as the reason why things in China are doing what they're doing, if we turn to that report, we see it cites another solid rise in export orders and sort of cheekily hints that this speaks to rising interest from foreign markets such as the U.S. Now, one might wonder how it is that we have a pickup in economic activity and a surge in exports, ostensibly because of a rise in interest in foreign demand, notably the U.S., when the U.S. is at the forefront of a trade war that looks likely to escalate now that the relatively softer version of it under the Biden administration, which would be probably continued were we to have a President Harris next, is likely to transform into the more combative version, which we saw obviously begin in 2016 under the prior Trump administration, and that, by all accounts, has every reason to return, listening to the president-elect himself, in the second administration. What's more interesting still is that official figures out of China for the same period for October are not nearly as rosy. They're actually at standstill. As we can see, both official PMI and service sector, the service sector activity index are essentially at the 50 level. So they're basically stuck and have basically gotten here since this reopening post-COVID. So the zero COVID restrictions come away right here. We can see there's a surge in services activity. Manufacturing perks up. It lasts for a grand total of between 2 and 3 months, depending on whether you look at manufacturing or services. And then things turn sour and they never come back. We get down into standstill and sit there. Now, the frequent refrain is that Chinese economic data is massaged in order to look better than it is. This is the opposite story. These are the official numbers which tell a more dire, a more anemic story than do these Caixin ones, which tell us that things are actually getting a little bit perkier here. So is this then a reason to celebrate? Well, the market certainly seemed to think so, looking at their initial reaction, but does that make sense? Perhaps not. Perhaps the focus on exports here is the tell. If the markets know, and if businesses know, that the tariff environment, the tariff status quo, is about to become much more restrictive, that trade barriers are about to rise much more emphatically, then you would expect that businesses would try to front run that. They would expect higher costs downwind because, of course, it is importers of Chinese goods that pay tariffs, not China. One government can't exactly compel another to pay it a tax, but it can certainly compel its own domestic companies importing Chinese goods to pay a tax in order to import it, which is, of course, exactly how tariffs work. So companies, for example, in the U.S. that foresee downwind higher tariffs and a generally more combative trading environment with China would be well served to buy as much and to build as big of an inventory of Chinese goods now as they can before those costs go up. So the pickup in export growth here doesn't actually tell a story of resounding strength, does not tell a story of returning demand that can be extrapolated further, but rather seems to be more about front running before things transition into much darker times. That is, if you're an importer of Chinese goods or an exporter in China feeding that demand. That, of course, does not bode well for the general anemic state of China's economy, where now for 6 consecutive quarters, there is economy-wide deflation. We see here in the red is real GDP, in the yellow is nominal GDP, which is supposed to be the rate of economic output creation, as it were, including inflation. Real GDP is supposed to strip the inflation component out and get to just the output. Well, if the real one is above the nominal one, that means that what we're doing when we're subtracting inflation from nominal growth is we're subtracting a negative number, which means inflation here is negative. And at the GDP level, this speaks to economy-wide deflation to the tune of nearly a percentage point of GDP growth on average over the past 6 quarters. And so what we're looking then at when we consider these numbers is, just in very simple terms, an economy without demand. The price for things goes up when there is demand because people that want things compete to get them, and that bids up the price. If the price is going down, the opposite is occurring. Nobody wants things, and so the entire economy is effectively on discount to try to engender demand. We might get a picture of just how fleeting all of this looks when we consider the numbers due over the weekend, where we're going to get Chinese inflation figures, and in particular the consumer price index, which we can see here really speaks to just how anemic demand is, hugging the zero line. For wholesale prices, things are even worse. They've been in deflation mode since essentially the middle of 2022 and have recently taken a turn for the worst, implying that even in the pipeline, demand is not strengthening, but rather weakening. And so when we consider these numbers, they might very well be a helpful way to look at what comes next. The expectation, incidentally, is that we are going to get PPI slightly less negative, down 2.5% for October when these numbers come across the wires. And the headline inflation rate will continue, the consumer price index will continue to hold at 0.4%. So essentially zero, and maintain this deflationary story. Now, we just saw from the trade numbers that we continue to see, since about the middle of the year, deterioration in imports. That, of course, is that same demand story, or lack thereof, in the domestic market that then shows up in CPI that can't get very far away from zero for the better part of 2 years. And so as we look at this, the concern is that all of the optimism that we've now seen thanks to these export numbers in Chinese markets, in Chinese proxy assets, becomes something that unravels once this picture of domestic demand is in front of investors. Because indeed, if the upswell in external demand is temporary, then you need that domestic demand as the more lasting engine of expansion. And if that's not there, then it really is just a flash in the pan before the tariffs strike. As a matter of fact, if you look at the way that Chinese economic data has performed relative to expectations, this is data from Citigroup here, you find that it continues to trend toward underperformance, although it has narrowed a little bit back onto zero, suggesting that the expectations in the markets are getting to be about even with what reality is endorsing. Nevertheless, the bias still favoring softness. Moreover, we see that all of the expansive stimulus that China has unveiled is not working because most of it is monetary. And so we do not have the kind of demand that would be engendered by directly stimulating from the fiscal channel, from government spending, some sort of uptake in the economy. Instead, much of what Chinese authorities have done so far has been to lower borrowing costs by various ways, to try to encourage people to buy, to try to encourage businesses to invest, to try to encourage local governments to make outlays. And what we find is that this Bloomberg Credit Impulse Index, which is a measure of new loans as a share of GDP, it is actually falling and has been falling since the beginning of the year. So this is plainly not working. In fact, if we look at the year-on-year, which is the yellow bars here, the rate of year-on-year change in this index, it's actually accelerating over the past 3 periods, deeper into negative territory. So not only is credit easing not working, the situation is actually accelerating in the wrong direction. Of course, the precipitous running away of foreign capital from China does not help matters. At this point, we're looking at nearly a 30% year-on-year decline in foreign direct investment. Money is plainly running out of the country. And so what we're looking at here then is the kind of setup that might allow for an attractive trading opportunity, betting against this recent optimism after the numbers that we saw this week. And while betting on Chinese equities themselves might be an unattractive idea because Beijing can effectively mandate those higher for no reason other than it say so, and copper might be a little bit of a challenging instrument because the futures contracts are a bit large and the ETF equivalents are not the most liquid things out there, the Australian dollar provides an attractive vehicle. We can see it too has surged over the past 24 hours and has in fact fared better against the dollar than, let's say, the euro or the pound in the wake of the election outcome. Both of those currencies suffered much deeper losses against the dollar. But now we're approaching some interesting resistance here near the 67 figure. If in the wake of the CPI data, we hit a wall right here and appear to be rounding out some kind of a near-term top, then an attractive selling opportunity back down into the sort of 66 area, plus or minus 20, 30 pips in each direction, this area right here, that starts to be an attractive target for a tactical short, if, of course, that topping here materializes. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go there from. I'm back with Chris for Futures Power Hour tomorrow, back with Victor and Tom for First Call on Sundays, again on Futures Power Hour Mondays, on the Price of Truth on Wednesdays, writing for the news and insights portion of tastylive.com, and commenting on the platform formerly known as Twitter at Ilya Spivak. If you're watching on YouTube, like and subscribe. Macro Money's back next week. Happy trading.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the precision of the short game. Wow, I've seen better putting at the mini golf in the Dells. Tom, do you see holes where there aren't any, mate? Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
If
you have any questions, feel free to toss them in the chat.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
What is going on? Welcome back to the Bad Taste segment. Today's Thursday, elections on Tuesday, FOMC interest rate hikes today. I mean, when is it going to end, Julia?
I don't know, man. It's been a week. I've been surviving.
I don't know, man.
It's been a week, dude.
Yeah.
Yeah, I don't know. I'm glad I stuck to my guns. I didn't manage anything yesterday. Yesterday I was red was not pretty. It was not pretty day. My Russell position, ENPH, everything was just blood red. And I held my ground. I'm like, you know what? I have a feeling that things are going to reverse a little bit the following day. Yeah. They did, which I'm happy about. I was worried FOMC was going to screw all that up. So far, it hasn't. So we're surviving. We're not thriving, but that's better than anything else, I guess. How about you?
No, I love that. Absolutely. Surviving is better than not surviving, I guess you could say.
I suppose, yeah.
And I guess that's what the market is about. It's about surviving. So, I mean, I sold a call spread on QQQ a little bit ago. Obviously, that's not doing well. I mean, over the last couple of days, we've had some insane moves to the upside. But what made up for a little bit is I did get long yesterday morning, and I ended up taking it off right before the FOMC today on just one, micro contract, which is very helpful to the portfolio. But I was going to hold to all-time highs. But, with the interest rates dropping, I just wasn't comfortable to do that. So I ended up getting out before that, and then we ended up hitting all-time highs. But all the uncertainty in the market, what was it, 25? It was 25 basis points, correct? Or am I mistaken?
I believe so, yeah. I didn't look. I've been busy with meetings and such. I've just been looking at the port, and I'm like, still green? We're good.
Yeah.
But I believe that was the one that was priced in with like 99% probability.
Okay, yeah. So, I mean, we got that today. And now, for the most part, just really having that call spread that I have in the portfolio, we're near and at all-time highs in the market. So maybe through the end of this week, next week, depending on what we see, I might be a little keen on selling some maybe skewed iron condors to the downside, or maybe some call spreads here and there. So that's kind of what's been in my head lately, especially being near all-time highs. But I've never been a fan trading around all-time highs in general. So for me, at least, I'm probably not going to be touching futures contracts at all-time highs. It just feels like musical chairs, and the music will just end at any moment. Not that that's not the market anyways, but that's how I feel at all-time highs. Yeah.
Yeah, that's valid. Also, it was 25 basis points, the cut rates. Big Deal Donut, and that was confirmed by Grumpy Mike, and I just looked it up. Big Deal Donuts, awesome to see you here, as well as Mind Power, awesome to see everybody here. Thank you for joining us. Yeah. I kind of, because here's what this means, potentially, not potentially, but here's what this means is like, there's a certain amount of time before like Trump's policies will go into effect. So not only will there be, obviously, I'm expecting some market volatility around to when he actually goes into office, and he's already talked about day one, like, potential craziness. So that's thing one. But leading up to that, there might be a bunch of drastic policy changes from like the Biden administration. So I'm especially expecting this around like maybe energy, which a lot of these renewable energy companies, I am in ENPH right now. Under these renewable energy companies, there's concerns around like government subsidies getting cut potentially under the Trump administration. I'm really interested. I was talking about this earlier about like how nuclear is going to play a role in that, and how this revitalization of nuclear and adoption by major tech companies is going to mix the sector up a little bit. But I was looking for trades this morning. I felt like I was stepping on minefields, like on a minefield, I guess. But yeah, I'm expecting some upcoming volatility. I'm trying to stay small. I felt like I withstood the storm so far, which was really all I was expecting to do. So that's good.
No, I hear you. And most of those positions are defined risk as well, right? So you're able to at least go to bed at night.
I can go to bed at night. And then I also have shares in there as well. Trying to get a little bit more into dividend investing. So got some SPY, got some Qs. I think that's all I have for shares. And then short options, a couple directional plays, but like for the most part, it's pretty, we're keeping it small. The signature baby trade for sure.
I hear you. You kind of just staying away from the volatility that Tesla has brought upon us. It feels like Tesla, you were kind of saying this even weeks ago. Tesla feels like it's Teslaing again. And then obviously this week it's added a little bit more volatility to it. Is that something you kind of just stay on the sidelines and watch from a distance? Or what are your thoughts on Tesla and how you kind of go about that?
Yeah, dude, Tesla's a wild one. It's been all over the place, up another 3% today. This one's been really interesting. It's almost like, I feel in so many ways like tracking Elon Musk in a similar way that DJT isn't really tracking Truth Social and its fundamentals and its user base. It's tracking a person. I kind of feel the same. I think other investors feel the same way about Tesla. And so I'm not really touching that right now. Certainly watching it. It is a Mag 7 after all. And funny enough, the only actually trade I put on today, I think, was Boeing. Put on a neutral Boeing trade. And I'm like, funny enough, I was looking at the trades this morning, like financials, no, not right now. Energy, even the market indices, metals, real estate, but Boeing, reminds me of the saying that I have with Luis, that's too Boeing to fail, because we've seen some really wacky news come out in the last couple of weeks, and then Boeing, sometimes it'll have a big move, sometimes it won't, but it's actually just been sideways all in all the last couple of weeks. So you know what? I don't know.
Boeing's headquarters right out there in Chicago, no?
I believe it actually moved. It used to be, I think it actually moved. Yeah, I think it did.
Oh, wow.
I think it moved a couple of years ago, and it is now in Virginia in 2023. But it used to be, I think, like one of the biggest manufacturers in Illinois until it decided to went to Skadisha Way.
2023, that was right around the corner, because I remember going over there, walking around, kind of checking it out. I had no idea they moved.
They did indeed move. So, I don't know. I feel like, walking on eggshells a little bit. So far weathered the storm. As far as catalysts for the rest of the week, we have DraftKings, Rivian, a couple names that are reporting or that have already reported. Tomorrow we have CGC, so that could be potentially a mix up in the cannabis space. But otherwise, I'm hoping that we're just kind of in the clear for now.
Yeah, seems so at least. We got some of the, two largest binary events this week kind of out of the way. So I'm interested just to see how the market will digest it into the next few days.
Oh, for sure. Yeah. I'm going to pull up this heat map real quick. Are you able to see that?
It looks perfect.
Oh, dude. Yeah, no, this is fun. This is our little heat map from the day. There's a couple different versions of this floating around. We're actually in the process of getting this added to Bad Trader. So the pre-market version of it, there's already currently a version of it on there. So if you want to go check it out, I find it a really useful tool for just getting like a daily snapshot of what's going on, especially for a pre-market tool, making decisions quickly. I think there's some usefulness in there. But this is just, the S&P 500 today, kind of green almost across the board. Financials actually having a pretty interesting reversal. This was this explosive sector yesterday. This one via the Russell got me, which was not very fun. And so we're seeing a little bit of a reversal in that today, just because, again, we had such a huge move in financials. Luis has talked about this before, but this sector is posed to do especially well under Trump. So evidently there was some investor hype and then subsequent investor correction, taking some profits, with not very many names actually having a green day, funny enough. To the downside, we also had energy. Over in here. Not really. I'm just kind of spiteful about my E and PH trade, so I'm kind of trying to stay away from energy right now, particularly in the renewables, but a little bit more interested in nuclear. And then industrials as well. We have some energy representation in here. Delta actually had a bit of a rough day. What else is in here? Boeing. Yes, the Boeing trade. There you go. Up 2.6% today. But yeah, overall industrials were a little bit beat up today. And then some healthcare companies as well. Moderna. Dude, this one is so tragic. Did you keep up with Moderna's earnings at all?
I didn't. What was going on over there?
They destroyed earnings and then they still sold off. They actually, I think had a pretty strong earnings report. Was talking about it earlier today with Michael, and they still sold off anyway. And it's a bit of a shame because I was talking about this earlier. feel that some parallels between like Moderna and NVIDIA, because with NVIDIA, like when I was in school and taking like electrical engineering classes, that company was name dropped several times because obviously pretty prominent name in, machine learning, their distribution of chips, GPUs, the whole thing. And then investors kind of recognized the utility of their technology, their services, but only recently. They were the video game company for a while, and kind of feel the same way about Moderna, which is like they're the COVID vaccine company, and still kind of are. But they're working on some really interesting tech that I think this is just going to be an interesting name to watch for the future, especially because they're still a pretty new company. They IPO'd in, I think, like 2018, something like that.
Yeah, that's pretty new for a company, at least. Whenever you zoom out, actually, I forget, I'm colorblind. That all looks green until you zoom into a specific. Yeah, I was like,
I just remembered that. Oh no!
But when you zoom in, I can tell there's a difference when you zoom into like a specific sector. But when you zoom out and look at all the sectors at once, it all looks green. I'm like,
I completely forgot. I'm a terrible person. I am so sorry.
No, that's fine. That's funny.
It's okay. I'll try to give as much interpretation of this as I can verbally.
I appreciate that.
Oh, Lordy. Anywho, maybe we could move away from the heat map a little bit. We can hop on over into, in terms of the platform, you should be able to see that, right?
Perfect.
Yep. So positions today, gold position recovered a little bit. ENPH did not. That just kept selling off again. Some pessimism around companies in the renewables space, the green energy space. We got AMD kind of just chugging along. This one's been a very consistent performer. Threw on a Boeing trade. Funny enough, seemed like actually not a terrible. I don't know. I feel weird about Boeing. I feel like there's always been terrible news coming about it, like especially the last couple of weeks, and but still a little bit more comfortable. That's in the DGen account. That's a little triangle in there, and then all the purple is the responsible portfolio, which is nicely recovered today.
Julia, you're look at your nothing is even in the money right now. You're sitting in such a great spot, especially considering the last couple days.
For now, we're still like 43 days out, but I am actually happy that some of this stuff moved back out the money, which is like, when I say that, like, you need a stomach to trade options, this is kind of what I'm talking about. When you have like a day, very big move, sometimes, at least for me, it made more sense to just kind of hold and not manage anything and just wait a little bit of time, remembering that we have a whole bunch of time left in the cycle. And that can be a little nerve-wracking to do, but it worked today. It doesn't always do that. Any hoops? So these are the positions I got going on. We have some names these are the names that have reported earlier today, but reporting later. So the ones that I think DraftKings reported already, they should have reported already. Let's take a look in here. Ew.
And they stomped. They're not quite flat, from the close, but
they donked really badly and then bounced, and I have no idea where this thing's going to open. This makes calling the stonk or donk challenges on the Bad Trader platform very difficult, because I'm like, what do you do for that if it opens positive? But that, I got to dig into that earnings report tomorrow. Looks like a bit more of a donk, I'm sorry. Unity, I believe they also reported. It looks like they sold off by about 20 cents. Ooh. Yeah, that's going to be interesting on the open as well. Affirm, take a look real quick. So that's down 2.42% today. Did they report already? Dude, what is it with all these weird moves?
I think if it goes one way and opens up in the opposite direction, what do you feel about categorizing it as a stonk? Like if it sells off sharply and it opens green, it was temporarily a donk, but we could categorize it as a stonk if it opens higher than, from where it sold off of, or it opens positive if there is an original donk.
I have such a hard time calling it. I'll usually do, like, if it opens in the opposite direction, I'll usually do with how it opens plus or minus 15 minutes, which is maybe not the way. Flower Power, I think Affirm reported it just had this weird heart attack kind of situation going on. It's like weird asymptotal graph thing. But yeah, I'm very curious to see where it opens. For now, it looks like it's down about 70 cents. But I don't know where it's actually going to wind up. So we're going to have to keep an eye out for that. But otherwise, I feel like we we're in the clear, hopefully, at least in terms of binary events or events that we can expect that might wrestle the market a little bit.
The famous last words.
Yeah, the
clear.
unexpected ones get you. Those are a good time. So yeah, that's I think a good little tour to market. I'm glad you guys like the heat map. I also like the heat map. I don't know if Tom liked it, but who cares? I like it. But that being said, do you want to hop into slides? I believe we have some trivia to get to.
Yeah, let's get into it.
Let's get into it. And then if we have any time, we can do a tradle. We actually have $1 trillion export today, so that does make it a little bit easier. But first things first, sheesh, let's get into some bad trivia. And before we do that, we do have an app. We made some sick updates, and we're about to make some sick updates in the future in the next couple of weeks. So if you want to go download it, we'd love to have you. It's available in the App Store and the Google Play Store. And as well, if you want to come participate in trivia, throw your answers in chat and join all the wonderful people there. You can come find us on Tasty Live's YouTube channel at Tasty Live Show. And if you want to follow us on Twitter, Louise digs up some really cool stuff to post on there. You can find us on @BadTrader app over there. But that being said, what is the category? Or what is the category?
Category, the theme, the whatever. It is post-election for today. That's what the category is.
It's post-election.
Post-election.
PE. Jesus. Election. It's been a very long day. Okay, let's get into it.
Cool. So true or false. So we have 3 questions for today, and the structure of the question is a little different. So we'll have like a fill in the blank on the second or third.
This is fun.
This one's a true or false. So
I like this.
True or false. Historically, the stock market tends to rise the day after a U.S. presidential election, regardless of which party wins. True or false? And you don't have to add why, but true or false? True or false, chat?
The why is the most interesting part. Also, someone was commenting on my coffee earlier that it is a very large coffee cup. I need a lot of caffeine these days to wake up. Anyway, so historically, the stock market tends to rise the day after a U.S. presidential election, regardless of which party wins. I'm trying to remember. I saw a graphic of this, and I'm trying to visualize it right now of like just basically post-market move on the open after every presidential election result is declared. And they were a pretty mixed bag of nuts. But I distinctly remember very strong positive moves after the last 3 presidents. So it was a Trump, a Biden, and then a Trump, which is a mix of parties. So I think the tricky part in here is that regardless of which party wins, I
only have experience with the last 2. I didn't even know the stock market existed in 2016, to be honest.
I certainly wasn't paying it. I'm like, what's a Dow? Anyway, let's take a look what chat's saying. We got true, false. And we got some crying faces and people who look confused, as am I. Or not confused, but just unsure. I am having, regardless of which party wins, I feel like it's maybe a bit more party dependent. I think that's where the falsehood might be. I might be a contrarian and say false.
Okay.
Is it, what is it? Oh.
Drum roll, please. But no, historically, the market often reacts positively the day after an election due to the removal of uncertainty, though, obviously it's not guaranteed. But yeah, I guess it's typically what we get. Loan, big deal. They might have about, I don't know, how many elections do you guys have under your belt? Maybe you vividly remember being involved in the market and seeing a positive reaction. I don't know, but this was my second one, so it's interesting to see how things play out. But that is the first one.
It is interesting to see it. That was a classic case, dude, of like the overthinkies is what I'm going to call it. But we got a bunch of trues. It looks like Mind Power got it. Big Deal Donuts got it. Flower Power. Osborne got it. Grumpy got it. A bunch of people got it. I didn't. That's what I get for going against the crowd. Let's look at number 2.
Awesome. So number 2, multiple choice. Which of the following sectors typically sees increased volatility the day after an election? We got A, technology, B, healthcare, C, financials, and D, all of the above. What do we think, chat?
Technology, healthcare, financials. The day after an election? My thing is, like, I feel like it's definitely at least healthcare and financials, which makes me think that it's D. But chat, what do we think?
What
I think
about
financial.
Tech,
well, tech, I mean, like, it seems like every government likes tech no matter what because they make a lot of money. But that's my guess. A bunch of people are actually Mind Power saying D. Flower Power saying financials. We got some D's. We got some C's. Got some D's. It's been a really long day, y'all. I feel like I feel like financials is a very good one. I feel like healthcare would also be very sensitive to like which administration is in office. Scramble everything is saying A. E from Bah humbug, which is awesome. Increased volatility though. Increase in volatility. That's the thing. I feel like I'm going to go with the majority on this one, although we're certainly getting mixed results. I'm going to say, is it D, all of the above? Could it possibly be D?
Drum roll, please.
I don't even know if you can hear that.
I heard a very faint drum roll, but we can jump to the next slide and see what it is.
That's it. All right. Oh, there we go.
It is all the above. All three sectors often see increased volatility due to policy concerns tied to the election outcome. So increased volatility, not too much of a surprise. Like it's, when I'm doing the research and then I see, I'm like, oh, I see the answer. I'm like, oh, makes sense. After I see the answer, it seems so obvious, but
when you're on the spot, but a bunch of people in chat got that. Very well done, guys. And yeah, no shot. That totally makes sense. All the sectors would increase in volatility the day after the election. Totally makes sense. Let's look at number 3.
Awesome. Fill in the blank. We haven't done one like this before, but the largest single day gain for the S&P 500 following a presidential election occurred in the year, and I'll give you a hint.
Okay.
It's prior to 2025.
Thanks.
Absolutely. I got you.
Super helpful. I love the hint.
These are the type of answers that my mom would just like look at me like, all right, that's my son.
Yeah. Can't relate. Oh, it's so funny. Okay. Poop. Largest single day gain for the S&P 500 following a presidential election. Scramble everything said 2024. I was also kind of thinking 2024. What did the S&P move yesterday? Was like, what did it close at? Like 2.2%?
What was yesterday?
Yesterday? I think it closed at like 2.2%, but that's like a sigma and a half move.
Okay, second largest single day gain in the S&P 500.
Second largest S&P. Okay.
If that's the case. I
thought the S&P, where did it close yesterday? Maybe I was just thinking about the Russell.
Well, I mean, we did gap up. We gapped up and we kept running all day.
Points or percent? We're looking at a percentage, right?
Correct. Percentage.
It was in 2016. Someone said 2012. We got 2008. We got 2016. All these are before 2025. That's great. Now I'm trying to think about the S&P's close yesterday. Maybe it was closer to 2%, actually.
Yeah, 2%,
I wasn't watching.
guys.
I think it was closer to 2%. Largest single day occurred in the year. I'm just going to guess and say 2024. That's my best guess.
Gotcha. Well, again, so 1980, the S&P 500 gained 2% the day after Ronald Reagan's election. But yesterday is really interesting, too. And because yesterday we had gapped up. Not only did we gap up, we ran all day. Not only did we run all day, we held the highs.
We did.
Into close.
We did. I think that would have 1969. Very nice, Big Deal Donuts. After Ronald Reagan's election, I guess when like TV personalities / movie stars get elected, the American people are just very optimistic, or at least investors are. 1980. Wow, that is a lot of funny parallels actually between.
Good times. 1980. Good times.
We had some very good guesses, guys. Really well done. We do have thank you, E, by the way, for putting these together. These were fun ones. Really got the noodle working. Do you want to try to do a speed tradle?
Let's jump into it.
You want to jump into a speed tradle? Okay, guys. Okay, let me pull.
So we already know $1 trillion in exports. You said, right, Julia?
$1 trillion in exports. There we go.
Okay.
Can you see that?
I can. 1.6 trillion in exports.
Perfect. Okay, so we're gonna do a speed tradle. We got 1 minute. Let's see if we can get her done.
Let's go, China.
So we are trying to guess the country's exports. They have a total of 1.6 trillions. We got cars. We got electric motors. We got this. It looks like China.
Yeah, we're going China.
Awful. I like China. Okay, we're gonna guess and we're gonna see how close we are. We are 64% of the way there. It's 7,000 kilometers to the west. This is maybe Germany actually.
Let's try that. I like that one.
I like Germany. We got to do speed round. Chat, throw them out. Let's see what we can do. Let's guess Germany. Oh, we got it.
Oh, good stuff, Julia.
That was actually a really good speed round.
But once you said Germany, yeah, that was perfect. When you said Germany, I was like, oh, that's a great guess.
That's a good guess, right? China.
Yeah. Yeah, see, I thought China right off the bat, too.
That was a great guess, but that got us like halfway, more than halfway there, actually, if you think about it. Well done. Scramble everything. We got some really good guesses over in chat. We actually sped through that. That was a really good job.
We literally didn't even need 2 minutes. That's funny.
We actually didn't. So we sped through that, guys. If you guys want to go check out Tradle, it's actually a very fun game, very similar to Wordle if you want to take your time for the one for tomorrow. But that we are just like perfect on time right now. Yeah, perfect speed Tradle. We didn't even need 2 minutes. Good job, guys.
Oh,
hell yeah. Is there anything that you want to leave on before we get out of here?
No, that'll be it. A lot of uncertainty finally out the way. Thanks for taking the time to hang out with us today. We'll see what we get coming into Friday tomorrow, but that'll be it for me, Julia.
Yep. Hopefully the catalysts have stopped catalysting for a while. Would be really nice. But I don't know. What a wild time to be trading. I hope everybody had a pretty green day. It was awesome to see everybody here over in chat over on YouTube. We will catch you guys next week. So good luck trading. Stay small and may your ports ever be green. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets is the biggest takeaway. And that's kind of just the overarching principle I follow.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain seat. I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And that he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Yeah, it is Thursday, November 7th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, where we like to explore the incentives that govern our world. As you can see, I'm flying solo today. What that means, it's a highly participatory show. So shout out to everybody that's watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of the conversation, there's only one place you can do it, and that's over on the soon-to-be reformed Google YouTube. So head on over to YouTube, type in Tasty Live, find our YouTube channel, and my big inflamed head on one of those red thumbnails. Jump in the chat, introduce yourself, say what's up to the people. I promise you, I'm going to go out on a limb here and say this might be the best group of people that assembles to talk markets and, I don't know, dip our toes in some conspiracy theories and politics from time to time. But do us a favor, just type in random ass characters into that chat. We can spoof the Google algorithm into putting us in front of as many people as possible and save the world one view at a time. And damn it, I'm going to believe we've already started that process. Speaking of the people, because this is a podcast by and for the people, let's say what's up to the people. Shout out to everybody in the YouTube chat. Start typing now, because if you don't get those characters in, I'm not going to shout out your name. I got a little bit more time since we don't have a guest. The wonderful producers have already got your screen names and your comments up on the screen. Somebody made fun of me for calling them screen names. They said, "Oh, I could tell somebody was born in the 80s." What's the word? If it's not screen name, what is it? What's the new handle? I'm not saying that. What's up, Brian? What's up, Cactus Leo Lone? Great to see you again. Sleepy Mocha, what's up, Brian Watson? Agent X, what's up? Dav, what's going on, Jay? D-Chat, Ben, Christian, Absolute Beginner, and so many more. Absolute Beginner says, end of year 7,000? ? Jordan says, AOL user. I know, bro. I know. Remember the sounds it used to make? Like the opening door, close.